as well as China are closed for the Lunar New Year holidays. What is open today is Australia as well as Japan, which is both opened up higher today in trade. Australia as well as Japan taking cues from the Wall Street, which ended on a positive note. Let's quickly look at what the Nifty implied open is also indicating for the Indian markets, because yesterday in the second half of the trading session, we did see a bit of a fall coming in for the Nifty 50. Today, indicating a 50-point uptick is what the Nifty implied open is indicating. So yes, slight bit of a positive start, but again, that's sustaining those levels is something that we're watching out for in terms of the Nifty. So yes, keep an eye out on the Indian markets today. As of now, implied open indicating a bit of a positive start for the markets. And like I was mentioning, the US markets, Wall Street that ended higher, and this is when you're looking at the tech-heavy Nasdaq, that saw a 2% gain. S&P 500 gained 0.93%. Dow Jones rose 0.31% in trade. S&P 500 as well as Nasdaq actually made a comeback after those sharp losses we saw on Monday. That was a sell-off that was spurred by the DeepSeek as well as the threat that it was posing to artificial intelligence trade. Now let's go across to CNBC's Angelica Pebbles, who's joining in with us to give us a wrap on what happened on Wall Street.
U.S. markets were up across the major indexes in Tuesday trading, bouncing back from Monday's sell-off after the emergence of Chinese AI company DeepSeek had Wall Street questioning U.S. AI dominance. The Dow up 137 points, the S&P 500 higher 55 points, and the tech-heavy Nasdaq jumping 392 points. Monday's biggest casualty was Nvidia, which lost about $600 billion in market value, representing the biggest one-day drop for a U.S. company in history. The stock rebounding today and finished up about 8%. Broadcom and Oracle, which were also hit with big share declines Monday, recovered some losses today, each up more than 3%. And Elon Musk's X platform is making its first major move into financial services. CEO Linda Yaccarino announced a deal Tuesday with Visa to be its first partner in a so-called X Money account. Visa will allow users to transfer funds between accounts and make peer-to-peer payments with services such as Zelle or Venmo. When Musk bought Twitter, he said the platform would eventually allow people to conduct their, quote, entire financial world on it. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. But let's move on. And the Fed is meeting for the first time in the second presidential term of Donald Trump, who has already signaled that he wants lower interest rates. But what is the market pricing in? Here's Steve Leisman, who's joining with us with the findings of CNBC's Federal Reserve Survey.
Higher inflation, but also more growth. That's the assessment of our respondents to the CNBC Fed survey when we asked about the effects of President Trump's expected suite of all the policies. Well, 64% are saying that they believe the Trump administration's policies will likely be either somewhat or extremely inflationary, most of them in the somewhat category. How about for growth? Somewhat or very positive for growth, 60%. Again, most of them in the somewhat. A bunch, though, think it could be possibly negative for growth. Then look at individual policies. Let's look at tax policy. You can see very divided here, being something that's worse for inflation. Some say it's better for inflation. Deregulation, though, that's seen as something, this is something the administration has talked about as better for inflation. Not so immigration and tariff policy, where they're pretty definitive that those are worse for inflationary outcomes. How about for growth? Let's take a look at the individual policies. What you see is tax policy and deregulation both seen as better for growth. Again, not so sure on immigration and tariff policy, seen as worse outcomes for economic growth. Guy Labas of Janney Montgomery Scott writes in, reasonable economists can disagree just how inflationary tariffs or reductions in immigration might be, but they are inflationary. Richard Sichel of the Philadelphia Trust Company, he emphasizes that optimism and risk-taking have increased. Lower taxes and less redundant regulations, along with the ongoing success of technology innovation, promote more efficiency and profits. Overall, the Fed expected to cut twice this year. The respondents have less confidence in those cuts now. But because of the uncertainty, the Fed is not expected to act much before June, the first time, and then again between September and the end of the year for possibly a second cut, Kelly.
Okay. Let's also listen in now to David Zervos, who's the chief market strategist at Jefferies, talking about the upcoming Federal Reserve interest rate cut decision and what is he expecting there.
So I think the market's set up for it. I think they've got no reason to sort of get aggressive right here. They've prepped the market for it. Why would you change it at this point? We have I think, a much lower neutral rate than many in the market or on the committee think is out there, that we're kind of going back to neutral rates at 2019 levels. We've articulated that in a lot of our research related to the balance sheet. But, it's early days. We can wait. Let's get a few more CPI, PCE data prints that feel good, or a little bit of weakness on the payroll side, and I think we can resume again and get moving lower, which is where I believe we're headed this year, and I think that'll be quite supportive for risk assets.
Okay, and that's all the global night actions that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research, as always, joining in with us to set you up for trade and tell you which are the important stocks to watch out for. And Vivek, good morning. Let me start with you. What is the trade setup looking like? Yesterday, the last few hours that we saw, the Nifty again see a decline. But what are we expecting today?
Absolutely right, Vinny. Yesterday was a day of volatility. All of the hard work that was done by the markets in the kind of recovery that you saw intraday, you did see quite a bit of a sharp dip coming in as far as the second half was concerned. But today the cues are much more positive. All of the US indices rebounded very sharply after day for yesterday's sell-off. So that's some positive cues coming in from the US markets, like you mentioned. All eyes today on the Fed Reserve decision as far as the rate cuts are concerned. Now, oil markets, something that we track closely, that too rebounded from the multi-week lows that it was struggling with. Indian markets, like you mentioned, a very volatile trading session. Broader end of the markets continue to see significant selling pressure. Banks and NBFCs were the stars of the show yesterday. This on the back of the RBI liquidity enhancing measures that were announced Thursday evening, and on the back of that, banks actually outperformed quite significantly. Well, a whole host of earnings is what we will be looking out for. First, earnings reaction, which are the companies that came out with results yesterday post-market hours: Bajaj Auto, JSW Energy, Colgate, BHEL, Suzlon, all of these will react. And today, some important earnings, especially from the auto pack: Maruti, Tata Motors, NBFC Big Boy, Bajaj Finance, as well as a whole host of other mid-cap names too will come out with their results today. Asian markets, most of them are shut today. Japan is trading, but GIFT Nifty is indicating a positive start. It'll be interesting to see whether that can sustain.
Absolutely, Vivek. We'll surely watch out for that if it's going to sustain going forward. But let's move on and go across to Hormaz, who's here to tell us which are the important stocks to watch out for in trade this morning. Good morning, Hormaz.
Morning, Vinny, and you run out of breath. You're trying to describe the number of earnings that are lined up in today's trading session, but we'll start off with some important names that came out after market hours yesterday. Bajaj Auto is one of them. Most of the other parameters were in line with expectations, but the focus was on margins, that there was a fear that it might slip below 20%, but the company has managed to sustain above that level. 20.2% was the margin figure for the quarter. Suzlon will also react to results. Revenue and profit almost doubling from last year, but deliveries were at a record high at 445 megawatt, which was around about 160% growth from last year. Colgate's numbers were in line or marginally below expectations, but the toothpaste volume growth was in high single digits as compared to a CNBC-TV18 poll of a 4 to 5% growth. Motilal Oswal, the slowdown clearly evident on a quarter-on-quarter basis. The wealth management business was down 10%. The capital market business was down 13%. The asset and private wealth management business, though, grew, although the profits were down 60% on a sequential basis. SBI Cards as well, the profits were down on a year-on-year basis. The provisions were up. Asset quality, though, was stable, but their annualized credit cost remains a key pain point. There's a 9.4% figure coming in compared to 9% last quarter and 7.5% last year. BHEL's numbers, it was a strong execution in the power and industry business that led to a revenue growth and a revenue beat in the quarter, but gross margins expanded over 1,000 basis points, but the margin expansion on the EBITDA level was below expectations, and that was on account of a rise in other expenses. MGL's numbers almost similar to IGL, better than expectations, but on a year-on-year basis, of course, you would see a lot of red on the screen. VIP Industries as well reporting a loss compared to a profit last year. Revenues also down, so were the EBITDA and the margin figure. Apart from earnings, you also have ITD Cementation, where the Adani Group has received the CCI approval to acquire the 72.64% stake that they had initially proposed. The NMDC is also in focus because the company is planning a 70,000 crore rupee capex over the next 5 years to achieve that 100 MMTPA capacity by 2030. And JSW Steel has extended the long stop date to acquire that 92.19% stake in Minas de Revubo to the 30th of June. And also keep an eye out for Swiggy and Afcons Infra because their shareholder lock-in period ends today.
Okay, Hormaz, thank you so much for that. Surely a whole host of stocks that we're keeping an eye out on today. But finally, we have Sudarshan who's joining in with us to tell us the important cues that you should be keeping on your radar in the world of FNO. Good morning, Sudarshan.
Good morning, Vinny. So while pressure in the mid-cap space has continued, there was a buying in the large-cap space, and we saw that Sensex and Nifty closing with gains, while mid-cap index amid volatility closed with minor cuts. For today, GIFT Nifty ahead of FOMC outcome is indicating a start with minor gains. Talking about the flows, yesterday we saw FIs selling more than rupees 4,900 crore, but buy figure by DIs was almost rupees 7,000 crore. In the index futures too, FIs have sold nearly 500 crore, but good parties, they have added long positions of more than 4,000 contracts. At the same time, they have reduced short positions by 30,000 contracts. Also, interesting data coming from option side. FIs in the index option have bought more than rupees 4,000 crore. Also in the stock futures, their buy figure was more than rupees 2,500 crore. And now in the stock futures, they have bought for 5 consecutive days. And total buy figure is now almost rupees 10,000 crore. Talking about FI's long exposure, now it has increased to 25%. And on the client side, long exposure remains at 68%. On the option side, on the call side, 23,000 call has shed more than 30 lakh shares with premium at 50, and on the put side 23,000 and 22,900 put were active. So what does option data indicate? That on the upside it's capped around 23,000, and on the bottom side it's around 22,900 or 22,800. So support is now seen somewhere around 22,740, resistance at 23,200. Stocks that will in focus, the stocks that have come out of banner India Mart, Manappuram Finance, MGL and PNB. Now there is no stock that is in the ban.
Okay, Sudarshan, thank you so much for giving us the update in terms of what will be happening in the world of FNO this morning. Yes, that's what we're keeping an eye out on. On that note, we're going to step into a very short break. Bajaj Auto will be reporting their Q3 numbers today. We'll be back with the key highlights of what you should be keeping on your radar on the other side.
Achieved from 2007 onwards. So we will always be grateful to our Prime Minister. Long before he became Prime Minister, he foresaw that India needed Atmanirbharta in energy. Over 20 years ago, he told me he wanted Gujarat to lead the nation in energy and energy products. He also told me that Gujarat should take the lead in cultivating world-class human resources needed to achieve India's clean energy ambition. That is how he helped establish this pioneering university. Friends, there are many things that we learn from our beloved Prime Minister. Let me mention just 2 lessons here for all of us. 1, Modi ji never lets a good idea go to waste. His Man Ki Baat inevitably becomes his Man Ka Sankalp. His Sankalp is always Vajra Sankalp. His determination is as hard as a diamond. He does not rest with simply making a Sankalp. He knows how to turn his Sankalp into success. In the last 10 years, the world has seen how he especially chooses impossible-looking tasks and transforms them into reality. This, for all of us, is lesson number 1. Lesson number 2 is about his boundless energy. Narendra Bhai Modi's name stands for Anant Shakti, infinite energy. Since PDEU is an energy-focused university, all of us should learn to be as energetic as our Prime Minister. People often ask the question, where does Modi ji take rest? Or does he rest at all? I can tell you that I know the answer to this question. The answer lies in what Pandit Deen Dayal Upadhyay ji has said, who is the founder and whose name this university bears has said about rest or Vishranti. He has said, काम में बदलाव ही विश्रांति है. Change of work is itself rest. And I think this is our Prime Minister's motto. This
Welcome back to Power Breakfast on CNBC-TV18, and Bajaj Auto reported their Q3 numbers post-market hours yesterday. Sudarshan is joining in with us to give us the fine print on how the numbers were looking like. Sudarshan?
So Bajaj Auto, like TVS Motor in this challenging environment, has come out with numbers which are much better than estimate. It was margin-led beat. Margin has come in above 20%. There was an expectation that margin this time may slip below 20%, but Bajaj Auto has managed to post margin of 20.2%. That's about 20% for the 6 straight quarters. Now, so what are the positive factors that have worked for Bajaj Auto in Q3? First, demand remains healthy in 125cc plus segment. Second, raw material cost, which used to be higher few months ago, now it seems that raw material cost has stabilized. Third, because of favorable currency environment, margin seems to have moved higher. And fourth, despite an expansion that company has been taking in the EV segment, it continues to maintain market share in the petrol segment. But some of the negative factors, first, lower exports of KTM. KTM overseas have been facing certain issues, and that's the reason exports of KTM are lower in the Q3. Second, entry-level segment demand remains a concern, and company like Hero MotoCorp and other companies has taken a price hike in certain areas like Uttar Pradesh and Bihar. Third is Nigeria remains steady. Per month, company continues to do the selling of 35,000 units, but it's far away from the peak level. And fourth, pricing concerns, and due to the heightened competition that EV segment has been seeing for E3-wheeler and E2-wheeler, company is likely to have taken certain price cut. Talking about the numbers, EBITDA has moved 6% higher. It has come at 2,581 crore, and margin has come at 20.2% versus 20.1%. Outlook too is healthy. Company says exports will continue to grow at more than 20%. Second, domestic motorcycle segment is likely to see a growth of 6 to 8%. Till 9-month FY25 growth was 8%, but it's against 6% that industry had seen in H1 FY25. Also, it expects 125cc plus segment to grow faster than the entry-level segment. So overall, earnings are better than estimates. Even outlook is healthy by Bajaj Auto.
Okay, Sudarshan, thank you so much for that. Now, let's move on. And in other news, Digvijay Gaikwad, the latest entrant in the race to buy Religare Enterprises, was turned away by the market regulator SEBI. The Securities Exchange Board returned the letter sent by the Florida-based entrepreneur seeking permission to acquire 55% of Religare's share at 275 rupees per share. The request was returned as it did not meet SEBI's exemption application criteria. Now, do note that the offer put forth by Digvijay Gaikwad was 17% higher than what Berman family has offered to Religare shareholders. Okay, on that note, we're going to slip into a very short break. Up next, we get you the cues from the world of commodities, so stay tuned for that.
our motto, dear students, also. Therefore, when we think about these two lessons, how to turn ideas into action and how to work tirelessly, we cannot escape the conclusion that Narendra Modi ji is not only India's Pradhan Mantri, but for us and this university, he is our Gurudev, our respected teacher, and we will follow his learnings. We must aim higher. Within a couple of years, India will emerge as the third largest economy in the world. No power on earth can stop India's growth trajectory. I can clearly foresee that India will become the most prosperous nation in the world before the end of this century. But India, with other large economies, also has a big responsibility. We must not allow economic growth endanger planet Earth and further worsen the climate crisis. Therefore, the transition from fossil fuels to clean and green energy has to be accelerated. I am supremely confident that green technologies and green enterprises can reverse the ecological degradation and indeed make our planet more beautiful, more livable for future generations. Our Prime Minister wants India to become the greenest nation in the world. For this purpose, India is also transforming itself into a deep tech nation with advanced manufacturing capabilities. This is the context in which PDEU should see its future role and responsibility. My dear PDEU family, therefore, here are my 3 expectations from all of you in the PDEU family. My first expectation, PDEU should further improve the quality of research and make it application-driven. We should specially focus on newer areas like bioenergy, which have the potential to help our farmers and boost employment opportunities. My second expectation, we should simultaneously increase our internal strengths and also forge national and global collaborations so as to enhance our leading position in research and academics. My third expectation, the intersection of green energy, green materials, and artificial intelligence is going to shape the future of humanity. I would like PDEU to gain a leading position in this synergy. Talking of artificial intelligence, I have a piece of advice to our young students. You must be good at using AI as a tool of learning.
Welcome back to Power Breakfast on CNBC-TV18, and now it's time to go across to Manisha, who's joining in with us to tell us what's happening in the world of commodities. What was the overnight action that we saw in terms of crude, gold prices? Manisha, good morning.
Morning, Vinny. Thank you for that. I'll start with the crude oil prices, where we have seen a percentage point of gains in the overnight market. Well, the U.S. planning to issue tariffs on Canada, Mexico imports this week is what really seems to be bothering the market. Apart from that, Libya local protests also have prevented crude oil loadings in the last couple of days. So that means there's a supply disruption there. And then the street is also looking at weak Chinese data, rising temperatures, that is capping much of gains in the crude oil prices. But when it comes to the metal space, well, there is a definite increase here because you are looking at the slight decline in the US dollar index, and then US threatening to impose tariffs on copper, aluminum imports has led to US trading in premium for many of these metals vis-a-vis what is trading in the Asian markets or on London for that matter. US also is pushing for production within US, and that seems to be taking prices on the higher side. And before the tariffs can be imposed, there's a lot of buying and inventory increase that is happening that also has led to a near-term price increase for many of these metal prices.
Okay, Manisha, thank you so much for that. Now let's move on and get you the latest update again from the Mahakumbh Mela, where a stampede was reported earlier today morning after a barrier broke. The incident took place ahead of the Amrit Snan today, where an estimate of 10 crore devotees are expected. Ambulances rushed to the ghat where the incident took place. Now, news agencies Reuters as well as AFP report multiple deaths, but confirmation from the state authorities is awaited. With that, we're absolutely out of time on this edition of Power Breakfast on CNBC-TV18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.
Do not give up your own critical thinking. चैट जीपीटी का जरूर से इस्तेमाल करो, लेकिन याद रखो आर्टिफिशियल बुद्धि से नहीं, खुद की बुद्धि से हम आगे बढ़ेंगे और आप आगे बढ़ सकते हैं.
100 crores of orders we didn't execute because these are into industrial area. It's a new area, little larger volumes, etc. It has taken some time to kind of get hold of this. Orders are still there with us, and we probably will execute most of it in the coming quarter. So in terms of margin trajectory, we probably do better than 15% EBITDA for the whole year. And like I said, between 28 and 2900 should be our trajectory for revenue numbers, operating revenue numbers. We had been always talking about a 4,500 crore revenue. I think that looks doable now.
In particular, in the very near future, we're going to be placing tariffs on foreign production of computer chips, semiconductors, and pharmaceuticals to return production of these essential goods to the United States of America. The only way you'll get out of this is to build your plant. If you want to stop paying the taxes or the tariffs, you have to build your plant right here in America. That's what's going to happen at record levels.
I'm looking at some of the financials which are trading well below book or at book, where businesses are well run. I don't see the outlook for financials to be as challenging as it was back in 2018. I don't see any macroeconomic imbalances. I don't see, there's some stress in credit quality on the unsecured borrower side, especially individuals, but outside of that, there is really no stress. So, that's one area I'm looking at. I'm still looking at chemicals where business cycle has been very negative from an earnings perspective last 2 to 3 years, overstocking, high raw material prices, etc., etc. A lot of that has washed through the system. So that's again looking quite interesting to me. I think frontliners, there are some places where I can see some value. That's also looking interesting to me. And there are other manufacturing companies, bottom-up ideas that look good. And as you say, it's hard to buy when, the tape is so red. And the only thing that I do in times like this is say that, if I have 100 rupees of cash, I'm going to deploy it over the next 3 months. So you buy every day, you buy a little bit, and then you buy a little bit lower, and that's how it goes. We'll see how that plays out.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Will it be a better, even better day as compared to yesterday? That's the question. That's the hope. Overnight markets have bounced a little bit. I am Prashant. With me, my colleagues Nigel and Reema. Guys, hi, good morning.
Morning. Hi, good morning. Just about 2 days left for the budget. So many earnings to track. And unfortunately, we wake up with the dreadful news about the stampede at Mahakumbh.
That's really unfortunate. I mean, numbers are still trickling in, and one just hopes that the numbers are small. I mean, and just casualties. I mean, the state government's not confirmed anything, but I think news wires, etc., are carrying about some deaths, but we'll have to just wait.
We just prayers and support to all our brothers and sisters out there. So hope things are not too bad out there, and hope things are under control. But prayers and support to all those.
Absolutely, and we'll keep you abreast with what comes out of there. But that's essentially, of course, the mega sort of event, religious gathering, the Mahakumbh, which of course is underway in Uttar Pradesh. Visuals coming in from there. Okay, well, let's sort of look at the markets this morning, and it's looking better. And let me just start from the beginning. So. Last night, equities rebounded from the sharp sell-off that we had the prior day. And the sell-off was fueled by AI stocks, NVIDIA, etc. And, last night you had some of that rebounding. S&P about 1% higher by close. You had the NASDAQ, which was up about 2%. And the stocks like, the AI theme, NVIDIA up almost 10%. You had TSMC, which was up about 5% or so. So has the scare passed, I think, is the question a lot of people are asking. Has the panic subsided? And was what we saw day before yesterday a big buying opportunity? It's still not very clear. Because despite the rebound that we saw, only 3 out of 11 sectors in the S&P rose. To be fair, though, this has been in the last 2 days concentrated in large tech names. I mean, yesterday morning, we were talking about how if you looked at the prior Wall Street session, that's Monday's Wall Street session, despite the sharp sell-off on the Nasdaq, etc., only 30% of S&P companies were actually lower. And this morning, with the rebound, I mean, it's only 3 sectors which are actually higher. So, works both ways. You had the dollar index, which is up about 0.5% to 108. And I think the dollar moved in reaction to some of the tariff headlines, which are making it to the front pages once again. So Trump essentially saying that he wants, and I quote, much bigger tariffs. Who knows what that means? But this is, of course, after his Treasury Secretary, Scott Bessent, if you can move the graphics along, pushed for gradual tariffs starting at 2.5%. So, eventually the market will just wait and watch for actual action rather than just talk. But the White House press secretary also confirmed that February 1st is the deadline for potential tariffs on Canada, Mexico and China as well. Quantum, etc. Will it be 10% as he earlier said? We don't know. But the dollar was bid on the back of this, 0.5%, almost close to about 108 odd out there. The other, later today, it's a big one because you've got the mega cap tech companies which will report earnings. Tesla, Microsoft, Meta will report post-US close, and Apple reports tomorrow. The reason why these earnings are especially important is because we will also get to hear from people like Mark Zuckerberg, Elon Musk and others about what they make of DeepSeek and the Chinese AI advancement, and whether they think what they've heard so far, what they've seen so far is essentially going to lead to lower capex on AI infrastructure. I think it becomes important in that context. The other one, of course, is the Fed meeting, the Fed decision tonight. No changes expected, and I don't think markets are really expecting them to learn anything new in that sense with Trump and his policies, etc., which are still to be announced, let alone take effect. Now, we are in much better shape, I think, this morning, and let's hope that things look better. So I'm just going to put some levels to circle the markets here around. Nifty, we closed yesterday. The initial resistance now is at the 20-day moving average, which is 23,375. And then we get to the 40-day exponential, which is 23,620. With what we saw yesterday, we closed around the hourly averages, the 40 hourly, etc. So you look at the dailies now, and let's hope we get to it. On the downside, lows should not break. I mean, 22,786 is the low on the Nifty. Similarly, for the Nifty Bank, we actually almost hit the 20-day moving average with the sharp rebound. The Nifty Bank, of course, was the sharp outperformer yesterday. And the 20-day is for the Nifty Bank at 49,286. Then, of course, we get to the 40-day exponential, which is 50,124. And on the downside, the recent lows will be in focus. Remember, it's looking a little better. The market here has already corrected quite a bit, so that comfort is there. That it's not like the US, which has not seen any correction. And when the correction comes, it's like what we saw on Monday. But having said that, there is still important events like tariffs. There is, of course, the Fed decision. There are these important mega tech earnings which can move, which I think are more important than what we'll hear from the Fed tonight. And, of course, then we've got the union budget as well. Expectations are not high, but these are all just event risks over the next 3 or 4 days. 45 points higher on the GIFT Nifty. Nigel.
Well, that's right. And overnight, NVIDIA, they lost in the previous trading session $600 billion of market cap loss. And yesterday put on $255 billion, which is the third highest by any company in the history. So that was an important point. Let's focus on the cues, though, that we have. Remember, we have the expiry that will play out tomorrow itself. That's the monthly expiry. And yesterday's trading session, if you look at the FI data in the cash market, they sold in cash, but they added stock futures. There's a reverse arbitrage that's taking place out there. It has an element of rollovers as well that's taking place out there. Now, you're looking at the FI net short numbers and you'll say, whoa, those net short positions have come down by close to around 1 lakh contracts, because a few sessions ago, it was at around 3.5 lakh contracts. And now, in fact, it's at around 2.36 lakh contracts. But as we explained yesterday as well, for the next series, the lot size has changed. So effectively, the Nifty futures lot size for January is around 25. And the next series, that's in February, it goes to around 75. So that explains why there could be a bit of a short covering bounce that played out, but it also could be attributed to the change in lot size. So just keep that in mind, that big short covering bounce is yet to take place if you're due for that. The long positioning is at around 25%. It's come down, it's gone up from around that 16% or thereabouts, and shorts are holding around 75%. Now you're looking at the most important strike, and you want this level to hold out. That's a 23,000 put. Yesterday it added close to around 50 lakh shares out there. The premium was roughly around 150 to around 200 rupees. So that's giving you the crucial support zone. You don't want the 22,800, 22,850 odd mark to break on the downside. That's going to be very, very important. And on the upside, you'll get more confident once we go to around 23,200. In fact, you like to look at yesterday's high as well as yesterday's low. And from a bullish perspective, you'll want to get past yesterday's high, which is at around the 23,137. Important mark to track out there. And on the downside, you don't want the 22,800 mark to, get broken. I'm just pulling up a graph now of the Nifty Bank. It did very, very well yesterday, but it came off the highs of the day and it went very, very close to testing that 20 DMA. So you'll want to get back closer to around that 20 DMA, which is the crucial resistance zone. A few stocks I'll be tracking. Well, I'm looking at some of those stocks that have come out of the F&O ban. The list comes up for you on the screen, so keep an eye out on a few of these names. Sometimes we do see some action. And just one more point. A lot of stocks in the broader markets, they are falling. But keep in mind, some of this is trading related, not fundamental related. So there are plenty of stocks actually that have come out there to levels that you like to nibble in there. Don't throw in the towel. This is an opportunity, for those stocks that have not gone up on froth and on exuberance. Reema, what else are you tracking?
Well, the DIIs are betting on the market. So in terms of the numbers, yesterday, the DIIs pumped in 6,800 crore rupees, while the FIs sold 4,900 crore rupees. So far in the month of January, this is how the numbers stack up. The FIs have sold 79,000 crore rupees. DIIs have matched it by buying a little more than 80,000 crore rupees. But for the FIs, January marks the fourth consecutive month of big selling. From the month of October, that's October, November and December, Jan, the FIs have sold nearly 2.5 lakh crore in the cash market. Asian markets continue to remain shut today, most of them at least. China, Hong Kong, Singapore, Taiwan, South Korea on account of the Lunar New Year. And in terms of events to watch today, of course, the Fed meeting, the first one, since the Trump inauguration, Trump took over, so it's going to be crucial. But these are the big earnings. Tata Motors, Bajaj Finance, Maruti, Ambuja Cement, Blue Star, Voltas would be some of the big ones to track today. And ITC Hotels listing, so watch for ITC Hotels and ITC. The price discovered for ITC Hotels was 260 rupees. So, and we'll get to the earnings reaction in our top 10 segment. But let's get to the equity calls then. Mahesh Nandarkar of Jefferies says their meetings with 60 plus investors in Asia and US highlights concerns on growth outlook, rupee and government capex. He says their cautious view on the budget is predicated on an expected slowdown in government capex, but stock corrections largely build in those worries. He says potentially no negative surprises on tax can be a relief. He believes the Feb 7th commentary by the new RBI governor would be an even more important event and likely signal a pro-growth stance, and he would look to add more risk ahead of 7th of Feb.
Okay, all right. Vivek Paul is now joining us, Head of Portfolio Research at BlackRock Investment Institute. He's joining us now from our studios here. Vivek, great to have you with us here. Thank you very much for your time. Appreciate it. Let's just, of course, start with this entire AI-led sell-off and the rebound that we had last night. What do you make of it? You think, do we know enough now? I think people are just scrambling and figuring out whether this is really going to disrupt all this AI spending in the US on the back of which stocks have been doing well, or not really. What's your sense?
Well, look, firstly, thank you for having me on. Great to be here. I think in periods like this, when there's just enormous market reactions and lots of speculation, we've really got to examine, what do we really know? What do we actually know? And I think what we've learned is that it appears that the DeepSeek kind of technology has made some material advancements in efficiency. Right? So it appears that there are some of those techniques that kind of can save something in the order of 97% of the training costs relative to the legacy approaches. That is a big deal. So full stop, we know that. The implications of that, if we zoom out, there has to be something that accelerates the AI transformation more broadly. So we've been talking about this idea that this AI transformation is going to change markets. It's one of the structural mega forces that does that. And a way of looking at this is imagine if all of those legacy chips got 10 times more efficient. I mean, this is a big deal. What this means, I think, is that effectively we are going to have greater adoption. We're going to see more of those next phase winners come early, and I think that has to be the overall reaction. Now, that wasn't what markets appeared to react to immediately on the Monday. I think the point there was the market seemed to be reacting to the idea that perhaps as a result of the greater efficiency, some of the legacy infrastructure build out in the space was perhaps wasted money. I think it's way too early to make that call. I think if we were at a steady state adoption already of AI, then maybe the idea of greater efficiency
You're
might
saying
be...
we're early in the cycle, so there are lots of use cases, and so I mean it's not... we can't conclude right now, right away.
Exactly. I don't think it's a cyclical
we
dynamic.
won't see tech companies, and they all report tonight. We won't see them scale back any of the capex, etc.
Well, I think the point here will be it's going to be crucial to understand the kind of the commentary they give around those numbers, right? How are they going to react to this? And I don't think we can kind of sort of expect one thing or another right now. My point would be that in terms of the broader AI megaforce that we're talking about, this has to be an accelerator.
But will this be the pin that, in a way bursts the bubble? And coming on the tariff threat, right? We keep hearing headlines coming out of Trump, including yesterday. So what's your view on that?
Okay, well, I think on the first point, pin the burst bubble, that's not our expectation for the reasons I mentioned. Indeed, you see the reaction in the US markets yesterday, a large kind of unwind of some of the stuff that happened the day before. Moving to tariffs, I mean, in some ways we're making the same point that we need to really sort of sort through what do we know relative to the noise. And I think here, what do we know? We know that if the tariffs are comparatively targeted in certain ways, that's got a much less broader economic impact than if they are broad brush. And we're still going to be learning exactly what's going to be the case. And I think the starting point here would be that, there's a lot in the price already to some degree. We've talked about, I think you talked about earlier on the show, the idea of sort of some trouble, outflows from foreign investors with regards to Indian stocks. So some of that's in the price already. And I think, again, we still don't know exactly what's going to occur. The broader point, I think, on tariffs, I think, again, if we zoom out and look at the bigger global picture, macro policy is much more uncertain now than for a generation. And I think that is really impactful in terms of the sort of volatility we're likely to see. For a generation, we saw macro policy effectively dampen volatility. It kind of acted counter-cyclically. I don't think that's the case now. The election of the US president, and it's not just the US president, more broadly, you've seen incumbents everywhere get a bloody nose from the idea of changing of the guard or a surprise in election results. There's mandates for change, which means that macro policy more broadly can add to volatility going forward.
All right, Vivek, good to have you in the studio. Tell us, where does India come in the scheme of things? Till a long time back, we were talking about India standing out from the emerging market basket. Growth is there, earnings is there. Suddenly that narrative seems to have taken a turn. What's your view on India post the recent correction, and also given the kind of selling we have had from the FIIs? Yeah,
so I think it's really important to kind of distinguish between the cyclical and the structural when it comes to India. There are cyclical dynamics that we've talked about here that I think, the idea of the kind of growth slowing down, etc. You can understand to some degree the tariff uncertainty, why there has been some of that outflow. But the structural picture remains strong. And, to give you the kind of the bottom line here, when we're building longer run portfolios, we'd advocate an above benchmark weight, particularly given some of the correction that we've seen. The demographics megaforce that's transforming the economy, that's a huge advantage for India relative to many other countries, right? The idea that the working age population in this country will increase relative to almost everywhere else where it's going to decrease. And so I think when we're looking ahead, we've got to distinguish between the cyclical and the structural. The structural, I think, remains strong. So anyone with a longer holding period, these are the sort of times to kind of get involved.
All right, and we haven't spoken about this for a while, but India versus China, the Chinese market is very, very, very cheap. Suddenly they're making signs that maybe their economy will come out of the trough that we've seen. Between India and China, which side would you lean to?
Well, again, I think the nature of the uncertainty around tariffs, etc., is going to be hard, right? I mean, the point we've been making for a long period of time is this is an environment whereby there's sort of greater geopolitical sort of dispersion, and in that environment, so where the US is pulling in one direction, China's pulling in one direction, the opportunities for a country like India seem pretty sizable given the points I just made around demographics as well. So I think there is a case here that, from today, what we're talking about in terms of structural opportunities, we're talking more about the Indian structural opportunities than the Chinese now.
Super.
Right, Vivek, we'll leave it there. Thank you very much for joining us,
Thank
and
you.
hope this is the first of many chats, many conversations.
Thank you so much.
Thank you. Well, that's Vivek at BlackRock Investment Institute with his perspective on markets and some of the most important hot button issues out there. We'll take a quick commercial break here, but before that, let me just quickly tell you what we're going to be doing over the next 2.5 hours or so. So 8:35 in the morning, you'll hear from Pralay Mondal of CSB Bank, and he's going to be joining us on the third quarter earnings. 9 o'clock, you'll be hearing from the management of Hindustan Zinc, third quarter again. 9:15, of course, is the market master of the day, market conversation. 9:30, Bajaj Auto will be with us with their third quarter numbers. And CG Powers are going to be a company we'll speak with. Outlook, extremely important. Stocks corrected quite a bit. At 9:50, Suzlon, again, a company which is, at least a stock which has lost a fair bit recently. We'll talk about their outlook post third quarter. 10 o'clock, we'll have budget expectations and, of course, what the RBI, etc. has been doing. It's the economy, the budget special at 10:15. Lata speaks with KB Kachru of Hotels Association of India and Vijay Diwan of APJ Surendra Park Hotels on the hotel industry's asks from the union budget on Saturday.
Well, we'll slip into a small break. We come back, we'll focus on all the stocks that we've lined up for you in our special Top 10 segment. We're looking at Bajaj Auto, Mahanagar Gas, GMR Airports, Suzlon, BHL, all of them will be reacting to positive news flow. While on the flip side, we'll have a few stocks that will be reacting to negative news flow. JSW Energy, SBI Cards, Mahindra & Mahindra Financial, Colgate, as well as Star Health. Slip into that break, come back, we'll get into further detail on all of these names.
Testing.
Good morning. The GIFT Nifty is suggesting that the relief rally that we had yesterday is likely to persist and continue. So 50 points up right now on the GIFT Nifty. The question is, can we conquer yesterday's intraday high of 23,137 and then hit higher towards resistance levels of 23,300? That would be the key to track. But for now, let's get to individual stocks. Our research team is standing by with our list of the top stocks for the day. Good morning, boys. So let's start with Sudarshan on Bajaj Auto.
Good morning, Rima. So it's a margin-led beat like TVS Motor. Bajaj Auto has also reported a healthy set of earnings and margin has come in at 20.2%. There was an expectation that margin may slip below 20%, but it's above 20% for 6 straight quarters. And some of the positive factors that have worked for the company: first, demand remains healthy in 125cc plus segment. Raw material cost seems to have stabilized. Second, favorable currency environment also has helped margin. And third, despite the EV expansion that companies has been taking, it continues to maintain the market share in the ICE segment as well. But there are some of the negative factors as well. First, KTM exports were lower because KTM has been facing certain issues overseas. Third, demand remains a concern in the entry-level segment. Nigeria demand has been steady. Company continues to do the selling of 35,000 units per month, but it's much below the peak level that company had seen. And pricing concerns both in the EV segment, company has taken certain price reductions in certain areas like UP and Bihar. On the numbers front, EBITDA has increased by 6%. Margin remains flat. YOY, it has come at 20.2% versus 20.1%. Outlook is healthy. Company expects exports to grow by more than 20%. Domestic motorcycle growth that was at 6% as of H1 FY25. Company says it's likely to see a growth in the range of 6 to 8%. And that growth range would be for the industry. So on the earnings front, it's a steady set of earnings and outlook is healthy as well for Bajaj Auto.
Thank you very much for that. And I believe the EV business has also turned EBITDA positive in Q3, aided to some extent by the PLI benefits. We have the management joining in at 9:30 a.m. to discuss the Q3 numbers. But over now to Vivek for JSW Energy. Vivek.
Well, good morning. That's right. So JSW Energy, muted said as far as Q3 was concerned. But one thing to note is that the company has, or the stock has seen a very sharp sell-off. So that may limit the downside. But overall, a muted quarter as far as JSW is concerned. Revenue is down by almost 5.5% on a year-on-year basis. EBITDA down almost 17.5%. This on the back of the fact that the company that has a significant portion of its energy capacity that it sells on the merchant market or which is not tied through long-term PPAs actually witnessed some amount of compression as far as spreads was concerned, given the fact that DAM, that is the day-ahead market prices or the spot prices, were down almost 26% on a year-on-year basis. This impacted the company's margins as well as the spreads. On the back of that, margins this time around 38% and profitability down almost 32% on a year-on-year basis. Company is looking to raise close to 3,000 crore via an NCD issue. And also remember, the company actually saw its wind capacity start, but this is a seasonally weak quarter as far as wind energy was concerned, and that also impacted the earnings. What is it that we need to watch out for? The first thing, remember, there was a significant sell-off in the stock price. This is after CERC rejected the company's BESS project, battery energy storage project tariffs. And now the company has gone ahead and appealed this particular tariff order that was passed by CERC, and this particular hearing at APTEL is scheduled on Feb 6th. That's an important trigger as far as JSW Energy is concerned. Expect some pressure on the stock today.
Okay, all right, some pressure on JSW Energy. Thanks for that, Vivek. Let's go back to Sudarshan. Sudarshan, tell us about MGL.
So like IGL, MGL has also reported earnings that are better than estimated. It's a volume-led beat. Volumes are up 2% sequentially, and on YOY, it's up 12% year-on-year. EBITDA is down 21% sequentially, but it's much higher than our estimate of 285 crore. It has come in at 314 crore. Margin also has come in at almost at 18% against our estimate of 16.3%. Volumes have come in at 4.12 MMSCMD versus our estimate of 4.07. And EBITDA per SCM, that is one of the important parameters, it has come in at rupees 8.30 versus our poll of 7.40. But beyond the earnings, what would be in the focus? What does company say on the pricing front if company is planning to take any price hike? And second, what is the update on the APM gas allocation if company has got certain assurance from the government? But I'm going with green because of the earnings.
Okay, all right. So thank you very much for that. Well, we have GMR Airports, which should be in focus, and Suzlon on the back of earnings as well. Vivek has got both. Vivek, morning.
Well, good morning. Much better results both from GMR as well as Suzlon. So first, let's start off with GMR Airports. Revenues high by almost 19%, largely led by higher aircraft as well as higher passenger growth in the quarter gone by. EBITDA high by almost 48%, margins coming in at 37.4%, a strong expansion as far as margins were concerned. Profitability at 202 crore versus a loss seen last time around. But remember, there is a one-time 410 crore impact as far as profitability is concerned. This is a positive impact that the company has recognized. This is on account of disposal of stake in the Cebu Airport. Also remember an important development, Hyderabad Airport has actually announced a dividend for the first time since 2019. One worry is the fact that net debt has actually inched up on a year-on-year basis, up 17%. But overall, a strong set of from GMR Airports. On the other hand, Suzlon, remember the company had guided for a much better H2 in terms of execution, and the company has delivered. Revenues higher by 91%. This was aided by net volumes or net execution coming in at 447 megawatt versus just around 170 megawatt on a year-on-year basis. EBITDA has doubled on a year-on-year basis, close to 500 crore. Margins at 16.8%. Profitability higher by 91%. Order book continues to remain very strong at 5.5 gigawatt. Now both CNI as well as PNU actually contribute close to 80% of the total order book. Company has also mentioned that they look and evaluate further inorganic growth opportunities.
Thank you very much for that. And at 9:50 a.m. today, we'll have the top management, the CFO of the company, joining in to detail the way forward. But it's back to Abhishek now for SBI Cards and M&M Financial.
Well, to begin with SBI Card, it's like Maruti ad credit cost doesn't seem to get over. So 14-quarter high credit cost of 9.4% versus 9% in the previous quarter. For 24 quarters in a row, their annualized credit cost on a quarterly basis has been north of 4.5%. The net interest margin continued to remain on the lower side. It was at 10.6%, which is perhaps one of the lowest that you are seeing in last 19 quarters. Revolver rate has improved this time around to 24% versus 23% in the previous quarter. However, the return ratios, that is ROA, is at multi-quarter low of 2.4% versus 2.7% in the previous quarter. The PAT has declined by more than 30% YOY and more than 5% sequentially, and much below many analyst estimate like Motilal Oswal and Nuvama as well. M&M Finance, the loan growth has come in at 19.5% YOY and a decline of 0.7% sequentially. So YOY, the loan growth is one of the lowest that you are seeing in last 10 quarters. The gross NPA ratio is the highest in last 4 quarters, coming at 3.93%. Net NPA ratio is, the highest in last 8 quarters. Now, it's weird to see that net NPA has increased massively given the fact that they have reduced their PCR. So, provision coverage ratio is at 50% versus 59.5% in the previous quarter. It's one of the lowest that you are seeing in last 18 quarters, and this has aided the bottom line. Housing Finance subsidiary has reported a net loss this time around of 27 crores as asset quality woes have weighed in over there. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Vamakshi. She's here to tell us about BHEL. Hi, Vamakshi. Morning.
Well, good morning, Nigel. When we look at BHEL's numbers, revenue saw an uptick of nearly 32% on a year-on-year basis. This was 4% higher than what the street was penciling in, and this growth was supported by both of their segments, power as well as industry. The gross margins for the company also rose by 1,021 basis points to 37% odd. When we look at the EBITDA margin, that is seeing an improvement of only 25 basis points year-on-year. This has come in nearly 126 basis points below the consensus estimates. EBITDA too seeing an uptick of 41%, but again there's a miss out here as compared to consensus estimates. Why this miss? And that is because the other expenses saw a substantial jump this time around. The net profit despite that nearly tripled, but again came in below the street's expectations. Overall, the order inflow was quite robust. Order inflow came in at 6,860 crore. This is an uptick of almost 167% on a year-on-year basis. The order book is also looking quite healthy at 1.6 lakh crore. This is an uptick of nearly 47% on a year-on-year basis. When we look at the segment-wise performance as well, that also seems quite healthy. Revenue saw an uptick of 32% for the power segment. EBIT margin also improved by 178 basis points. As far as the industry segment is concerned, the revenue saw an uptick of 33%, and the margins here have improved substantially by 465 basis points to 6.4%. So overall, when we look at the numbers, yes, it's a miss on EBITDA as well as the margin and the net profitability, but that is mainly on account of other expenses. But apart from that, the rest of the results look fine. So my sense is the stock is expected to open higher.
Okay, all right. Thanks a lot for that, Vamakshi. Well, hopping across to Mangalam now. Mangalam, Colgate, not too good?
Well, a feeble set in what is a tough business environment. We've seen that across a lot of the FMCG companies, and Colgate no different as well. The revenues just shy of 1,465 odd crores. The street was working with a number of below 1,500 crores. The EBITDA, as a result of which, was a bigger miss, 454 crores versus expectations of around 475 crores, and the net profit came in at 323 crores versus expectations of 337 crores as well. Even if you look at it year on year, it's just a sub 5% revenue growth in which the domestic business has actually grown just about 3% We've seen a decline in both the gross margins and the EBITDA margins. The net profit as a result of which has declined by about 2% too. Though not all is bad, what's good is that the company's reported mid-single digit volume growth. That was pretty much in line with what the street was expecting, and there has been positive momentum in the premium portfolio. Though the environment is tough, the company's called out relatively soft demand, particularly in the urban market, and they've also called out heightened competitive landscape. So that's something we'll have to keep an eye out on from a margin standpoint going forward as well. But how much of that is in the price? The stock's down about 30% from the highs, trading at around 45 times, slightly below historic valuations. So opens in the red, but could there be buying at lower levels is something that we'll track.
All right, Mangalam, thank you very much for that. So that's Colgate there. We've got some news coming in at the bottom of the screen. Let me just sort of run through the top 10, then we'll address this at the bottom of the screen. Star Health reported earnings. Yash has got details here. Yash, morning.
Morning, Prashant. So, of course, a weak set as far as Star Health Insurance is concerned for the third quarter. The net premium earned, that's grown at a decent number of about 15%, coming in at about 3,800 crore rupees. But the operational performance has been very weak. Underwriting loss, that has gone to about 49 crore. This compares to an underwriting profit of about 114 crore a year ago in the same quarter. Operating profit, that has come down by about 46%, coming in at about 153 crore rupees. PAT, as a result of which, has also seen a decline of about 26%. Combined ratio, importantly, that has seen a significant correction of about 546 basis points at about 103.28% versus 97.82%. What have been the two reasons for this? The increase in commissions and total expenses. Commissions have increased by about 43%, total expenses increasing by about 21%.
Thank you very much for that. Some more details from the NetWeb press release. One, remember the stock was down 10% yesterday. It's fallen more than 50% from its recent 52-week high, and the street was concerned because NetWeb has a tie-up with NVIDIA where they supply some of the solutions for NVIDIA's GPUs, etc. They use it. So therefore, the street was concerned. And the second reason is the 1.5-year IPO lock-in ended on Monday. This Monday. So there were additional 1 crore shares which were released, and that added to the supply pressure when there was so much negative news flow. So here the company is basically trying to say is that DeepSeek paves the way for the market to expand. So earlier, perhaps there would have been companies which were hesitant to adopt technology because of the high cost of adoption. But now with DeepSeek lowering the entry barriers, reducing the cost, we will see more customers adopting to it, and NetWeb solutions are GPU neutral, which means that they can cater to all companies, whether it's NVIDIA or DeepSeek. So that's the basic crux of it. They go on to say that the company's financials are very robust. In the first 9 months of the year, the company's revenue growth has been in excess of 60%. Their order book stands at 360 crore rupees. Their L1 pipeline is strong. And therefore trying to allay some concerns, but basically, making the point that, these developments, these breakthroughs in AI will only expand the market further, which will benefit NetWeb. A quick recap then of the top stocks to watch. Stocks with positive news flow are Bajaj Auto, MGL, GMR Airports, Suzlon, BHEL. Stocks with negative news flow are JSW Energy, SBI Cards, M&M Financial, Colgate Palmolive, and Star Health. And from stocks, it's over to Manisha now for a complete roundup of all the action from the commodity market overnight.
Thank you for that, Reema. Well, I'll start with the crude oil prices, where we have seen a percentage point of gains in the overnight market. This is after 8 days of constant decline. Well, U.S. planning to issue tariffs on Canada and Mexico imports this week is what really seems to be supporting markets, because that would mean higher prices. And apart from that, Libya protests have also prevented crude oil. That supply disruption premium also is getting in prices. But apart from crude, when you look at metals, this is a very interesting trend, because base metal prices have gained in US and have declined on London Metal Exchange. With the import threats and import tariffs on metals like copper, aluminum, etc., there's a lot of buying that is happening in US ahead of these tariffs being imposed. So you have copper premium in US standing at a tall $300 a ton right now, and that's exactly what we've seen in aluminum and zinc, and in some sense steel as well. So metals in US are expensive than metals anywhere in the world at this point in time.
Okay, all right. Manisha, thank you very much for that. So that's commodities in focus as always with Manisha. We'll take a quick commercial break here. You'll hear from Pralay Mondal of CSB Bank as we discuss their third quarter numbers and outlook going forward. Stay tuned, that's coming up.
Welcome back. You're tuned into Bazaar Morning Call. As promised, let's get straight to the first management. We have CSB Bank. They reported a decent set of numbers. The deposits came in healthy. The NIMs fell sharply. To understand what's the way ahead, Mr. Mondal, the MD and CEO at CSB Bank, joins us on the show. Hi, Mr. Mondal. Good morning and always good to see you. Give us a couple of details. Your cost of funds, I think, were hovering around 7%. Your NIMs have seen some kind of contraction. What's the outlook on both these two parameters going ahead?
Good morning, Nigel, and good morning to your viewers. We had a decent quarter, as you said rightly. Having said that, there has been a little bit of a challenge in the NIM, primarily because of two reasons. One is we had taken a conscious call to reduce or degrow our high-yielding businesses like MFI, personal loans, agri, those kind of businesses, which effectively meant that we are mostly focused on our wholesale, retail, MSME, and gold. The second part is also on the wholesale side. As I said before, that we are exiting some of the larger but high-yielding relationships, which we did last quarter. And that's one of the reasons why our wholesale business is looking little muted, though we have grown there on the core book by 30%, but we have shown a 4% growth because of some of the exits we did. And thirdly, of course, the cost of funds, which everybody is facing in the industry right now, has gone up. And will continue for a while till the liquidity issue is sorted out. So I think broadly, based on all these, there had been a little bit of a pressure on the NIMs. I'm not expecting it to really pressure to calm down. So we have to wait and watch how this quarter plays out. On our cost of funds, I think it's also a function of cost of deposits, CASA, and some of the FCI borrowings, which we took to ensure our LCR ratios are much better. We ended the quarter 130% on a period end basis and average 119% on the LCR side. So FCI borrowing would have taken up the cost slightly more than what it was normal, but with SOFR, because it's SOFR linked, it will start coming down once the SOFR starts coming down. So broadly, we are okay because overall ROA we have managed at 1.52%. And broadly, I think we are chugging along well in our overall plans, what we plan for SBS 2030.
But sir, you're guiding that in Q4, NIMs decline even further compared to Q3 levels? And what percentage of your book comes from those high-yielding assets, like credit cards and MFIs? And what's the extent of pruning of the portfolio and how much more to go?
So currently, Rima, good morning. Currently, we have around 4%, well, less than 5%, actually 4.2% of our book is unsecured, which would include some of these products and businesses which you're talking of. So we have pruned it quite a bit and we are not growing them anymore. So we have only 3 businesses we have degrown this quarter, which are these products. And going ahead, yes, I think our NIM, we have to wait and watch this quarter, depending on how the cost of funds is and how the cost of deposits are going up. In my last interview, when I said 7% is our cost of funds, I said incremental cost of funds is around 7%. Overall, our cost of funds is closer to 6.4. Having said that, we expect the pressure to be on, though RBI is taking a lot of steps to ensure there is more liquidity in the markets. But we have to wait and watch how it works out. But I'm not expecting NIM to go up from here anymore. We have to manage within I think now the range will be between 4 to 4.2. And in that range, you have to play.
All right, Mr. Mondal, what about asset quality? If you could give us some numbers, slippages, how you see the book shape up going ahead. Because the fear is that, not just for your bank, for the industry and the whole, there could be signs of pain. What's your take?
Yeah, Nigel, I mean, fortunately for us, we saw some of this coming. I think it's a small cycle, not a big one, but still we are a small bank, so we have to be careful. So on the MFI, personal loans, unsecured loans, agri, all these businesses, we actually have degrown this quarter product by product. Even last quarter, we had degrown. So from that perspective, it's only 4% of our book at this point of time. Overall, our GNP has come down by around 10 basis points. And NNP has come down by 5 basis points compared to what it was last quarter. But on a year-on basis, there is a slight elevation. But overall, I think with a credit cost of below 20 basis points, we are pretty much okay. And I am not seeing any reasons why our credit cost should go up in this year. So I think we're pretty much safe and doing whatever we can do in terms of quality of book. And that's the reason we actually exited a lot of relationships with higher yields. And we are playing in the range between 8% to 12% range in terms of IRR for all our businesses, including gold and wholesale and SME and retail. So I think our credit quality is pretty good at this point of time.
Your gross NPAs were at 1.58%. Do you think you can bring it down to 1.5% as exit gross NPAs? And these advances deposits growth of 25-30%, is that sustainable in Q4 or at least the first half of FY26?
I think on the growth side, we should not have too much of an issue. I mean, my guidance had been that we will grow 30% to 50% faster than the system. That has been my consistent guidance over the last 2-3 years. This quarter, we have done a little better. We have grown faster than the system by almost 100%. And I think that's because the system slowed down. We continue to do whatever we are doing, maybe a little better. But overall, I think we should be able to maintain this kind of a growth for us in the next quarter or in foreseeable future. I don't see a problem. And in terms of credit cost, I see it retaining at these levels. But slightly in the long run, we may come down also on the GNP and NNP because we had a slippage at the beginning of this year, which will carry through this year. And once we start provisioning them fully, hopefully the overall NPA will start showing little decline. But that's somewhere will happen in the next year. At this point of time, I would hold on to these numbers where we are right now.
All right, Pralay, good to speak with you. Thank you very much for joining us as always here on CNBC-TV18. And we'll, of course, come back and circle around, speak with you more over the next couple of months. We'll take a quick commercial break here. We're going to come back and we connect with Devin Choksi of DR Choksi FinServ. Some fundamental stock conversation coming up. learning is what? I mean, stay in the country that you're investing in, stay bullish. And for us, it is India. So you've got to be an optimist.
Yeah, that will also drive looking at the front view mirror, looking at the windshield. Don't look at the rear view mirror while driving because, markets change. Economies are very dynamic. The companies that were in the Forbes 400 25 years ago, even in America, no longer exist today. There are a new bunch of companies. So it was a great mistake to think that...
Welcome back. Let's invite Devin Choksi on the show now. Devin, good morning. We've had so many earnings to react to, parse through, whether it's MGL, SBI Cards, Bajaj Auto, BHEL, Suzlon. Tell us, which one is the pick of the earnings season from at least what we heard in the last 12 hours?
Yeah, good morning, Dimas. Well, I think the Bajaj Auto numbers, as you mentioned, I think they are largely in line with expectations. Particularly, I think the growth is on a higher side. More importantly, I think the larger part of the undertone of the management commentary about exports growing at 20% rate of growth, EV business contributing to the overall profits now. And on the whole, I think the business segment, I think above 125cc is also showing higher promise for growth. So if one looks at, I think the future prospects going forward, I think each and every portfolio, be it flex fuel motorcycles, be it an electric vehicle segment, or for that matter, I think the higher amount of exports and the credit business which they have started, all put together, I think the growth looks, I think, quite promising for Bajaj Auto. In my viewpoint, I think this one company deserves to get further rated now, and probably I think one should see, I think, a consistently better performance, I think, from the commentary that we have heard from the company.
Got that. Devin, good morning. Just wanted your thoughts on CG Power, if you have a view. Numbers came yesterday, and you'll be hearing from the management later after 9:30, but your thoughts, stocks again. It's one of those names which has corrected sharply from 800 levels, has come off about 30%.
Yeah, Prashant, good morning. I think, yes, on the face of it, I think I have studied the numbers, not gone into detail because of the want of time. But I think on the face of it, I think it remains a little bit disappointing set of numbers. Of course, I think we would like to make any comment at this point of time till the time we hear the management and come back again on the subject.
Okay, all right. Got that. So that is CG Power in focus in that sense. Let's just quickly take a look at a few other sort of areas as well, which have been kind of hit hard over the last couple of days and weeks now. And banking and financial services, there was, of course, CSB Bank, who we spoke with. But what's the view now, Devin? Anything looking particularly attractive? I was just looking at some of the valuations yesterday evening, and except ICICI Bank, Chola Finance, and Shriram Finance, all, I mean, I think a majority of the well-tracked financial names, both banks and NBFCs, are now below their 5, 10, 15-year, 20-year averages, 1 year forward, price to book multiples. Anything looks attractive? I guess they have been there or below for a while, but I think they're in focus again after what the RBI has done, and it's kind of raising questions whether we're at a turning point. Your thoughts, Devin?
Yeah, and I think the good part is, I think most of the banks and the NBFCs have been producing better results than before. So that is a good part. In spite of, I think, the challenging environment in which they are operating, still, I think the performance seems to be, I think, far better than what market was fearing about. Look at the consumer finance businesses, look at the housing finance businesses of the large NBFCs like Bajaj. Look at, I think, the growth coming in from the corporate banks, including likes of Kotak's. I believe that, I think, the business condition remains absolutely conducive for them to grow further in coming period, largely because the economy is growing. And we are seeing the retail consumption is also increasing, so the retail credit is also increasing. So from that perspective, I believe that the companies with a pure retail focus are going to be more steady in providing the growth momentum going forward as well. The key would be the de-rating of the stocks. As you rightly observed, I think some of the stocks have been traded at a valuation which is far more lower than the previous past. So from a perspective looking at de-rating, maybe I think the banking sector as a whole, once the rate cut reduction starts, in next 6 quarters or so, we should be seeing most of the bank stocks getting re-rated to the higher levels. So we remain distinctly positive, though selectively in some of the pockets. We add the portfolios, we stock into the portfolio as well.
Okay. Hi, Deven. Good morning. Good to see you in as always. Deven, what do you make of these plays? You know, Swiggy, Zomato, they have come off big time from the top. Swiggy, in fact, yesterday came below its IPO price as well. For those who said that they missed out, the stock ran away, it's giving you another opportunity. Is it an opportunity or would you stay away?
Hi, Nigel. Good morning. Well, I think view remains very clear. As a consumer, I think this particular opportunity remains absolutely formidable because I think you are getting maximum benefit out of the services that these companies are providing. A phenomenal consumer tech platforms that they have built actually. But when it comes to investments, definitely I think the valuations are not supporting the earnings of the company. Earnings of the company, in particular for Swiggy, I think they are yet to come out of losses. They may come out of losses in few quarters from now. That's what the company's commentary says. But in that situation too, I guess I think the valuation-wise, everything is fully priced. Swiggy, Zomato put together, I think will have the market valuation of about 3 lakh crores. And on that, I think the profit for both the companies put together, when you put it together, I think there is not much of a thing to talk about on the profit side. So in my view, I think these assets are costing or they are trading expensive in the marketplace at this point of time. Unless I think the market gains some momentum and a fresh money comes for higher amount of risk, I don't think that I think these stocks will be once again getting back into the kind of momentum that we have seen in the past. So I would stay away till the time I think the correction is complete. Maybe time correction would be higher compared to the price correction in given situation.
Okay, all right. Got that. Stay away from them. Deven, I wanted to ask you about a couple of other names from the EMS pack. You know, you have stocks like Keynes and all that have come off 35% in a matter of, I think, 12, 13 sessions. The EMS theme, it ran away, it went up, like a rocket, but it's come down in the similar manner. Your take on these stocks? Anything you like from the pack among all of these players?
So I think the growth point of view, I'm not doubting these companies, but the fact remains that I think even on that growth, the valuations are fully priced in at this point of time as well, despite of the correction in the market price. In my viewpoint, I think unless the risk appetite gets developed further, we are not likely to see the new fresh allocation of money coming into this particular space. Even though the companies would continue to produce better results as they promise, but I don't think that I think on a given valuation too, the immediate follow-up buying will take place. This is part of the price correction. I think some of these companies would enter into some long time time correction actually. Having seen the price correction in the rapid manner, I think the time correction would be at least significantly larger in some of these companies as I see it.
Okay, all right. Thanks a lot, Deven, for stopping by and helping us out with your take on all the stocks that we discussed. Well, let's get to Mitesh Thakkar. He's joining us to help us out with the technical call on the markets. Hi, Mitesh. Good morning. Good to see you in. Good relief rally, Mitesh, we had yesterday, but towards the end, a little bit of a disappointment with the way we closed because we slipped from the top. Your take, is there more in store? Can we extend the up move, say, maybe to around 23,400 or thereabouts, or do you think we'll go ahead and first touch lower levels?
Morning, Nigel. So I think testing lower levels is something which I think, we are kind of looking at it as a diminishing possibility. One main reason is the chart structure set up on the Bank Nifty. The Bank Nifty yesterday opened with gap up, made what can be, called as an early signal of a double bottom formation. If that plays out, then the Bank Nifty should head towards 49,400, 49,800 zones. And once we start getting past those levels, we may even look at a proper reversal in the Bank Nifty. While the Nifty chart is not very encouraging, maybe in a day or two, we'll get a clear signal as to which way we are heading. But at least in the Bank Nifty, it looks like that we have made a temporary low. And in the Nifty also, if we hold 22,800 and then 22,650 zones, I don't think declines could be much below that because we are extremely oversold on the Nifty chart as well. So while it is slightly too early to get optimistic, but certainly there are signs which suggest that, we might would have made a low or we might be near a low. In that sense, I think, trading with long bias could be more profitable, especially on the banking and financial names.
Sudarshan, hi, good morning. Are you getting optimistic that perhaps we've made a bottom and think we could be headed higher on the key indices?
Yeah, good morning. See, it's too early to be optimistic in the sense that we have made a bottom. That's, I mean, that event happened 2 days ago. It's only possible that after a few days' time, we can give a confirmation that, okay, for the last many days, that low has been held, so we have made a bottom. Today, it's too early. But it is possible to say, at least for the very short term, that there is a trade on the long side. That trade emerged yesterday morning, and that has continued. It's after so many days that the markets did not give up its gains, did not go below the previous lows. So to that extent, as a short-term swing trader, there is a buying opportunity in the Nifty. But as we look for 1-2 day trades, the trade today remains on the long side.
Okay, all right, got that. Trade remains on the long side, and I recall you saying that yesterday as well, and that did work, Sudarshan. You go first. Tell us about individual stocks.
Well, Indigo is a buying opportunity with a stop under 4180. Maruti is a buy with a stop under 11,880. Then we can't forget the banks. State Bank is a buying opportunity with a stop under 746. And an intraday short, they are now, coming in pharma. And that is a sign that perhaps the Nifty is willing to go higher when the defensives start getting a little dull. So Oro Pharma is an intraday short with a stop above 1160. So 3 buys and 1 sell.
Okay, got that. 3 buys and 1 sell. Mitesh, what about you?
Well, I have 3 buys and 1 sell too, and Indigo is on my list as well. Keep a stop below 4240, look for a target of 4355, possibly 4400. JK Cement is a buy with a stop at 4785 for targets of 4950. Also a buy on Axis Bank with a stop at 960 for targets of 1020. And on a mild pullback, sell Sun Pharma, let's say 10-15 points higher from the closing price, around 1715, 1720. Sell with a stop at 1741 for targets of 1680.
Okay, all right. Mitesh and Sudarshan, thank you very much for that. We'll take a quick commercial break here. We're going to come back with the pre-open session. We'll also connect with the management of Hindustan Zinc to discuss their third quarter numbers. Stay tuned.
Look back and I think one of the things you told me is really stuck with me. You said, and we'll talk about the nitty-gritties, MTNL is an example, and many others will share other examples as well. But when you began and when you started and you came back from the US and when you started the investing journey, you said, in a way, we didn't believe enough that, well, we could that India could change so rapidly and so deeply and in so many ways. And, it'll be rich pickings over the next 20, 25 years or so. So I just wanted to take us through that.
Yeah, Prashant, think about it. I came back to India in the late 80s. India had a balance of payment crisis. Our per capita users of phone was like 3 in 100 or some astronomical number like that. And we always make the mistake of assuming the past is prorogue, that what happened in the past, that 3% growth will happen in the future also. So we fail to understand that because the Berlin Wall had fallen, we're in the precipice of change. Once things go to zero, they don't go below zero in the market, they'll go higher. And that's typically what happened. All the changes, whether the tax rates came down, whether the industrial licensing was scrapped, whether the socialist statist economy went through, all of that happened post-89 because India was in such a horrible shape at that time. And my friends who kind of understood that with the simple underlying philosophy, be bullish in India, prospered hugely from it. I took more time to understand that this is a long-term structural change, that the India that we grew up in was not necessarily the India that was going to be for the next 30, 40 years. And to understand that process took me a long time. But once I understood it,
so markets will always be mispricing. But
Welcome back. In a few minutes from now, we'll get the pre-open rates. But that said, let's get in another management. We have Hindustan Zinc. It reported a rather good set of numbers. Margins came in healthy. Cost of production dipped to a 15-quarter low. To discuss this, what's the way ahead, Mr. Arun Mishra, the CEO and whole-time director of the company, joins us on the show. Hi, Mr. Mishra. Good morning and good to see you again. Well, I recall you mentioned that zinc will be approximately $3,000 per ton in early 2025. So bang on. Good on you. What's the outlook with regard to zinc as well as silver prices, which have gone through a bit of consolidation?
No, absolutely. I still think the fundamentals are strong. Zinc prices will remain between $28.50 to $29.50 per ton in the fourth quarter. I see the silver prices remaining range bound between $30 to $31 per troy ounce, and I think these two factors should see us register good numbers. If you look at our 9-month performance, quarter 3 performance, best ever third quarter, 9-month wise, of course, on the volume front, we have grown by about 3% on the volume side, but overall revenue growth in quarter 3 has been 18%. PAT growth has been 32%, which is phenomenal. 9-month wise, PAT growth has been 28%, which is also one of the best in the market, so to say. So this momentum continues, and $28.50, $2,900 per ton on zinc side, and silver $30-31 per troy ounce should help us to register best ever numbers in quarter 4 as well.
Okay. Sir, are there any signs of slowdown with respect to demand? And what can you guide in terms of a zinc volume growth? When do you think silver volume growth will pick up?
No. So even if we are at 511, so even if we repeat the same performance of quarter 3, we are at 670 plus. So normally quarter 4 is best ever. So I don't see any reason why we should not be touching 700 tons, which can also make us quite good considering the circumstances that in the mines, in the sections where we are working, our grade has not been that good. But at the same time, we will continue our growth in zinc. Our new roaster is coming into place. We have got a lot of debottlenecking has been done, and normally quarter 4 we register the best ever numbers in quarter 4. So yes, while zinc numbers year on year basis we hope to register 9-month basis 3% growth. It may increase a little bit over 3%. We will register that, and at the same time, silver side will try to make up and try to go as close to 700 or cross 700 if possible.
Got it. Mr. Mishra, the bright spot was your cost of production. That's come down to a 15-quarter low. Could you tell us what is the outlook from here on?
So no, it will only be southwards because our renewable power, as we said, is our biggest driver to reduce our cost of power. Our renewable power mix has steadily been increasing. Quarter 4 also will see an exit of more than 13 or 15% of renewable power, which should help us to lower the cost of power and hence the cost of smelting and of course overall cost of finished goods. At the same time, since the volumes are typically best in quarter 4, no more shutdowns, will also show additional cost reduction in quarter 4. So this southwards journey of cost will continue and in the direction of $1,000 per ton as we promised. And we launch further expansion of the mines to achieve finally $1,000 per ton of cost.
So you're generating healthy cash. Should shareholders be expecting any sort of dividend, any sweetener that you're looking at in the form of dividends?
I can't comment on dividend because it's purely on the prerogative of our owners as well as the government nominee directors. They have to decide. As far as my job is concerned, we will keep on producing cash as much as we can and providing a profit of about close to 2,600 or 3,000 crore in a quarter is a good enough money for there. It's up to them to decide how much to give for dividend and how much to give for growth capex and all that. But money is no constraint as far as I am concerned.
Oh, that's good to hear then. But is there an update with regard to listing all the different business verticals separately? Because the street wanted some unlocking of value. Where is that at?
No, so temporarily we have refocused our attention to the two fronts. One, while government was carrying out its OFS, so we thought we will wait for that, and we saw that. Although the quantities, people might have expected better than that. In the meantime, we focused our attention on critical minerals, and yes, we were participating in auctions. We got selected as a preferred bidder for 4 blocks or so, and one of the tungsten blocks, although cancelled because of other issues between Government of India and local government and all that. But yes, 3 blocks will be there, and we are focusing our entire energy on converting them to composite licenses and quickly explore them, turn them into mining properties, so we can add more metal to our basket in coming 2 to 3 years.
So splitting of businesses, that's taken a bit of a backseat for now?
Not a backseat, I would say. It is waiting for the right time to come out again. We will do that when the situation is right.
Thank you very much, sir, for joining in. That's the word coming in on Hindustan Zinc. Pre-opening rates have settled in, and it's an uptick of close to about 0.3, 0.4% following the Wall Street comeback. Things have opened up in the green. Cipla, Britannia. Keep your eye on Bajaj Auto as well, where there was a margin-led beat. But back to Sudarshan now for his 9-10 call. Sudarshan?
Well, consider buying Maruti with a stop under 11,880. Maruti.
And Maruti reports numbers later today. Mitesh, what about your 9-10 call?
A buy on JK Cements for targets in excess of 4,950.
Okay, all right. Gentlemen, thank you very much. Mitesh, just come back for Stockholm in a bit. But TVS Motor is what we want to revisit right now. Sudarshan is here to tell us more. So, good morning.
Morning, Prashant. So after reporting a strong set of earnings for Q3, when commentary is looking largely positive, company says it will continuously improving EBITDA margin even from the levels of 11.9% that company has reported in Q3. And material costs were flat in Q3, and it will focus on premiumization and product mix. And one interesting comment that company has made is any investment in EV will be based on the consumer feedback, and if there is any opportunity arises, then only company will be making investment in EV. Brokerages are positive as well. The UBS is a buy call, target is 3,100 per share. It says it was a robust quarter with margin expansion despite seasonal weakness. Even outlook is robust with company looking to gain market share in India and even in export segment as well. JP Morgan has an overweight call, target is 3,130 per share. It has raised margin expectations for FY25 as PLI benefits will be coming in the last quarter, that is Q4. So earnings were good, even brokers are positive.
Okay, all right. TVS in focus there, and we'll see what the stock does as we open up in trade. Now, the other one is up 1% or so in at the end of the pre-open session. SBI Card, right? Stock has seen a very sharp sell-off. Can the mood change after the numbers or not really? 4% down in the pre-open. Abhishek is here with more. Abhishek.
Well, for SBI Card, their credit cost woes continues like Maruti had. It's not ever ending for them. So for 24 quarters in a row, their credit cost on a quarterly basis has been above 4.5%. This time it's at 14-quarter high of 9.4% versus 9% in the previous quarter. The net interest margin trajectory continues to remain on the lower side at about 10.6%. So revolver rate has improved to 24% versus 23% in the previous quarter. However, the return ratios are at multi-quarter low with ROA at 2.4% versus 2.7% in the previous quarter. The PAT has also declined massively by 30% YOY and more than 5% sequentially. We have HSBC who has written on SBI Card. They have a reduced call, a target price of about 580 per share. They say that the growth outlook has weakened following the Q3. Asset quality outlook remains unclear too. So they have cut their FY25 estimate by 10.8% and FY26 estimate by 11.2% to reflect the higher credit costs that the company is seeing. Back to you.
All right, Abhishek, thank you very much for that. BHEL is next up on our radar. Vamakshi is here with that one. Vamakshi.
Well, absolutely, Prashant. You know, the company reported its Q3 numbers. When you look at the revenue, that saw an uptick of almost 32% on a year-on-year basis. This is 4% higher than what the street was penciling in. And this revenue growth was supported by better than expected execution in both of their segments, power as well as industry. Now, the gross margin rose by 1,021 basis points to 37%, but the EBITDA margin saw an improvement of only 25 basis points. EBITDA saw an uptick of 41% on a year-on-year basis, but both the EBITDA margin as well as EBITDA came in below the street's expectations, and that is because the other expenses were much higher. They saw a very substantial jump. Net profit has nearly tripled, but again, out here, net profit has come in much below the street's expectations. When we look at the ordering activity, on the other hand, order inflows stood at 6,860 crores. This is an uptick of almost 167% on a year-on-year basis. Even when you look at the order book, it stands at 1.6 lakh odd crores. This is an uptick of 47%. So that part looks very robust. When you look at the segment-wise performance as well, for the power, the revenue grew by almost 32%. EBIT margin as well saw an uptick of 178 basis points to 11.18%. When you look at industry, the revenue saw an uptick of 33% and the margin to improve substantially by 465 basis points. So overall, when we look at the numbers, the revenue has come in higher than estimated, but the EBITDA margin as well as net profit are below estimates, and the ordering activity looks quite robust.
Thank you. CLSA today has lowered the target price to 166 versus 205. They say the stock is expensive at 34 times forward multiple. But it's over to Sudarshan now for Bajaj Auto. Sudarshan.
So for Bajaj Auto, it was a margin-led beat in Q3. Company has reported margin of more than 20% for 6 straight quarters. And so the factors that have worked for the company is the demand continues to remain strong for 125cc plus segment. Company maintains market share in the IC segment despite the expansion that it has been taking for EV segment. EBITDA has grown by 6%, margin has increased to 20.2%. Even outlook is healthy. Company expects export segment to see a growth of 20% plus, and domestic motorcycle segment, for which growth in H1 FY25 was around 6%, but in 9-month FY25 growth was in the range of 6 to 8%. Now company expects this growth range of 6 to 8% to continue for the entire year, that is FY25. So earnings were largely better than estimates and outlook is healthy for Bajaj Auto.
All right. So thank you very much. And you'll hear from the management, by the way, in 30 minutes or so, less than that actually, 9:30. You'll have the Bajaj Auto management joining us on their numbers. Mitesh is with us. There's 4 minutes to go for the market open as well. I just want to quickly look at the Nifty Bank and where that is closed out at yesterday, because that was the outperformer yesterday as compared to the Nifty. And if you just took a look at the top 10 gainers on the Nifty, 7 out of the top 10 were all banks financials. And it was a long list of broader market sort of financials which did very, very well, about 0.25% higher. And the Nifty will come up as well. And we'll get a quick sense. Mid-cap index is up about 0.19 and small-cap index about 1/3% higher, 70 odd points. So actually in line with what the Nifty is doing right now. Mitesh, price action, you'd largely, if you're looking at, you'd want to buy stuff which is typically making newer highs. But are there any stocks which are turning after the damage, or it's too early yet?
Well, Prashant, as I said earlier as well, I think it is the banking names which are turning. The Bank Nifty itself, I will repeat the double bottom formation on the Bank Nifty chart. We got a closing of 48,041 on the 13th of January. And then we got a closing of 48,064 on 27th, which is Monday. So it's basically 20 points apart, and there are 2 lows being marked. And yesterday we had a gap breakout and the gap held. So as long as we are not filling the gap, good chance that there's a temporary low or a bottom in place on the Nifty Bank, though we'll get confirmations as we keep crossing smaller averages. The first targets are 49,300, then 49,700, 50,000. But beyond that, I think then we are looking at 52,000 plus levels. So we believe that there are early signs of a bottoming place in the banking index, and then with that you'll have a lot of banking stocks like HDFC Bank, Axis Bank showing early signs of bottoming out. I think that's where I'll start my long trades with, and then eventually if we see this trend is changing on the upside, then you'll have broader markets to trade.
Okay, all right. Thanks a lot for that, Mitesh.
Let's just, one more question, Nigel, to Mitesh before we thank him. Mitesh, just a quick word on a couple of more names. PB Fintech, if you can just take a look at the charts. High flyers come off quite sharply recently. And then a couple of more. PB Fintech first.
So, Prashant, if you look at the history, somewhere in September, October of 24, we saw multiple lows being made around the level of 1600. And then we got a closing of 1610 on Wednesday. And since then, we haven't broken that. So if there can be some base building, some rest of the decline around these levels, then I think we might see a reversal happen. But for me, it's important that the level of 1600 holds, and then we see some kind of possibility on the upside. Also, it's important to note that the 200 average is at 1613. So there is multiple supports, historical, weekly consolidation. There's a 200 average. I think as long as 1600 holds, in the next few days, you will see some kind of reversal on the upside.
Okay, all right. Thanks very much, Mitesh. But so many names, right? But typically, when you look at technicals, you want to buy stuff which is not breaking down, which is turning, or unless, of course, I mean, there are, as Mitesh said, a double bottom for the Nifty Bank and maybe some signs of a recovery starting to emerge. But yeah, I mean, otherwise, it's been largely down and lower and some intraday recoveries. I mean, actually, not some, lots of intraday recoveries in mid and small caps yesterday. That we saw. What do we have? First rates, so it's going to be about 1/3% higher. It is 0.36, 23,040. The Nifty Bank is about 49,000, a little over 49,000, about 0.15 higher. You've got the mid-cap index up about 1/4%. Mid-cap index was down 1/4% by close yesterday. Actually, I should say only down 1/4% because at one point it was down almost 1.8%. And then the small-cap index will come up as well to give you a quick sense of where we are starting. That is up as well. That ended about 1.7, 1.8 lower after being down 4. So about a quarter. Feeble kind of recovery, but it's green 16,000 and 38 on the small cap space. About 2:1 advance decline, but stocks are still opening up. Nifty heat map is up on your screen. There's more up than down and some green. I mean, actually lots of green this morning. So let's see if it holds 23.35 with about an 80-odd point gain. Guys.
Well, Bajaj Auto is your top Nifty gainer, up 2%. There's lots to like in the numbers, as Sudarshan was pointing out. It was a margin-led beat. And analysts also like the export story. The company is guiding for exports to grow at 20% for the next few months, while the industry overall, domestic, should grow at 6 to 8%. Even the EV portfolio is turning out quite well. So Bajaj Auto is your top gainer, 2.5% up. Cipla continues with its rebound from yesterday. Post numbers yesterday, Cipla was higher, margins look good, and Cipla has added on another 2%. Tech is leading the rebound today following Nasdaq's recovery. So Infosys, Wipro, Tech Mahindra, all three gaining close to about 1.5%. TCS follows with a 0.5% up move. So IT is on the front foot today after the losses over the last, earlier this week. Other gainers include BEL, Adani Enterprises, Apollo Hospitals. But again, the gains there are limited to about 0.5%. On the way down, you've got BPCL that's taken a knock, that's down nearly 2%. HDFC Life is subdued, JSW Steel is weak. And keep your eye out on ITC. As we said, ITC Hotels lists today. It makes its debut on Dalal Street. ITC for now is flat with a positive buys. And Maruti and Tata Motors are two stocks to watch because they report their numbers later.
Well, that's right, Rima. Just to pull out a few stocks, that are bouncing back. Sidma SGS, that's up close to 9%. So that's very, very good news. And it's up close to around 9% as we speak. CG Power, that's bounced up close to around 5.5%. We'll speak to the management in just a short while from now. Suzlon saw a sharp correction from the top. For the time being, it's bounced back. Anant Raj, they put out a clarification now with regard to their exposure to data centers. So that as well is up close to around 5%. I'm looking at some of the losers. GM Financial is down close to around 8%. So I'm not sure what's gone on there. Numbers. All right. So that's taken a hard knock. 8.5% lower. Apar Industry is one of those big gainers in the last few years. Well, it's gone up more than 10 times, I think, in the last 4 years. Yesterday, it was down 20%. Today, as well, it's down close to around 4%. So let's see whether or not there is any kind of interest that comes at lower levels. Piramal Pharma numbers didn't look too bad, but the stock is down close to around 2.5% as we speak. So for the time being, the markets are in the green. The breadth of the market, if we can end anywhere close to this, 3 stocks advancing with 1 stock that's declining, the bulls will feel very, very good. And it's been a while since they felt so good. But the good part is we still have stocks like Sirma that are bouncing back, now up 10%. Wow. When did we see that last?
Absolutely. NetWeb is recovering about 7-odd%. One-way fall, right? I mean, the bottom of the screen. And actually, one of the sharpest falls has been in NetWeb. But coming up with about a 200,000 share volume right now, 1565. And that is related to sort of, data center hardware and a bunch of businesses which are related and feeding into that sort of AI-led infra build-out. Now, the other, of course, as Nigel mentioned, is Anant Raj. Both, by the way, have put out clarifications this morning about the fact that DeepSeek is not going to sort of hurt them. If anything, it expands the market. And with Anant Raj, of course, it was the data center build out and that was propelling the stock higher. Valuations aside, I mean, they're saying that it should not hurt. So that's Anant Raj for you. But otherwise, I mean, I think it's largely up and about with a fair bit happening at this point in time. So slowly, the mid-cap index has crept up to about being 0.5 higher. The small-cap index is up about 0.65. We've got about a 100-odd point gain there as well.
Just these capital market-related plays, the cyclicality is now showing up. So JM Financial is one where the net profits declined by 22%, but even Motilal Oswal is down 3.5%, reacting to the Q2 numbers. Again, profits are down nearly 14-15%, and that stock is under pressure. So whether it's the brokerages or the wealth managers or depositories, I think this quarter has been a bit of a check for these capital market players, which have had a one-way run over the last couple of days. So keep your eye on that. Today, these are the two earnings, JM Financial and Motilal Oswal. VIP, keep your eye on that because competition is really hurting VIP. And this quarter, VIP has reported a loss and the stock is down nearly 4%. On the way up, it's Ixigo or Late Travenues Tech, where the numbers are looking good and the stock has gained nearly about 4.5%. And BHEL, that, Vamakshi was just telling us about how the top line looked good, the order book is robust. Brokerages are betting on it, 4% up on BHEL.
Well, I just want to pull up the intraday chart of a few stocks. You pull up JSW Energy, the stock was down 10%. They've seen some kind of recovery from the day's low, maybe some shots in the system as well that could have played a role. But that's up close to 7% from the low point of the day. That chart's telling you the picture. Pyramid Pharma is the other one. That as well was down. That as well has seen a bit of a recovery. And SBI Cards as well, I think it started off 5% down. That's cut its losses a little bit. So at lower levels, some of these stocks seeing some kind of support. So let's see how that goes. But the Nifty Bank, that's the one that needs to drive home the advantage. For the time being, it's up close to around 50 points. It's doing a relative underperformance in the first few minutes of trade. That needs to drive the Nifty higher if at all we need to go past.
TVS Motors, a stock that Sudarshan was just telling us now is one to watch because in the conference call, the company spoke about improving margins. TVS Motors, straight off the back, early trade, 7% up on TVS Motors. So that's clearly the star in today's trade in the auto pack.
No, absolutely. And I think as, for the broader market, maybe, if you're typically in mid-caps and small caps correct very fast. And if you're not out within the first 5%, 10%, then you kind of wait. Yeah. That's the normal human kind of, psychologically it is very difficult. So as they say, right, if you panic early.
Yeah.
Otherwise, don't panic. Because now I think it's even as so. The point is that maybe the selling pressure we've had that may be starting to abate. Whether stocks will rebound with the same ferocity is another question.
Yes.
Broadly speaking.
Yeah, and another point, Prashant, is some of these stocks that are seeing that incremental, from 20% falling 30%, it's because of trading action. May not be so much related to the fundamentals because there could be a large holder in there who's stuck in some other position, and that's why there is some liquidation. So in the near term, some of these companies which could have come to those attractive levels, they are actually reacting to the trading action rather than the fundamentals. So we'll have to keep an eye out on that part as well. And sometimes, selectively, some of these provide great entry opportunities. So we'll have to see how that goes. For well-run companies with trading at decent valuations and in fact promising growth. And promising growth as well.
Absolutely. Let's put some of this stuff to Vikash Kumar Jain, right? India's strategist and head of research at CLSA, who is joining us now. Vikash, great to have you with us here. Thank you very much for your time. I mean, I think the big one came from the RBI day before yesterday with regards to their liquidity enhancement measures. First up, how important is that for the market? And do you see that as a precursor to rate cuts? Are those expectations firmly entrenched in the market now? Go on.
See, the rate cut part, honestly, is not that easy a guess because there are other elements to it as well. We need to appreciate the fact that liquidity before this move was very, very tight in many years, one of the tightest in many years. And we're getting into, a period where there is a bigger liquidity demand in the system because of taxes, etc., as we draw to the end of the fiscal year. And this could very well have been because of that itself. Does this mean that we will have a rate cut? That's the bit which is not so straightforward in my opinion, because there are other elements like the way rupee is depreciating and the uncertainty on the dollar with whatever's happening with the new regime in the US. So I'm not sure if I can be so confident of this being a hint to a rate cut.
Interesting, Vikas, and good to see you. And as always, well, tell us what's your overall view on the financials? How will they potentially be the beneficiary of the RBI's move and potentially rate cuts that we're looking forward to? Who benefits the most, banks or NBFCs?
If liquidity improving along with, we anyways have an opinion that sometime later in the year there could be rate cut possibilities. I'm just trying to debate whether it is immediately or not. All of that in general will be more beneficial for wholesale funded, financials. So it will be more positive for NBFCs. It will be more positive for banks with lesser CASA dependence. So that's the kind of, stocks that would benefit more at the margin from this particular action and from future rate cuts that might happen.
Vikash, what about the broader markets? We've seen the small cap index, mid cap index pretty much enter into the bear territory. It's been a fall of more than 20% from its highs. The screen is looking a lot better today, but do you think the pain is over or there is more of a correction to go?
See, there are a few things over here. Markets in general, we've been quite worried on mid caps for a few months. Maybe we were a little early, but I think if you look at relative valuations on mid caps and the fact that there is some uncertainty around near-term economic growth in terms of, maybe that we are experiencing a slowdown, and with those sky-high valuations, typically they would be far more vulnerable. On a relative basis, we clearly have a preference towards large cap over mid caps and small caps. So large caps is clearly our preferred area. In fact, I would say our preferred area is mega caps. If you were to look at our India-focused portfolio, we are quite overweight mega caps. I mean, a lot of stocks which are over $40 billion market cap over there. So that's the part in terms of preference within the capitalization. However, on markets in general, we've reached a very interesting point where fundamentally we were seeing that this overvalued period could cause a correction. That corrections happened. We kind of were worried about it right at the start of October, and that's kind of played over the last 4 months. We are down even on Nifty 12-13% or so. Yes. Now, interestingly, our proprietary gauge called the sentiment gauge, which tries to quantify sentiment, called the India Bull Bear Index, has recently hit extreme bearish sentiment. In fact, this is the sometime one of the days last week when we saw it, and maybe it will be there somewhere this week as well. Sentiment as measured by this gauge was the weakest since the COVID lows. Okay, so that is a very interesting point. Typically, it has a good track record in kind of, whenever sentiment goes to an extreme, to say that now we could have a contra move. This could be a contra move up. The bit that is more dicey is whether this will be, whether this is the end of the correction or whether this is just a rally and a recovery where sentiment normalizes, we have another leg down. But for now, I would want to, for the ones who are kind of short on the market, this is something where one needs to kind of bear in mind that sentiment has gone to a pretty extreme level as per our proprietary benchmark, which has traditionally been very good in predicting the extreme points in the market.
Okay, all right. How has the market, Vikash, reacted once it sort of hits those extreme sentiment levels which you mentioned? And I remember we've in the past also spoken about whenever we've hit peaks and extremes and what is followed next in that sense, near term.
So what we do not know about this sentiment gauge is, see, it just tells you that sentiment is at an extreme. It cannot foretell how will sentiment normalize. Sentiment can normalize by, volatility coming down, lack of activity and range-bound action. In extreme cases, that's a rare situation. Typically, it has a spike on the other direction and then sentiment normalizes. And after that, once it is not at an extreme, the index is not that useful. It can very well happen that sentiment goes to well above, close to neutral with a 5-7% rally. And then after that, it can again come back. So that's the bit which it cannot foretell. Historically, it has led to reasonable corrections. Like even as recent as November mid, we had a sentiment pullback. And from then we had a 7% rally in the following 10 trading sessions or so. So that's something which can very well also happen, even if this is not the final bottom. So That's something that one should kind of bear in mind. It just tells you it's at an extreme. How the sentiment will normalize, we will only come to know as the future plays out.
All right, Vikas, you spoke about mega caps. We know you added Reliance recently. So in mega caps, which are the safe havens in general?
So we've not added that stock recently. There were a few other stocks that we added at the start of the month. That stock has been there for some time in the portfolio. But within, in general, for the portfolio, which is a large India-focused portfolio, it has only 10 to 15 large and liquid stocks. I mean, nothing which trades less than $10, $15 million will ever be part of the portfolio. It's a very large and liquid portfolio. We went into an out of consensus overweight on staples right at the start of this month, and an out of consensus underweight, a big underweight on industrials again. So those were the two big calls that we took. Other than that, IT and healthcare are our other underweights. While banks is a small overweight, commodities is the other overweight that we have in the portfolio.
Okay, all right. Now, what's the view on the IT services sector, Vikas, post all these reports around the Chinese AI startup DeepSeek and how it kind of threatens the US dominance in artificial intelligence and large US mega caps? I mean, any implications for IT services here?
See, I think there are pushes and pulls for IT. This DeepSeek event is simply just telling you the vulnerability of stocks when they are at very high valuations. I think that's when they are at valuations which are tough to explain. We were overweight on IT till October, and then we turned underweight. In fact, within IT, the name that we own is the most defensive of the lot. So I would say that I'm just not comfortable in looking at IT, and I believe we've already had a pre-Trump trade into IT after November, December, the way the sector did well. We are towards the fag end of that trade, in my opinion. That's why we are underweight on that sector. And our preferred defensive is not IT, but staples.
Well, thank you very much for that, Vikas. You have been calling out for consumption to lead the rally, and that being your preferred play. Thank you very much for joining in. By the way, look at the broader markets and the recovery now. The mid-cap index is up more than 1%. The small-cap index is raced away to a 1.5% rally in the first 15 minutes of trade, and the advanced decline ratio is looking quite healthy. We've got 9 stocks advancing, for 2 stocks currently declining. But let's get to Bajaj Auto. The management is waiting by. The stock is doing well because earnings were better than what the street was anticipating. Margins above 20% for the 6th straight quarter. We have with us Rakesh Sharma, Executive Director at Bajaj Auto, now joining in. Thank you very much for joining in. This is Rima here. That's the first question, right, on margins. Can you sustain margins above 20%? What led to the margin performance in the current quarter? And even your EV portfolio has turned EBITDA positive. Where does it go from here?
Hi, good morning. Yes, the story for the quarter was coming in at 5th straight quarter of 20.2% EBITDA margin. And it's really driven by a combination of very judicious pricing being taken across the portfolio at regular intervals, as well as, the supportive softening of the rupee, which happened at a very good time from our point of view because of the expansion of the exports business in the quarter, where after almost 9 quarters, exports crossed 500,000 units or $500 million in terms of dollars. So, but there were forces which were downside forces, like, the mix changing a little bit because of the drop in exports to KTM, which were almost higher, which are higher priced, the rise of the Africa component of the business. But, all this put together, we were able to dynamically manage the margin architecture and deliver 20.2. Going forward, I think with the, as you mentioned, one of the best things which has happened towards the closing part of last quarter, and particularly now we will experience it, is the launch of a new platform in our electric business. And mind you, the electric business now is about 22% of our domestic revenues. So quite substantial. But that business now moves into the green zone because of work done by our procurement and R&D teams. We have been able to slash the costs in the electric business, and that moves into a green zone. The commodity basket, there are pluses and minuses, but overall the commodity basket is looking pretty stable. And with exports also looking like clocking the same tempo of growth with the rupee at about realizations, in fact, improving further in Q4. We think that we have got a sound line of sight to maintaining our margins.
Okay, all right. Hi, Mr. Sharma. Good morning and good to see you, Ben. So exports will grow at 20% or?
Yeah, they have been, like we've been saying, that they've been year-on-year basis growing at, last quarter was 27% growth. And on the back of recovery in almost every region, led by, of course, as I've been saying, in LATAM, we think, and with our good positions in some of these key markets which are coming back to the growth story, I think we should be able to maintain this 20%. But we are watchful of the macroeconomic situation and the geopolitics of it, because a lot of the emerging markets, as you know, are quite vulnerable to any changes on that front. But for the moment, yes, we are planning for a 20% plus growth next quarter.
All right,
let's in Q4.
Let's come back home then. On the domestic front, the festive season demand seems to have got sustained. I think earlier you were guiding for around 6 to 8% growth in terms of the domestic industry. Do you think, going by the current data points, you could be maybe at the higher end, 8% could we assume, or do you think it'll be closer to around 6%? I think the first half of the year, the growth was around 6%. How is demand trends on ground, basically?
Yeah, you're right. The first half, the motorcycle industry was clocking something like 6% growth. And it's really the 36-day festive period which saw a massive upside, going up to almost 16% growth during that period, which has lifted the year-to-date growth rates to about 8%. To project any growth rates, it's better to not get distracted by temporary shifts, but to take a slightly longer short view of things. And when we see year-to-date growing at about 8%, we feel that yes, 6 to 8% growth should be achievable by the motorcycle industry in financial year 25. But let me also remind you that that is almost similar to what the industry achieved in FY24. So we would say, yeah, 6 to 8% is what should unfold.
You spoke about headwinds in the form of KTM exports, and I think there was a 50% drop in KTM exports. When do you expect this issue to get resolved?
Well, the management of KTM AG is busy putting together a restructuring of the debt plan, supervised by the court, as you know. And there is quite a definitive timeline for that, which is 25th of February. By then, that is when the plan will be presented to the administering officer as well as the other stakeholders. And once that plan is accepted, I think things will start to get to normal, and hopefully the business can start getting restored in the subsequent quarters. The brand and the product acceptance and the demand continues. What needs to be done by the management there is to get the debt restructuring right and have enough liquidity.
And 25th Feb is when the plan will be presented by the KTM management. So while exports are seeing good momentum and you're confident that that will sustain, so 20% plus in Q4 as well, Nigeria's sales at 35,000 is still below your historical highs. When do you think you will be able to recoup that and get back to those levels?
India business, the Indian industry has still not recouped its way back to 18, 19. So I don't know how useful these benchmarks are, because, yeah, it was 50,000 maybe 3 years ago. What we are looking at is quarter-on-quarter improvement. Yes, there is a potential in Nigeria, and we're very happy with the way the business improved. We've got a 55% market share there. So it's a very important market for us. But as you know, the currency is fragile. The situation has to be monitored month after month, and we are just taking it month and quarter by quarter.
Okay, all right. Let's talk about the other opportunities then, Mr. Sharma. And as you said, EVs as a percentage of domestic revenues, it's improved to around 22%. I recall first quarter was 14%, then 20%, then 22%. So good on you on that front. The other big opportunity could be e-rigs. Could you tell us about the launch out there? What kind of market opportunity does it look at, and which cities would you target? Because brokerages are quite positive about this launch, and they believe there's tremendous potential. So spell it out for us.
Yeah, you're absolutely right. You see, what is this whole e-rig business has in the last 2-3 years almost crept up on the industry because of various reasons. And today, if I just look at the three-wheeled industry, three-wheeled rickshaws, not differentiating between autos and e-rigs, that's almost 100,000, and out of which about 45,000 per month is e-rigs. Now, a lot of these e-rigs are lead acid powered, which is, something which is not good for the customer or the industry or the environment, and those are being phased out. And the lithium ion based e-rigs have started to enter. So we are talking about, 45,000 units per month. They serve a particular use case. They're narrower. There is their speeds are limited. Their seating, because of the structure, the seating is extra, and they particularly serve the customers in smaller towns and dense areas. And we are taking a aim at this market, building on the tremendous franchise which we enjoy with the customers and drivers and fleet owners with our Bajaj Auto RE business. So by end of March or early April, we will be presenting the Bajaj Auto's e-rig to the market. Mostly this business is in the north and east, with parts of west, and we'll be taking an aim at organizing this sector, because a lot of it is very fragmented with substandard products, and we hope that we will be able to delight both the passengers and the owners with this presentation. We will have a product which is far more stable, which is able to go up, gradients far more successfully.
Right.
It has more durability and will have a much superior powertrain, and the drivability will be far smoother.
Just a quick follow-up on this. So you're saying the e-rigs market opportunity or the size today is 45,000 units per month.
Yeah.
What are you hoping to achieve, by the end of, say, 1 year post-launch? Do you have a number in mind? And secondly, your margins. Quickly, sir.
No, we don't have a number in mind as yet. Our first thing, as is always, is to present the product and ensure that it gets accepted, and watch out for, observe how it is getting accepted before we start scaling up. We have not yet come to the pricing discussions, even within our company. And as we come closer to the launch date, we will finalize the margins and obviously the pricing.
Thank you very much, Mr. Sharma, for joining in. Always a pleasure chatting with you. Look forward to the next. For now, it's time for a break. On the other side, Amar Kaul of CG Power and Industrial Solutions will get chatting with us.
Welcome back. CG Power is the next management that we are speaking with. Stock's doing well. It's up about 6.5%. It got beaten very, very hard from the highs of about 800. Yesterday at one point was down to about, I think closed at about 574 after making even a lower low. I think 520 was the low yesterday. So it's a full 100 rupee recovery for CG Power coming in from that level. Third quarter numbers maybe slightly mixed, you can call it. But I think the focus firmly for CG remains on what they'll be able to do in FY26. Amar Kaul is Managing Director and CEO at CG Power. He's joining us to take those questions. Amar, good morning. Good to have you back on the program. Thank you very much for joining us. Let me go in reverse a little bit. Let me start with the outlook and then come back to individual segments and what's happening, because there's a lot to cover there as well. Especially because what we've seen in markets, many are focused on companies like yours, good promoters and stable kind of business. And of course, in all the right segments in that sense in the industrial space. So give us a sense, Amar, of what kind of growth you're looking at, both in terms of top line and margins for FY26.
So thanks, Prashant, for having me. As usual, enjoy the conversation. So yes, the quarter has been good, and of course, not giving into the forward-looking how it looks like, but we are bullish about the opportunities that we have within the country as well as outside the country, and that's what we are actually riding on to make sure that we control what we can instead of worrying about macroeconomic trends.
What does that mean, though? Will in FY25, fiscal FY25, what should we look at in terms of, say net profits? I have got some estimates here, but help us understand. And then FY26 as well.
So we'll keep improvising. As I said, we don't give forward-looking guidance on that. But if you remember last quarter when we spoke, I told you we'll bounce back because I was not worried about one-odd investments that we did. So we are almost there where I committed that we will be. And moving forward, important is, as I said, controlling what we can control is what we are looking at. So I think we'll definitely we'll continue to grow. And you have seen even different segments. If I go a little deeper into our industrial segment, power sector, even the market overall, the numbers don't look very good, but we are still able to grow in industrial sector as well, which has not been doing so well. Which means the market is still there. You just need to go and get your piece of the pie.
Got that. Talking about industrials, the street, Amar, is a bit disappointed by the margin performance in the industrial segments. Now, you're saying this is on account of a greater skew towards railways. So what percentage of your industrials business came from railways this quarter? What can you guide going ahead on the margin front? And you wanted to get to 15% margins on a consolidated basis. When do you think you'll be able to achieve that?
So yes, two questions. One, of course, we don't give the full percentage of what railways is and what motors is. But what I can say is our commitment to the nation building for Indian Railways. We'll keep supporting Indian Railways more and more. Railways business is growing much faster, high double digits. Having said that, our motors business, out of which industrial portion, for a change for last 3-4 quarters, if you see it was going down. And this last quarter, we are actually positive, both on the profits as well as on the top line. So which is a positive sign that the market is available and we'll continue to get into that. So the skew may change a little bit here and there. And of course, as we are doing our go-to-market strategy to balance Indian Railways with the exports as well, to make sure over the period of next few quarters, we are able to take it close to 14 to 15% PBT that we have a commitment to. So we'll keep inching towards that direction.
Okay, all right. Hi, Amar. Good morning and good to see you, Ben. You're putting up, I think, capex of close to around 700 crores for the power transformers capacity. I think is likely to add close to around 45,000 units or thereabouts. Help us out with understanding a couple of details out here. What would the asset turn be and how do you fund this?
Yes, see, it's a combination. So two things. One, this facility that we need is basis the power demand that you have in the country as well as for exports. Today, if you see our order backlog is almost for next 18 months, we are done with that. And we still see inquiries floating around. So it's a great opportunity for nation building as well as for exports. So that's why this investment will go in. Location, etc. We are in the process of hopefully in the next 30 days or so, we should be finalized where we're going to make this investment in. That's number one. Number two is also in terms of funding. One, of course, there are a combination of internal accruals. And of course, as you know, for QIP, we at some point will be raising more funds to make sure we have the surplus cash available whenever we have these opportunities of investment, whether it's expansion or any of the potential acquisition.
Okay, got that. The other one where you can provide us with some detail is this the OSAT business which you're setting up. Is everything on track? When will this be commissioned?
So yeah, absolutely, Prashant. That's on track. So OSAT, we had it 2 phases. One is the mini factory and the main factory. So the mini factory work is already in progress. It is 100% on track. FY26 is when the production will start there, and that's going on that. And FY27 will be when the main factory, the big factory, will start also. So machines, equipment getting ordered, the management team is in place, the operators, 2 engineers, they are getting trained in the global factories of semiconductors so that they get hands-on experience the moment we start. So the complete project is in control.
You have tie-ups in place for technology, etc.?
Yeah. So I think we had a joint venture with primarily Renesas and Star.
Right.
And so we are using that combination, so working together on that.
I got that. So 26 is the smaller one, and the big full thing comes up on stream in FY27.
That's right.
And in terms of the overall sort of revenue opportunity from there, as we get closer to commissioning, do you have a better sense of what that could be?
I think hopefully probably in one or 2 quarters, we'll have a better sense of that, but it's as per the plan. And I'm sure you would have picked up from, we shook hands with the government as well, central government, for, partnering together. So we get the support from the government as well. So yes, we'll have a better sense in the next 1 or 2 quarters.
What about inorganic growth? Should we hear something from you before the end of this fiscal? That's when you join us next for your Q4 numbers? You're on the lookout, so I ask you.
So that's always ongoing inorganic. So the pipeline of candidates that you can potentially look at, of course, it's not just go around and shop. So it has to have the right fit and complement to what we are doing around the work that we are doing. So I would not commit that next fiscal or something, but yes, when it comes, you'll be the first ones to know about it.
Yeah, we are looking forward to that, and hopefully the fit is right, for you. So we'll wait by for that. But always a pleasure talking to you, Amar. Thanks a lot for joining in, giving us a sense about how demand is panning out and how you see the business shaping up as well. Let's focus on the other company, that's Suzlon. Reported actually a strong set of numbers. The revenues have zoomed by close to 91%. Margins came in healthy as well. The company expects the wind industry constraints around land acquisitions to improve starting from FY26, which will be good to hear. Well, let's understand more. Mr. Himanshu Modi, the Chief Financial Officer at Suzlon, joins us. Hi, Himanshu. Good morning. Good to see you win. The street clearly likes your numbers. After a while, I'm seeing the stock is up close to around 5%. Let's address a couple of issues. Execution was good in the past quarter. Do you expect execution in Q4 to say be 25% better than what we saw in Q3? Could that be a possibility? And also, if you could help us out with margins. You told us it will improve. It has improved. Does it have scope to further improve in Q4? Execution and margins. Please go ahead.
So execution, there are 2 ways to look at it. Clearly from the deliveries manufacturing front, I think we will continue the growth trajectory, certainly from Q3 to Q4 as well. On-ground execution is where, not only Suzlon, but as an industry, there are certain challenges which we are looking at ironing out. So from an execution where what we call commissioning of the turbines, which is whether land issues or power evacuation issues, that is taking a little more time than we anticipated. But I think clearly no red flags there. It is just about being a little patient. It's on the right track for commissioning as well, whilst deliveries will continue to grow. So far as margins are concerned, I don't think we will see a growth from Q3 to Q4. But I think directionally, as we are getting economies of scale and volumes of our manufacturing is kicking in, we are seeing better margins kicking in and getting the leverage for us from a negotiation perspective.
Okay, all right. On the execution parameter, you did around 450 megawatts in quarter 3. So quarter 4 could be better than that, 20-25% better. So we end the year then closer to around 1.5, 1.6, right?
So again, I won't give numbers, but yes, traditionally...
My numbers are not very off, Himanshu. My numbers are not very off.
I know you guys. I know you guys. So don't worry, Q4, all I will say is Q4 will be better than Q3. Don't want to be putting a number of 20%, 25%, but certainly Q4 will be better than Q3.
And Himanshu, morning. In terms of the order book as such, the overall execution was about 5.5 gigawatts. What is the execution timeline for this?
So the 5.5 gigawatts is about 18 to 24 months is the execution timeline. In this quarter, as you know, we've also ramped up our manufacturing capacity. So we can do about 4.5 gigawatts annually from a manufacturing perspective. Of course, the execution on ground has to match with the manufacturing capability that whether it's us or even the industry is able to do. But the current order book that we have needs to be executed over a period of 2 years. Of course, as we move along, there is also an active pipeline of orders that we are negotiating or bidding for. So we'll only keep adding to this order book as we keep delivering quarter on quarter.
You're expanding capacity though as well, right? Some capex you're doing. But even as you're saying, there is a bit of a mismatch between current capacity and execution on ground?
Yes, certainly from a manufacturing capacity vis-a-vis execution on ground, there is a mismatch which will take some time to catch up. So, until about 6 months back, our manufacturing capacity was restricted to about a little over 3 to 3.5 gigawatts. We've now expanded that to 4.5 gigawatts. Our new plant in Pondicherry has now been commissioned. Our new blade molds that we've ordered have been commissioned. So as we enter the new fiscal FY26, we will be entering with a full rated capacity of about 4.5 gigawatts per year from a manufacturing perspective. And our growth capex will continue. So there, we've given guidance always that close to about 300 to 400 crores a year for the next 2 to 3 years has been earmarked as capex for growing the capacities.
Himanshu, so just to get it right, you're saying that Q4 margins should not be directionally higher than Q3. So Q4 margins similar to Q3 levels, or will it be lower? And again, getting back, because I remember in one of your earlier conversations in this year, you had spoken about a 1.6 gigawatts execution target for FY25. Does that hold?
So on the margin front between Q3 and Q4, I think, it will be fairly similar. As and when you must appreciate that as and when the projects activity or the EPC activity picks up, which is a lower margin business, it does have an impact on the blended margin. So, I don't see too much of a difference between Q3 and Q4 margins as we move along. So far as annual capacity on what we can deliver, we've done 977 so far. And across all parameters in the 9 months of this financial year, we've already exceeded what we did for the full year in FY24. So as I said, Q4 will be better than Q3, which means it will certainly be higher than 447. Now, where we land up with that number, of course, time will tell when we reconvene sometime in May.
Just one more word. So far, what we've heard from Donald Trump is sort of anti-renewables. Does that hurt the sentiment surrounding your business while you are covered for the next 18 to 24 months, given your order intake and the order book and the visibility that you have for the next 2 years? But what are your clients, global customers, talking about the renewable demand going forward?
So I think, we of course all heard the commentary that's coming from the US, from President Trump. All I like to say is that in his first term, and that is data available, renewable energy both in India and US have significantly grown. So we haven't read the details on what the executive order states, but so far I don't see any impact on that, at least in the Indian market. The bilateral ties between the two countries, as we've read various media reports yesterday, continue to be strong. So I really don't see that there would be any impact to the renewable industry on the whole, at least from an Indian geography perspective.
I don't know why. That those comments, right? He said, Trump said, I don't want solar farms, I don't want wind farms, and what that was about. But I think we'll let us see action more than talk, which we've seen a fair bit of. Himanshu, in terms of more acquisitions, more coming, I think you've indicated in the call.
So, we of course did one acquisition in, Q2, September earlier this year, which was, or last year rather, which was of Renom, which was in the multi-brand O&M business. So whilst, like any other company, we are very selectively on the lookout. We do have appetite for acquisition within the space, but we'll at the same time be very selective about it. I don't see anything in the annual, in the immediate future translating into an acquisition, but we are keeping our eyes and ears open. But again, to be sure, nothing in the immediate future.
All right, Himanshu, the street seems to be worried a little bit about execution, about the valuations. The 70,000 crore market capitalization, even post the correction. And I think your quarter four is normally the best in terms of profitability. So you should end the year closer to around, I think, 1,300, 1,400 crores of net profit. Going by the execution, going by the kind of tailwinds, and the issues will get resolved, do you think in the next 3 years or so, you could deliver net profit, say, which is closer around 4,000 crores on upwards of that next 3 years, going by the execution pipeline? Should that be a possibility?
So again, I don't want to comment on 4,000 crores and 2 years, 3 years outlook. I mean, there are more than half a dozen analyst reports out there, which now directionally give certain numbers about the company. All I would say is that, like we did about 700 megawatts last year in the FY24, we've already done 977, and we have a healthy quarter still ahead of us. We have a 5.5 gigawatt order book, which needs to be executed over a 2-year period. So, of course, I'm sure if you have access to those analyst reports, I'm quoting from those analyst reports. Those analyst reports for FY26 peg the net profits at anywhere between 2,000 to 2,500 crores, depending on which one you pick up for FY26. Directionally, how that moves for the next 2 to 3 years would also depend a lot on the policymakers and the industry, how it shapes up. But if the trend continues, then I think from a Suzlon perspective, whether it's a management team, order book, ability to manufacture and deliver, we are in a ready position to capture that opportunity.
So for next year, at least, you think the analysts are pretty much in line? Because the longer term, let's not talk about. But for FY26, even I'm looking at those reports, 2,500 crores or thereabouts, that's achievable. That's the aspiration, right?
Let's talk about that, Nigel, in May when we again convene. But looks like striking distance.
I tried, and I think I pushed you a little bit. But and I think your indication is your indication is that mostly that's in line. We appreciate you joining in, Himanshu. Wishing you all the best. Looking forward to chatting up with you. And as you said, some of those issues you see, they're getting ironed out. And the pipeline looks good. 700 megawatt last year. This year it should be double of that. And maybe the following year, it'll be even better. For the time being, slip into a short break. On the other side, Manisha Gupta is waiting for us to tell us what's going on in the commodity space.
But eventually it misprices on the other side also. So what happens is there is always a hype cycle. Any new segment when it starts, so like quick commerce started, before that it was digital companies, before that e-commerce, before that something else. So whenever new growth frontier starts in any economy, there will be massive growth because it will start from zero. Like this one, Bharti Airtel came in 2003, when mobile phone came, the month-on-month growth was 8-9%. So that was a kind of scorching growth, and that's where kind of we used to take plunge in. But there is a hype cycle. So what happens is stocks or earnings grow or top line grows at about say 100% per annum, but the stocks will grow 200-300%. So the hype. So you ride the hype cycle, and right at the top it becomes so what you call compelling. I can sell the story to even a person like him or anybody. And you a seller. While selling the story, you are obsessed and you allocate. And that's where the maximum allocation comes right at the top of the hype cycle. And everywhere you are right, but you're right only for 6 months. The hype cycle will collapse in less than 6. This is called Gartner's hype cycle. You can go and see. We have written in one of the papers. But so any hypes, but then you incur massive loss because the drop is almost 50-60%. So you invested say 1,000 crores. Straight you'll get to see 500 crore loss. So, I mean, I've incurred once.
Okay, welcome back. 100 plus points on the Nifty. So holding on for now, 23,061 is where we're at. Mitesh is with us with what he'd like you to do. He's of course been calling for a pullback and a reversal in bank Nifty and banking sector. Mitesh, what are you observing and new trades?
Morning, Prashant. Till now, I think it's the Nifty which is, beating or outperforming the Bank Nifty. But I think the chart structure for both the indices now suggests a possibility of a short-term low. The Nifty, I think, from extremely oversold levels is for the first time on the 30-minute charts, hourly chart is trying to make a higher and higher low kind of formation, which should see at least a short-term reversal, if not a medium-term one. So the idea is a trade on the long side. On the stock specific basis, I have a buy on IRB Infra, which I would recommend buying the stop at about levels of 50.3 and a target of around 55 to about 56 on the upside. And the second stock is IRCTC. Again, this could be an early indication of possibly double bottom on the 2-hour chart. So here, recommend a stop at about 745 and a target of around 785.
Thank you very much for that. One more stock, Kaynes Technology. There is a Jefferies upgrade on the stock, and they note that the stock has fallen 38% in the last 1 month. So after that kind of an underperformance, Jefferies has upgraded Kaynes Tech to a buy, 9% up on that. But it's over now to Manisha for a complete check on commodities and what the one commodity that she's tracking very closely today.
Well, thank you for that. I'm looking at metals as a space. If you look at this year, we started on a stronger note with markets anticipating that the Chinese data is coming in strong, and you could be looking at demand improving. But the last few sessions, we've seen prices pull down strongly. And currently, we are looking at very strong arbitrage opportunities. And that is because many of the metal prices are strong in the US and have seen a decline on London Metal Exchange and various Asian countries as well. The reason that you have seen the prices run up in US is because there's a lot of stocking happening, even hoarding for that matter, ahead of the expected tariffs coming in. So US has threatened to impose tariffs on copper, aluminum and steel imports. And we've seen prices of all of these commodities and metals gain up in the US markets there. So higher domestic production is what the US is talking about within the country. This will mean higher manufacturing cost for the US consumers there. But this would also mean global demand continue to dampen on the lower side. And that's exactly what we've seen in prices. So the US metal prices are higher, but the rest of the world is looking at weaker prices. The expectation from the market also is that the value-added specialty metal products perhaps may not be taxed because there's no immediate substitute for that. So what we really are looking at is raw and smelted and refined metals in that space. I want to talk about copper right now, and this is very interesting because when you look at the copper prices on LME, we have been constantly declining, but the US markets have been on the higher side. So the kind of premium that the US copper is right now commanding is $389 a ton. Strong markets there, and importantly, US imports nearly 38% of its copper requirements. So this is exactly what will be getting taxed or tariffed. Talk about aluminum, and nearly 82% of its annual consumption in sense of aluminum is what US imports. And this majorly comes in from Canada and Mexico, more from Canada rather than Mexico. And that would mean that if tariffs come in, then we are looking at higher prices here as well. So like copper for aluminum as well, when you look at the US premium, it's trading at $530 a ton. This also covers, by the way, taxes and logistics as well. I quickly want to take you on what we've done in the first 1 month of 2025 in sense of many of these metals. So while gold and silver, your safe haven commodities, have continued to gain up, more than 5% of gains coming in for both of these. But the rest of the base metal packs clearly has been quite mixed. I actually want to show you on what copper prices have done on LME and the US markets there. So for the US markets, we are up by 5.5% for copper, but for London Metal Exchange, we are up by 4%. So you can see that premium there. For aluminum prices, it has been quite flat, and zinc, which gained up by 14% last year, is down 8% already. The market's clearly waiting out for guidance that the US Fed meeting will bring in tomorrow.
Okay, all right, Manisha, thank you very much for that. Commodities there in focus. Well, ITC hotels have started to trade now. 179 basically is where the quote is coming in as at this point in time. Mangalam is here with some details on this demerged entity. Mangalam, over to you.
Good morning. So, if you look at the price, the quoted price at around 180, it's absolutely in line with the analyst estimates of the fair value of the company. Analyst expectations basis, the company's performance in the past, the multiples that they ascribe to it, and the fundamental valuation was a range between 175 to 190 odd rupees. But, at the open itself, the stock was optically lower to the implied value from X date. Why is that? Because on the X date, which was Jan 6th, the stock opened about 26 rupees lower versus the previous close, and the underlying assumption was that the entire 26 rupees was attributed to the value of the hotel business itself. That's not the case. The hotel business valued anywhere between 17 to 19 rupees per share, and at 180 rupees, the stock is trading around 27 times FY26 EV to EBITDA multiple, and that is pretty much in line with the street expectations, because in terms of the pecking order, the street values ITC Hotel somewhere between Indian Hotels and Chalet Hotels. Indian Hotels trades at around 37 times, Chalet Hotels around 25 times. So between 26 to 28 is what the fundamental multiple of ITC Hotels should be. Now that the company is listed, we'll talk about the fundamentals post the company reports its numbers. Importantly, from a technical standpoint, just keep an eye out on passive flows, because as per Nuvama's quant research report, the company is likely to meet criteria for inclusion in the MSCI Global Small Cap Indices. And remember, now that ITC Hotels is listed, it's part of the Nifty. For the next 3 days, it will be part of the Nifty. Thereafter, it will be excluded from the Nifty. And when that happens, there would be a passive outflow of close to around $100 million on Nifty exclusion and around $65 million on Sensex exclusion. All of that happens on T+3, which is 3 trading sessions from now itself. So we'll keep an eye out on ITC Hotels at that time.
Okay, all right. Mangalam, thank you very much for that. So that's ITC Hotels, the new new kid on the block, if I can call it that. Well, it's our special segment, Budget Countdown, and they'll come up after a break. Lata will be speaking with Mr. KB Kachru of Hotels Association of India and Vijay Devan of APJ Surendra Park Hotels on the sector's ask from the Union Budget on Saturday. Stay tuned.
And in the first 2-3 years of Helios, called Mr. Bull, like Rakesh, and I used to collect bulls, and I have bull paintings and bulls and all that. And then in 2008, I became the defender of India on TV and in interviews, saying India, nothing is wrong because Lehman Brothers and these MBS and all is not India's thing. ICICI has not lost any money, and HDFC Bank doesn't need to raise capital. And we have met the company, and it is growing 30% per annum, which was the case of HDFC Bank that year. And the stock fell 52% in rupees. And I realized this is because I took this mantle upon myself that I have to defend India, or I have to defend my stock market, or I have to remain bullish. And since then, I have become more cynical in general, and also connect more to global this thing and macro and all that, which right now is again making me do a small mistake, because I think the world is good, therefore India should be good also. And it's the other way around right now. But in general, that changed me a little bit, and I no longer defend anything to anybody I say.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18.
Welcome to our budget countdown. Now, the Indian government has woken up to the positives of religious tourism. The Mahakumbh has already seen 150 million visitors so far, and the government is expecting that 450 million people will visit the Mahakumbh by February 26, when the Kumbh ends. The Ram Temple in Ayodhya, according to media reports, saw 135 million visitors in 2024. Now, why am I giving you these numbers? Contrast it with this. The Vatican draws 6 to 7 million visitors in a year, and the Hajj draws 2 to 3 million visitors in a year. So clearly, the Indian religious tourism is another high altogether. Now, the Mahakumbh, according to a PIB release from the UP government, is expected to generate 2 lakh crore rupees of business. So we are talking big business. Tourism and hospitality are big business. The government is becoming aware of it. Today we discuss what are the asks of the hotel industry from the budget. I have with me KB Kachru, President of the Hotel Association of India and head of the Radisson Group for South Asia. Also with us, Vijay Devan of the Apogee Surendra Park Hotels. Gentlemen, thank you very much indeed for joining me. I just said religious tourism, but I completely understand that leisure, business and weddings are, much bigger verticals at this point in time. But Mr. Kachru, for starters, what is the big ask from the Hotel Association which you represent?
First of all, thank you for having me here with you today. I think we are in a good space to start with. And I feel our ask hasn't changed. What we've been talking to the government and within the industry, I think if we have to achieve what is expected out of the industry and what the government has indicated, that by 2047 we need 100 million international tourists, and we need a great uplift to the domestic tourism, which is already, as you said, what's happening to religious tourism. I mean, it's going all over. I think we are focusing on some policy changes and tweaking of some of the existing policies. Our major problem today is that we are under room. And the whole of India has less than 200,000 branded rooms. And if you take the city of New York, it has more rooms. And with 1.4 billion people, you can imagine the kind of accommodation possibilities we have.
Okay.
And we have to take a holistic view. If we have to improve our inbound tourism, we need rooms. And by having rooms, we need investment. And how do you get investment? You have to motivate people to come and invest in India, invest in infrastructure. It's not only the government which is involved. I think all of us in the industry have to put in our best.
What would you want from the government for your... See, at the moment, the under-rooming is working to the advantage of the hotel industry. They're making money hand over fist.
But it's not
what
good for the nation.
are you asking? What are you asking from the government for?
Asking benefits of the infrastructure status. I think it has to be, tourism has to be on the concurrent list. And state governments, all state governments have to declare tourism as an industry and give us industry benefits. If the ports, airports, manufacturing, they have been all termed as industry. Now, I'm glad to tell you that a lot of states are moving. 17 states have already declared tourism as industry. But what is the problem is the execution. It's not filtering down. The execution and passing on the benefits is just not taking place.
Okay, very quickly,
that happens, we'll not be able to attract the attention.
1 minute, Mr. Kachru, what advantage do you get if you are declared as an industry?
Well, we will get loans at a cheaper rate with infrastructure, but with industry, I think our operating costs will be taken off, and it'll give a big relief, whether it's the energy cost. You must be aware that, tourism is a state subject, and state governments are equally involved in it.
Yeah.
And if those benefits, ease of doing business, we have multiple licenses to be obtained. We've been asking for a one window settlement of our problems, which is really not taking place.
Okay. Point taken. Mr. Kachru, many of this would not require a budget at all. This is something that has to be pursued, I suppose, at the state level. Let me get Mr. Vijay Devan's first thoughts. Mr. Devan, anything, good morning and thank you very much for spending time for us. Is there any specific ask in terms of taxes? After all, the budget is all about taxes.
Thank you, Lata. It's my pleasure to be on this show. I agree firstly with Mr. Kachru that we need infrastructure status at the center level, then we definitely need industry status at the state level. In terms of taxes, we definitely need to be more competitive. The GST slabs have not been changed over the last 7 years. And the GST is totally uncompetitive at the moment. Over 7,500, the GST is 18% as far as hotels are concerned. And if we were to look and compare with the Far Eastern countries, it is 7% in Thailand, and it is 8% to 9% in Singapore, and about 10% in Vietnam. So we have actually made ourselves very, very uncompetitive when it comes to travel and tourism. And travel and tourism should actually be the strength of the economy. We are running at the moment just about 30 billion US dollars in terms of foreign exchange earnings. And if you were to compare it with Thailand, they are earning about 60 billion US dollars per annum.
Yeah. No, Mr. Diwan, that point is taken that, India has not given huge tourism either for export earnings or for foreign earnings. The domestic tourism is just burst on the scene because of the demographic dividend and maybe even the K-shaped recovery. But, the GST ask that both you and Mr. Kachru had in the Hotel Association list are state subjects. You can separately negotiate with the government, but you may not get much in the budget. Is there anything specific that you would that you have in mind with respect to other taxes?
I think GST rationalize. Sorry, Vijay, go ahead.
Yeah. So what I was saying that the government can, at the central level, give us the export status, because if we get the export status in terms of a foreign exchange earnings, it'll be extremely helpful for the growth of the industry. So that is another ask. And of course, there was a tourism policy which was formulated by the government. It still remains in the draft stage. It needs to be promulgated. And to see that tourism is given the right importance, I think it's important to have an inter-ministerial group which is headed by the cabinet secretary would be our ask, or it could be also reporting directly to the PMO.
Yeah, actually, the tourism industry has benefited a lot by India punching above its weight actually in global conferences. The G20, I think, led to a lot of infrastructure improvement with some tourist spots like, say, Ajanta or Hampi getting a facelift for the foreign visitors. Mr. Kachru, speaking of the export taxes that Vijay Devan referred to, I think TCS is an irritant, according to a lot of travel agents I spoke to preparing for this discussion. The TCS, the tax collected at source, makes it unattractive for foreign tourists?
Yes, it does. I think one of the key issues is what Vijay indicated is the rationalization of taxes. If we don't put emphasis, and it has to be driven centrally, it cannot be whether it is GST or SEIS. I think these are the things which can be actually coordinated at the central level. I'll give you a very small example. I mean, GST for food and beverage and banquets, if they happen in the hotel where the tariff is over 7,500 rupees, it's 28%. If they hold it outside, it's a different tax structure. And then there are certain state taxes and central taxes which are different. Why can't we have a uniform policy, particularly those taxes which are pan-India?
Okay, yeah, I guess this discrepancy is hurting restaurants or hotels with restaurants a great deal. Mr. Devan, you want to add to that?
No, I think the most important thing which we are looking for is this infrastructure status, because there are just no rooms in India at 190,000 or 92,000 rooms. And we need to double this inventory. We need to get more foreign exchange, which is only going to help, because see, if you see today, we have to bring dollars in, and how the dollars can come in, it can come in through exports, it can come in through offshoring, and it can come in through tourism. So tourism can really bring in dollars. And at the moment, if you see foreign exchange reserves are going down, the rupee has depreciated since November by about 2.6%. And tourism here can actually make a very, very big difference. And it can bring in these dollars in, and the government has to set a target. It cannot be just $30 billion. It should be over the next 2 years, possibly as an industry and along with the government, we have to see that we actually hit the 100 billion mark. This is very little if we were to compare with any other country in the world in terms of tourism.
No, I take your point. In the expected ask, if you're just going from 20 billion to 30 billion, is only about 4% or 4.5% CAGR. Mr. Kachru, what is the current rate of growth of the industry?
Well, you see, in terms of occupancy, we and ADR, we are about 6 to 8% what we are looking at.
Growth of the industry. Okay, and is there, see, the taxes are one thing. Is it that, even encouraging tourist spots, like for instance, Ayodhya gave a new high in terms of travel and tourism, as has the Mahakumbh. So is it development of, spots like say Ajanta or Hampi or Udaipur? Would that be the bigger thrust for the hotel sector?
Yeah, that should also be a thing. There are about 50...
1 minute. If Mr. Kachru can do it, then I'll go to Mr. Diwan. Mr. Kachru.
I think I would like to shift away a little bit. I think everybody from Prime Minister downwards have acknowledged that tourism is a pillar for our economy. I mean, if we provide 9% of the jobs and contribute 5 to 6% to the GDP, first of all, we have to acknowledge. Now, what Vijay said is that we need to market India. If India is marketed, our rooms, our tourism, the likes of Hampi's and Ayodhya's, religion, everything will get marketed right.
Fair point.
So we have to ensure if Thailand can get 3 times international tourism than us. And
I take your point.
Do something about it.
Just move tourism in mission mode. Well, last 10 seconds only, Mr. Diwan, anything you want to add?
So government has a plan to sort of push 50 new tourism destinations. I think it should be implemented on a fast-track basis. Also, we need better connectivity because connectivity is the other issue. Today in India, we have only 850 aircrafts. Probably we need another, and only 134 aircrafts were added last year. Probably we need to add at least 1,000 aircrafts. Probably the government can have a more easier leasing policy. Also, government can also have a new easier visa regime because it's very difficult still, though e-visas are implemented, but still it is very difficult to get visas. So it can be visa on arrival for at least 10 countries to start with, and it can make a big difference.
Fair point. Out of time, but we take your point that it is the overall ease of doing business, overall ease of infrastructure, whether it is aircraft or whether it is roads. I think India has come a long way in all this infrastructure, but much more can be done. In terms of taxes, let's see whether we will get anything at all. Mr. Diwan and Mr. Kachru, thank you very much for joining us with the hotel industry's wish list. Wrap up on Bazaar. Chartbusters coming up.
As we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
Bajaj Auto trades in the green after the company beat street expectations in the third quarter earnings. Management tells CNBC TV18 they look to maintain overall margin and exports above 20%.
TVS Motor also up in early trade on the back of a steady set of Q3 earnings. Management in their Q3 conference call says that their focus remains on premiumization and product mix. UBS has a buy call on the stock, while JP Morgan has an overweight call on the stock.
JSW Energy slips more than 5% on the back of muted third quarter. Revenue declines 5.5% from a year ago. Margin too contracts year on year.
Bosch comes under pressure and is more than 4% low after reporting all-round miss in the third quarter. The net profit declines by 12% from a year ago. The margins to contract on a year-on-year basis. UBS issues a sell call on the stock.
And in more earnings reactions, we have Sirma SGS, Ami Organics and Latravenues Tech, or better known as Ixigo, rally on the back of their quarterly numbers.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam, and as you can see to the top of the screen, all the indices are in the green, so that's good news. The Nifty Bank as well, that was relatively underperforming, seems to be getting its act together, but your portfolio is feeling good because of the breadth of the market. You have 10 stocks that are advancing for one stock that's declining. Been a while, Mangalam, since we saw this sort of market breadth. The first 2 hours have been good. Let's see how we can end this day.
If we sustain above the 23,150 mark for a while, then maybe we'll see some more short covering given there is expiry tomorrow. The good part is mid-caps outperforming always gives the sense that maybe there is support at lower levels for the market itself as well. But a lot of stocks on our radar. DLF is the one that has reported strong numbers in the third quarter, marking its best ever quarter in terms of new sales bookings. Ashok Kumar Tyagi, who's the managing director of the company, joins in now to discuss the quarter that went by. The stock's doing well at the high point of trade. Mr. Tyagi, it was a good set, and we had an inkling of that because of the response that you got to the Dahlias itself. The question is that at the 9-month mark, you've crossed your entire guidance for the year for pre-sales. So if you could give us a sense of what your new target for FY25 pre-sales is, and at the same time, if you could give us a sense into what you're expecting in FY26 with the balance of products left for you to sell.
Okay. So good morning, Mangalam and Nigel. We had guided the market for a sales of about 17,000 crores, as you're right. And as the numbers show, we have exceeded that in the 9 months. I mean, clearly, this is a great position to be in. We have, as we mentioned in our analyst call also on I think Monday, we have right now 3 projects which are underway from an approval cycle standpoint, which is the Mumbai project, the next round of Privana and Goa. And frankly, this is a business which sort of, it's reported quarter on quarter, it's not run quarter on quarter. And I think depending on how the approval cycle happens, we'll see the launch in Q4, if at all. We are currently continue to be optimistic on Mumbai that if we can get all the approvals in, we should be able to launch it before March end. But again, if it sort of overshoots by a couple of weeks, I don't think we are losing any sleep on that. So I think we'll clearly exceed 19. What the final numbers are, I think let's just wait for the year to end. And as far as the guidance for the next year is concerned, Mangalam, we have the products lined up for sort of launch in the medium term, including the fact that Dahlias itself has almost a 23,000 crores, sales potential still left. So I think we would have a healthy 25-26 as well. But again, as has been our convention, we typically announce the guidance for the fiscal when we report the annual numbers in May.
All right. Hi, Mr. Tyagi, and good to see you. When just looking at this project that you were talking about, the Dahlias project, I believe the average ticket out there is 70 crores, a massive one out there. Give us a sense on demand. There's that fear that urban demand suddenly is slowing down. But if you're selling some of these projects, then clearly you're not experiencing that. But give us an update. How do you see things shaping up?
Okay. So firstly, of course, Nigel, I'm always a trifle scared of you because of your extremely strong grip on numbers. मुझे डर लगता है आपसे बात करते हुए, but
that's the numbers is all we can hold on to. But these 70 crore projects and all are something that make us a little bit nervous and tell us there's lots more to achieve in life. Give us your sense on urban demand.
So here's the deal. Yes, it is correct that the average selling price that we have achieved in the first 171 apartments you have sold is about 64,000 rupees a square foot, which does tend to be almost a 70 crores as the ticket size, because most residences are between 9,500 square feet, plus. Now, a large part of this phase one of the launch has actually been lapped up by the existing customers of Aralias, Magnolias, and Camellias. And there has been, I think, about a 10 to 12%, chip in by the NRIs as well. So clearly, while the story of the slight, moderation in the urban demand may be true from a holistic standpoint, I guess in the luxury and super luxury segments, the demand and the hunger for the quality lifestyle continues. In fact, not only here, we see that trend also in our luxury malls on a completely different, perspective. But I think clearly, the luxury and the super luxury segments continue to do very, very well, at least, in the markets that we operate in, Nigel.
All right. You've given us a sense of pre-sales. You've given us a sense of the launch pipeline as well, and the outlook going forward here. What the street also wants to know is a word on collections. What are your target collections for this year? By the end of this year, what will be your, operating cash flow that will come into the company? And to that extent, what's the proportion that one should work with in the next year as well?
So this year, this quarter, we reported an operating cash flow of 1,800 crores. I think across the 3 quarters, we are now at about 4,800 or 4,900 crores. So clearly, we will continue to hopefully collect at this clip of 3,000 odd crores a quarter, and which will translate into an OCF of somewhere between 1,500 to 1,800 crores of operating cash flow. And I think those are the metrics that we should continue running at. In fact, while obviously there's been a lot of I'd say positive vibes on the pre-sales number, the fact is what we truly focus, Mangalam, and pride ourselves on is the focus that we do on 2 metrics. One is the new embedded margin that we are creating, and one is the operating cash flow. And in this quarter, we added almost 8,000 crores in the margins column and almost 1,800 crores on the cash flow column. So clearly, I think operating cash flow continues to be very strong, and also a very strong focus area for us. The only tone of moderation, I'd say, is that given the construct of the RERA regime, a large part of the cash flow does get entrapped in the 70% escrow accounts, which obviously is used for construction. But the margin, but the surpluses take some time before they're finally released.
All right, we're just going to wrap up, Mr. Tyagi, but I've got a number on the screen. The rental revenue was around 1,200 crores, which was up 10% on a year-on-year basis. What's the target out here? Very quickly.
So we are targeting exiting the March 25 with a run rate of 5,000 crores and exiting March 26 with a run rate of 6,000 crores on Cybercity, and almost 1,000 crores exit run rate in 26 for the DLF segment of the Rentco. So overall Rentco should be about 7,000 crores exiting March 26.
Is there any plan of you unlocking value out here? Because there's an annuity of close to 5,000 to 6,000 crores every year, right? So, if you do that, then if you do the reverse calculation, it could be a massive value generator for you. Is there a plan here?
No, it will be a massive value generator. Currently, Mangalam, we are in the process of building out significant build-outs in the rental business. I think a total of about 15 million square feet is under active planning or execution of the capex build-out. So I think really once that cycle is completed, at that time maybe GIC and us will have a chat on this. But in the immediate short term, there are no plans for monetization.
All right, we'll keep an eye out on that one. Thank you so much for joining in and giving us an outlook for all parts of your business. Wish you good luck and hopefully speak to you after the budget as well. Post announcements coming in from the finance minister, you give us a sense of, there being some strong demand in the premium end of the market, but not so much in the middle and affordable. And could that change as well or not is a question that we'll get an answer to post this budget. Thank you so much for joining in. With that, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Sachin Pal joins in today.
The stock in focus is Cyient DLM, which is a leading player in the electronic manufacturing services space. The company recently came up with its Q3 numbers, and the top line growth of the company was fairly strong at around 38% year on year. This was primarily driven with the acquisition which the company undertook last quarter, and that really had a positive impact on the overall top line growth. Adjusting for the acquisition of Altech Electronics, which the company had recently concluded, the overall revenue growth for the quarter came in at around 11% on a like-for-like basis. The key disappointment for the business, however, came out on the margins front, where the margin profile of the company was impacted by some M&A costs related to the acquisition, as well as some higher employee costs and some seasonal factors. That being said, the company continues to improve its cost structure and enhance the scale, and is hopeful of moving towards a margin trajectory of almost 10% over the medium-term basis. On the top line as well, the company is targeting a top line growth of almost 30% from a medium-term standpoint. The order inflows of the company has also weakened in the recent past, as it's facing some challenges in terms of new inflows from the industrial as well as medtech sectors. So therefore, the overall demand trends of the company continues to remain muted. That being said, the company has added 4 to 5 new clientele in the first 9 months of FY25. So that should heavily have a positive impact in terms of new order wins going into the next 12 to 18 months. But the stock has taken cognizance of disappointment and the mixed trends that the company has displayed in Q3 FY25, and it currently trades at around 38 times FY26 estimated earnings, which we believe is very reasonable for accumulation from a long-term standpoint.
Thanks a lot for that, Sachin. For the time being, we'll slip into a short break. On the other side, we'll be joined by the management of GE Shipping. Mr. Shiv Kumar is waiting for us.
Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back. Let's focus on GE Shipping. We have with us Mr. G. Shivkumar, who is the Executive Director and CFO of the company. Hi, Mr. Shivkumar. Always good to speak to you. Thanks a lot for joining in. Well, the last quarter was marked by a couple of factors like the Red Sea troubles, the OPEC plus curbs as well. Could you give us a sense about how rates are panning out? If you could tell us for this quarter, what are rates looking like? And if you compare it with, say, last year, how are things looking? And even the previous quarter, a broad sense, category-wise, about the rates.
Good morning, Nigel, and thanks for having me. Always a pleasure to be here. The winter, to give you the headline news first, so winter has been disappointing for the tanker business. Typically, we have a very strong period through the Northern Hemisphere winter. The winter has been disappointing.
Right.
So if you just look at what's happening with tanker rates today and this quarter versus last year, the large tankers, that is 100,000 tons capacity and higher, typically these are crude tankers, are probably averaging about $25,000 to $30,000 a day versus about $45,000 to $50,000 a day, same time last year. And versus the previous quarter, that is October to December, they're about the same. The smaller tankers, which are the product tankers, which are around 50,000 tons carrying capacity, are making about $20,000 a day on average versus probably $35,000 a day in the corresponding quarter and around the same rates in the previous quarter. So it's last year we had a strong winter. This time we do not have a strong winter season for tankers. Bulk carriers are also significantly lower than they were a year ago. On average, probably $5,000 a day lower in earnings.
What does that do to your operational performance then? You know, Mr. Shivkumar, we often ask you the freight rates, and then the corresponding question to that is your break-even rates for all of these. How far above these break-even are you, or in what categories are you below break-even right now because of these rates?
Yeah. In tankers, we are above break-even in all the sectors. Whether it's a small tankers or the large tankers, typically the break-evens are $10,000 to $15,000 a day. So we are well above those numbers, except that the profitability has come down. It's just a reduction in the returns in the profitability. In bulk carriers, we are in the smaller bulk carriers, we are below break-even at current spot rate. So typically across the board, whether it's a 57,000, 58,000 ton bulk carrier or 180,000 ton Cape-size bulk carrier, rates are between $6,000 and $8,000 a day. And this is just around operating costs. So you're not even recovering depreciation at current spot rates. But tankers continue to be profitable even at subdued spot rates. And of course, we have some ships on time charter.
And what is your prognosis on rates going forward? It's been a disappointing winter. Red Sea crisis has been there, but a lot of people are hoping for a brighter summer. Just trying to understand, where do you see rates headed from here? Do you see them going lower, or maybe they've bottomed out?
So the biggest factor, Mangalam, is going to be on geopolitics. And we've seen in the last 2 weeks or so, a new round of sanctions on Russia-linked ships. And that's covered about 150 plus tankers, 150-ish tankers, which is about 2 to 3% of the fleet. And if those ships are not able to trade, then that immediately removes supply from the market. So that's one big factor which can come in. If sanctions on these ships, this is the so-called dark fleet, which is carrying out the sanctioned trade. If that goes, then that's an automatic reduction in the supply of ships. So that's one big factor. And obviously, the US administration is now tightening the sanctions on Russia and related trades. We've seen one port group in China, which is the Shandong port group, rumored to have said that they will not accept sanctioned tankers anymore, sanctioned vessels anymore. And that port controls more than 1 million barrels per day in imports of oil. So again, if sanctioned ships are not able to trade, then that removes them from the market. On the other side, you could say that oil goes out of the market. So finally, it is If oil demand stays reasonably strong, supply goes out of the market because some ships are just not able to trade. And we look back at what happens when the US sanctions ships. The last round of sanctions was in November 23 when about 30 or 35 ships were sanctioned. After that, they've hardly traded at all. So they just effectively get taken out of the fleet. So then that's a reduction in the supply. So all of this is sort of up in the air because there are so many of these factors which can affect the way freight rates can play out.
All right. Your NAV has dropped despite having a good EPS, cash EPS in the past quarter. Do you expect ship prices to go down further?
They have gone down already. So they've gone down about 15% on average, slightly more for the older tankers, which had gone up a lot in value, maybe 20%. So they have gone down. So we are still waiting for the opportunities. Dry bulk have also gone down a little bit. And obviously, because of dry bulk earnings not having been very strong, unlike tankers, they are closer to where we may think of investing. So we are getting closer, but not quite there at the point of investment of where we would say that let's go out and put in a big amount of capex.
So it's corrected by 15%. You're still evaluating. So how much more does it have to fall for you all to be interested?
I'm not going to get into those numbers, but it has to have a substantial fall in tanker prices for us to really think this is the time to go, not all in, but very significantly into the market.
Right. As they say in the markets, it's a no-trade zone right now. Not too high for you to sell any of your assets and not too low for you to, perhaps buy any of those assets. So we'll keep an eye out on that trend as it, continues. But the final question, and we always ask you about, renegotiation of rents in your offshore business. What is coming up next and what is the likely sustainable EBIT in that business quarterly going to be?
Yeah. So we have 2 rigs which are up for repricing now, we need to find employment, where we've bid them into 2 tenders, but we don't know what will be the outcome, whether we will win those contracts, and if we do, at what price. So it's tough to give a prognosis because we haven't had a pricing for the last year or so in this market. So it's tough to give a prognosis on what could happen to those rigs. What has happened in the vessels business is that the vessels business has been doing pretty strongly. It's come back to quite solid profitability, where all the contracts, every new contract that we've entered into has been higher than the previous contract. So the vessels business has been doing pretty good profitability. The rigs business, because the rigs haven't got contracts, that's something that still up in the air. And we don't know what can happen there.
All right, Mr. Shivakumar, we'll leave you on this uncertain note, but leave you with a promise to join us as soon as you have any updates on freight rates, if you're buying any ship, if you're selling anyone, or there are any of those sanctions that you spoke about, any geopolitical issue that comes by that impacts your business as well. And at the same time, when you reprice those contracts, we leave you with a promise to join us and tell us exactly how it will impact your business, whether positively or not. Thank you so much for joining in. Wish you good luck for the quarter ahead. Take a short break, come back, get you more on the markets and stock-specific action.
आज जैन समाज का एक कार्यक्रम था बड़ौत में सीपीएल स्कूल में, जो पिछले 30 सालों से हर साल होता है। और यहाँ पे एक वुडन स्ट्रक्चर था जो कोलैप्स हो गया और अराउंड 40 लोग जो हैं वो घायल हुए हैं और उन सभी को 108 की एम्बुलेंस समय वहाँ पर मौके पर पहुँच गई थी। सबको हॉस्पिटल पहुँचा दिया गया है और 20 लोगों का प्रथम उपचार करके उनको घर भेज दिया गया है। बाकी 20 लोगों का उपचार अभी चल रहा है।
Welcome back. Well, there is a couple of stocks in the broader markets that are calling for our attention. So on the upside, Sirma is a stock that was down, I think, 30% for this year to date. Well, it's decided to pull things back and now it's up close to 20%, locked in upper circuit. So big bounce back is what we're seeing. And on the flip side, Mahanagar Gas, the stock that was up close to around 3%, I recall at the start of this hour, that's done a complete U-turn and now it's down. It's moved into the red. So it's given up close to around 5% from the high point of the day. That said, all the frontline indices, they continue to trade in the green. We'll wrap up on this edition of Chartbusters with news that the broader markets are doing well, so your portfolio will be feeling a lot better. Trading Hour comes up next and take all the action forward.
Esteemed guests and friends, above all today, we express our deepest gratitude to our visionary Prime Minister, Shri Narendra Bhai Modi ji. Pandit Deen Dayal Energy University owes its very birth to his extraordinary vision. All of you are benefiting from what Narendra Bhai thought in the early 2000s. And when he called me and said in 2005 that we have to build one of the finest institutions in Gujarat, right? And that is what we have achieved from 2007 onwards. So we will always be grateful to our Prime Minister. Long before he became Prime Minister, he foresaw that India needed Atmanirbharta in energy. Over 20 years ago, he told me he wanted Gujarat to lead the nation in energy and energy products. He also told me that Gujarat should take the lead in cultivating world-class human resources needed to achieve India's clean energy ambition. That is how he helped establish this pioneering university. Friends, there are many things that we learn from our beloved Prime Minister. Let me mention just 2 lessons here for all of us. 1, Modi ji never lets a good idea go to waste. His Man Ki Baat inevitably becomes his Man Ka Sankalp. His Sankalp is always Vajra Sankalp. His determination is as hard as a diamond. He does not rest with simply making a Sankalp. He knows how to turn his Sankalp into success. In the last 10 years, the world has seen how he especially chooses impossible-looking tasks and transforms them into reality. This, for all of us, is lesson number 1. Lesson number 2 is about his boundless energy. Narendra Bhai Modi's name stands for Anant Shakti, infinite energy. Since PDEU is an energy-focused university. All of us should learn to be as energetic as our Prime Minister. People often ask the question, where does Modi ji take rest? Or does he rest at all? I can tell you that I know the answer to this question. The answer lies in what Pandit Deen Dayal Upadhyay ji has said, who is the founder and whose team.
Good morning. Welcome to Trading Hour. It's a Wednesday morning at 11 o'clock. Things are looking up much, much better. We had a gap up opening. We've managed to build on it. The Nifty right now is up 150 points above 23,100 and very close to yesterday's intraday high of 23,137. So the street's going to watch whether we can conquer that. But the real pullback and recovery is seen in the broader markets. The mid-cap index is up nearly 2%. Small-cap index, a very smart pullback after the thrashing that they got earlier this week. The advanced decline ratio looking up at close to about 7 stocks advancing for 1 in the red. Banks are catching up. So the Nifty banking index is also up nearly about 0.5%. But the heavy lifting leadership is coming in from the IT names.
Absolutely right. Good morning, Rima. Much better looking screen compared to what we've been used to in the past couple of trading sessions. Like you mentioned, it's a very sharp rebound as far as the broader end of the markets are concerned. A couple of stocks on the radar. You know, the entire energy pack today is seeing a bit of a rebound. So energy stocks, especially Suzlon, very strong set of numbers, very strong execution. That stock is doing very well. On the other hand, JSW Energy, on the back of a weak merchant spread, actually has seen further fall. In fact, if you pull up JSW Energy, especially over the last 2 weeks or last 15 days, you'll see that that particular stock has seen quite a bit of selling pressure emerge, and it'll be interesting to see whether that particular stock can actually rebound, almost 25% down in the last 1 month. The other set of stocks that actually have seen significant selling pressure emerge in the last few trading sessions was the pharma pack. But today, some of the important pharma names, some of the biggies have rebounded, especially after a good set of numbers coming in from Cipla. Have a look at Sun Pharma, that's doing very well. Loris Labs, that was beaten down day first day. Today, that too has seen some buying emerge. But overall, a green looking screen, and recovery is the name as far as some of the beaten down sectors are concerned.
Indeed. So CDSL has rebounded. Netware, which got hit, it was down 10% yesterday, off more than 50% from its 52-week high. The management, is sending out a release to the exchanges saying that the developments coming out of China, the Chinese AI startup DeepSeek, only expands the market opportunity, so not so much of a threat. The stock has rebounded, and even EMS companies. On Keynes Tech today, there was an upgrade by Jefferies, but the others too, Sirma, SGS, etc., are rebounding quite smartly. But let's get to TVS Motors. Numbers came out yesterday. The street liked the margin expansion, but post-market hours, we had the conference call. So Sudarshan is now joining in to give us details of that. Sudarshan.
So TVS Motor had reported earnings that were better than estimates. Company had reported margin of 11.9%. That was at an all-time high in a quarter. Now in the con call, company has mentioned certain details which are looking very positive. First, on the margin front, company is saying it's looking to improve the margin even from the current level of 11.9%. And how will it come? Company will focus on premiumization and product mix. Another important point that company has mentioned that any investment that if company plans to make in EV, it will be based on the customer feedback and if there is any opportunity. So it's very important point regarding the electric vehicle business. Even brokerages are positive on TVS Motor. UBS has a buy call with a target of rupees 3,100 per share. It says company has posted robust quarter with margin expansion despite seasonal weakness. Even outlook is robust with companies looking to gain market share in India and even in the export segment. JP Morgan has an overweight call, target is 31.30 per share. It has raised margin expectations for FY25, saying that now PLI benefits will be factored in the Q4 of FY25, and that's the reason it's raising the expectation of FY25. So earnings beat, commentary positive, brokerages are even positive on TVS Motor. That's the reason you are seeing a move of more than 7%.
Thank you so much, Sudarshan, for joining us and giving us a sense of what exactly is driving TVS Motors. Well, as we move on, we count down to Budget 2025. What are the key expectations from the jewelry space? Manisha joins in with more details.
Well, absolutely. All roads lead to budget right now. And as we've been discussing various sectors, so is the gold and jewelry sector as well, that have put their ask or expectations in sense of budget 2025. Well, last year, the budget was a surprise and a cheer for the industry as we saw the import duty cut from 15% to 6%. Now, in that pattern, the industry anticipates that you could be looking at further duty cuts as well. And this has been an ask and an expectation as well that the duty could see a decline from 6 to 3% also. Of course, the street is divided onto this one because we've seen very strong imports in case of gold, even as the prices have been at an all-time highs. So whether that happens or not, well, we'll know in next 2 to 3 days. But the other asks have been quite interesting. The second thing that the industry is asking for is special benefit of 0.5% duty for importing through IIBX, that is the India International Bullion Exchange. This is in Gift City in Gandhinagar. The third thing is about establishing GST bonded warehouses. Fourth ask that we have seen the sector come out with is allowing of imports of gold only through IIBX. The reason that it was established, and if more and more could come through that, it has been 2 years for IIBX. Now, the first year did not see a great volumes, but the second year has seen the quantum increase. And to increase that, there are some incentives that the industry is seeking for. The other thing also is about setting up of a jewelry export center at the Gift City itself, and this could be for domestic traders. The street is also looking for, or the sector is asking for, mandatory hallmarking when it comes to bullion. As of now, it is mandatory hallmarking for gold jewelry, but bullion and silver could be included is an expectation. The other thing also is about stopping import duty benefits, from least developed countries and the kind of FTAs that we have, where you have duty very less. And in garb of platinum and various other gold alloys, we do see gold coming in. So if this can be stopped, we could be looking at all gold then shifting in with whatever the import duty that the government fixes there. And the other one is even more interesting. Well, you have EMIs for various white goods, luxury goods and expensive goods there. But when it comes to jewelry, EMIs are not permitted. So this is an ask that the industry has from the finance minister of permitting EMI on jewelry purchase as well. Another thing is about capital gain tax, which the industry asks that should be removed on investment when it comes to gold. And finally, when it comes to gems and jewelry and gold, there are various regulators, right from RBI to Finance Ministry to Commerce Ministry. So this is an ask that the industry has had for the longest time, that there should be a single regulator regulating gems and jewelry as a sector overall.
Thank you very much for that, for explaining it so well. We need to get into a short break. On the other side, a corporate conversation. The management of JSW Energy will join in to talk about their Q3 numbers and more.
This university bears has said about rest or Vishranti. He has said, काम में बदलाव ही विश्रांति है. Change of work is itself rest. And I think this is our Prime Minister's motto. This should be our motto, dear students, also. Therefore, when we think about these two lessons, how to turn ideas into action and how to work tirelessly, we cannot escape the conclusion that Narendra Modi ji is not only India's Pradhan Mantri, but for us and this university, he is our Gurudev, our respected teacher, and we will follow his learnings. We must aim higher. Within a couple of years, India will emerge as the third largest economy in the world. No power on earth can stop India's growth trajectory. I can clearly foresee that India will become the most prosperous nation in the world before the end of this century. But India, with other large economies, also has a big responsibility. We must not allow economic growth endanger planet Earth and further worsen the climate crisis. Therefore, the transition from fossil fuels to clean and green energy has to be accelerated. I am supremely confident that green technologies and green enterprises can reverse the ecological degradation and indeed make our planet more beautiful, more livable for future generations.
Welcome back to Trading Hour. Well, if we could put the spotlight for just a minute on AGI Greenpack, in the last 10-15 minutes of trade, that stock, which was trading well in the green, is now down almost 15%. So more than an 18% drop. We understand that there was court case schedule of the company today, and it requires to be seen what exactly is the verdict out of that particular court case. We'll get you more details on that, but at this point of time, the stock is down well over 15%. Well, we'll now shift our focus to the earnings season. JSW Energy reported a muted Q3 set of numbers. Revenues declined 5.5%, while EBITDA declined over 17% sequentially. The company also saw its margins come under pressure. Earlier today, we spoke to Sharad Mahindra, who's the joint MD and CEO at JSW Energy, on his outlook on merchant power volumes and spreads going into Q4. Let's listen in.
See, merchant tariffs, which we have definitely seen in Q3, have remained lower when we compare with last year. In Q3, when the merchant tariffs were about 5 rupees 1 paisa, against that it is about 3 rupees 70 paisa. That is the difference. The tariff remains compressed. But yes, this has been, but we have to understand that the demand growth in the quarter was comparatively lower. We have witnessed Q3 consumption growth of only 2.7%, but this is at a very higher base. If we recall, in Q3 of last fiscal, the demand growth was 9.9%. On a higher base, 2.7% in absolute terms is a reasonable growth, I will say, though it has slowed. Last quarter, we have witnessed extended monsoons, and then the extreme weather conditions. All those things made the demand growth comparatively lower. But the peak demand, the decline is not there. Against last year during Q3, when the peak demand witnessed was 222 gigawatt, this year it has been 224 gigawatt. So it is more or less same. So demand growth continues to be healthy, and going forward, the outlook is that with more of the indicators which are coming in terms of government spend and also the private investment taking pace, and the manufacturing growth and the PMI continues to be healthy, we are absolutely confident that the power demand growth will be significantly better going forward from Q4 onwards. And the indications, both in terms of demand and in terms of the merchant tariffs in first 25-26 days of January, have seen a significant upside as compared to what we have seen in Q3.
Last quarter when we spoke, you mentioned about how you were ahead of schedule in terms of capacity addition. So at the end of Q3, where does the current capacity stand? FY25, where will your capacity stand? And in the next couple of years, what kind of capacity addition can we see from JSW Energy?
Yes, as we have informed that by March 25, we'll be reaching a capacity of 10 gigawatt. So I'm happy to tell that end of Q3, we are at 8.12 gigawatt operational capacity. And as we are talking in January, on January 28th, 29th till yesterday, the capacity, commissioned capacity is almost 8.8 gigawatt. So in January month only, we have been able to add close to about 0.7 gigawatt of capacity, which includes the synchronization of the second unit of Ind-Bharat, which will give us a significant advantage going forward when the demand season is now picking up. And it is a very low cost, fuel cost plant, which is close to the mines with domestic coal. So that will give us an advantage. And also the wind capacity addition, which has happened in the month of January. Along with that, a small acquisition of Hetero, 125 megawatt wind capacity. So all these put together, we have already reached at 8.8 gigawatt, and we are absolutely certain of reaching 10 gigawatt by March 25. And now going forward, maybe next few years, as we said, that now once we reach 10 gigawatt, including this 10 gigawatt, the total portfolio order pipeline which we have is 28.2 gigawatt, which includes the acquisition process which we are expecting in next few months to be consumed, which is O2 Power, which is a large platform now of 4.9 gigawatt, out of which operational capacity by June 25 will be 2.3 gigawatt. So that will get added into this 10 gigawatt number of March. Apart from that, the KSK Power, which is a 3.6 gigawatt plant, 1.8 gigawatt fully operational. That process also we are expecting to be completed maybe in next few months. So that will also add to 1.8 gigawatt.
We want to talk to you about the BESS project. CERC rejected the tariff. We understood you've appealed to the Aptel tribunal. We understand that the next hearing is on Feb 6. So what is the case that you have made, and what is the positive outcome or the negative outcome? How do you assess that particular situation?
See, we don't see any negative outcome. Let's see, the process is sub judice. The order clearly says that SECI has delayed the signing of the BASPA, the purchase agreement, power purchase agreement. And SECI, in fact, has asked 3 times to us to give the extension, which we accepted also. So it is not that there is any kind of delay or any such thing from our side. And if we see the old precedences, there are many. Today, when we are talking, we all know that solar tariffs in the competitive bidding today being discovered are in the range of 2 rupees 50 paisa, 2 rupees 60 paisa. But maybe 8-year, 10-year, 12-year-old PPAs of solar tariffs of 10 rupees, 12 rupees, 15 rupees are still being honored. So it is a technology which is evolving, and this is always witnessed in a new technology. And that was the need of the country that time. There was a huge focus on energy storage to ensure that with the increasing capacities of renewable energy, the grid stability is going to be a key, and battery storage is going to play a very key role. So we have the tariff adoption. The reason which has been given is the delay by SECI. Sufferer are we. So we have appealed in the Aptel, and we are, let's see that, but we are confident that Aptel will see it realistically and will come out with their own decision.
You know, thermal, battery, pump storage, you are aggressive in adding capacity in all 3. Now, battery prices are much cheaper. The way forward is a hybrid. So going forward, where will JSW Energy's focus lie as far as adding capacity is concerned?
Of course, hybrid is the key, and not only the hybrid, but the FDRE, which very rightly said that battery prices have moderated significantly, had come to a reasonable levels. So I think FDRE solution of giving maybe 70 to 80% RTC green solution along with a hybrid of wind solar is the key. And that is where we are seeing the bidding happening in this space.
Well, that was the management of JSW Energy. The stock now down over 7%. Let's now slip into a short break. When we return, we will discuss market technicals with Mitesh Chakar and also discuss their top trading bets.
Wants India to become the greenest nation in the world. For this purpose, India is also transforming itself into a deep tech nation with advanced manufacturing capabilities. This is the context in which PDEU should see its future role and responsibility. My dear PDEU family, therefore, here are my 3 expectations from all of you in the PDEU family. My first expectation, PDEU should further improve the quality of research and make it application-driven. We should specially focus on newer areas like bioenergy, which have the potential to help our farmers and boost employment opportunities. My second expectation, we should simultaneously increase our internal strengths and also forge national and global collaborations so as to enhance a leading position in research and academics. My third expectation, the intersection of green energy, green materials, and artificial intelligence is going to shape the future of humanity. I would like PDEU to gain a leading position in this synergy. Talking of artificial intelligence, I have a piece of advice to our young students. You must be good at using AI as a tool of learning, but do not give up your own critical thinking. ChatGPT का जरूर से इस्तेमाल करो, लेकिन याद रखो, आर्टिफिशियल बुद्धि से नहीं, खुद की बुद्धि से हम आगे बढ़ेंगे और आप आगे बढ़ सकते हैं.
Crores of orders we didn't execute. because these are into industrial area. It's a new area, little larger volumes, etc. It has taken some time to kind of get hold of this. Orders are still there with us, and we probably will execute most of it in the coming quarter. So in terms of margin trajectory, we probably do better than 15% EBITDA for the whole year. And like I said, between 28 and 2900 should be our trajectory for revenue numbers, operating revenue numbers. We had been always talking about a 4,500 crore revenue. I think that looks doable now.
Welcome back. Let's address the markets for now, because we are seeing a pretty good recovery, though in the last few minutes we've come off. There has been a bit of a tapering off from 11 o'clock. We were above 23,100, so from that level about 30-40 points gone, but still holding up pretty okay. Steady day. Mitesh is now back with us for a technical check on the markets. Mitesh?
I think the markets, I've been maintaining this, that there's early signs of a reversal or a bottom formation in place. We need some more confirmation as the price continues to rise, and I think that process is still playing out. The Nifty, I would look at levels of around 23,150 to begin with, and then maybe look at 23,350. Beyond that, I think a bigger trend reversal could happen. Similarly, on the Bank Nifty, 49,350 is the first level, then 49,700, and then 50,000. But I think there are signs that the indicators on the daily charts are bottoming out. So with some choppiness, I think we'll maintain a long bias and look at, buying on every decline, as well as looking at stocks where we can see some reversal.
Understood, Mitesh. Mitesh, any individual stock calls?
JK7 is something which I recommended in the morning, pre-market trade as well. But if somebody missed that, even now, since the stock is breaking to all-time highs, JK7 is a buy with a stop at about 48.60 and a target of 5100 can be looked at. The early target was 4950, which is met. Now I think we'll revise it to about 5100. And some bullish traction is happening on the charts of Tata Steel, which I would wait for a mild confirmation to buy. So buy above 131.5, look for a target of around 134.5 and keep a stop below 130. 134.5, once that's cleared, we'll look at higher levels.
Understood. Thank you so much, Mitesh, for joining us and giving us both your view on the index as well as your individual stock calls. Let's take a quick break. Management of Dr. Agarwal's Healthcare joins us next to discuss their latest plans as they eye a D-Street debut.
Future, we're going to be placing tariffs on foreign production of computer chips, semiconductors, and pharmaceuticals to return production of these essential goods to the United States of America. The only way you'll get out of this is to build your plant. If you want to stop paying the taxes or the tariffs, you have to build your plant right here in America. That's what's going to happen at record levels.
I'm looking at some of the financials which are trading well below book or at book, where businesses are well run. I don't see the outlook for financials to be as challenging as it was back in 2018. I don't see any macroeconomic imbalances. I don't see, there's some stress in credit quality on the unsecured borrower side, especially individuals, but outside of that, there is really no stress. So, that's one area I'm looking at. I'm still looking at chemicals where business cycle has been very negative from an earnings perspective last 2 to 3 years, overstocking, high raw material prices, etc., etc. A lot of that has washed through the system. So that's again looking quite interesting to me. I think frontliners, there are some places where I can see some value. That's also looking interesting to me. And there are other manufacturing companies, bottom-up ideas that look good. And as you say, it's hard to buy when, the tape is so red. And the only thing that I do in times like this is say that, if I have 100 rupees of cash, I'm going to deploy it over the next 3 months. So you buy every day, you buy a little bit, and then you buy a little bit lower, and that's how it goes. We'll see how that plays out.
Welcome back to Trading Hour. Well, let's now shift our focus to the primary markets. Dr. Agarwal's Healthcare is eyeing its D-Street debut with a 3,000 crore IPO, of which 300 crore is a fresh issue. The issue opens today and ends on January 31st. The company aims to repay their borrowings and for general corporate purposes. To discuss this and more on Dr. Agarwal, we have Dr. Amar Agarwal, Chairperson and Non-Executive Director, along with Adil Agarwal, Whole-Time Director and Chief Executive Officer at Dr. Agarwal Healthcare. Join us now. Thank you so much, both of you gentlemen, for joining us. Dr. Amar, first up, give us a sense of what exactly are you raising the funds for? What is the current debt on books? What is the finance cost at which this particular debt has been taken? What will be the debt post-IPO and what will be the reduction in the annual finance cost?
So basically, if you see, we are going in for this 3,000 crore IPO. And yesterday, we had the anchor list done up in which we had collected 875 crores. These were from the top marquee anchor investors like the GIC, Government of Singapore Sovereign Fund, Tata Mutual Fund, and White Oak, and all the top players have invested in this. And so we have got an 875 crore book closed yesterday. Now, coming to the money which is coming in from here, basically we are there to reduce our debt. So out of the 300 crores, we are using 195 crores to clear our debt because our eventual aim is to become like a debt-free company. At present, we have got about 209 hospitals and we are opening approximately one hospital every week. So if you see, last year we opened 45 hospitals and this year in the first 6 months, we have opened 30. In our growth, since you asked us the question, the growth also, we are growing for the past 3 years. Our CAGR is at about 38% and our EBITDA growth is at about 42% CAGR. That is the way which we are growing. Another thing is these countries which we are in are 10 countries. So if we are in India and in Africa, approximately we see population of India is about 150 crore, population of Africa 150 crore. Between these two areas, we are covering half the world. Our advantage is we are asset light. In other words, I don't need to build a hospital of 400 beds, inpatient beds, because we don't have inpatient facilities at all. So we are able to grow more horizontally as much as we want. In Chennai, as an example, we have about 21 hospitals already existing. In Mumbai, Maharashtra, we have about 26 centers. In Mumbai alone, about 15. So the idea here is for expansion. Look carefully, we are not in Delhi, Uttarakhand, Chhattisgarh, UP, we have one center in Varanasi. That is where I'm saying we can expand so much more. And that is why the business opportunity is huge.
Congratulations, Dr. Agarwal and Adil. Thank you for joining in. This is Rima here. Just a quick question. One hospital per week. What's the eventual aim? When does this expansion stop? Do you have a number in mind, Dr. Agarwal?
Hi, Rima. Thank you for having us firstly on the show. We have gone through a significant phase of expansion over the last 3.5 years. And this is something which we've been doing for the last 5-6 years or so, where you see our footprint has been expanding significantly. We will continue to explore a lot more opportunities across the market. As you can understand, the TAM in our current industry is around 37,800 crores. And one of the reasons why this industry has such a large TAM is India has 275 million people who are affected by some form of visual impairment. And the second requirement also is to serve this kind of a population. India has only 1.8 to 1.9 ophthalmologists for every 100,000 people, whereas the requirement is 8 to 9 eye doctors for every 100,000 people. The third data point I would give you is India, on an average, is only doing about 400 to 500 surgeries for every 100,000 people, whereas many of the developed nations are doing 3 times that amount. Given the increased incidence in cataracts in our country because of a few demographical reasons, the requirement for us to serve this particular market is significant. Although we don't have a particular number in mind, but as we continue to expand our footprint, we will keep looking at more opportunities to meet that requirement and serve more people.
Dr. Amar, we understand that you intend to open one hospital every week or one center every week. Give us a sense of the kind of capex that you have envisaged maybe over the next year or so. We also understand that you intend to reduce debt, but given the fact that the majority of the IPO is via OFS, How exactly will you fund this acquisition? Will you need to take on more debt or will it be via internal accruals?
A lot of money on internal system, and I'll ask Adil to tell you the numbers in detail of the primary centers, secondary centers, and the tertiary centers, and our capex for that.
We have three different formats of our hospitals. Our largest formats are what we call the tertiary hospitals. These average anywhere between 10,000 to 12,000 square feet, although you have some larger facilities which are north of 40 to 50,000 square feet. On an average, capex for a typical tertiary hospital is about 8 to 12 crores. Then you have a smaller format, which we call as the secondary hospitals, and these average anywhere between 4,000 to 8,000 square feet. Typical capex in these facilities is about 4 to 7 crores. And then you have the smallest formats, which are called the primary centers. Now, we call these the eye clinics, and we use these to cater to smaller micro markets, tier 3 towns, tier 4 towns, different villages. These average between 750 to 1,000 square feet, and total capex requirement for those is about 30 lakhs. Now, given our financial performance, if you see, we have a EBITDA to cash flow ratio conversion of about 85%. So we believe, based on the current situation, we don't require much external capital based on what our current plans are. Our internal accruals and whatever cash and investments we have on our books will suffice to meet our biomedical requirements and our capex requirements over the next 2 to 3 years.
Adil, as you keep expanding, is there a risk to your margins, or do you think you can maintain or expand margins from here on?
So that's a valid question, Rima. If you see, in the last 3 years, in October 2021, we had launched our 100th hospital. In 3.5 years now, we have expanded that footprint to 209 hospitals. Given the fact you have gone through such rampant expansion, we have still managed to maintain our margins at about 29.5%. This data which shows H125 is about 27.3%, but if you average it out extrapolated for the rest of the year, these will be close to 29 to 30%. We believe that we will be able to maintain these margins given our performance over the last few years. What we will not commit on is any improvement in margins, but we are fairly confident about maintaining the EBITDA margins at such a level despite our expansion plans. And the reason for that, the reason for that is, if you see, 70 to 75% of our centers we open in our core clusters. Now, core clusters are what we define as where we are present in predominantly the southern states of India, and Maharashtra also we would consider core cluster. The break-even time it takes the amount of time it takes to break even in some of these regions is a lot faster. As we take on a few more risky bets and we start going to markets where the brand equity is not strong, the break-even period increases. So on an average, our break-even period is around 15 months, so which is why we believe we should be able to maintain these EBITDA margins which we have delivered.
So Adil, or Dr. Amar, if you would like to answer this, it took you all 2 years to double your revenues and even double the number of hospitals. Do you think in the next 2 years, if we talk same time, your hospital count and your revenues would have doubled compared to these levels?
We are looking at that as a target. But let's look at those numbers. If you see, you were showing in the screen just now, you showed a turnover of 1,300 something last year. And if you see the turnover of this first 6 months, it's showing 820 crores. You can see the growth. And remember one more thing, our growth is always in the H2 mode because there's a seasonal variation where patients come for cataract surgery more during winter. So you can extrapolate and you'll see the growth. Perhaps Adil will add more on it.
Adil?
Yes.
Do you think we can double in 2 years?
I would not like to make any commitments on doubling of revenue or doubling the number of centers because this is, there are certain risk factors in our business. For example, our business is built around getting the right set of doctors and providing the right kind of clinical services. Post-COVID, also, we have seen, a healthy kind of growth, and that is a phenomenon which is not just unique to us. Most of the other healthcare players also have seen this kind of growth, predominantly because the Indian population has started to take their health a lot more seriously. But given our expansion plans and given our track record, at least in H1 FY25, we are fairly confident that we should be able to at least keep up with this current growth which we are showing.
Thank you so much, gentlemen, for joining us and giving us a sense of how exactly business is expected to pan out post-listing. Well, ITC Hotels listed today. Mangalam joins in with key details about this particular demerged entity of ITC.
Well, if you look at the discovered price of the ITC Hotels business, it's close to around 178 odd rupees per share, and which is pretty much in line with what the analysts had expected. Optically, the stock looks a lot lower than the implied value of 260 rupees per share. But remember, the implied value was basically implied by the difference between the stock price opening on the day it went ex-hotel business versus the previous close itself. The underlying assumption was the entire difference was the value of the hotels business, which is not always the case. If you look at, close to around 170 to 180 odd rupees, the stock trades at anywhere between 26 to 28 times FY26 EV to EBITDA, which is fairly in line with what the street was ascribing in terms of a multiple to that business as well. ITC Hotels, for instance, should be positioned as per analysts somewhere between Indian Hotels and Chalet Hotels as well. Chalet Hotels close to around 25 times, Indian Hotels trading at 37 times at a premium to all the other players in the industry because of its leadership position. Put ITC somewhere in the middle, 26 to 28 times, and that gives you the value of close to 170 to 190 rupees, this range in which the stock has been trading, and the price which was discovered in today's trading session itself. The question now, fundamentally, we'll keep an eye out on the hospitality sector, how this business performs. Remember, it's a debt-free company with 1,500 crores of cash. But technically, we'll keep an eye out on the flows around the stock as well, because as per Nuvama Quant, the stock is expected to meet criteria for inclusion in MSCI Global Small Cap Indices. So if and when that notification comes in, there would be some inflows of passive funds. But at the same time, over the next 3 days, we may see outflows from passive funds as well, because remember, because of this technical adjustment of the demerger, the stock is still a part of the Nifty. So it's the 51st Nifty stock. It will be excluded from the Nifty 3 days from now itself. And once that happens for both Nifty and Sensex, there could be potential outflows of $100 million for the Nifty and $65 million for the Sensex as well. So we'll keep an eye out on those parameters here.
Thank you so much, Mangalam, for joining us and giving us a sense of how exactly to value and look at this particular business. Time now for a short break. JSW Infrastructure's Lalit Singhvi joins us next to discuss their Q3 numbers and more.
Testing.
Welcome back. Let's welcome another management on the show. JSW Infra reported a stable Q3, revenues up 25% year on year. Margins, though, contracted to 36%. Lalit Singhvi, whole-time director, CFO of the company, is now with us on the show. Thank you very much, Mr. Singhvi, for joining in. This is Rima here. The first question is, are you on track to achieve your FY25 volume guidance of a 10% growth? Because the ask rate in Q4 is a bit steep.
Good morning, Rima. Thank you for having me here on your show.
So, yeah, we are very much on the guidance. So we don't see that there will be any deviation. And fourth quarter is typically better for us all the time because minimum guarantee tonnages gets built in the fourth quarter. So that is, every year it's like this.
Understood that, sir. So we want to understand that overall port volumes, especially H1 and even part of Q3 was slightly sluggish. So has that trend reversed in Q4? We understand that you have some built-in volumes for Q4, but overall, how's the environment? And also, could you give us an update on the commissioning of the various brownfield projects that you had announced earlier in terms of Jaigarh, Dharamtar, as well as Goa, even Greenfield Jatadhar Port? What exactly is the status on those ports?
Yeah, so Greenfield ports are all on track. So there are new ports like Kenny, Murbe, and Jatadhar. They will take some time. It will be, from 2 to 3 years time frame it will take. And we have some brownfield things coming up at Jaigarh Port and Dharamtar that we are expecting 1.5 years time frame. They will start. At our Goa terminal, our covered shed is almost through. By March end, it will be through, and next financial year, we are having, we'll have that additional cargo coming in. Secondly, our Tuticorin terminal and JNPT terminal, which we have, won last year in a PPP model, there we have got interim permissions to start the operations. So that will further add cargo in our 25-26. Both at JNPT and Tuticorin will be having additional cargo coming.
Understood that, sir. So, what we also want to understand from you is significant brownfield, greenfield capex. Even in your presentation and in the conference call yesterday, you've given detailed explanations as to how exactly you're going to turn around the Navkar Corp acquired assets. All of that will require significant capex. You also have the promoter shareholding in excess of 75%. So the QIP on the horizon. That is the first question. Second question: could you give us a year-wise breakup of the capex spends envisaged?
So QIP, we still have a time, that as a regulator's requirement, we can, come with the QIP by October 26. So we still have time to go. So we don't need money. Right now, we are sitting on a cash of 4,500 crores. So, but as and when the need comes, we will certainly go for QIP because we are, we have to go by regulator's requirement. And next 3 years, as we look at it, we will be spending on the port side around 15,000 crores. And on the logistics side, we have just given a guidance that over a 5 years time frame, we will be spending 9,000 crores. And out of that, 1,000 crores is already spent on acquisition of Navkar.
Okay. So your share of third-party cargo has increased to 48%, and that number was literally 5% in FY19. So in a span of about 4 or 5 years, what's the mix going to be going forward, and how is the JSW Group cargo volume shaping up?
So in the last 5-6 years, that our focus was broadly on, on third-party cargo. So all the investments which we have done in the last 5-6 years has gone into increasing capacity for third-party cargo. So that is a result that, from 5% we have reached to now 49%. And JSW Group, if you see, for the steel or cement or energy for that matter, they will have a lumpy growth. Whenever there is a capacity additions, they will have a huge, jump in that their cargo. So right now, say there is no capacity additions for JSW infra purposes at Dolvi plant, so cargo is flat. So all our growth is coming from third-party cargo. After 2 years, once the Dolvi plant takes from 10 to 15 million tons, we'll have a 30 million tons cargo coming up at Jaigarh Port and Dharamtar put together.
Understood that, Mr. Singhvi. Mr. Singhvi, you also understand in the call yesterday, you've actually given a clear timeline in terms of going ahead and increasing your capacity by 2.3 times to 400 million tons by 2030. Could you give us the year-wise breakup and also the capex, if you could break it up for us?
Yeah, so by 28, we will take it to 292 million tons. Currently is a 174 million tons. We were 170, but then we have added some capacity at PNP port and our Mangalore coal terminal. So now it's 174. And in 3 years time frame, we are taking it to 292 million tons. So there would be additions of brownfield expansions at Dharamtar, Jaigarh, Goa, Mangalore container. So these and LPG terminal at Jaigarh port, and our Jatadhar port and a slurry pipeline will also start, operations by that time. So this would, you can take 4,000 crores or every year investment taking place, 4 to 5,000 crores. So we hope to invest around 15,000 crores in next 3 years time frame.
So 15,000 crore capex that you have envisaged over the next 3 years and looking to reach the 300 million ton per mark by 2030. Give us a sense. We understand that you're looking to go ahead and become an end-to-end logistics player. You've given a significant presentation in terms of how exactly you're going to go ahead and turn around the Navkar Corp asset. Could you give us a sense of when you acquired, what was the capacity there, how was the operational efficiencies over there, what's been done so far, and at the end of FY26, how will Navkar contribute to your financials?
So we acquired Navkar on 11th of October. So it's few months operations only, but we see a lot of potentials in the Navkar. And as we said, this is the first steps towards our larger foray into the logistics sector. So whatever Navkar can take in their books, we will be investing to that extent in Navkar, but we will be going beyond Navkar. We have set up a structure in which JSW Infra holds JSW Port Logistic Company, and under that Navkar comes. So we will have many more things coming up in the logistics sector, and that's why we have kept 9,000 crores of investment into logistics sector. And we are looking at various things like GCT under the government's Gati Shakti programs. So there we'll have a low-cost, additions of various ICDs and CFSs within that. So we look forward to have around 15 to 20 such centers across India. So these investments, will take place in next few years' time. We look at 5 years' time frame in which we will be able to have this. And our model would be like, the same as of a port, where we get a group support. So base cargo comes from the group, and then we add it up with the third-party cargo. So here again, in this logistics sector also, it will work very well because group needs the logistic support, and they have a very good spend on the logistic, and part of that comes to JSW Infra's logistics sector. It will have enough for us, and then we can top it up with the third-party cargo.
Mr. Singhvi, one last question, request to keep it brief. Any acquisition targets on the horizon? Who are the targets that you've identified? We understand there will be significant inorganic growth required to meet your 2030 target.
Yeah, we are looking at certain opportunities. So since we are, in the middle of that, we will not be able to name that. But we have, some amount left for this acquisition proceedings. So let's see, in next few months, we should be able to, we'll come out with those things.
Thank you very much for joining in. Interesting conversation there with JSW Infra. Get into a break. But on the other side, we go full tilt on the upcoming budget. We'll get you what the street expects from the budget, and we'll focus on the individual sectors.
learning is what? I mean, stay in the country that you're investing in, stay bullish. And for us, it is India. So you've got to be an optimist.
Yeah, that will also drive looking at the front view mirror, looking at the windshield. Don't look at the rear view mirror while driving, because, you know, markets change. Economies are very dynamic. The companies that were in the Forbes 400 25 years ago, even in America, no longer exist today. There are a new bunch of companies. So it was a great mistake to think that you could look back and see.
I think one of the things you told me is really struck with me. You said, and we'll talk about the nitty-gritties, MTNL is an example, and many others will share other examples as well. But when you began and when you started and you came back from the US and when you started the investing journey, you said, in a way, we didn't believe enough that, well, we could that India could change so rapidly and so deeply and in so many ways. And, it'll be rich pickings over the next 20, 25 years or so. So I just wanted to take us through that.
Yeah, Prashant, I mean, think about it. I came back to India in the late 80s. India had a balance of payment crisis. Our per capita users of phone was like 3 in 100 or some astronomical number like that. And we always make the mistake.
Welcome back to Trading Hour. Well, moving on to what exactly does industry want from the budget, Winnie joins us now and tells us what the realty players are expecting from Budget 2025.
Hi, good morning. So in terms of obviously the boost that we're expecting, especially on priorities from the government side, we're expecting is going to be from infra as well as the real estate side. Now, in terms of the real estate side, affordable segment, talk about that. An affordable boost is what we're expecting. Affordable housing may witness a boost this time. Relaunch may come in terms of certain subsidies or schemes is what one is expecting. CLSS under the PMAY scheme, that will be something that is important to watch out for, especially in terms of improving affordability. Upward revision is something that we could watch out for the carpet area, as well as monetary limits for the affordable housing segment, and allocation to additional funds to the SWA-MIH fund is something that could support the completion of the stalled projects that are there. So these are the key expectations that the industry has coming in from the affordable side of the business, and affordable boost that one is expecting. Stocks that one could keep an eye out on obviously will be the affordable housing side segment stocks that one should watch out for. Now, obviously raising of debt deduction limit for home loan interest and principal is a key boost, as well as reduction in the GST rates for construction material, particularly cement, will enhance the overall affordability. So mainly the boost that we are expecting this time from the real estate side is going to be for the affordable housing segment. So let's watch out for what actually comes in from Budget 2025 this time.
Thank you so much, Winnie, for joining us and telling us about what exactly is the industry expecting as far as the realty space is concerned. Well, I've been tracking the power space and what exactly is the entire energy sector looking forward to from Budget 2025. Well, Morgan Stanley says that the government should go ahead and reiterate its thrust as far as clean energy is concerned, with a likely emphasis on the renewable space. Along with that, they are anticipating equity allocation to financial institutions, battery storage adoption, small reactors when it comes to nuclear energy, pump storage projects, as well as going ahead and working on a roadmap to ensure that the smaller industries don't really fizzle out when it comes to a requirement for power. Along with that, there is an expectation that there will be a step up when, as far as capex is concerned, as far as more details are concerned when it compared to the interim budget. What is it that Jeffrey is saying? Jeffrey says that they are expecting continued government push as far as renewable energy is concerned. This includes higher allocation for schemes in the solar energy as well as the hydrogen mission. They're expecting more details coming in and more thrust towards the PM rooftop solar as well as the Kusum scheme, and also enhancement of PLI incentives in this particular space. They want incentives as far as battery energy storage is concerned, and also they're expecting the government to announce renewable energy zones with RE projects, that is solar, wind, as well as green hydrogen, coming under this particular renewable energy zone. Lastly, they will also be looking out for any change in import duty structure and modules as well as cells, especially in the solar space, and any change in the duty structure there is something that will be very important to watch out for. But that's from the power space. Finally, on to the key expectations from the auto sector. Sudarshan joins in with what exactly the auto experts are waiting for.
So for the auto sector, it's expected to be all about electric vehicle space. So industry bodies expect direct incentives or schemes for building an EV supply chain, mainly for batteries. And industry say this will aim to increase the domestic value addition in battery manufacturing to 50 to 60% and reduce the reliance on imports. And this will be positive for battery makers like Exide, Amara Raja. These two stocks will be in the focus. Second is charging infrastructure and energy storage system. Basically, industries expect government to enhance charging infrastructure, energy storage system, and increase the support by government in R&D for clean energy, green mobility, and semiconductors. And this will be positive for stocks like Bajaj Auto, TVS Motor, Ola, Tata Motors, M&M, and JBM Auto. Last, if there is announcement of increase in rural development schemes, and this would be positive for entry vehicle makers like in two-wheeler space, it would be positive for Hero Moto. In four-wheeler space, it would be for Maruti. And in tractor segment, it would be positive for Scott's Kubota and M&M as well. So these are the three key focus areas that auto sector is looking for in upcoming budget.
Thank you so much, Sudarshan, for joining us and giving us a sense as far as the auto sector is concerned for Budget 2025. Well, with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Rock. That what happened in the past, that 3% growth will happen in the future also. So we fail to understand that because the Berlin Wall had fallen, we're in the precipice of change. Once things go to zero, they don't go below zero in the market, they'll go higher. And that's typically what happened. All the changes, whether the tax rates came down, whether the industrial licensing was scrapped, whether the socialist statist economy went through, all of that happened post-89 because India was in such a horrible shape at that time. And my friends who kind of understood that, with a simple underlying philosophy, be bullish in India, prospered hugely from it. I took more time to understand that this is a long-term structural change, that the India that we grew up in was not necessarily the India that was going to be for the next 30, 40 years. And to understand that process took me a long time. But once I understood it,
so markets will always be mispricing. But mispricing to start with, but eventually it misprices on other side also. So what happens is there is always a hype cycle. Any new segment when it starts, so like quick commerce started, before that it was digital companies, before that e-commerce, before that something else. So whenever new growth frontier starts in any economy, there will be massive growth because it will start from zero. Like this one, Bharti Airtel came in 2003, when mobile phone came, the month-on-month growth was 8-9%. You know, so that was a kind of scorching growth. And that's where kind of we used to take plunge in. But there is a hype cycle. So what happens is stocks or earnings grow or top line grows at about say 100% per annum. But the stocks will grow 200-300%. So the hype, so you ride the hype cycle. And right at the top, it becomes so, what you call, compelling. You know, I can sell the story to even a person like him or anybody, you know, and you're a seller. While selling the story, you are obsessed and you allocate. And that's where the maximum allocation comes right at the top of the hype cycle. And everywhere you are right, you know, but you're right only for 6 months. The hype cycle will collapse in less than 6. This is called Gartner's hype cycle. You can go and see. We have written in one of the papers. But so any hypes, but then you incur massive loss because the drop is almost 50-60%. So you invested say 1,000 crores. Straight you'll get to see 500 crores loss. So, I mean, I've incurred once.
And in the first 2-3 years of Helios, called Mr. Bull, like Rakesh, and I used to collect bulls and I have bull paintings and bulls and all that. And then in 2008, I became the defender of India on TV and in interviews saying India, nothing is wrong because Lehman Brothers and these MBS and all is not India's thing. ICICI has not lost any money and HDFC Bank doesn't need to raise capital. And we have met the company and it is growing 30% per annum, which was the case of HDFC Bank that year. And the stock fell 52% in rupees. And I realized this is because I took this mantle upon myself that I have to defend India, or I have to defend my stock market, or I have to remain bullish. And since then, I have...
Stocks climbed, led by mid-caps following a recovery in the US equities overnight. Industrials and IT are the big gainers, while FMCG drags.
Bajaj Auto posts an operating margin of over 20% for yet another quarter and trims its costs in the electric vehicles business, which now commands a 22% share. Exports are also seen perking up in the fourth quarter.
JSW Energy slides on a sharp drop in margins, and Bosch sulks on a poor show of its consumer business, but BHEL climbs on strong sales and order inflows, while Suzlon delivers heady growth with stronger margins.
ITC Hotels lists on the bourses at a valuation in line with analyst expectations, but expectations of fund flows due to exclusion from the frontline indices and likely inclusion in the global indices keep the trades skew. Good afternoon, you're with us here on Halftime Report on CNBC TV18. I'm Hormus Fatakia. With me is Mangalam Malu. As always, we're counting down to a very big event overnight and of course a very big event on Saturday. So it's a very event heavy next few days that are lined up for our own markets. But there is some green on the screen, at least as of now, continuing from where we left off in yesterday's session.
There is good green, 23,100 plus, and it's building on to those gains. The most important thing will be the second half of trade. Typically, the street goes into Fed events long because the street believes that maybe there could be some sort of support coming in from the Fed itself. But be that as it may, tomorrow is the expiry, and thereafter we have the build up to the budget taking place as well. And today is also the day where trades for the Feb series open up as well. So those are a couple of factors that we'll keep an eye out on. We're currently at the high point of trade for the Nifty, led by the Nifty Bank, which is doing extremely well. And the broader markets actually are the ones which are outperforming. After the drubbing that we saw in yesterday's trading session, the mid-cap index up nearly 2%, the small-cap index even better as well. But let's get talking about earnings. RR Kabel is the first management of the show. The company reported a mixed set of third-quarter earnings, pretty much in line with what some of the other peers have reported as well, where the growth was led by the non-cable business. And in cables and wires, of course, there was moderation in demand, and at the same time, there was a decline in prices of the underlying metal itself. Let's discuss this and more. We have Rajesh Jain, who's the CFO at RR Cable, joining us. Thanks a lot, Mr. Jain, for joining in. I'm looking at your performance, comparing it to the other peers as well. Just wanted a couple of details. One, what is your prognosis for volume growth in the cables and wires business in this quarter and going forward? And secondly, where does your market share stand at right now? Because I see Polycab having done a little better than you in terms of reported growth, and Havells having done a little less than what you've done on a reported growth itself. Would that be a way to look at this performance and deduce that maybe you gained a little market share but lost some from Polycab as well?
So, good afternoon, first of all, and thanks for calling us. If we see this quarter performance and even at YTD levels, like we have grown around 12%, and in that also particularly in wire and cable, it is growth at YTD level is 10%, and in my FMG business, it is around 25%. And when we talk about the market share, see, this is not that much a very big change that it may have a huge impact in market share. It may be hardly maybe 10 or 20 bips here or there. So it is not directly measurable. But within wire and cable, of course, we have seen a very good growth in our cable division, where still we have like very good focus for future growth also.
Mr. Jain, good afternoon. Thank you for joining in. I wanted to talk to you about the business mix overall as well as on the segmental basis. Your exports were around about 27% this quarter. How has the export demand looked like this time around? What are you witnessing currently? And I ask this to you in particular, considering the volatility in commodity prices that you're witnessing. What are the on-ground trends that you're witnessing right now when it comes to demand, both on the export front and on the domestic front as well?
Yeah. So first of all, like we are the largest exporters of wire and cable from India, and it is almost contributing 27-28% in our overall revenue. First, if you see overall, like 88% of our revenue is coming from wire and cable, and 12-13% is coming from FMEG business. Within wire and cable also, like we have seen a very good demand from export also. Though in first half of this year, there were like some disturbance and we have seen some impact in our demand also. But going forward, it seems we have very good demand, even looking to the international scenario, growth or additional demand from Europe, USA, and all other countries. So it seems in future also we will see good growth in export, particularly in cable business. Same way, even in India also, right now we are like a wire heavy company where most of our revenue, almost 70% is coming from wire, within wire and cable. So now slowly we are increasing our capacity in cable also, and cable particularly it is going at a higher pace when we compare with wire.
All right. Can you give us a sense of two numbers? Just first one is that in the third quarter, your volume growth in the CNW business on the whole was slightly muted at around 2.5%. For the entire year, you had guided for about 20% growth in the volumes. Do you maintain that number? And secondly, for the annual, projections as well, the first 9 months, your revenues have been close to around 12% higher as against the same time last 9 months. What is your prognosis for the end of this year? Where do you think that revenue number would be?
Yeah, so this year, of course, we could not achieve what we had planned at the beginning of the year. But at least in Q4, it seems our volume growth will be in the range of 15%. And so since we had a lesser growth in the first 9 months, so at overall annually basis, our growth may be a little bit lower. But going forward, it seems again, since like international markets and even domestic, we are building our capacity in cable where earlier we were short of supply. So now we see a good growth in the range of 15% for our wire and cable business.
Can you put a number to that as well, Mr. Jain? Since you mentioned growth will be lower, how much lower does that translate into your top line as well?
So top line right now we are 12%. So of course it will be in the range of 14 to 15% on an annualized basis.
Okay, 14 to 15% on top line growth, and 15% is the volume growth, which you've actually curtailed from earlier guidance of 20% itself. Let's talk about the margins then, because we've seen some margin improvement in your business as against the others, which actually showed some sort of margin decline as well. You were targeting double-digit margin in this business. By when do you reach there?
So earlier we had predicted that by FY27 we could achieve that double-digit margins. But it seems since this year we missed that track. So now we are planning that we'll get this double-digit margins by FY28.
And FY25 and FY26, what are your expected margins? Because earlier you had expected 100 to 125 basis points improvement in margins in this financial year.
So like last time also we told that since we missed very heavily in our first half of this year, so this year it is not possible even to achieve last year margins rate. But going forward, again, we are on track and we have planned to have margin improvement of 100 to 120 bips on year basis from next year onwards.
Mr. Jain, two-part question on the FMEG business. You had first mentioned that you will break even on the FMEG business once you reach around about 1100 crores of top line. You are currently at around 667 for the first 9 months. Does that happen by the end of the year? Part one. And part two is you mentioned around 12 to 13% revenue share from the FMEG business. Does that move higher as we go into FY26?
Yeah, so since we are expecting that our FMEG business will grow by around 20 to 25%, and at the same time, since wire and cable is also increasing, so this share may from 12 to 13%, it may move to 15%, 16% by the end of next year or by FY27 also. But on profitability, of course, what we have planned by next quarter of FY26, first quarter of FY26, we may be green at EBITDA level. And it seems we are on track. As you can see, our revenue is growing at 25%. Even this year, we have seen margin improvement of 370 bips, which is one of the best in the industry. So we are on track as per our plan.
And EBITDA break-even happens in the first quarter of FY26. By the end of FY26, how does that number ramp up? Because this is a business, while it is revenue accretive, it is margin dilutive as well, even though the total addressable market is a lot higher in this one. Could you give us a sense of when does it, come up to the margins that you're doing in CNW business already, and when does it become margin accretive and perhaps EPS accretive as well?
So it will be too early to predict a normalized EBITDA percentage of 8 to 10%. But as per our plan, it seems by FY28 also, there we can achieve a top line of 2,000 to 2,005 crores and can achieve margins of 8 to 9% kind of EBITDA levels in FMG business also.
Very quickly, Mr. Jain, any capex plans that are lined up for the next year?
Yes, we have made one capex plan of 1,200 crores, which will be spread over next 3 years. And this will be particularly focused on our cable growth and as well as some balancing in wire demand also, wire capex
And
also.
that typically yields how much revenue? What is the asset turnover on a business like yours?
For this phase of our expansion, we may achieve a top line of 4,000 crore on investment of 1,200 crores.
All
right, Mr. Jain, thank you so much for sparing time and joining us. Wish you good luck for the rest of the year and for your expansion plans as well. The management of RR Kabel cutting its revenue growth guidance, but has earmarked a capex plan for which it expects a top line of around 4,000 crore rupees. Time for a short break. Up next, we connect with Dheeraj Singh, who's the CEO at SIS, to discuss the quarter gone by and the road ahead. Stay tuned.
Esteemed guests and friends, above all today, we express our deepest gratitude to our visionary Prime Minister, Shri Narendra Bhai Modi ji. Pandit Deen Dayal Energy University owes its very birth to his extraordinary vision. All of you are benefiting from what Narendra Bhai thought in the early 2000s. And when he called me and said in 2005 that we have to build one of the finest institutions in Gujarat, right? And that is what we have achieved from 2007 onwards. So we will always
Welcome back. Continuing with corporate conversations then, SIS is the next management. The stock's buzzing in trade today. The company reported a good third quarter result. Dheeraj Singh, who is the CEO at SIS, is joining us on the show now to discuss the quarter gone by and the road ahead for the company. Mr. Singh, good afternoon. Thank you for joining in. In the first 9 months, your top line was around 7%. You ended FY24 at 8.1. What do you end the year with? A, do you expect to see double-digit growth by this year or double-digit growth by FY26?
We've had a CAGR of about 15% for the past 32 quarters, if you see that, right, on revenue as well as EBITDA. And we maintain a similar guidance, but typically we are about 2x of GDP growth has been, and we expect this year to be around that 12%, so it will be in double digits. And going forward also, we would like to maintain similar growth organically, but what would add to it is the inorganic part, leading to the 15 to 16% growth on an average.
Let's talk about that then. Inorganic part is what you've whetted our appetite for. What is it that you're looking at, and what segment? Is it India security? Is it facility management? Is it the international security business? What size? We have a rough idea of it should be incremental of 3% of your revenues, because if you're doing 12% organically and 3% additionally, we have a rough revenue estimate of this. But what are you likely to pay for it? Are you in touch? Anything we can hear in the very near future?
Sure. So our focus remains on India market. Over the past few years, we've increased our EBITDA percentage from India to more than 2/3. So our focus for M&A also will remain for the India market across all the three segments. So as of now, we have signed term sheets for deals in security, facility management, as well as in our cash logistics business. And in terms of timing, we expect to be able to announce hopefully within the next 1 to 3 months, maybe 1 or 2 deals.
Next 1 to 3 months, expecting to announce 1 to 2 deals. That's interesting. You mentioned that you're going to focus on the Indian markets, but your India, the security business domestically, that the margins for that business have remained flat, if I could call it that, or constant for over the last 3 to 4 quarters at around 5.5%. What would you attribute to the fact that these margins are not picking up from where they currently are, or do you expect them to remain at these levels going forward as well?
So from the post-COVID period, where we had security business had reached a margin of about 4%, for the next few quarters, it steadily climbed up to 5.5%. Yes, it's been steady there. One of the main reasons is that we are investing a lot in our technology, both internal as well as client-facing. One of our business is in the residential alarms business, we protect, which is a very high value generator for the future. But like any B2C business, it requires more investment upfront. And that is something that is keeping the margin at the same level for security business as of now.
How much more do you expect to continue investing, and for how long do these margins remain at these levels before they start picking up?
The security business will pick up from the 5.5% to about 6% within the next 2 to 3 quarters. But our focus now has been more on the facility management business, which had been struggling on the margin front, as you're aware, for the past several quarters. The good news out there is now steadily increasing. We had given the guidance it'll be increasing about 0.25% every quarter. And I'm happy to share that it's increased from 4.3% to 4.6%. And I can see confidently this trend continuing for the future.
Closer to 5% by the end of next quarter, and thereafter this quarterly improvement of 25 basis points continues. Just a word on these deals itself. If you could give us a sense of the current cash on your books, roughly what size could these acquisitions be in terms of an outflow from your balance sheet, and are you looking to raise any debt to fund these acquisitions? Because your net debt to EBITDA came down from around 1.5 to closer to 1. So the street is keeping an eye out on that ratio as well. If you could give us a sense on all of this.
We've always maintained that a comfortable ratio, net debt to EBITDA, is about 1.75 to 2 in this industry. Globally also, we've seen that. But we managed our working capital very efficiently. We've reduced our net debt by almost 230 crores. Our DSO, if you look, has reduced from almost 74 days, similar time last year, to now about 69 days. So we are doing all the efficient working capital management, but you're right, as and when the M&A cash flow investment arises, we will look at altering our debt. But typically the deals that we do, they are in the range of 51% upfront that we buy. So it is not an immediate cash flow, it is staggered over 2 or 3 years' time.
So would you be raising only debt to fund these acquisitions, or is there an equity fundraise also in the pipeline?
Not at these current prices, but we are always open to that in the future.
And what about the potential size of these acquisitions? I mean, we understand that you'll be paying 51% upfront, but typically what size do you acquire companies at?
So our M&A process is very, very defined. We look at anything not less than an IRR of 25% on the deal. It has to be a geographical fit or bringing certain niche skills to the group. Now, given these criteria, we might look at anything in the range of about 60-70 crores top line to 1,000 crores. And as of now, we are looking at the deals that are in these actual ranges. But a lower size deal would typically have a higher EBITDA percentage. So it'll be good for EBITDA accretive for the whole segment. And the larger size deals will, of course, add to the operating leverage. And so that is our approach, yes.
You've done a phenomenal job of, actually not answering what we wanted to get out of you in terms of an outflow from your own books. Yes, you've given us the entire range, 60, 70 crore to 1,000 crore in terms of a size. That's the big buffet. But, from how much will you pay for something like this is what we're trying to understand. Do you pay 2x sales, 3x sales, 4x sales? And if you could give us a rough range of the money that will be going out of your books because of this, it'll give us a sense of, how much you're looking to raise your debt by.
Sure. Typically, the deals that happen in this space are 7 to 8x of EBITDA, right? So that is one clear metric that will help you understand. If you ask for the kitty, we are keeping ourselves ready for about 100 to 200 crores outgo for the current requirements.
All right, Mr. Singh, thank you so much for joining in today. Wish you good luck for your potential acquisitions as well as for the road ahead as well. Time for a short break. But before we do that, there's some good news for our viewers. India's business news leader is now just a click away, introducing the all-new CNBC-TV18 app, where you get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store, or you can scan the QR code as Mangalam just did, and the app is already on his mobile phone screen. Take a short break. We'll be right back.
To our Prime Minister, long before he became Prime Minister, he foresaw that India needed Atmanirbharta in energy. Over 20 years ago, he told me he wanted Gujarat to lead the nation in energy and energy products. He also told me that Gujarat should take the lead in cultivating world-class human resources needed to achieve India's clean energy ambition. That is how he helped establish this pioneering university. Friends, there are many things that we learn from our beloved Prime Minister. Let me mention just 2 lessons here for all of us. 1, Modi ji never lets a good idea go to waste. His Man Ki Baat inevitably becomes his Man Ka Sankalp. His Sankalp is always Vajra Sankalp. His determination is as hard as a diamond. He does not rest with simply making a Sankalp. He knows how to turn his Sankalp into success. In the last 10 years, the world has seen how he especially chooses impossible-looking tasks and transforms them into reality. This, for all of us, is lesson number 1. Lesson number 2 is about his boundless energy. Narendra Bhai Modi's name stands for Anant Shakti, infinite energy. Since PDEU is an energy-focused university, all of us should learn to be as energetic as our Prime Minister. People often ask the question, where does Modi ji take rest? Or does he rest at all? I can tell you that I know the answer to this question. The answer lies in what Pandit Deen Dayal Upadhyay ji has said, who is the founder and whose name this university bears, has said about rest or Vishranti. He has said, Kaam mein badlav hi Vishranti hai. Change of work is itself rest. And I think this is our Prime Minister's motto. This should be our motto, dear students, also. Therefore, when we think about these two lessons, how to turn ideas into action and how to work tirelessly, we cannot escape the conclusion that Narendra Modi ji is not only India's Pradhan Mantri, but for us and this university, he is our Gurudev, our respected teacher, and we will follow his learnings. We must aim higher. Within a couple of years, India will emerge as the third largest economy in the world. No power on earth can stop.
Well, the market is doing extremely well. We have Reliance, which has moved to the high point of trade, and that's powered the Nifty ahead as well, comfortably above that 23,100 mark for the frontline index. Though we'll keep an eye out on whether this sustains or not. The reason why I say that is because tomorrow is expiry. So good time to get in an F&O perspective on the market as well. There's good recovery, both of the Nifty as well as the Nifty Bank doing extremely well. The Nifty Bank underperforming as against yesterday where it was outperforming, but the fact that it's holding on to gains of almost 0.5% is supporting the frontline index. The mid-cap index also doing its bit by rallying about 2% odd. For the Nifty, the range is fairly defined. You have the 23,000 put, which is fairly active, 105 rupees on premium, which is telling you that close to around 22,900 would be the first support that comes in were we to fall from here. On the way up, however, 23,100 call as well is fairly active. So close to around 150 rupees in terms of premium. So staying above the 23,200 mark is important for further short covering on that call as well. So for the Nifty, the broad range, 22,900 to close to around 23,250 odd itself. For the Nifty Bank, it's meandering around that 49,000 mark, and that's where the fulcrum has been placed. 49,000 call and put have the maximum open interest for a premium of 350 rupees each, or the call and the put, telling you that the street is positioned for 48,650 to 49,350 for the Nifty Bank range itself, and that ties in with the 20-day moving average on the Nifty Bank as well. The 20-day moving average on the Nifty Bank is 49,286. Yesterday, we went very close to the 20-day moving average before declining for the Nifty Bank. That's something we'll keep an eye out on. And if the Nifty does sustain above these levels and see a short covering pop, an excursion towards the 20-day moving average cannot be ruled out. 23,375 is where that mark is. So we'll keep an eye out on both these indices ahead of the expiry tomorrow.
Right, interesting levels there. The Nifty is still quite a bit away from that 23,375 mark, but that has been the range from where it has seen resistance and then it moved lower yet again. So the important levels to track on both the benchmark indices. By the way, just before we take that break, a lot of these beaten down names are making a bit of a comeback in today's session. NetWeb Technologies is up 10% after the clarification that they issued on calling DeepSeek an opportunity and not a threat. So that's a 10% circuit there. Anantaraj 2 is up 9%. So good going for both of these names. Credit Access Grameen is up 9%. That stock is also being battered out of shape. And Keynes Technologies, after the drubbing it took yesterday, is up 8% after the upgrade that it received post its results. So good going for a lot of these beaten down names. Take a short break. On the other side, we connect with Nikhil Dhingra, who's the CEO at Acme Solar Holdings, to discuss the road ahead for the company after the Q3 results. Stay tuned.
trajectory. I can clearly foresee that India will become the most prosperous nation in the world before the end of this century. But India, with other large economies, also has a big responsibility. We must not allow economic growth endanger planet Earth and further worsen the climate crisis. Therefore, the transition from fossil fuels to clean and green energy has to be accelerated. I am supremely confident that green technologies and green enterprises can reverse the ecological degradation and indeed make our planet more beautiful, more livable for future generations. Our Prime Minister wants India to become the greenest nation in the world. For this purpose, India is also transforming itself into a deep tech nation with advanced manufacturing capabilities. This is the context in which PDEU should see its future role and responsibility. My dear PDEU family, therefore, here are my 3 expectations from all of you in the PDEU family. My first expectation, PDEU should further improve the quality of research and make it application-driven. We should specially focus on newer areas like bioenergy, which have the potential to help our farmers and boost employment opportunities. My second expectation, we should simultaneously increase our internal strengths and also forge national and global collaborations so as to enhance our leading position in research and academics. My third expectation, the intersection of green energy, green materials, and artificial intelligence is going to shape the future of humanity. I would like PDEU to gain a leading position in this synergy. Talking of artificial intelligence, I have a piece of advice to our young students. You must be good at using AI as a tool of learning, but do not give up your own critical thinking. चैट जीपीटी का जरूर से इस्तेमाल करो, लेकिन याद रखो आर्टिफिशियल बुद्धि से नहीं, खुद की बुद्धि से हम आगे बढ़ेंगे और आप आगे बढ़ सकते हैं.
Welcome back. Watch us on a halftime report. Continuing with corporate conversations, then Acme Solar Holdings is the next management. The stock surging in trade today. The company reported a good third quarter performance, and you can see the stock is locked in a 10% upper circuit. To discuss this and more, we are joined by Nikhil Dhingra, who is the CEO at Acme Solar Holdings. Nikhil, good afternoon. Thank you for joining in. You know, I'll start off with your capacity. What's the total tied up capacity that you're expecting by the end of the financial year, this and the next financial year as well? If you could share some numbers on that front.
Sure. Thanks a lot. So we have a current capacity of 2540 megawatts, which is currently operational, selling power on a 25-year PPAs. So this capacity is expected to go up by 350 megawatts in the upcoming quarter or the quarter after next. So this will take us to around 900 megawatt, and then a 100 megawatt plant is expected to come up after that in the quarter after that. So 3000 megawatt. And of course, other than that, we have around 4,400 megawatts of under construction projects, which will be coming up in the next 2 to 3 years. 27-28 is the timeline for that. So we will be targeting to reach 7 gigawatt, which is our contracted capacity by 2027 and 2028. And this ramp up will be starting from June 26 onwards. Each of these plants will be coming up. 4,400 megawatt will be split from June 26 onwards, going till December 28.
You've given us a projected, EBITDA run rate at anywhere between 1750 to 1800 crores in the presentation. Just wanted to know, with the ramp up in capacity, what is the steady state EBITDA run rate that we should be working with? And this largely because of one of the deals that recently happened. You got a 250 megawatt FDRE project from NHPC at a tariff of nearly 4.56 rupees per unit. Analysts are actually assuming 50% higher EBITDA from current levels from this project. Is that assumption accurate? Could you give us a sense of how one should look at your EBITDA from here on, and throw some light on this one as well?
Sure. So we commissioned 1.2 gigawatts of capacity in this quarter, right? So the EBITDA we are guiding on is the operational capacity, which is already operational and logged in with the PPAs and already selling power. So this EBITDA we are saying is because of the operational projects, which take typically 2 years to build. So this 1750 is from already operational assets. As we add projects, like I guided, like in next 2 quarters, we are going to add 450 megawatts of capacity next 2 to 3 quarters. So that will take this EBITDA to upwards of 2100, 2200 crores range. This is the operational EBITDA I'm talking about. So what we want to guide on is the operational EBITDA numbers, where once the asset gets operational. So accordingly, we have guided on from the 2.5 gigawatt we have, we will generate 1750 to 1800 crores of EBITDA. In terms of the bid you spoke about, that is the bid we have just won in the last quarter or so. So that will take some time to get into our revenues. And of course, that will get into our revenues maybe in 2 years' time, because 2 years' time is the time at least it takes from a bid to operational date. And in terms of the EBITDA margins from those projects, so in a solar or any renewable, the EBITDA margins at a project level are typically 90%, and they remain around that because there is no fuel expense, like we mentioned earlier also. So in terms of the EBITDA margin, 90% is there, but in terms of the revenue itself, the CUF is higher because you are supplying peak power. So you get as closer to thermal as you can by supplying a CUF of around 55 to 65%, depending on the configuration you're choosing. So on a per megawatt of contracted capacity, the revenue is higher by the number you mentioned. Typically, they will do in a solar plant, you do a CUF around 30% on the peak basis. Here you're doing 55%. So revenue per megawatt of contracted capacity is essentially double. So that's how it works on the FDRE side.
So if we do just rough math, right now you have about 2.5 gigawatts capacity. You are targeting 7 gigawatts by in the next 2 years, along with some of the orders that you won, etc. Your current EBITDA run rate is close to around 1800 crore basis the operational capacity. Multiply that by 2.5 times, given your capacity increase as well. Do we expect your EBITDA to, touch that 4,000, 4,500 crore mark by FY28, FY29? Would that be a fair assumption? Could it exceed that given, these orders that you win as well? Should one work with a number closer to 5,000 crores?
Yeah, so it will, see, in terms of the numbers, like I said, the revenue is to divide, you can say 55 by 33 is the revenue in terms of the units. And of course, the tariff is also higher. So it will be higher than what you said. It will be substantially higher than what you said, simply because the tariffs are also, let's say, 2.5 to 2.8 is the solar tariff. In an FDRE, it is 4.5 rupees. And the CUF is also around 2 times. So it will be substantially higher than that, the number you mentioned, once we commission the 7 gigawatts. And that, of course, can be estimated by any analyst basis the tariff which is available and the targeted CUF which is also available.
Not every viewer is an analyst, so if you could help us, understand how much does that mean when it comes to substantially higher? Are we looking at numbers closer to $1 billion then?
See, right now we are not giving any guidance on that. So it will be, what I can say, it will be much higher than 4,000 crores, which you mentioned that. We are not giving any guidance on the numbers. But since our business is very predictable, that once we operationalize, then I am able to give you a guidance, because then I can say that I'm generating this much power. For me to comment on a future number, it will not be possible today in terms of the 2027-28 numbers. I think it will be best done by analysts basis the PPAs we have and tariffs we have.
Nikhil, one final question, and if you could quickly tell us, you spoke of adding capacity. How much are you going to spend on that? And if that is so, how does that impact your debt picture? What's the current debt? And if you plan on bringing it down, how will that impact your financial performance in terms of bottom line margins and so on?
Right. So, see, in terms of the debt, we have mentioned that we will always be under 5.5 times debt to EBITDA. Right, because EBITDA is what helps you to repay that debt and what helps you to generate the free cash flow to equity. So right now we are very much under that 5.5 times on a debt to EBITDA basis. Our debt has, of course, we have paid down a lot of debt in this quarter of around 2,100 crores because we raised money of 2,400 crores. So all of it has been used for repaying debt, the primary capital. So right now we are at this level. Which is debt to EBITDA, very comfortable. So when we build a project, typically we take 75% of money as debt and 25% we have to invest. And this debt is long-term debt because our PPAs are for 25 years. The contract for sale of power is 25 years. So you get a debt closer to 18 to 20 years of repayment cycle. So 5.5 is the level we are quite comfortable with. And each of our project is designed to service this debt at a much under that 5.5 types of all of our capex, all of our financial planning is done with assuming that we will never cross that 5.5 times debt to EBITDA number.
Right. Even if you do, a little over 4,000 crores, as I said, substantially much over that 4,000 crores, I said, your debt would peak out at close to around 25 to 30,000 odd crores as well when we speak about 7 gigawatts. Just a final quick question on each of your capacity. What is the typical payback period?
Yeah, so see, in terms of that's a very important thing for a utility like us, renewable utility like us more so because we win our projects in the bids. So very important for us to be capital efficient in terms of the return on capital employed. I think we have mentioned in our presentation also on a pre-tax basis, we do 14.5%. So if you just look at that, it's around 6 to 7 years on a capital invested. On the equity basis, the returns are slightly higher. So 6 to 7 years on a capital employed basis.
Right. All right, Nikhil, thank you so much for sparing time and joining us today. Wish you good luck for the road ahead. The management of Acme Solar, the stock locked in a 10% upper circuit. Take a short break as we count down to the budget. On the other side, we get to the key expectations of the defense sector from Finance Minister on Saturday. Stay tuned. Back on the other side. Welcome back on to key expectations from the union budget from the defense sector. Upasana is joining in with more on that. Upasana.
Well, this time around, we're expecting the focus to remain on the core capex sectors like railway, roads and defense. Mind you, defense substantially lagged in FY25. Of the overall capex, Elara expects 55 to 60% of the allocation towards road, railways and defense. And this time we're expecting the higher defense allocation. Now, FY26 budget is to be a growth-oriented with an emphasis on increasing capex spending. Defense is anticipated to be a key focus area, supporting the nation's long-term growth objective. Now, we expect the defense capex budget to rise by 7 to 8%, reaching nearly about 1.9 lakh crores. Defense capex is likely to be dominated by higher allocation for aircraft and engines, naval fleets, and even other equipments. This higher allocation will support indigenization and more defense production. Now, more schemes are likely to boost the defense exports, which is in line with the government's target to reach 500 billion by 2029. On back of this, defense export companies like HAL, BEL, Bharat Dynamics and Solar Industries will be on focus on back of this. Also, we are expecting some changes in the scheme to attract more startups and technological advancements which will support companies like Zentech and IdeaForge. So overall, we are expecting a higher budget allocation for defense this time around.
Keep an eye out on that, Upasana. Thank you for that earnings expectations. By the way, pull up KPIT Tech, and that has seen a very, very sharp surge after its results announcement. There you can see 6.5% higher now on KPIT Tech, and that's because of the flash on your screen. The company has increased its FY25 margin guidance to 21% from the 21% plus, in fact, from the 20.5% plus earlier. And the constant currency revenue growth guidance has been maintained in the 18 to 22% range. The US dollar revenue as well increasing 2% on a sequential basis, up 18% year on year. But the big takeaway on the KPIT Tech result is that they have increased their margin guidance for FY25 to now over 21%. The stock seeing gains of up to 5%. Take a short break. On the other side, Manisha Gupta joins in with Ishu Tatwani, who is the founder of Anmol Jewelers. Stay tuned. We'll be right back.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From
KPIT Tech is the stock of the last 10 minutes, now 7% higher after the company increased its FY25 margin guidance, and it is continuing to build on to those gains. 7.5% higher now on the stock is KPIT Tech. Has been an underperformer over the last 1 month, but now the management increasing its guidance, and you can see that in the stock price. But over to Manisha Gupta now for our Commodity Corner.
Well, you know, there's so much uncertainty in the global markets, and there's one thing that really seems to be reigning in all that safe haven and hedge buying, and that is really gold. If you look at the international markets, well, we are not too far away from its all-time highs. The all-time high that the gold prices hit in 2024 was at $27.90 an ounce. We were trading at around 27.60 plus kind of levels in the international markets, so not just about $30 away from all-time highs. And when you look at the Indian markets, well, that's an all-time high for the gold prices for India that you can see on your screens. Ishu Datwani is founder of Anmol Jewelers, and he joins us on phone line now. Ishu, hi. All-time highs for gold, and we do understand that when it comes to gold buying in the Indian markets, it's not too high. There's a bit of a pause. Gold is selling at discount in various states of India at this point in time. Your reaction, first of all, to the gold prices. Where do you see prices headed?
So, you know, a statement that Mr. Trump made where he said, you know, we are going to reduce our interest rates. And he also appealed to other countries and other banks to reduce rates. And I think this is the reaction for that. You know, usually when we see prices rising, there's always, you know, after a point, there is always a correction and prices do go down. But this is one rally that we've seen which is unrelented, you know, and we, and I'm sure all other jewelers in the country, probably hedge every evening. So every evening, whatever gold we've sold on that day, we will buy that much gold, because this is almost like a one-way street. You know, we are not seeing any reduction in prices. So even now, in spite of all the, you know, rallies that have happened, we still expect gold to go up even more. So not taking any chances. And similarly, even the sentiment that the buyers are sharing is similar. They are all very bullish on gold and expect gold prices to go up, which is why even in terms of business, we are not seeing a drop in business, because the expectation is that if we don't buy now, we will lose out. And with the wedding season being the way it is, there are so many weddings, gold is still pretty good, and we are doing very well with gold, in fact.
All right, that's good to know. Absolutely, safe haven buying just about continue. But Ishu, is there a lot of discounts being offered? Because we do understand that before budget, depending on which way the import duty goes or if it's not changed at all, we do understand that there's a lot of gold available. Is it a buyer's market right now?
I would, you know, maybe for the dealers, for us, a wee bit of discounting is there. But as far as the consumer is concerned, there is no, you know, discount really happening. Well, there are people who always try to lure customers with discounts on labor and, you know, things like that. We are not one of those. But as far as the consumer is concerned, you know, I don't think there is too much of a discount going on, other than players who always, you know, have that strategy of pulling in clients with lower rates and lower discounts, you see.
But are there discounts on bullion, not so much as jewelry for the retail consumer,
yes, there are discounts. Yeah, there are discounts coming in bullion. There are discounts, yes.
And to what extent really? Because the last I was reading was $50 as well as what we saw in the previous week, which perhaps is the highest in 6 months between bullion dealers. Is it still reading at those levels?
I would say around $30, $35 now.
What is also your sense on prices? We're almost at around $27.50 an ounce, not too far away from all-time highs in the global markets. Is there a sense that you could be looking at higher prices in this quarter, in the first half of this year?
Yes, definitely. We are still bullish because of Trump coming in, and with all the uncertainties that are there, gold is the safest bet. So we are still betting on gold going up even further. And, you know, in India especially, all the more because even the rupee is not so strong. It's depreciating against the dollar. So the expectation is prices should go up even further.
That point is well taken. Mr. Datwani, thank you so much for joining in. Well, that's the point I wanted to put forth, that all-time high gold prices in the Indian market have led to a bit of a discount coming in, and perhaps not to the retail consumer, but as Mr. Datwani pointed out, that between the bullion dealers, $30 an ounce of a discount is what is reigning in right now. This could be ahead of budget. This also could be ahead of the fact that we're looking at all-time high prices and not too many buyers out there. But that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.
Stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
You know, in general, for the portfolio, which is a large India-focused portfolio, it has only 10 to 15 large and liquid stocks. I mean, nothing which trades less than $10, $15 million will ever be part of the portfolio. It's a very large and liquid portfolio. We went into an out of consensus overweight on staples right at the start of this month, and an out of consensus underweight, a big underweight on industrials again. So those were the two big calls that we took. Other than that, IT and healthcare are our other underweights, while banks is a small.
Stocks climb led by mid-caps following a recovery in US equities overnight. Industrials and IT are the big gainers while FMCG drags. Bajaj Auto posts an operating margin of over 20% for yet another quarter and trims costs in its EV business, which now commands a 22% share. Exports too are seeing a perking up in Q4. SW Energy slides on a sharp drop in margins and Bosch sulks on a poor show of its consumer business, but BHEL climbs on the back of strong sales and order inflows, while Suzlon delivers healthy growth with strong margins. ITC Hotels lists on the bourses at a valuation in line with analyst expectations, but expectations of fund flows due to exclusion from the frontline indices and a likely inclusion in global indices skews the trades. Hello, good afternoon. You're tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala here from the Mumbai studio. A quick look at what the markets are doing this afternoon, and today we've not seen a bad day coming in for the markets. Nifty as of now is managing to hold on to gains of 0.7% approximately is what you're looking at. About 23,100 levels is what the Nifty is trading at. 126 to be precise, around that mark is what the Nifty is trading at. Day's highest point. Sensex 2 is holding on to gains of almost 0.6% in trade. We have the contributors that are coming in on the screens. We have the banking side, Kotak Bank, HDFC Bank. So private banks among the top contributors. Other than that, Infosys from the IT pack as well as Bajaj Finance from the financial side is managing to hold on and support the market in terms of growth and pulling the Nifty on the positive side. What is dragging the market? We have ITC, Asian Paints, ICICI Bank and Britannia. So FMCG names clearly are under pressure today. Mid and small cap outperformance coming in from the broader markets today. So Nifty mid cap is holding on to gains of 1.6%, as well as a small cap also managing to hold on to very strong gains in today's trading session. 2.26% gains for the Nifty small cap. All the sectors are today managing to hold on to green except for the Nifty FMCG. Let's pull that up because that's trading with cuts of almost 0.7%. And we saw in the Nifty side also those names coming in were from the FMCG side. So some bit of a pressure on that. Individual gainers that I want to say either on the back of news flows or some clarifications that have come in from companies. We've seen Nifty 500 gainers, Sirma SGS, NetWeb, Anantraj, Newgen Software as well as Keynes Technology, which is managing to hold on to very good gains. So yes, these are the stocks that we're watching out for in terms of trade. But among the Nifty gainers, we have Bajaj Auto that's holding on and among the top Nifty 50 gainers today. Now on the back of its earnings, Bajaj Auto is surging in trade and is among those gainers. These are the Q3 numbers that were reported. Let's go across to Sudarshan, who's here to tell us the fine print about this. Sudarshan?
So Bajaj Auto had reported earnings and those earnings look better than estimates, especially on margin front. Margin for Q3 came in above 20% and above 20% for 6th straight quarter. Some of the positive factors that worked for the company: first, demand for 125cc plus segment remains very strong. Second, favorable currency environment has helped the margin move higher, and company continues to maintain market share in ICE segment despite the expansion that it has been taking for EV. But some of the negative factors were: first, entry-level segment demand remains a concern. Nigeria continues to see a steady growth, but still per month sales remain at 35,000 units and still much below the historic peak that company used to see at one point of time. And in the EV segment, company had taken certain price cut, especially in the states like UP and Bihar. EBITDA had increased by 6%. Margin has come in at 20.2% versus 20.1%. Outlook going forward, commentary remains healthy. Company says in the exports, it sees growth of more than 20%. And domestic motorcycle segment, growth for 9-month FY25 was in the range of 6 to 8% versus industry's growth of 6% in H1 FY25. Now, company says going forward, that is for Q4 FY25, growth is likely to remain in the range of 6 to 8%. So earnings were beat, even commentary is healthy, and outlook also is positive.
Okay, Sudarshan, thank you so much for that. Let's move on. An ITC hotel lists on the bourses at a valuation which is in line with analyst expectations. Mangalam is joining in with us to give us more details on this front. Mangalam?
Well, the ITC hotel share today opened at anywhere between 170 to 190 rupees, which was roughly the broad range on what the analyst expectations in terms of fundamental valuation for the hotel's business was itself. Just to put things into perspective, the stock is currently at around 180 odd rupees, which puts it at a multiple of close to 26, 27 odd times. Yes, optically the stock seems lower than the implied value of 260 and 270 rupees on the day the ITC share went ex the hotel's business. But the underlying assumption there was that the difference between the opening of the ITC share ex hotels and the previous day's close, the entire value of that would be attributed to the hotel business itself. But that's not the case. At 180 rupees, the stock is trading at 27 times EV to EBITDA multiple of FY26 estimated by the analysts, and this is pretty much in line with the positioning of the ITC share as well in terms of a multiple right between Indian hotels and chalet hotels as well. Indian hotels, obviously being the sector leader, requires or is ascribed a higher multiple itself. The fundamentals of the business are strong, with a strong hospitality growth expected for the industry itself. The company is no debt, 1,500 crore of cash, etc. as well. But the passive funds is something that we'll keep an eye out on, passive flows, largely because the stock post-listing as per Edelweiss or Nuvama Quant is expected to be included in the MSCI small cap index, but also likely to see some flows outflows 3 days from now, largely because the company currently is a part of the Nifty 50 but will be excluded as per the norms, and that exclusion would result in outflows of $100 million T plus 3 days from now, and $65 million on account of Sensex exclusion as well. So that is keeping a bit of pressure on the stock, but in terms of valuations, absolutely in line with what the analysts were expecting.
Absolutely, Mangalam. Thank you so much for that. Let's move on. And our sources tell CNBC-TV18 that the government is not in favour of haircuts to banks, and following RINL may continue actually opting for revival strategy. This is going to be coming in specific select PSUs. Sapna is joining with us to give us more details on this front. Sapna?
Hi, yeah. So this is most likely, especially looking at what has happened, to RINL revival plan. There was a big infusion that has been cleared by the cabinet very recently. So keeping all of this in mind, it may be possible that select financially weak PSUs, the government may like to retain them as a going concern. Also, bank exposure to these PSUs is a bit of an issue, and government apparently is not clearly in favor of haircuts. From the PSU perspective, so we are given to understand that maybe select PSUs, a revival strategy will be worked on, and that, of course, the known options would be basically, fund infusion and maybe even merger and consolidation. And these are some of the known options, policy options. So at some point in time, at their discretion for select PSUs, which are kind of weak and have a large bank exposure, they may go down that route. Now, in terms of RINL particularly, I would just like to share that it's likely that one more tranche of fund infusion may happen in terms of addressing the bank debt. Now, there's a big package that has been cleared by the cabinet recently, so I think around 8,000 crores out of that is going towards the banks in terms of taking care of their loan repayments. Some more will remain, so I suppose that there could be a second tranche as well, a couple of months down the line. So that's one. Second, of course, the other ongoing issue is MTNL. So around 8,000 odd crores is worth the bank debt to the company, and again here the objective of the government would be to keep it as a going concern or do some kind of a merger with BSNL. Basically, the operations will be handled by BSNL, but the bank debt will be taken care of. I mean, this is the broad understanding. So what we are talking about indirectly is basically a kind of a revival strategy, wherein fund infusion is also one of the possible options. So down the line, it may just be possible that apart from these companies, we may be hearing some more in this space.
Okay, Sapna, thank you so much for giving us the latest update on this one. But let's move on. And sources tell CNBC Awaaz that a decision on increasing prices of ethanol may be taken in the cabinet meeting that is scheduled later today. Lakshman Roy is joining in with us to give us details on this one. Lakshman, take it away.
जो मुझे सोर्सेज से जानकारी मिली है उसके मुताबिक कैबिनेट की मीटिंग खत्म हो गई है और कैबिनेट ने एथनॉल सप्लाई सीजन 2024-25 के लिए एथनॉल की प्राइसेस को अप्रूवल दे दिया है। अब इनिशियल जो प्रपोजल था वो था बी हैवी मोलासेस में ₹1.82, केन जूस में ₹1.31 पर लीटर बढ़ोतरी का इंक्रीज करने का, और जो सी हैवी मोलासेस हैं उसमें 6.87 रुपये पर लीटर का जो इंसेंटिव था इसको रेगुलराइज करने का। तो ये इनिशियल प्रपोजल था। हालांकि सोर्सेज कह रहे हैं कि इनिशियल प्रपोजल में शायद कुछ चेंजेस किए गए हैं। अब चेंजेस करके किस तरह के इंक्रीमेंट किए गए हैं वो 3 बजे जब ऑफिशियल प्रेस कॉन्फ्रेंस होगी तब पता चलेगा, लेकिन ये सोर्स कंफर्म कर रहे हैं कि एथनॉल की प्राइसेस को कैबिनेट ने अप्रूवल दे दिया है।
Okay, Lakshman, thank you so much for the latest update coming in there. But on that note, we're going to actually slip into a very short break, and when we return, we'll get you updates that are coming in from Mahakumbh, and specifically in terms of the stampede that took place there earlier today. So stay tuned for those updates.
Is the other overweight that we have in the portfolio. We've been quite worried on mid caps for a few months. Maybe we were a little early, but I think if you look at relative valuations on mid caps and the fact that there is some uncertainty around near-term economic growth in terms of, maybe that we are experiencing a slowdown. And with those sky-high valuations, typically they would be far more vulnerable. On a relative basis, we clearly have a preference towards large cap over mid caps and small caps. So large caps is clearly our preferred area. In fact, I would say our preferred area is mega caps. If you were to look at our India focused portfolio, we are quite overweight mega caps. I mean, a lot of stocks which are over $40 billion market cap over there. So that's the part in terms of preference within the capitalization. However, on markets in general, we've reached a very interesting point where fundamentally we were seeing that this overvalued period would cause a correction. That corrections happened. We kind of were worried about it right at the start of October, and that's kind of played over the last 4 months. We are down even on Nifty 12-13% or so. Yes. Now, interestingly, our proprietary gauge called the sentiment gauge, which tries to quantify sentiment, called the India Bull Bear Index, has recently hit extreme bearish sentiment. In fact, this is the sometime one of the days last week when we saw it, and maybe it will be there somewhere this week as well. Sentiment as measured by this gauge was the weakest since the COVID lows. Okay, so that is a very interesting point. Typically, it has a good track record in kind of whenever sentiment goes to an extreme, to say that now we could have a contra move. This could be a contra move up. The bit that is more dicey is whether this will be whether this is the end of the correction or whether this is just a rally and a recovery where sentiment normalizes, we have another leg down. But for now, I would want to, for the ones who are kind of short on the market, this is something where one needs to kind of bear in mind that sentiment has gone to a pretty extreme level as per our proprietary benchmark, which has traditionally been very good in predicting the extreme points in the market.
Welcome back and thanks for staying tuned into Business Lunch on CNBC-TV18. Now, in some tragic news that's coming in and coming from Mahakumbh, a stampede during early hours on Wednesday has led to multiple casualties. The official estimate is not yet known. The stampede took place as thousands of devotees were rushing towards the Sangam, that is the confluence of Ganga, Yamuna as well as Saraswati, on the occasion of Mauni Amavasya, which is today. Uttar Pradesh Chief Minister Yogi Adityanath spoke to the media after the unfortunate incident. Let's listen into what he had to say.
पूरा प्रशासन मौके पे वहाँ मौजूद है। रात्रि को 1 से 2 बजे के बीच में अखाड़ा मार्ग पर, जहाँ पे अखाड़ों के अमृत स्नान के दृश्य से बैरिकेड्स भी किए गए थे, तो बैरिकेड्स को फांद करके आने में कुछ श्रद्धालु गंभीर रूप से घायल हुए हैं। उन्हें तत्काल हॉस्पिटल में पहुंचा करके उपचार आदि की व्यवस्था उनके लिए की गई है। उनमें से कुछ श्रद्धालु गंभीर रूप से घायल हैं।
Meanwhile, Prime Minister Narendra Modi has also posted on X about the incident. He gave his condolences to the death and prayed for the recovery of those injured. He wrote that all necessary help is being provided by the local administrations, adding that he is in constant touch with the UP CM. And moving on, Reliance Industries chairman Mukesh Ambani has said that no power can stop India's growth trajectory. Ambani was addressing students at the convocation ceremony of Pandit Deen Dayal Energy University. He is the president of the university and the chairman of the board of governors. Ambani also reminded the major economics that they had a responsibility to ensure the economic growth did not worsen the climate crisis. That's not all. He also shared 5 life principles for the students to excel in their lives. Listen in.
Within a couple of years, India will emerge as the 3rd largest economy in the world. No power on earth can stop India's growth trajectory. I can clearly foresee that India will become the most prosperous nation in the world before the end of this century. But India, with other large economies, also has a big responsibility. We must not allow economic growth endanger planet Earth and further worsen the climate crisis. Therefore, the transition from fossil fuels to clean and green energy has to be accelerated. All of you are benefiting from what Narendra Bhai thought in the early 2000s. And when he called me and said in 2005 that we have to build one of the finest institutions in Gujarat, right? And that is what we have achieved from 2007 onwards. So we will always be grateful to our Prime Minister. Long before he became Prime Minister, he foresaw that India needed Atmanirbharta in energy. Over 20 years ago, he told me he wanted Gujarat to lead the nation in energy and energy products. He also told me that Gujarat should take the lead in cultivating world-class human resources needed to achieve India's clean energy ambition. As you chart your path forward, allow me to suggest 5 guiding principles that have helped me. 1, discover your true passion. Find what ignites your soul. When you dedicate your energy to something you love, work becomes joy and challenge becomes opportunities for growth. 2, commit to lifelong learning. In this age of rapid technological advancement, the willingness to learn continuously is not an option. 3, inculcate the virtue of sharing. Know that knowledge grows when it is shared. By helping others rise, you elevate yourself and build a community of mutual growth and progress. 4, invest in meaningful relationships. Genuine connections, what I call dil ke rishte, are the foundation of both personal and professional success. And 5, cherish and nurture your family bonds.
Okay, on that note, we are going to slip into a very short break. But as we slip into the break, here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips today. Now, download CNBC-TV18 app from Apple Store or your Google Play Store, or just scan the QR code that is on your screen.
esteemed guests and friends, above all today, we express our deepest gratitude to our visionary Prime Minister, Shri Narendra Bhai Modi ji. Pandit Deen Dayal Energy University owes its very birth to his extraordinary vision. All of you are benefiting from what Narendra Bhai thought in the early 2000s. And when he called me and said in 2005 that we have to build one of the finest institutions in Gujarat, right? And that is what we have achieved from 2007 onwards. So we will always be grateful to our Prime Minister. Long before he became Prime Minister, he foresaw that India needed Atmanirbharta in energy. Over 20 years ago, he told me he wanted Gujarat to lead the nation in energy and energy products. He also told me that Gujarat should take the lead in cultivating world-class human resources needed to achieve India's clean energy ambition. That is how he helped establish this pioneering university. Friends, there are many things that we learn from our beloved Prime Minister. Let me mention just
Welcome back and thanks for staying tuned into CNBC-TV18. You're watching Business Lunch. A quick look at Ambuja Cements. They just reported the numbers a short while ago. Net profits are coming in at 1,758 crores. We have revenue which has seen a growth of around 13.6%. EBITDA seeing a growth of 29%. Keep an eye out on that. Volume growth is coming at 17% YOY basis, as well as in terms of EBITDA per ton on a standalone basis. What I saw before has seen a reduction of 43% YOY. So let's keep an eye out on that in terms of numbers. As of now, it saw a bit of a fall and now it's trying to come back to the green side. Ambuja Cement is down 1.56%. Gujarat Fluoro, the company that has reported the numbers, you're seeing it flashing on your screen right now. 15% uptake in terms of the revenue of the company. Stock is holding on to gains of around 2-3% as of now. EBITDA also, operationally also, we're seeing a good up move coming in for the stock. Stock trading at the day's highest point. Let's move on, and the Fed is going to be meeting for the first time in the second presidential term of Donald Trump, who has already signaled that he wants lower interest rates. But what is the market actually pricing in? Here is Steve Leisman with the findings of CNBC's Federal Reserve Survey.
Higher inflation, but also more growth. That's the assessment of our respondents to the CNBC Fed survey when we asked about the effects of President Trump's expected suite of all the policies. Well, 64% are saying that they believe the Trump administration's policies will likely be either somewhat or extremely inflationary, most of them in the somewhat category. How about for growth? Somewhat or very positive for growth, 60%. Again, most of them in the somewhat. A bunch, though, think it could be possibly negative for growth. Then look at individual policies. Let's look at tax policy. You can see very divided here, being something that's worse for inflation. Some say it's better for inflation. Deregulation, though, that's seen as something, this is something the administration has talked about as better for inflation. Not so immigration and tariff policy, where they're pretty definitive that those are worse for inflationary outcomes. How about for growth? Let's take a look at the individual policies. What you see is tax policy and deregulation both seen as better for growth. Again, not so sure on immigration and tariff policy, seen as worse outcomes for economic growth. Guy Labas of Janney Montgomery Scott writes in, reasonable economists can disagree just how inflationary tariffs or reductions in immigration might be, but they are inflationary. Richard Sichel of the Philadelphia Trust Company, he emphasizes that optimism and risk-taking have increased. Lower taxes and less redundant regulations, along with the ongoing success of technology innovation, promote more efficiency and profits. Overall, the Fed expected to cut twice this year. The respondents have less confidence in those cuts now. But because of the uncertainty, the Fed is not expected to act much before June, the first time, and then again between September and the end of the year for possibly a second cut.
Moving on, in some national news updates coming in, the Mumbai's airport Terminal 1 will be demolished and redeveloped to increase the passenger handling capacity. The work will commence in a phased manner from November. The work for the new Terminal 1 is scheduled for completion in 2028-2029. During the construction, Terminal 2 and Navi Mumbai International Airport will shoulder the additional traffic. Okay, let's bring you now some updates in historic news that we have. India's space agency ISRO successfully launched its GSLV F-15 rocket carrying a navigation satellite from Sriharikota this morning. This was ISRO's 100th mission. It was also the first for the new chairman V. Narayanan. The latest mission will help in navigation, agriculture, fleet management and smoothen internet-based applications. And on that note, we are absolutely out of time on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. But as we are winding down this edition, we leave you with some visuals with ice-capped Niagara Falls. Videos captured by visitors show thick ice and snow surrounding the iconic landmark.
Here for all of us. One, Modi ji never lets a good idea go to waste. His Man Ki Baat inevitably becomes his Man Ka Sankalp. His Sankalp is always Vajra Sankalp. His determination is as hard as a diamond. He does not rest with simply making a Sankalp. He knows how to turn his sankalp into success. In the last 10 years, the world has seen how he especially chooses impossible-looking tasks and transforms them into reality. This, for all of us, is lesson number one. Lesson number two is about his boundless energy. Narendra Bhai Modi's name stands for Anant Shakti, infinite energy. Since PDEU is an energy-focused university, all of us should learn to be as energetic as our Prime Minister. People often ask the question, where does Modi ji take rest? Or does he rest at all? I can tell you that I know the answer to this question. The answer lies in what Pandit Deen Dayal Upadhyay ji has said, who is the founder and whose name this university bears, has said about rest or Vishranti. He has said, Kaam mein badlav hi Vishranti hai. Change of work is itself rest. And I think this is our Prime Minister's motto. This should be our motto, dear students, also. Therefore, when we think about these two lessons, how to turn ideas into action and how to work tirelessly, we cannot escape the conclusion that Narendra Modi ji is not only India's Pradhan Mantri, but for us and this university, he is our Gurudev, our respected teacher, and we will follow his learnings. We must aim higher. Within a couple of years, India will emerge as the third largest economy in the world. No power on earth can stop India's growth trajectory. I can clearly foresee that India will become the most prosperous nation in the world before the end of this century. But India, with other large economies, also has a big responsibility. We must not allow economic growth endanger planet Earth and further worsen the climate crisis. Therefore, the transition from fossil fuels to clean and green energy
The index at the day's high, a sharp rebound in the mid and the small cap indices and a slew of earnings coming in. It's a great time to begin mid-cap radar on CNBC TV18. I'm Hormaz Fatakia. With me as always is Vivek Iyer. Vivek, good afternoon. It's some relief to see green, particularly in the broader markets, but we are counting down to some very, very major events.
Absolutely right, Hormaz. Good afternoon, and what a great session it's been, especially as far as the broader end of the markets are concerned. Whole host of results are hitting the screen, and there are very sharp, at least in the last half hour, very positive reactions to the earnings names like KPIT Tech and Indian Bank, as you can see at the bottom of your screen. But we have quite a lot lined up on the show for you. Let's start off with the top headlines. Stocks climb, led by mid-caps following a recovery in US equities overnight. Industrials and IT are the big gainers, while FMCG drags.
Acme Solar gains after reporting its third quarter numbers. Revenues gained over 5%. EBITDA also surged on a year-on-year basis. The management told CNBC TV18 that they will add 450 megawatt capacity in the next 2 quarters.
SBI Cards sees short covering after a weak set of numbers in Q3. Credit cost at 9.4% is at a 14-quarter high. Net interest margin is at the lowest level in 19 quarters.
AGI Greenpack is under pressure today after the Supreme Court rejected the company's resolution plan for Hindustan Natural Glass. The stock is down 17%.
KPIT Tech surges on the back of its Q3 earnings. Net profit up nearly 21%, while revenue surges 18%. The company raises its FY25 margin guidance to 21% plus.
At the highest point of the day is the index now 23,160 is where we currently stand. We're counting down to the monthly expiry tomorrow, but the numbers of Indian Bank were just flashing on your screen just a few minutes ago, and the stock has now surged to the highest point of the day after its results. There was some improvement seen in its asset quality on a sequential basis as well, so that too has contributed to the result reaction there seen in Indian Bank, now 5% higher on the stock after its results. A positive earnings reaction also seen in KPIT Tech. That stock too had surged almost 7.5% after the results announcement, the management raising its guidance there. But the key takeaway now, the stock is now 10% higher. KPIT Tech. There's some very sharp moves seen in the stock.
The upper circuit freeze,
almost, yes, it's an upper circuit for KPIT Tech. So a very positive reaction coming in from the street after the management raised its guidance. But there is a whole host of other movers in the broader markets as well, and Vamakshi is joining in to take us through that. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. The mid-cap index is doing quite well. There are more stocks that are advancing than declining in trade today. Let me first start off with the stocks that are up and away in trade today. Inox Wind is seeing the biggest intraday advance since August. In fact, Credit Access Grameen also features on this list. That stock is higher by almost 11%. Netweb is another counter that we're focusing on. Keep in mind that over the last couple of sessions, this stock was under a fair bit of pressure, and today it's seeing a good recovery. In fact, this is the biggest intraday advance since its IPO. Apart from that, Linde India is another counter that is seeing very strong gains of almost 12%. In fact, this is the biggest intraday advance since August 2021 for Linde India. Apart from that, several stocks reacting to the numbers. Ixigo is up nearly 12.5%. Syrma SGS Tech is now locked in that upper circuit of 20%. Suzlon Energy too locked in upper circuit of 5% since morning. JM Financials reacting negatively to its numbers. That stock is down nearly 4.5%. When you look at some of the top losers this time around, very few names, but it's important to point them out as well. Jupiter Wagons is down nearly 5%. Apar Industries, keep in mind, yesterday was down on a weak set of numbers, and today the stock is seeing further pressure, down nearly 2%. Intellect Design Arena is another counter that is down and out in trade today. Lastly, let's also focus in on some stocks that are moving, accompanied with very strong volumes as well. That list features Schneider Electric. NMDC Steel is another counter that is up 9.72%, close to the highest point of the day. Anantraj again had been seeing a tremendous pressure, in fact had lost 40% since its recent peak and is up nearly 9% today. Keynes Tech is another counter that is up nearly 7.5%.
Thank you so much, Vamakshi, for joining us and giving us a list of stocks, especially in the broader end of the markets, that are buzzing in the session. Well, if you could just pull up a few charts as far as mid-cap IT stocks are concerned. After the results of KPIT Tech, remember they upgraded the margin guidance. That stock is now up almost 9.5%. Along with that, names like Mphasis, Cyient, these are the stocks that are recovering in tandem with the results that have just come from KPIT Tech. But it's time now for a short break. Management of eMudra joins us next to discuss their Q3 earnings and more.
accelerated. I am supremely confident that green technologies and green enterprises can reverse the ecological degradation and indeed make our planet more beautiful, more livable for future generations. Our Prime Minister wants India to become the greenest nation in the world. For this purpose, India is also transforming itself into a deep tech nation with advanced manufacturing capabilities. This is the context in which PDEU should see its future role and responsibility. My dear PDEU family, therefore, here are my 3 expectations from all of you in the PDEU family. My first expectation, PDEU should further improve the quality of research and make it application-driven. We should specially focus on newer areas like bioenergy, which have the potential to help our farmers and boost employment opportunities. My second expectation, we should simultaneously increase our internal strengths and also forge national and global collaborations so as to enhance our leading position in research and academics. My third expectation, the intersection of green energy, green materials, and artificial intelligence is going to shape the future of humanity. I would like PDEU to gain a leading position in this synergy. Talking of artificial intelligence, I have a piece of advice to our young students. You must be good at using AI as a tool of learning, but do not give up your own critical thinking. ChatGPT का जरूर से इस्तेमाल करो, लेकिन याद रखो, आर्टिफिशियल बुद्धि से नहीं, खुद की बुद्धि से हम आगे बढ़ेंगे और आप आगे बढ़ सकते हैं.
Welcome back to Midcap Radar. We have the management of eMudra. It's the first management on the show. The stock is under some pressure today. Company reported a weak set. To discuss this and more, we have Venkatraman Srinivasan, Executive Chairman at eMudra with us. Thank you so much, sir, for joining us. Just hold on, sir. We apologize. We have the results of Maruti that are just flashing at the bottom of your screen. It's a net profit of 3,525 crore, which favors or comparably favors when you're comparing it to our poll, which was slightly lower at 3,474 crore. The stock now near the day's highest point at 12,231. Revenues, when you're looking at it, once again, over 38,490 crore versus a poll largely in line. In fact, a slight miss, if you could call it that, a 300 crore miss as far as the top line is concerned. We are waiting for the EBITDA and the margin numbers. Remember, we do have the volume figures as far as Maruti is concerned, and earlier at the end of H1, Maruti had guided the moderation as far as PV segment was concerned, especially for the second half of the rest of the year. But the numbers compared to the poll compare quite favorably. In fact, how much you want to say?
The EBITDA figure as well, right? 4,470 crores. That too is in line with expectations. There is nothing that is beyond what the street was anticipating for Maruti. Well, the revenue figure is a marginal miss on expectations, if you could call it that. The net profit is in line with expectations, as is the EBITDA figure, the average selling price, and some other factors. The investor presentation is what will be keen to watch out for. The volumes for Maruti were up 13% on a year-on-year basis. They increased by 5% sequentially as well. So we'll watch out for some of the other numbers, and the margin figure there at 11.6% compared to the CNBC-TV18 poll of 11.4%. So absolutely in line with expectations.
Well, we have Prakash Diwan joining us on the phone line to discuss Maruti's numbers. Welcome, Prakash. Thank you so much for joining us. What's your first take as far as Maruti is concerned? We knew the volume numbers, but there were worries as far as the realization was concerned, right?
So, this has been a tough quarter for most players, and especially after, the onslaught of electric vehicles. Maruti was struggling or was expected to be finding it difficult to grow realizations. But I think these numbers are definitely very comforting. And in spite of all the in terms of wholesale numbers growing and all, this will set expectations right, and it's just another normal quarter of growth and not a hyper growth that was being penciled in from the wholesale numbers. So this sets the tone for them to probably close the year by March with decent numbers. But there's nothing very spectacular about the earnings, but at the same time, there's nothing disastrous about the earnings as well.
Nothing spectacular, and that's showing in the stock as well, right? It's cooled off from the highs of the day. Now it's slipped into the red now has Maruti. But Prakash, good afternoon. What would you like to hear from the management when they address the media after these numbers that have come in on the road ahead, their electric vehicle plans? Because there is competition that has been launching electric vehicles left, right and center. What would you like to hear the management?
Oh, absolutely, Ormus. So while they are late in the day to come in the EV segment, and the likes of Mahindra and Tata have really marched ahead with very tried and tested products. And remember, the rollout of electric vehicles is anyway still some time away. It's June when you'll see them on the road, and things will start perking up. I want to hear from the management in terms of what is their focus on product launches in the IC category also, because they've not had any new launches after the Fronx, and that's done well for them. Are they deepening that portfolio? Are they getting into more variants on the SUV side? So that is something where utilization levels of such a big capex that they've done will also start kind of getting some visibility, and that is what the market would like to see, so that return ratios start improving now that the investments have all been done, and how quickly things start looking up in terms of utilization. So I would want to hear that, and that also means that realization trends will probably be better and favorable. So that's what we would like to hear from the company.
Right. Interesting.
Well, we also have Naveen Kulkarni, Chief Investment Officer at Axis Securities, joining us on the phone line to discuss Maruti's numbers. Naveen, I hope you've had a chance to look at the numbers. Well, the margin numbers too are out. How are you looking at the numbers? Are you satisfied with the margin profile? And what would you want to hear from the management later on?
Yeah, so looking at the margin performance, we were expecting margin to be a little lower than what Maruti has reported. So that's a positive surprise for us, clearly. So 11.6% margin compared to our expectation of 11.3%. So the margin number is definitely better. Also, the PAT growth is better than our expectations. So overall, I would say that considering typically in auto sector, the auto numbers are out before the results, right? So revenue numbers are generally in the expected zone. The focus typically during the results tends to be on margins. And considering that we were expecting higher discounting, higher advertising expenses, all those factors put together, Maruti still has managed to report a good set of numbers, which is beat on our expectations. So I would say that these are good set of numbers for Maruti.
Yeah, good numbers, Naveen, but would the street be happy with just good, considering the situation that has been going around? More importantly, the stock has run up as well, right? It's up around 13-14% in the last 1 month. Does that do anything, or do these numbers do anything to tweak your estimates on the stock?
So I will have to listen to the conference call and figure out what could be the upgrades or in terms of the earnings. But see, overall, if I were to look at Maruti from a little longer term perspective, Maruti compared to many of the other auto stocks has not been a top performer. It has done well in the recent couple of months, but that also is to do with valuations being quite reasonable, numbers being good monthly, right? So there's a lot of operating metrics which are supporting the run up in the stock price, right? So I would say that going ahead, of course, the focus will be on new product launches and maybe even electric vehicles segment, what they will do in that, right? So those will be the areas of focus. But I would say that as long as the monthly numbers continue to remain at decent levels, I think Maruti should continue to perform from current levels.
That's right. Thank you so much, Naveen. Thank you so much, Prakash, for joining us and giving us your first take as far as Maruti numbers are concerned. Maruti has cooled off and now trading near the flat line. But going back to the management of eMudra, remember the stock is under pressure today. We have Venkatraman Srinivasan, Executive Chairman at eMudra with us. First of all, so apologies for making you wait. We just had the numbers of Maruti that flashed on your screen and we had to address that. We understand that there was a one-off impact on your margins in this particular quarter. What led to that particular impact as far as EBITDA margins was concerned? And Q4 and FY26 onwards, do you expect that to revive?
Yeah, there are 2-3 aspects which are there. One is because from July 2024, the Controller of Certifying Authority has passed a new model of sale. Before that new model came, we were selling the stock and a lot of stocks were in the market. So gradually those stocks has to be absorbed back because now they have prohibited the stock sale. So that almost affects almost to 3 crore per quarter. This is one thing. And the other thing is the stock option. Though we have a stock option trust and all the shares, whatever stock option we are giving that were transferred to the trust, whenever we give, we have to make a provision for that. Also, it is just debited to profit and loss account and credited to reserves kind of thing. So all these, then we did one acquisition. So in that, some portion of the consideration got deferred. So that deferred consideration also, they calculate interest. The consideration itself deferred, but as per Ind AS, that some portion has to be attributed to interest on the deferment. So all these kind of things almost impact some 5 crore in a quarter. So this is one thing. Then the second thing is generally this Q3, Q2 is a seasonal quarter. So where the digital signature sales are very high, Q3 is a non-seasonal quarter where the digital signature sales go up. So these are the things which has impacted the current quarter. But still, if you see, the growth has been there compared to the last year Q3. And out of that, the organic growth itself is 25%, balance 15% inorganic growth. So that way the growth has been there. The EBITDA margin again, if all these things are taken care of, it will be nearer to not EBITDA margin, net profit margin, maybe around 18 to 19%.
By when do you expect? Right. Mr. Srinivasan, by when do you expect this to normalize, sir? These ESOP costs, the provisions that you are making for them, and the interest as well with regards to the acquisition that you have made. When does all of this normalize for the company to return to the normal growth trajectory?
It will take another 2 to 3 quarters. So mostly by September, it will normalize.
Okay. So,
yeah.
Mr. Srinivasan,
gradually it may reduce, but will completely go off in September.
Okay. Mr. Srinivasan, first off, correct us if we are wrong. At the start of Q1 or at the end of Q1 rather, you had given a revenue growth guidance of 25 to 30% for FY25, EBITDA margin guidance of 30%, which we believe may be a couple of quarters away, and net profit margin guidance in the range of 18 to 19%. So what is the revised guidance for all 3 of these key metrics at the end of Q3?
No, the 25% revenue growth, more than that will be achieved. Because if you see, last year we were 375 crore. With 25%, we should have gone to 470 or something. Today, we may achieve around 510 to 520. So that is where we can go. Similarly, the net profit margin, again, when we gave this 18% was on the old model of sales where net sales we were making. Now what is happening, we have to make a gross sale on digital signature and pay commission. So that also a little bit improves the turnover. And again, one more aspect came this year is the income taxation in Dubai. With that, we have already told instead of 20%, we will come to a net profit margin of 18%. So if you remove this one-off cost, we will still be at 18%. With all this one-off cost, we will be at 16 to 16.5%.
One final question from my end, Mr. Srinivasan. What is the India to international revenue mix for the quarter? And there has been a lot of emphasis on the North American market as well. If you could share numbers on the mix and where do you see that going forward? And if there are any more acquisitions that you have in the pipeline?
International is gradually growing more and more compared to India. So India market this year, because the DSC sales is also lower by 5 crore. The total India market sale was around 42 crore or something like that. The balance 94 crore came from the international market. And the international market, our penetration is increasing because, for example, we have gone deeper and deeper into Philippines and Malaysia, then South America also we are going more deeper. Then Europe also we want to go. So India market maybe at best 10% growth or 5% growth year on year can happen, but international market can go in a bigger way.
Thank you so much, Mr. Srinivasan. We understand that you're likely to exceed the guidance for the top line as far as FY25 is concerned. Wish you the best for Q4 as well as FY26. Well, the next management on the channel is MapMyIndia or CE Info Systems. It reported its Q3 numbers. We are joined by Rakesh Verma, Chairman and Managing Director and Co-founder of MapMyIndia. Thank you so much, Mr. Verma, for joining us. First up, Q3 growth, especially as far as the top line is concerned, is much stronger compared to the 9-month run rate. What led to the strong growth if in Q3, almost 25% versus the 9-month growth of close to 17%?
Well, thank you for having me on the show, on your show. The Q3 growth has been fueled by the what we call consumer and digital transformation and the enterprise part of the business. We have C&E and we have A&M. In the C&E, we have seen a 37% growth, and that was made up of a couple of reasons. One definitely was signing up with a global giant where we earned a good chunk of revenue in the social media. So altogether, the Q3 results were good in the sense that we could achieve a 25% growth. Now, the 9 months growth of 17%, we are hoping that, not hoping, we are pretty much confident that we will have a 25% growth of the whole year when the year ends in March.
Mr. Verma, so based on what you're saying, you're expecting to end the year with 25% growth, if I heard that correctly. So yes. Do we anticipate a better quarter, if a similar quarter in Q4, if not better, as Q3 was?
Better, I guess.
Better. All right. I'd get to the margin bit as well, Mr. Verma, because your margins were impacted during the quarter on a year-on-year basis as well, particularly with regards to the overall business. You had margins of around 36.5%, if I read that correctly. Where do you see that number by the end of the year?
We see it not worse than that, maybe a little better.
Okay, Mr. Verma, a couple of questions. You have two segments of your business, if we could broadly classify it like that. The map-led business, close to 75 to 76% of the total top line, actually saw 33% year-on-year growth. So in this particular quarter, did you see the full impact of the Hyundai-Kia partnership that you have? So is this the new run rate as far as that particular segment of the business is concerned? FY26, especially for that particular segment, what will be the growth rate? And for the other part of your business, especially as far as the IoT business, we understand that it's a lumpy business, but this particular quarter has been quite subdued. Q4, can that bounce back?
Okay, let me first address the IoT thing. In the Q3, we didn't have that good growth, no doubt about it, because two major businesses that we were hoping to get and convert it into revenue has gotten postponed by few quarters. Not that they're gone. So we will get the benefit of those in the next financial year. Coming to the map-led business, yes, our growth is happening, and map-led business is the high margin business in any case. So we are definitely focused on the map-led business, while IoT business, we are investing to add to the overall growth of the company.
A quick final question, Mr. Verma. You know, there was a lot of chatter last year when you had announced that decision to invest 10% stake in the B2C venture floated by Rohan Verma, and then you had reversed that decision. But Rohan Verma is going to be stepping down as the CEO, right? Is there a succession plan in place? If you could share some more clarity on that. And does this decision now to not invest in that B2C venture stand for good?
Well, let me answer the last part first. The B2C business at this point of time, we certainly believe that since there is a large market in the B2B and B2B2C, there is no need to move into the B2C business. But let's not confuse a Mappls app with B2C business. We consider, and we have considered very clearly, that Mappls app is an integral part of our B2B business. It doesn't give us revenue directly, but indirectly it supports our B2B business. Coming to the succession is a very complex issue. It's nice to have a succession from within the family to lead a company, although the family owns only 52%, remember that. But as far as the way we structured it 3 years back itself since IPO, that our entire business leadership is in the hands of four capable and qualified business leaders. And they are running the business with the guidance from whoever it is, whether it's me or Rohan Verma. So selecting a single CEO other than Rohan Verma will be a different challenge, which we'll see over the next 3 years.
So by when do we see a new CEO, sir? Very quickly, if you could answer that.
At this point of time, for over the next few years, we don't need a CEO as long as the business leaders exist. They are there, and I'm also available.
Thank you so much, Mr. Verma, for joining us, talking to us about the prospects of the company as well as the succession as well as the leadership issue. Well, it was an action-packed show on Midcap Radar. We'll take your leave now. Your stocks when we return.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
Hello, welcome. You're watching Your Stocks on CNBC TV18 and I'm Vinny Motiwala in the Mumbai studio. Nifty as of now is trading at the day's highest point. 23,160, 170 levels is where the Nifty is at. Even the Sensex 2 is managing to hold on to good gains of 0.9% and broader markets clear out performances coming in from the Nifty mid as well as the small cap, both holding on to gains of almost 2%. For the Nifty mid cap, small cap holding on to gains of more than 2%. So yes, that's how the market shape up is looking like. But this is a show where we solve all your stock related queries, and to solve all those queries today we have our experts joining with us. Somal Mehta, the head of alternative research at Capital Market Strategy, Mirai Asset Share Khan, as well as Astha Jain, research analyst at Hem Security, joining in with us. Good afternoon, Somal, as well as Astha, and thank you so much as always for joining in with us on the show. Let's get started with the first query for today. We have Madhusudan S, who's writing to us from Chennai. She's holding 150 shares of Tata Power. This is at a price of 415 rupees per share. Wants to know the long-term outlook of the stock. Astha, what should the viewer be doing with Tata Power? Long-term story, what is it looking like?
Hi, good afternoon to everyone out there. So talking about this counter, I think long-term is looking okay right now. So we are recommending a hold on this counter with the initial price target of somewhere around 385 to 400. Now talking about the fundamentals of this counter, first of all, I always look after the management guidance. And now management is more focusing on RE, that is renewable energy. So I think if they are having such a good focus, then definitely it will help in improving their financial performance because they themselves are targeting 2.5 times of PAT, which they are showing in FY24 to be there in by FY30. So this type of guidance is given by the management. So I think this is a good long-term story to bet upon. Maybe buying on dips can also work, but not right now. Let some fall come more, maybe at around 330 odd levels. But those who are having this stock in their portfolio, they can continue with it with the initial price target of 385 to 400.
Okay. Somal, good afternoon, and what's your word coming in on Tata Power? Last 6 months, we've seen a decline of almost 21%. So Tata Power's your view?
I totally agree with Asa that some more pain still left in the short term. Long term definitely looks good, but in the very short term, I think the next levels to watch out would be around 334 and 319. That's what the levels I'm looking for in the very short term. However, the resistance would be around 357 and 367. So basically, it's making lower tops, lower bottom formation on the higher degree time frame. It is still on the sell side, so still more pain left in the very short term.
Okay, let's move on to the next query for today. And the next query is on Bharat Electronics, where Ramesh Babu is writing to us from Bangalore, who is holding 230 shares of Bharat Electronics at a price of 250 rupees per share, making some bit of a profit on this one. Wants to know whether he should continue to hold this or look to sell at the current levels. Somal, up to you on the charts and technicals, BEL, what is that one looking like? Because obviously we've seen a very sharp run up in this stock as well in the last year or so. Does it merit continue holding the stock, and do you expect a further upside?
I think long-term story definitely is great, and it has been trading in a very broad range. The range would be around 250, and on the higher side would be around 200 and 315. So it's a very broad range, and we are at a very end of the, it is trading at the very lower end of the broad range. So I think from here, holding on to this stock is great. And the resistance on the upside would be around 270 and 275. If it goes above 275, I think the next rally on the upside starts.
Okay, surely keeping an eye out on Bharat Electronics and the levels over there. Asta, what is your view coming in for Bharat Electronics? They're going to be reporting their numbers tomorrow as well. But on the fundamentals, BEL, is it looking interesting and should the viewer continue to hold this?
Yes, the interesting, candidate, the way we have seen a fall has come in this counter. So, but we really would like to see the results, because right now what we are seeing that results are really deciding the future of any stock price momentum. But talking about the fundamentals of this counter seems to be looking good at this point of a time, because what we are seeing that they have a very robust order book of around 74,000 crore. And now this order book of 74,000 crore, it becomes so important because it is 4 times, almost 3.7 times of their FY24 revenues. So a good revenue visibility. And in fact, management is also targeting 15% CAGR growth over coming few years. So yes, we will really like to see the results, but I think one can remain invested in this counter with an initial price target of 295.
Okay. The next query we have is on NTPC Green. Now, Nitin Arora is writing to us from New Delhi. He's holding NTPC Green Energy at a price, 200 shares, price is 110 rupees per share. Currently, the stock is trading at 114 rupees long term. What's the story looking like for this one, and should he continue to hold this or look to sell? Asta, your view on NTPC Green?
Yes, long term is looking good to us. We all know that kind of project this company is having. Definitely, the future outlook is very promising for this counter. Right now, also it is trading, at a 4% upside momentum. So we are positive on this counter, recommending a hold with an initial price target of around 130.
Okay, Somil, I know there are not enough charts and technicals to factor in any points, but any view that you have on NTPC Green?
In the very short term, if I see on the hourly charts, because I don't have much data on the daily and the weekly, on the hourly charts, there's a small head and shoulder pattern formed, and it's trading about 20 and 40 hourly moving average. So I think the next level on the upside, my bias is positive on the stock, and I think it should target around 120, 123 levels.
Okay, surely keeping an eye out on that. NTPC Green, keep an eye out on those levels over there. But on that note, we're going to step into a very short break. And on the other side, our special segment, The Growth Code, an initiative by Grow and CNBC-TV18, we'll address viewer questions on how to navigate market and make informed trading decisions. So stay tuned for that.
Stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. from chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
In general, for the portfolio, which is a large India-focused portfolio, it has only 10 to 15 large and liquid stocks. I mean, nothing which trades less than $10-15 million will ever be part of the portfolio. It's a very large and liquid portfolio. We went into an out of consensus overweight on staples right at the start of this month, and an out of consensus underweight, a big underweight on industrials again. So those were the two big calls that we took. Other than that, IT and healthcare are our other underweights. While banks is a small overweight, commodities is the other overweight that we have.
Welcome back. It's time now to focus on the Growth Code, a special initiative by Grow and CNBC TV18. Whether you are a new trading or investor or a professional seasoned trader, our goal is to provide you with actionable insights and strategies to navigate the market and make informed trading decisions. Still have with us our experts for today, Saumil Mehta as well as Astha Jain, to answer all those queries. Let's move on and get started with the first query for this segment. We have Nikita Iyer, who's writing to us from Kerala. She has, and she's saying that she tends to overtrade, especially during the expiry weeks, chasing, coming in for the profits there, and that is why the overtrading that comes in. She's asking how she can avoid actually falling into this trap. Saumil, let me take this query to you first.
I think emotions are the only reason for overtrading. There's no other reason. Greed and fear makes you overtrade. It does not matter whether it is an expiry week or normal time. So to avoid this, stick to a trading plan. You need to have a entry and exit rule and your risk management rules. So stick to your plan and focus on entry and exit rules.
Absolutely. Stick to those entry and exit rules. That's the advice coming in from Saumil. Astha, what would your advice be for the viewer?
Yes, I agree with Saumil that sometimes fear of missing out is the major, emotion that always play. And especially in the expiry week, please don't go with that emotion. So set your maximum number of trades limit. First of all, how many number of trades you want to do. Secondly, just set your stop losses, targets. I think that will really help you. And thirdly, I think you can trade in the high probability counters. Now, what here high probability means, where we know that some news effect will be there, result effect will be there. So the probability of going that stock in one direction, I mean, either northwards or southward, is higher. So I think in that way also one can, avoid the emotion of, doing over trading, and these strategies can be implemented. Definitely it will help.
Okay, let's move on to the next query. Kamlesh Jain is writing to us from Pune, he's holding and asking, actually, I beg your pardon, how can traders avoid misjudging the volatility in the market during expiry week and avoid costly mistakes? Your view on this, Saumil?
High volatility is very common in the expiry week. So my general rule is that I avoid heavy trading. If I have a rule, if I have a very short rule and entry and exit plan for a specific counters, I will definitely trade on it. However, I will avoid trading heavily. I will stick to the large caps, the top 50 stocks, so that the volatility is not very high.
Okay, and Asta, your view on this?
So I think first of all, please track PCR ratio, that is put call ratio. That will really help you to know the potential reversals in the prices. Secondly, don't be over leveraged position wise. So I think that will also help. And implied volatility, it will going to be very high. So you have to track VIX also. So I think these are some of the points. And what happened in the case of expiry week, especially open interest usually tend to change. Some of the positions are concentrated. So we really need to see how the open interest is changing, because that is also an important indicator where the positions are concentrating, etc. So I think by keeping all these things in mind, it will help.
Okay, let's move on to the next query. Rahul Kapoor is writing to us from Kolkata, and he says that traders often lose money by being on the wrong side of the options during expiry. He's asking, how can one actually decide whether to write or buy options during the expiry? Somil?
I think there are two sections here. One is beginners and the others is experienced traders. Experienced traders, where I see traders who have more than 5 years of experience trading in the markets, trading options and trading futures. So I think for beginners, it is good to buy options and not sell options, and have small stop losses and small targets for these buying options. The other thing which you need to do is that when you're buying option, you need to follow the trend and not do any bottom fishing or catching the top. You just have to follow the trend, buy options, and with small stop losses and small targets. For experienced traders, I think you should make strategies where you can calculate IVs. You should have a PCR call put ratio, and then calculate the strategies and then execute these strategies. That would be my recommendation.
Absolutely. And Asta, your view, how can one decide whether to write or buy an option during the expiry week?
So I think buying option is recommended, especially on those times when we know that there can be a one-side momentum in the stock prices. Now, this momentum can be due to the news, due to the results, anything. So at that time, we can buy options. Secondly, when there is a high implied volatility, that is also the time when we can buy option. And thirdly, I think if open interest positions are building up, but they are not hedged, then again, it is a time when one can buy the options. On the contrary, writing of the option is recommended, especially when the implied volatility is low. So I think that is the major point. And in the near term or a near expiry contracts, I think writing options are more suggestible.
Okay. Let's move on to the next query then for this segment. We have Divya Khanna, who's writing to us from Odisha. She says that open interest and volumes are often mentioned during this expiry time. Now, she's asking, how can she avoid misinterpreting these indicators? Somil?
I think the first thing you need to do is focus on price action. Of course, we need to focus on OI built up as well for very specific strike price, and identify support and resistance. But don't rely totally on these support and resistance, because they change very quickly. Focus on price action, take your support and resistance from OI build-ups, and then make your trades. Do not only focus on OI. Price action, support and resistance, these are the right way to trade while expiry or any time of the month.
Okay, and Asta, your view on this?
So what we believe that one really need to understand why there is a change in the open interest. Is it some increase or a build up in the volume, or some closing down of the position? Because that is also very important. If there is a change in the open interest, we should know the reason. So I think that is the major focus, that why there is a. And secondly, even we should also take this volume into consideration, that whether the volumes are really having the effect on open interest change or not, in the way that open interest is building up or not with the increase in the volume. Because sometimes what happens, it can be also due to the speculation. So we really need to take care about these factors.
Okay, let's move on to the next query. Rish Verma is writing to us from Bangalore, and he's saying that he had entered expiry weeks without a solid trading plan in the past and has faced losses. Now, he wants to know the importance of having a strategy for expiry and specific trades, explore the specific trades that he may be looking at. Somil, your view?
I think without a plan, you'll be making losses for sure. Without a plan, you'll be over trading. Your emotions will come in, and you will jump into stocks which are spiking on the expiry time. So I think without a plan, you definitely make losses. So stay disciplined, make rules, make a plan, and then trade. Specific trading, I think. If you are a beginner, stay on top 50 stocks and trade with the momentum.
Okay, and your view on this, Asta?
So I think during the expiry weeks, basically market makers, they really hedge their position aggressively. So you really need to have a plan. Otherwise, what happens? Your stop losses can trigger. So in order to avoid that, and in the expiry week also, one can have the emotions of doing overtrade. So I think in order to avoid all these mistakes or situations, it's better to have a well plan before going for the expiry week strategy.
Okay, absolutely. So, make a plan before you do anything. But thank you so much, Asta, as well as Somil, for joining in with us on the show. It's always a pleasure having you both. And thank you for answering our viewer-related queries. And viewers, it's a wrap on this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. And remember, you can always write to us in terms of your queries, and we'll address them with our experts. But for the next 1 hour of trade, we have Closing Bell that will take you to the market action.
We've been quite worried on mid caps for a few months. Maybe we were a little early, but I think if you look at relative valuations on mid caps and the fact that there is some uncertainty around near-term economic growth in terms of maybe that we are experiencing a slowdown, and with those sky-high valuations, typically they would be far more vulnerable. On a relative basis, we clearly have a preference towards large cap over mid caps and small caps. So large caps is clearly our preferred area. In fact, I would say our preferred area is mega caps. If you were to look at our India focused portfolio, we are quite overweight mega caps. I mean, a lot of stocks which are over $40 billion market cap over there. So that's the part in terms of preference within the capitalization. However, on markets in general, we've reached a very interesting point where fundamentally we were seeing that this overvalued period would cause a correction. That corrections happened. We kind of were worried about it right at the start of October, and that's kind of played over the last 4 months. We are down even on Nifty 12-13% or so. Yes. Now, interestingly, our proprietary gauge called the sentiment gauge, which tries to quantify sentiment, called the India Bull Bear Index, has recently hit extreme bearish sentiment. In fact, this is the sometime one of the days last week when we saw it, and maybe it will be there somewhere this week as well. Sentiment as measured by this gauge was the weakest since the COVID lows. Okay, so that is a very interesting point. Typically, it has a good track record in kind of whenever sentiment goes to an extreme, to say that now we could have a contra move. This could be a contra move up. The bit that is more dicey is whether this will be whether this is the end of the correction or whether this is just a rally and a recovery where sentiment normalizes, we have another leg down. But for now, I would want to, for the ones who are kind of short on the market, this is something where one needs to kind of bear in mind that sentiment has gone to a pretty extreme level as per our proprietary benchmark, which has traditionally been very good in predicting the extreme points in the market.
Australia as well as Japan, which is both opened up higher today in trade.
Bajaj Auto, like TVS Motor in this challenging environment, has come out with numbers which are much better than estimate.
On the downside, lows should not break. I mean, 22,786 is the low on the Nifty. So it's going to be about 1/3% higher. It is 0.36, 23,040.
We anyways have an opinion that sometime later in the year, there could be rate cut possibilities. I'm just trying to debate whether it is immediately or not.
The electric business now is about 22% of our domestic revenues.
180, it's absolutely in line with the analyst estimates of the fair value of the company.
The Nifty right now is up 150 points above 23,100 and very close to yesterday's intraday high of 23,137.
We are going in for this 3,000 crore IPO, and yesterday we had the anchor list done up in which we had collected 875 crores.
It may be possible that, select financially weak PSUs, the government may like to retain them as a going concern.
The index at the day's high, a sharp rebound in the mid and the small cap indices, and a slew of earnings.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
That was the day so far, and it's a much, much better day. The benchmark indices are up close to about 0.8%. Broader markets racing away. It's a solid outperformance with the mid-cap index up more than 2%. That's the situation as of 2:30 p.m. this Wednesday afternoon. You're watching Closing Bell. We're live from the CNBC-TV18 Motilal Oswal studio. I'm Rima. With me, Surbhi and Nigel. Hi.
Hi, folks. Haven't seen, it's a good day, and haven't seen a good solid day like this in a while, because the gains are being held intact. There are decent results that have come through, so there's buying on the back of that as well. Feeling good.
Well, you hit the nail on the head, Surbhi, because the good numbers are being, respected. They are being gobbled up, so to call it. You have TVS Motors, that's one of the big gainers after gaining yesterday. You have a few more stocks in the broader markets as well. AMI Organics came out with a set of numbers. The stock, as we speak, is up closer around 15%. So I think we should get that one up for you. Deepak Fertilizers came in with its numbers closer around 45 minutes or so ago. That one is up another 10%. So big move is what we're seeing out there. KPIT Technologies. I'm talking about some of these names from the broader markets as well. Orient Pro, yesterday they came out with a set of numbers. The stock was down. Today the street is buying into that. The stock is up closer around 10% as we speak. And Sirma SGS, the stock had lost 35% of its market cap. And that stock, in fact, is now up closer around 20%. So after seeing a sharp downtake, the street is now appreciating good set of numbers and latching onto it. They say in cricketing parlance, sometimes if you're not in form, at least spend some time in the middle and try to knock in some runs. Runs under the belt is good, but feeling on the right side of things is even better. So I think, that's well received by investors today.
And even the others, right? So at least for Sirma SGS, there were good numbers. But Akane's Technology is rebounding. Yes. There is a Jefferies upgrade there. PG Electroplast is another one, up nearly 9.5% on very good volumes. There is an uptick that you can see.
Last evening, I spent some time with the gentleman who heads the investment committee for HSBC Global. And the first question I was trying to understand, that you're advising clients across asset classes, across markets, where to put money. And I also spoke to him about the selling of FPIs here in India. He said, yes, that's happening. But, tactically, it's a short-term issue. We don't see our view changing on India in the long term. And even on US tech, the rebound happened even immediately overnight, but here are money managers who are taking a longer-term view, saying the AI story is not going anywhere. Maybe it's not NVIDIA that benefits. Maybe it's a different entity. Maybe some of the users of those chips will benefit even more if they, let's say, end up getting an LLM at lower price. So I think some of that faith came back into the market, so there's stability overall. By the way, there's Fed tonight, let's not forget. It's expected to be a largely, uneventful Fed meeting because there's no rate change expected. But that stability has helped us get back as well.
And Powell commentary, right? Because the first comment from the Fed chairman post-Trump.
The election.
Post-election, right? So,
Surbhi, next time you meet that gentleman, just tell him we appreciate this commentary. Where's the money? Tell him,
I tried asking. I said,
India's a long-term story. It's it's a structural bull run. Paisa ka bhaiya, where's the money?
FIs have sold 2.5 lakh crore rupees since October, November, December, Jan. 2.5 lakh crore rupees. That's massive.
Absolutely. There's no taking away from that. But see, the thing is that there are buyers at lower levels. Now it's a question of who shows the intent first. And days like today kind of, reinstate that belief that you've got to go out there, start nibbling in. It's impossible to catch the bottom, but I think today is that day. Why am I saying today is such a good day? Today is the day where people are showing the faith. There is money that's coming back into a lot of these stocks, which both Nigel and Rima have described, and even where management commentary, for instance, an RR cable, or you've got a couple of names, for that matter, even a JSW Energy. That stock's still down. We'll talk about it, 7-8% down. But where managements are showing some optimism and where they're giving a convincing story about improvement in margins ahead, etc. Today, the market is in the mood to listen, which is not what we had in the earlier part of the week. Anyway, there's a lot of ground to cover, and we have to go over a lot of these individual stock names as well. So let's get started. We, as usual, have Mitesh with us to take us through the last hour strategies. First up, Mitesh, good afternoon. So tell us, it's been a good day so far. Now, last hour trades, index, Nifty, Bank Nifty stocks. What are you doing?
See, good afternoon. We've been advocating maintaining long position primarily on the belief that the Bank Nifty is showing very early signs of a bottoming out. We had a double bottom, then a gap breakout yesterday, and today the gap is held, and with some volatility, the Bank Nifty has again started moving on the upside. So that suggests that the Bank Nifty could test 49,350, 49,700, 750, and in a good case scenario, 50,000. And then beyond that, I'm looking at a proper uptrend. So all those signals are there. Now the price has to give some confirmation, but given the fact that these signals are there and these signals have occurred at very oversold levels, the chances are very high that we would have made a temporary low, at least if not a proper reversal kind of formation is yet, but a temporary low seems to be in place. And with that, I've been advocating maintaining long bias and positions. On the Nifty also, once 23,150 is crossed, expect 23,350, 400 zones, and then we'll look at higher levels. For the time being, I have a buy on HDFC Life with a stop at 620. Look for targets of around 645, maybe even higher levels over here. But that's the first target. And then a buy on ICICI Bank with a stop at about 1237 for targets of 1280.
Got that. Let's talk about KPIT Tech. Now, KPIT Tech was a rank underperformer. From its 52-week high, the stock is still down close to about 29%. And after Tata Tech came out with the numbers and it disappointed on the automotive spends part, automotive revenue, the street went into KPIT Tech's earnings with a little bit of skepticism. But the numbers are better than what the street was anticipating. The company's top line grew by 2% quarter on quarter, ahead of estimates of 1.5%. EBITDA margins expanded by 60 basis points to 21.1%. And the company has raised the margin guidance. Their earlier guidance was that we will do margins above 20.5% for the full year. Now they're saying it will exceed 21%. The top line guidance has been reaffirmed. So they're saying that revenue growth will be between 18 to 22%. They're somewhere after 9 months hovering in the middle of it. So the 9-month top line growth stands at 20.7%, and deal wins are very, very robust. Deal wins are the highest that we've seen in the last 2 or 3 quarters, up 14% on a quarter-on-quarter basis. So that's another important internal. Prakash Diwan, market expert, is now with us on the show. Prakash, the street was very concerned about the automotive slowdown, ER&D spends, particularly emanating out of Europe. And even the last few data points, like KPIT's Q2 numbers, were a bit disappointing. So keeping that in context, how would you read these numbers? Is it a one-off? Is the slowdown a little more, what's the call now on KPIT and the likes?
So good afternoon, Rima. So I think essentially, it'll probably take a quarter more, at least a quarter or 2 more, for this weakness to be shrugged off. Primarily because whatever you've seen in terms of a comeback from markets like Europe and some of the newer segments that they've been foraying into are yet too early, to be able to take a call on and say, okay, this is turn the corner. So I would say it's one-off. It's probably early days, but the trend will probably take another quarter or 2 for the numbers to grow. So an 18% guidance on revenue growth, or let's say 21% margin, is nothing very earth-shattering for the stock to recover this 30-35% dip that you've seen it from its recent highs. And by the time if earnings catch up, the valuations will also probably look more attractive. But till then, all of these players will have to be a bit tepid in terms of what their expectations on P multiples would be.
Got it. All right. Prakash, did you have a look at a couple of other names? Ami Organics, Deepak Fertilizers. Those stocks are up more than 10%. They've come out with a decent set of numbers, and both of them rocketing away. Did you have a look?
No, absolutely. Deepak Fertilizer, I did take a look. I glanced through. Ami, I haven't been able to really go through. And what's very clear, the message is clear by the market, that the market is willing to put incremental capital at work where numbers are far better than what usually the expectation is. Remember, Q2 has come in with such a disappointment on earnings. Q3 has started off, if you really ask me, on a very, very strong footing. In fact, there's quite a few players who have reported better than their last 3 or 4 quarters earnings. So, and seasonality aside, on an absolute term, also some of the improvements are very distinct. So I would not write off this earnings season very easily. And specifically on Deepak Fertilizer, it's something which has what's contributed to Deepak Fertilizer is something which has been anticipated for the last many quarters. Finally, it's kind of coming to bring that benefit in, and that should continue. That should kind of strengthen going forward, and that's where the market very excited in terms of loading up the stock today.
Yeah, absolutely. And I guess it's also positioning, right? I mean, we just haven't heard good news from many of these chemical companies in so long that you almost don't believe it when it's coming through, and therefore the stocks are reacting. It's that surprise factor that's really sort of perhaps responsible for the kind of gains that we're seeing. Got that, Prakash? Okay, Prakash, let's talk autos. So now you've seen and heard TVS, Bajaj, even Maruti. So what's looking the best to you from an investment standpoint?
No, I can't get my eyes off M&M as well.
Of course. But M&M, we are yet to hear the numbers. I'm only talking about the companies that have reported and who's standing tallest.
No. So if you look at Bajaj Auto, while a lot of those things, positive things have come into the numbers, there's a lot of dependence on exports, which will need the stock to kind of rally forward. So, domestically, I spoke about this. The Chetak launch has been very successful. Their incremental market share is kind of stabilizing at that 35% mark, which is really one electric scooter out of 3 sold is theirs. And they have very good margin profile as compared to some of the other EV names. On TVS, I think there was a surprise element because the market didn't expect the premium segment to do so well. But they've kind of done well in spite of a lot of competition, which was expected, but which hasn't happened because of lack of new launches. On Maruti, I think very clearly you'll have to give it time for the EV segment to really start kind of looking up. And the management commentary has to reassure everybody that the ICE variants, also the hybrid variants at least, will have some sort of a launch flow, which is very important for Maruti to keep utilizing the big capex that they've done. And I keep saying, realization levels have to move up only with good launches, good products, because in India it's very difficult to make money on selling cars, given the taxation structure and the price point. So I think we'll wait for that to happen from Maruti, but otherwise very strong, very good numbers, but you'll need much more for the stock to do well from here. And then we'll of course wait for M&M.
Yeah, though the market move on these stocks has been really interesting. We saw that Bajaj chart. Let's get the charts back up. Bajaj is off a good 30-35% from its 52-week high. TVS has done really well. TVS has also corrected, but the correction is about 13-14%. And that's Maruti. Maruti is off about 12%. No, these are today's charts. We should put out one-year charts to understand the positioning on these stocks. Bajaj ran up to 12,000 plus, but then an equally sharp decline in the last couple of months. It's, you can see that that's a 30% cool off from the peak. For Maruti and TVS, it's about 13, 14, 15% thereabouts. Let's go to Sudarshan to understand what is working for Maruti and what isn't. The bigger story obviously is going to be on the launches ahead. But as far as Q3 is concerned, Sudarshan, what's the highlight?
The first question is there anything to complain in Maruti's Q3 earnings? The answer is no. Earnings are absolutely in line with estimate. So the second question is, why is the stock down? Well, if you talk about just this month, the stock price of Maruti is up 10% and it has outperformed its peers. If you check the stock performance of M&M and Hyundai, both the stocks are down 9% each this month just in January. So what are the factors that have worked for Maruti in Q3? First, volumes have seen a growth both on a sequential basis as well as YY, up 5% sequentially, up 13% year-on-year. Second, raw material costs seem to have stabilized in last few months, and that seemed to have helped margin move higher. Third, margin has fallen sequentially, that is just down 30 bips, and it has outperformed Hyundai. Fourth, realization has also fallen sequentially, but it's in line with estimates. Coming to the main numbers, profit is up 13%, revenue has increased 16%, even EBITDA is up 14%, and margin continues to hold the levels above 11.5%. So all in all, it's a good set of numbers. We'll have to see what exactly management says about the demand going forward.
Okay, all right, got that, Sudarshan. Thanks very much. Just to round this up, Prakash, going back to you, quick 10 seconds. Apart from M&M, if you were to buy into another auto stock now, given the decline in the market, which one would it be?
Well, it could be Maruti. Maruti definitely is, yeah, got everything going for it. It's just relative superiority between M&M and Maruti that you talk about. But yeah, from these numbers, and if the commentary tells you everything positive, go ahead.
Sirma SGS is now up close to about 20%, and the entire EMS basket is rebounding. Prakash, did you think the correction seen in these stocks was done? Are they in for a rebound, or is this the opportunity to lighten up if you didn't get a chance before?
Difficult question, Rima, because I'm quite confounded by the ferocity of the bounce back. I thought things could start looking up for some of these names where the numbers have been very encouraging. They would start inching up. There'll be accumulation gradually. But this is like, look at NetWeb, look at Sirma. I mean, they've reached the limits of whatever they could do in a day and on the upside. And that tells you that the market could still be behaving a bit irrationally on some of these counters which have low float and hence the price behavior. So I would take it with a pinch of salt, not necessarily kind of continue buying into it just because others have bought and hit a 10 or 20% filter. Numbers are good, but then you need to look at what's likely to be in the next 3-4 quarters for you to be able to hold that stock in a profitable position. So that's what you have to look at the results with, not just what's happened, but what's likely to happen in the next 4 quarters. If you get that indication, then you can. But I would buy into Sirma at this level.
Okay, all right. Prakash, I wanted to ask you if you're tracking Piramal Pharma. The numbers didn't look too bad. I recall this morning the stock opened up gap down though 5%. From the lows, the stock is now up close to around 15% actually. It's up 10%, but from the lows, it'll be up more than 15%. So any of these names, Piramal Pharma, Apar Industries, that was down 20% yesterday, it was down another 5% today. That's moved into the green. Some of these big movers, any view on them?
I think Apar definitely has a lot going for itself, and I think the move on the way down was because there's sudden disruption, potential disruption that people thought was on the way from AI usage of data centers, and hence the cut in demand for power suppliers. But then it's too much of an irrational decision, knee-jerk reaction, and things are finally falling into place. But in Apar at lower levels, it's definitely a very wonderful opportunity. Look at the order flow that a transformer rectifier is getting even at this point in time. They're talking about growth, which is almost going to double their revenue in the next 2 years. So I'm quite positive on that space. Apar is one of the well-run businesses. And people had this complaint that it was too pricey. It's probably giving you that 15% discount from where it was, let's say, just a week back. But Piramal has been too volatile. I mean, the moves have been so crazy. I haven't understood. I've never been able to attribute much of reasoning to it. I remember speaking to Prashant some time back, and I said I can't explain how the stock has moved from its low to the highs, and from the highs to the lows and back to the highs. So it's quite difficult to see till the business stabilizes in terms of revenue visibility, and we will probably fathom more beyond that.
By the way, JM Financial, which opened with a cut of about 10 to 12%, is now back in the green, or at least it's flattened out. So it's erased about 12-13% from lows. And even a Motilal Oswal had open trade in the red. It was subdued in the first half, but now it's up close to about 3-3.5%. So there is recovery seen in many of these plays. Prakash, what about NetWeb? The stock has fallen a fair bit. Is the market overreacting to this concerns, DeepSeek threatening the entire AI spend, and it will affect companies like NetWeb? Come in.
No, absolutely. I think this DeepSeek thing it's probably been taken. I mean, it's taken the digital world with a storm because it was absolutely unexpected. And given the fact that the US-Chinese geopolitical axis is at such a stage that anything coming from China which threatens, existential, level crisis for American companies is something that people will, magnify in terms of impact, and that's exactly what's happened. While cost of AI computing comes down because of any potential disruption, and this could be one of those, it doesn't mean that we have enough facilities and infrastructure to support AI growth. So, so whoever is in that space, whether it's a NetWeb or an Anant Raj from a tangential perspective, I don't think we could write these companies off when there's so much of investment that is yet to come in and make meaningful scale. So, absolutely overreaction. NetWeb has probably been rising also too fast, and that's where a lot of people were sitting on profits to be able to get out at whatever levels. And the smart money will start coming in at lower levels in some of these businesses. Now, whether today's move is the last that you see or the bottom has been made, I have no answers to that. But I'm sure there will be allocation that will keep coming to some of these long-term positive businesses and at lower levels especially.
Okay, all right, Prakash, I wanted a quick word on Interglobe Aviation. I'm just reading out comments from Mr. Prahlad Joshi, who is the Union Minister of Consumer Affairs. He's talking about the very high pricing for people who are trying to travel to Mahakumbh. He's also saying that keeping the consumer interests in mind, they have written to the authorities, that's the DGCA India, to take steps to reduce the prices of airfares. Now this stock has become, it's increasingly becoming more and more popular, and from more powerful, people we're hearing this. Your view on Interglobe, it has a large part of the market share, but could rates or prices come under risk?
So, the counter that most airlines would give, and in this case, even Interglobe, is going to be the lack of aircrafts that they have. Now, the fact that they don't have aircrafts, as many aircrafts as they would want to, and they've ordered and they, have leased operational with them, it makes it very difficult for them to fly to certain sectors at rates which are not competitive. So the reason why they've jacked prices, and that's a justification they'll always be ready with, is that if you had to fly to Prayagraj, which is a small airport from all over the place in the country, you will need those many slots, you will need those many aircrafts, and to take them away from some of the more lucrative sectors, you will have to kind of tweak the prices upwards. So that's the and it's not just Indigo. You look at what an Air India or a SpiceJet are doing. They're also probably in the same genre. What's more important is that something needs to be done to ease the supply side. Air India has about 590 aircraft still to be delivered. So, and they've started putting that out in their in-flight magazine, which is really like the last mile connectivity with a passenger. So that's where something needs to be done. I don't think any kind of intervention is going to be very permanent or very long lasting in terms of a solution. So the Kumbh could go, something else could come up, and the prices will continue to disturb consumers. Consumer interest, of course, is a different thing, but I'm sure it's a constraint, supply constraint that's causing this trouble. Interglobe as a stock is very good. You could probably make money on the stock and pay for higher prices on the tickets, is my guess, because it'll continue to do well from here on. Also, the efficiencies that they've reached, the scale that they are at, in spite of all the shortages that we are talking about. And with crude remaining soft, I don't think there's any reason to worry till they do about 20-25% upside from it.
So you'll stay positive on the stock is what you're telling us. So you continue to remain your positive stance, right, Prakash?
Absolutely.
Got it. Pleasure talking to you, Prakash. Thanks a lot for joining in. A far better day. Portfolios are feeling good, and we appreciate you joining in and giving us your take on all of those stocks. For the time being, slip into a short break. On the other side, we have Varun Goel from Mirae Asset Investment Managers, who's waiting for us.
Esteemed guests and friends, above all today, we express our deepest gratitude to our visionary Prime Minister, Shri Narendra Bhai Modi ji. Pandit
Welcome back. Well, we have with us Varun Goyal, Senior Fund Manager, Equities at Mirae Asset Investment Managers, to take us through the market view. This afternoon, Varun, great to have you on. So it's a broad-based recovery that we're seeing, and the bulls will really, heave a sigh of relief. But tell us, what changes, if any, have you been making to the portfolio? What have you been sort of offloading in the market, and what have you been buying into this fall? Because there's been a fair amount of churn. So just tell us the top-down view and the whole portfolio stance right now to begin with.
Good afternoon, Subhi. Thank you so much for having me on the show. I think in the last 5-6 months, we have seen Nifty correcting around 10-12%, and I think the small and the mid cap space has seen a much bigger correction. If I'm not wrong, as of yesterday, the small cap index has corrected around 19%. So there's a lot of interesting and exciting opportunities emerging there. From a broader market perspective, of course, the market has to navigate 4 large events. One, of course, is the earnings season, which continues to be, and I think it's a little somber. We also have, of course, the new administration in US, and we expect some more announcements to come along the way. And then, of course, the next week we have the budget and then the RBI policy. So, I think these are 4 large events, and we hope that some more measures will be taken both by the government and the RBI to revive the growth. We have been seeing some kind of a cyclical slowdown. So our sense is, while FY25 will be low single-digit kind of earnings growth, FY26 is where we should go back to that 12, 13, 14% kind of earnings growth, and we should see a healthy compounding for the markets also to start coming back. I think last year in February, markets were at around these levels, so we have almost spent a year with almost a low single-digit or zero kind of returns. As the cyclical bounce in the economy plays out, as we see more investment in infrastructure coming back, as we see revival of rural consumption post the harvest of the Rabi crop, which looks quite healthy, I think FY26 should be the year of revival in GDP growth and, of course, market earnings also. So remain constructive on the large cap space. I think small cap space definitely has become very, very interesting post the recent correction, and we continue to find several opportunities there.
All right.
Can you talk about these opportunities?
So I think, if you look at the various sectors which have seen fairly large corrections, so if you look at whether it's capital goods, I think while there was some cyclical slowdown on investment, especially from the government side, I think, if you look at the medium-term trajectory, it still looks pretty interesting. I think residential real estate, again, something which has corrected quite a bit. I think the cycle, we are still in midway. If you look at the affordability metrics, so I think there are several opportunities there. If you look at the capital marketplace, I think fairly large price damages. That's again something to look at. So I think across the board, I think some of the more cyclical parts of the economy have seen very large corrections, and we definitely see opportunities emerging there.
All right. Hi, Varun. Good afternoon. Good to see you. And Varun, after this 12-13% correction on the Nifty, what all is in the price? The earnings miss is in the price because that's got scaled back. What else is in the price? The slowdown in the economy is in the price, or do you think there's further downside? On the headline index first, let's talk about. Do you think that bulk of that pullback is done?
Yeah, so Nigel, so if you look at, so let's say FY25, we're looking at 1,050 EPS. I think if we take 12, 13, 14% kind of earnings growth, FY26, we're looking at, let's say, 1,200 rupees on Nifty. On that basis, we're trading at around 18.5, 19 times 1 year forward earnings, which is fairly reasonable. I think the 10-year average is around 17 to 18 times. So one could argue that we are still 5-7% more expensive, but then that correction may or may not happen. We don't know. It could happen in terms of time. It could happen in terms of price. So I think from a broader market perspective, we are, let's say 5-7-10% kind of correction is possible if you look at the historical matrices. But like I said, the more important thing is how quickly we see the cyclical revival in the economy. I think this year's GDP growth expected to be between 6-6.5%. Next year, we're quite hopeful that the government's infrastructure spend will come through. Some kind of stimulus in terms of tax cuts. If it happens, will be great. And of course, there is the expectation of rural recovery. All these things together will take the economy towards a 6.5-7% kind of GDP growth, and which will take corporate earnings back to that low to mid double-digit kind of range, and that should be the driver of the markets going forward.
Everyone's watching for what the budgetary allocation to capex is going to be for FY26, considering the slowdown that we've seen by government spending so far in FY25. Do you think keeping, how would you approach all these infrastructure, highway, roads, defense stocks, keeping that in mind?
I think while till November the activity was a little muted, but I think post that things have started to catch up. Definitely for sectors like roads, we've seen activity start in a very meaningful manner. I think some defense orders also came through, so it looks like the engine is that whole ordering ecosystem is getting back into action. And our sense is that the government will continue to focus very aggressively on the infra side, be it roads, railways, ports, metros, and some of those areas, and defense included. And we should see a second round of growth acceleration in some of these sectors. So one is hopeful that we will see some of these stories come back in a meaningful manner.
What about this big debate on AI and the kind of disruption we are seeing from the big Chinese player? All of a sudden, it caused a lot of our tech stocks to sell off, but you can see a lot of them actually seeing some kind of buying interest. After all, tech was the one that was outperforming, and suddenly this news came and, it was trying to derail that entire rally and the interest in these stocks. What's your view on tech as of now?
Yeah, I think, so I think technology, AI is for real. It's going to be a bigger and bigger part of all of our lives going forward. So we can't deny that. I think as far as corporate India is concerned, Indian tech companies, they're embracing AI in their own manner. I think eventually, it's never good to fight technology. You have to all embrace it, make it your friend. And I think most of companies will be doing that. So we remain quite constructive on the tech space. I think broadly, if you see the very sharp depreciation in rupee, it would definitely cushion the earnings for most exporters, including IT, pharma, and to some extent chemicals. So I would be fairly constructive. Yes, AI may have impact in terms of what you call how many incrementally, how much people are needed, and there needs to be some recalibration on that side. But I think most Indian companies will adapt to that in a very fast manner, and they should continue to thrive going forward.
Is EMS, any of the EMS related plays attractive post the correction?
Well, I think the sector definitely has a lot of growth potential. I think there are several sectors where government is introducing PLI opportunities, and therefore, be it auto, be it railways, be it semiconductors, a lot of these EMS companies will benefit. So, as and when we believe the valuations are comfortable, we would definitely look at that. But definitely, the sector has a long runway for growth.
Okay, all right. So those are some of the key spaces that you're looking at. Finally, Varun, to sort of distill it all down, run up to the budget. Any major expectations that you have? And again, in terms of positioning, are you expecting a big push again on capex? And therefore, what placement and sort of how much of exposure would you give that give that to the portfolio when it comes to the capex related plays and ideas?
Yeah, I think two large expectations at least that we would have is one, of course, on the capex, the thrust on capex to continue, and second, if there's some kind of stimulus from a tax cut perspective for the middle class and the lower middle class. I think both these themes, we would hope would play out. Therefore, we expect some push on consumption side, especially the rural facing consumption, and of course the capex theme as we spoke about. So I think both these areas we would be constructive on going forward.
Thank you very much for that. Numbers coming in from Best Life Food. Net profits are down 59% on a year-on-year basis. The stock is up close to about 1%. Revenues are up 9%, but a sharp drop-off seen in the company's profits. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. Also a few BTST calls from our experts.
energy university owes its very birth to his extraordinary vision. All of you are benefiting from what Narendra Bhai thought in the early 2000s. And when he called me and said in 2005 that we have to build one of the finest institutions in Gujarat, right? And that is what we have achieved from 2007 onwards. So we will always be grateful to our Prime Minister. Long before he became Prime Minister, he foresaw that India needed Atmanirbharta in energy. Over 20 years ago, he told me he wanted Gujarat to lead the nation in energy and energy products. He also told me that Gujarat should take the lead in cultivating world-class human resources needed to achieve India's clean energy ambition. That is how he helped establish this pioneering university. Friends, there are many things that we learn from our beloved Prime Minister. Let me mention just 2 lessons here for all of us. 1, Modi ji never lets a good idea go to waste. His Man Ki Baat inevitably becomes his Man Ka Sankalp. His Sankalp is always Vajra Sankalp. His determination is as hard as a diamond. He does not rest with simply making a Sankalp. He knows how to turn his Sankalp into success. In the last 10 years, the world has seen how he especially chooses impossible-looking tasks and transforms them into reality. This, for all of us, is lesson number 1. Lesson number 2 is about his boundless energy. Narendra Bhai Modi's name stands for Anant Shakti, infinite energy. Since PDEU is an energy-focused university, all of us should learn to be as energetic as our Prime Minister. People often ask the question, where does Modi ji take rest? Or does he rest at all? I can tell you that I know the answer to this question. The answer lies in what Pandit Deen Dayal Upadhyay ji has said, who is the founder and whose name this university bears, has said about rest or Vishranti. He has said, Kaam mein badlav hi Vishranti hai. Change of work is itself rest. And I think this is our Prime Minister's motto. This should be
It's a rocking trading session, you'll have to say it, because we're holding on to those gains. We're up 200 points. We've gone past the 23,150 odd mark. You'll want to go into expiry day with this sort of a, look on the screen. And also, hopefully tonight, Fed chair doesn't disappoint. Then you could be bracing yourself for a solid close to the series. That's the hope. Let's get in. Nimesh. Nimesh, what are you making of today's trading session? Oversold, we were talking about it yesterday. Maybe, in fact, it was getting over-exaggerated on the downside. And a bounce. But what are the flows looking like?
So, Nigel, a good pullback for second day running in the broader market names. And that's where, I've been saying for the last few days that it was oversold. Even yesterday in the first half, a lot of margin calls got triggered, a lot of forced selling happened in the broader market names. So, I guess that's the reason why you're seeing a strong pullback in today's market. Mind you, there is no big buying in the broader market names, but only lack of selling is leading to a pullback in many of those very extremely beaten down stocks in the broader market names. So that's overall feedback. Both the indices, the mid cap and small cap, have gained another 2% in today's market. Also, the other important aspect, Nigel, for the broader market is, if you see for the last couple of days, the earnings season has not been that disappointing in the broader market. Even today, there were a lot of stocks which are reacting to very strong numbers, like Ami Organics is up 20% on back of very strong showing. So is something like Sirma, that's rallied 20% on back of very strong numbers. So in the broader markets, especially the earnings season has not been that disappointing at the margin for many of those names. And that's the reason also why we're seeing a bit of pullback in the broader market stocks today. From an institutional activity point of view, I think today is a day when the institutional activity is on the buy side. So most of the funds seems to be better buyers. And also it has to do with the expiry tomorrow. So a bit of reverse arb as well is the sense that I'm picking up as far as flows are concerned. On the downside, 22,800 has seen as a big support, and that's been respected. Now it's a crucial thing 2300 will act as a very strong resistance, at least in the near term. So, of course, there is an expiry tomorrow, so you might see that volatility. And we have a big budget on Saturday. But looks like at least the near-term pain in the broader market seems to be largely over. The forced selling is over now. And even with a small bit of buying, you're seeing very sharp reaction in the broader market stocks.
Okay, thank you. Good day, Nimesh, to talk about individual stocks then. So what have you picked up?
Well, so Rima, in terms of individual names, the first stock on my list is LIC Housing Finance. Again, the stock has corrected very sharply. Now seeing a bit of buying interest back. There is delivery-based buying in today's market as well. So expect high delivery volumes, and looks like some institutional interest is back, especially in names like LIC Housing, which benefits from potential rate cut which might happen in the Fed policy. So that's the first name. The second stock is Paytm. Again, that stock has sharply reacted in the last 2 weeks or so. A bit of bounce back in today's market. Volumes are on the higher side. But in Paytm, the sense is maybe there is a large block which is round the corner and may happen very soon. So that's something to track in Paytm. The third name is JSW Energy. That stock is under pressure today, weak earnings, and there is selling as well from larger FIs, even after a bit of underperformance in that name. So that's the third stock. And the last one is Linda India. That's interesting. You know, I was surprised why the stock is up 12% in today's market. But yesterday there was a large block, 2.5 lakh shares got changed hands. I believe the domestic mutual fund was a seller, and a very large long-only fund was a buyer in yesterday's block. And after that, we're seeing a very sharp reaction in Linda India today.
Okay, all right. Thanks a lot for that, Nimesh. So those are all the top movers in trade and news that Nimesh is picking up. By the way, just keep your eye out on IMFA, Indian Metal and Ferroalloys. We'll try to get the management tomorrow. For the time being, the stock has lost more than 10% of its market cap. The numbers look quite disappointing for the past quarter. And the fear is that in the coming quarter, there is some softness on ferrochrome prices. So that's why IMFA, Indian Metal and Ferroalloys, that stock is now down close to 10%. Tomorrow, we'll get the management on the channel to clarify what's going on. And there was this buzz that could be some corporate action. As of now, I don't see that, at least in this results. So maybe some part of the street believe that there could be something on that front. Numbers not very, very great and missing in terms of the corporate action. So we'll require some clarity on both these two facts. We're telling our viewers tomorrow we'll get the management and in fact clarify a couple of these details. Mitesh Thakur is back with us though. Mitesh, good session. Maybe today we go home with solid gains and maybe at the high point of the day, unlike what we saw yesterday. Your take the money off the table, or do you believe we'll ride for a little bit longer, and also a couple of stocks?
Yeah, so I think, I would want to hold on to long positions purely because the bias still remains on the upside. And I believe that the way the indicators are shaping up, there's a chance of this pullback extending. While it can be choppy because we have had 2 days of good rally and could be a day of or a few hours of pullback as well within this broader bounce. I still believe that the direction is on the upside. So in the direction being on the upside, we'll take some long BTST calls. IEX is a BTST. Keep a stop just below levels of 177. Look for a target of 181, 182 for tomorrow. And the other one which I like is Indian Hotels, which is a BTST with a stop just below levels of 769, targets of 786.
Thank you very much for that. Indian Hotels is up nearly about 3%. Let's get to Bajaj Auto. Now, numbers were ahead of street expectation, particularly on the margin front, and the company sees healthy demand in the 125cc plus segment, and they've also managed to maintain their market share. Now, earlier today, we had a chat with Rakesh Sharma, ED of Bajaj Auto, to talk more about the numbers, the exports, the EV portfolio. Listen in.
The story for the quarter was coming in at fifth straight quarter of 20.2% EBITDA margin. And it's really driven by a combination of very judicious pricing being taken across the portfolio at regular intervals, as well as, the supportive softening of the rupee, which happened at a very good time from our point of view because of the expansion of the exports business in the quarter, where after almost 9 quarters, exports crossed 500,000 units or $500 million in terms of dollars. The electric business now is about 22% of our domestic revenues. The motorcycle industry was clocking something like 6% growth. And it's really the 36-day festive period, which saw a massive upside going up to almost 16% growth during that period, which has lifted the year-to-date growth rates to about 8%. Management of KTM AG is busy putting together a restructuring of the debt plan, supervised by the court, as you know, and there is quite a definitive timeline for that, which is 25th of February. By then, that is when the plan will be presented to the administering officer as well as the other stakeholders. And once that plan is accepted, I think things will start to get to normal, and hopefully the business can start getting restored in the subsequent quarters.
Okay, all right.
All right. Well, I think let's focus on another number then. We have JSW Energy, which is under pressure after reporting muted set of numbers. Vivek joins us to help us understand why these numbers are weak. Vivek, take it away.
Well, that's right. So JSW Energy came out with its numbers post-market hours yesterday. Remember, the company has a significant portion of its capacity that isn't tied to long-term PPAs, so it ends up selling quite a lot of power on the short-term power markets. What actually happened over here? While volumes weren't muted, but the real problem wasn't the volume, it was the fact that merchant prices this time around were down almost 26% on a year-on-year basis. On the back of that, realization on the top line is something that took a bit of a hit. So revenues were down almost 5.5% on a year-on-year basis. EBITDA down 17.5%. Margins too cooling off at 38.3% versus 43.7% on a year-on-year basis. Net profit down over 30%. Now, what CLSA says is that the company faced spread compression, this on the back of weak merchant prices, and also the company started wind capacity operations in what is seasonally a very low season. Now, along with that, the management said that they actually saw organic capacity additions go ahead and add aid positively, but this was actually offset by much lower revenue coming in from the hydro plants. So DAM prices, like you mentioned, were down 26% on a year-on-year basis. The management also is hopeful of a slightly positive outcome regarding the BESF tariff that was disallowed by CERC. The next hearing is on February 6th, and that is one key trigger to watch out for as far as JSW Energy is concerned.
Thank you very much for that. Mayuresh Joshi from William O'Neill is now with us on the show. Mayuresh, over the last couple of days in the correction and the rebound, have you recommended any stocks to your clients? And if yes, which ones?
Good afternoon, Rima. No, again, I think we have been a little bit cautious over the last few weeks, remaining a little bit light at this juncture. And out of all the markets that we track, developed and the developing markets, I think a lot of markets are probably coming under pressure, both from a macro perspective in terms of what is happening with global bond yields, the delay in the interest rate cycle. And therefore, I think the macro picture for most economies probably in a downtrend as we speak, and that is probably getting reflected in terms of how micro earnings are expected to shape up. So I think earnings is a very key aspect in terms of our EPS rating parameters across market, and that probably looks a little bit wobbly as we speak. Obviously, I think over the next few days, if the market probably stays the way it is and sustains the lows that we've made, specifically on Nifty, and it holds on to those lows, and we get into a rally attempt, there is some element of sense that the market might be recovering from the oversold zones that we've probably seen. And therefore, 3-4 sectors probably come into the limelight as well. Agrochemicals as a space, I think the numbers have been pretty decent for a few companies, including the likes of Sumitomo Chemical India. I think the 9-month performance in terms of EPS numbers, they're doing around 8.13 rupees EPS compared to 7.4 that they did for the entire part of last year. And therefore, with expectations of reasonable volume growth, farm gate prices remaining stable, input cost remaining stable as well, margins should sustain around that 20-21% mark on an annualized basis. I think this is one space that we are keeping a very close eye on. Hospitals as a space, is something that we are keeping a close eye as well. I think a lot of the EPS RS rating institution holdings still holding up for a few players, including the likes of KIMS as an example, where the annualized run rate on what we map over the past 3 years has been pretty decent, 27% top line growth, 30% EBITDA growth, reflecting in very, very strong bottom line growth as well. And therefore, with the bed additions that they've probably done over the last few quarters, the occupancy rates have come down purely because of the additions done in the last 2 to 3 quarters. The average revenue per bed at 13,200 rupees should show sustained upward movement because of the therapeutic additions that they're probably adding across the hospital chains. And therefore, earnings probably might hold up for hospitals as a space, and being very, very selective on banks. So I think we continue holding a bank like Karur Vysya Bank in our mid-cap banks portfolio, because our belief is the numbers that they've presented and the commentary thereof in terms of asset quality, provisioning, advances growth, tier one capital that they're having, and the return ratios that they have been posting should probably sustain with strong credit underwriting both in the commercial and corporate markets.
Okay. All right, Mayuresh, got that. Stay on. We'll discuss some more stocks in a bit, but we also have some important earnings that are still lined up today. Tata Motors is, of course, going to be coming out with the Q3 print. Sudarshan's back with us to give us a heads up. How is it likely to be, Sudarshan?
So sequentially, if you look at earnings, there might be a rebound because in Q2, company had announced about facing issues related to supply chain. But YY earnings might be flat. But on JLR front, earnings are likely to be strong. So overall profit is expected to move lower 8% YY. Revenue may increase by 5%. EBITDA can move higher by 4% and margin can be around 14%. It's likely it may be at 13.7% versus 13.9%. For JLR, revenue is likely to increase by 11% and average selling price that we also call realization may increase by 8%. What would we expect from the management? What exactly is on the guidance on JLR EBIT margin front? We are expecting that there might be a slight increase because as of now, the guidance for FY25 is 8.5% plus. Also, if there is a commentary related to supply chain issue, if there is an update on that front for JLR. So overall, on QOQ, rebound is likely. On YOY, it's likely to be flat for Tata Motors.
Okay, all right, got it. Sudarshan, thanks very much. Let's also talk about Bajaj Finance because that's the other major Nifty earning that will come out today. We have Abhishek joining in with a heads up. Abhishek.
Well, Bajaj Finance had given their, pre-quarter business update wherein the loan growth was pretty strong at 28% YOY and about, 6.5% sequentially. Whether that translates into, PNL or not, we need to see that. So net interest margin can decline YOY but remain stable on a sequential basis. Analysts are estimating a 47 basis point decline in net interest margin YOY and 1 basis point increase on a sequential basis. Now, credit cost can inch up marginally, so analysts are expecting a 4 basis point increase in credit cost on a YOY basis and about 2 basis point on a sequential basis. Stability in asset quality will be a key. We have seen unsecured portfolio deteriorating for lenders, so that stability will be a key. A management commentary with respect to future outlook for growth and asset quality will be very important. Our poll suggests NII growth of 22% YOY and about 5.5% sequentially. We are working with a profit growth of 12.5% YOY and about 2% sequentially. Back to you.
Okay, all right, got it. Abhishek, thank you very much for that. We'll take a very quick break, come back with a couple of other stock questions for Mayuresh in a bit.
Dear students also. Therefore, when we think about these two lessons, how to turn ideas into action and how to work tirelessly, we cannot escape the conclusion that Narendra Modi ji is not only India's Pradhan Mantri, but for us and this university, he is our Gurudev, our respected teacher, and we will follow his learnings. We must aim higher. Within a couple of years, India will emerge as the third largest economy in the world. No power on earth can stop India's growth trajectory. I can clearly foresee that India will become the most prosperous nation in the world before the end of this century. But India, with other large economies, also has a big responsibility. We must not allow economic growth endanger planet Earth and further worsen the climate crisis. Therefore, the transition from fossil fuels to clean and green energy has to be accelerated. I am supremely confident that green technologies and green enterprises can reverse the ecological degradation and indeed make our planet more beautiful, more livable for future generations. Our Prime Minister wants India to become the greenest nation in the world. For this purpose, India is also transforming itself into a deep tech nation with advanced manufacturing capabilities. This is the context in which PDEU should see its future role and responsibility. My dear PDEU family, therefore, Here are my 3 expectations from all of you in the PDEU family. My first expectation, PDEU should further improve the quality of research and make it application-driven. We should specially focus on newer areas like bioenergy, which have the potential to help our farmers and boost employment opportunities. My second expectation, we should simultaneously increase our internal strengths and also forge national and global collaborations so as to enhance our leading position in research and academics. My third expectation, the intersection of green energy, green materials, and artificial intelligence is going to shape the future of humanity. I would like PDEU to gain a leading position in this synergy. Talking of artificial intelligence, I have a piece of advice to our young students. You must be good at using AI as a tool of learning, but do not give up your own critical thinking. चैट जीपीटी का जरूर से इस्तेमाल करो, लेकिन याद रखो आर्टिफिशियल बुद्धि से नहीं, खुद की बुद्धि से हम आगे बढ़ेंगे और आप आगे बढ़ सकते हैं.
Welcome back. Just keep an eye out on a few stocks that come up for you on the screen. GMDC, because of all that talk about critical minerals and focus out there, the stock is now up close to 10%. Keep in mind the stock has corrected 40% from the top, and we want to hereby on clarity in terms of what they're going to do out there. For the time being, the street is celebrating it, but you pull up a one-year chart, you'll see what I'm talking about. 500 rupees to around 320 rupees after today's 10% up move. So I think my producer will get it up. Yes, up for you on the screen. Still down closer around 30%. The other one I'm looking at is ACC and Ambuja. Both of them are under some pressure as well. The numbers had a couple of one-offs, but operationally, weak set of numbers. Both of them now seeing some kind of selling pressure. But Yash is here to tell us about an exclusive insurance story that he's bringing to us. And Niva Bupa is the stock that we're talking about. Yash, over to you.
Well, remember, Nigel, in 2024 is when the insurance regulator IRDAI had introduced limits on how much insurance companies can spend altogether. The limit for general insurance companies was 30% and for standalone health insurance companies was 35%. Now, there were a few companies which were ahead or had exceeded that limit at that point of time. One of them was Niva Bupa, and Niva Bupa had reached out to the regulator asking for an exemption, asking for a glide path to comply with that 35% of expenses of management or EOM limit. Last entire month, there were hearings which happened at the regulator's door for the same reason, as the regulator was considering case by case on these requests. And what we've been given to understand is that IRDAI has allowed Niva Bupa a glide path to comply with that expenses of management limit of 35% by FY26. According to my sources, the company seems to be confident at this point of time to comply with that limit of 35%. And also, just to put in context two important numbers, at the end of FY24, Niva Bupa's expenses of management were at 39.31%, and at the end of H1 FY25, it was at 40%, which means about 500 basis points of reduction is what the company needs to bring in its EOM to comply with that limit of 35% by FY26.
Okay, all right. Thanks a lot for that, Yash. Well, we still have Mayuresh with us. Mayuresh, any view on the stock?
Not really, Nigel. We don't cover it, but a large part of the space itself and insurance players are going through a change in their product mix since the budgetary changes over the last 2 years. And therefore, I think you've started seeing some element of number improvements that have started happening, both in terms of value of new business margins, expectations of the higher annuity premium products are probably getting larger and garnering more market share, which means the product mix is changing for the better. Obviously, the commission and the upfront expenses are a tad bit higher for the likes of a large part of the life insurance companies, except SBI Life. But I think things are changing for the better, which might reflect better in terms of embedded value. So
Right.
I think insurance players should probably.
Got it. All right, Mayuresh. I think we're almost out of time, but appreciate you joining in, Mayuresh, and filling us in with all those, with all that advice on a lot of stocks. We'll see you on Markets Forward in just a bit. By the way, just keep an eye out on a few stocks. You have Infra, that's seeing a lot of selling pressure. That's moved to the low point of the day. Lack of good news, lack of positive numbers, and lack of that corporate action announcement as well. That's where the stock is selling off. On the flip side, NBCC, stock now at the high point of the day. Piramal Pharma up close to around 10%. Reliance Infra is another one actually that's up close to around 3%. Remember, the stock has corrected 350 to around 240. But it appears the large sellers getting cleared out on Reliance Infra. So that's why, in fact, that one on high volumes, it's up close to around 3% as we speak. Other big movers in trade, IFB Industries. The stock is down close to around 14%. Big selling pressure is what we're seeing on that name. On the flip side, Anand Raj bounces back. Orient Pro bounces back. Both of them up 10% apiece. You have Sigma SGX that did very, very well in today's trading session. Rocket move out there. TVS Motors builds onto those gains. And Shriram Finance went through a month of underperformance, but that's returned to its winning base, up close to around 4%. BEL as well, up 3.5%. Tata Motors ahead of its numbers, up 3.5%. And SBI Life up 3.5%. Trent, that saw a one-way correction all the way from around 8,000 rupees to around that 5,500 rupees odd. That popped up in trade. Bajaj Auto as well, firing away, kick-starting the engine. That stock going home with good gains. Maruti Suzuki, a little bit nervous after its numbers, but keep in mind the stock had already had a run-up of close to around 10% or thereabouts.
What a perfect day, Nigel. The bell goes off. We've ended at the highest point. We're now just a notch up below the 23,200 level as well. It's been an absolute good comeback by the bulls. 345 points higher on the Nifty. Bank Nifty looking stellar, and the mid-cap and the small-cap index also retaining plenty of gain today. The bulls will want to see more of these days for sure. For the timing, the bell is gone, so we have to take your leave on closing bell. But Nigel and I are still very much here. Markets forward coming up right after this quick break.
Dalal Street sees broad-based buying to end higher for the second straight day. The Nifty reclaims the 20,100 mark. Mid-caps outperform. The index surges 2%.
Auto stocks cheer amidst select stocks reporting their third quarter numbers. Maruti in the green after reporting an inline set of numbers. TVS Motors surges a second day running after a strong performance. Bajaj Auto soars after it beats estimates in Q3.
JSW Energy and Bosch slide over disappointing third quarter numbers. While CG Power cheers to good quarter three, the management is bullish on the opportunities in India as well as overseas.
Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you all of the key data points that transpired in trade today and of course gear you up for tomorrow. I'm Surabhi Upadhyay and as always with me is my colleague Nigel D'Souza. Nigel, what a green day. You know, today I can't complain. I don't think there was anything to complain about from a bull's point of view.
Well, the bulls actually, it was getting to that point where they were forgetting how to party. Today they remembered yet again, you know, and it was the Nifty bulls that had a great party in today's trading session. They did very, very well. The Nifty Bank, that's the one that needs to lead the way and it's taken on the mantle, both from yesterday as well as today. RBI has injected some liquidity into the system. The Nifty Bank, the financial stocks, they like it. And that's why we have seen a good 1,000-point rally in just 2 sessions. If we pull up a 20 DMA, we entered very, very close to that crucial technical mark as well. So the banks, they did well. But you will be wondering, my portfolio felt so good today. How come? Because in fact, if you look at the broader market stocks, that was where the big party was. You had the small cap index, the mid cap index, the breadth of the market. All of them looked very, very good. And you know, Surabhi, today, if you gave good news, it was appreciated. It was bought into. You had Sirma SGS that did well. Good numbers, good commentary. Ami Organics did very, very well in today's trading session. That stock as well was up and about. You had Deepak Fertilizers as well. So the short point was good news was taken note of and good news was digested as well. So an out and out good day. I think in the last few sessions, yes, there was froth in the market, but there were a few stocks that fell, not because of fundamentals, but because of trading action. The seller just wanted to get out. And today, in fact, we saw some of that get reversed. So the bulls will be counting on, you know, a bit of a pullback even from here.
Oh, yes, absolutely. Today, the stars was aligned in favor of the bulls. There was a global recovery, that whole gloom and doom, fear psychosis that was playing out on Wall Street, on US tech stocks, that was, settled. The few Asian markets that were trading today, they were on the higher side. European markets, while we were trading, were up and about. And by the way, the price of oil has cooled off significantly. Brent oil is now down to 76. So that's another positive cue that the market decided to take note of today. And once the buying started, perhaps, after that, it would be whatever shorts are remaining in the system, they would have had to run for cover. And that kind of propelled the market even higher. Well, all round, good recovery, good pullback in mid caps, small caps, and across sectors, barring FMCG. That was today's action. Let's tell you what we've got lined up on the show today. We'll start off with the top movers and shakers. Hormaz will take us through the day's play. We have auto stocks like TVS Motors, Bajaj Auto riding higher on strong numbers. Earnings season, of course, is in full swing. So lots of names like Sirma soaring higher. Then you had the likes of JSW Energy. And this was the one stock which had a very negative reaction to Q3 numbers. We'll talk to you about it as well and why it fell off. But there were far more hits than misses on the earnings scorecard today. No two ways about that. Of course, then later on the show, we'll also get you the main events to watch tomorrow, as well as the big earnings to watch tomorrow. But first up, let's decode how the day has been. Hormaz is here. Hormaz, a green session finally.
We're heading into a big day in the green, and that is exactly what the bulls would have been hoping for. And a part of that started off last night itself with the recovery in the Nasdaq, and you can see how the IT stocks behaved in today's session after that recovery. Persistent Systems, the usual suspects, outperforming 7% higher, leading the pack today, along with the other names as well, gaining anywhere between 2.5% to 5%. But a lot of these beaten down names, which were in a sea of red over the last few days, finally saw some green today. NetWeb and Anantraj, both after the clarification that they gave over DeepSeek, both of them seeing a 10% upper circuit in today's session. NetWeb, after 8 days of losses, finally saw some green. Newgen Software also saw a rebound after the downgrade, the earnings, and a 10% circuit there as well. Credit Access Grameen continues to rebound, another 10.5% up today. And Keynes Technologies, after yesterday's drubbing, ending 6.5% higher in today's trading session. You mentioned mentioned good news getting rewarded. Sirma SGS 20% higher in today's session. Deepak Fertilizers, possibly the earnings of the afternoon, 14% higher in today's session. CG Power, KPIT Tech, of course, that the guidance raise boosting the stock 9.5%, and Adani Power just before closing came out with numbers, the stock ending 5% higher. Some other earnings reactions came in from the newsmakers as well. Piramal Pharma ending almost 10% higher today after results, as did CAMS with gains of nearly 7%. Maruti, of course, fell off the highs of the day, but mind you, the stock has run up quite a bit over the last 1 month, and hence that kind of a reaction. And Gujarat Fluoro with the management commentary on potential gas price increases in the future showing up in the price as well. And lastly, stocks that bucked the trend in today's session, most of them earnings reactions as well. We mentioned JSW Energy, Bosch was one of them, as was Ambuja, and some other names like Jupiter Wagons and Intellect Design ending in the red. Back to you guys.
Oh, okay. All right, Hormaz, got that. Thanks very much for the details there. So a good day with far more amount of green than what we've gotten used to. Let's bring in the experts now. We have Mayuresh Joshi of William O'Neill and Shrikant Chauhan of Kotak Securities with us. Gentlemen, hi and good afternoon. Shrikant, let me go to you first. Now, I know we're jumping with joy just because there's green finally. But where are we? I mean, this is still a market that's been bruised quite badly, right? And it's been very, very fragile. So in terms of levels, what to look at next and how do you rate this pullback?
Yeah, good evening, Surbhi and Nigel. See, like after a very long time, we are seeing divergence in mid-cap stocks as well as the overall performance of the market. There is like good amount of strength in mid-cap companies, and if we consider the mid-cap 50 index, then it has formed a bullish reversal formation. So after completing the correction, if there is a bullish reversal formation, that means that we can see some more upside in the near term. Market is like gradually moving up until the markets are not crossing 23,500. I think we are going to see gradual sort of activity. But broadly, I think the pain which was there in last 7 days was mainly into all these mid cap and small cap companies, and now they are like reversing from their lows. And the gains that just now Hormaz has also like highlighted. One thing is very clear that we are going to see some more upside in the near term. So 23,500 should be on the higher side, and broadly, I think 23,000 should be the important support levels for next few days. So I think between these levels, we are going to see some consolidation. But on the dismissal of 23,500, we can see short covering in the market.
Yeah.
Okay, all right. Thanks a lot for that, Shrikant. We'll come back to you. But today, I'll tell you, there was one of our researchers who had a very, very busy day, Sudarshan. Sudarshan, tell us about numbers that came in from the auto pack, tracking the two-wheeler names and then Maruti as well. So break it down for us.
So we'll start with Maruti. Maruti reported earnings, and earnings were absolutely in line with estimates, but stock has closed with a minor cut, and the reason is in the month of January, basically this year, stock has outperformed its peers. The stock of Maruti was up 10% in January so far, against down of 9% each for M&M and Hyundai. Now the question is, what all factors have worked for Maruti in Q3? First, raw material costs have stabilized in last few months. Second, realization has fallen. It was a minor fall, but it was in line with estimates. Second, discounts likely to have impacted margin negatively, because you would have heard the reports that in the last few months, discounts by all the players, whether it's in four-wheeler or two-wheelers, discounts have risen, and that likely to have impacted negatively. So talking about the numbers, EBITDA is increased by 14%. Margin continues to be the levels above 11.5%, has come at 11.6%. Coming to TVS, earnings were strong, and con call commentary that company has given, it's very positive. What does company say? It says Q3 margin has come at 11.9%. Now, company expects margin can improve from this level as well. Now, what the company will focus on? First, premiumization, and second, product mix. One important comment that company has made is that any investment, if company looks to do in EV, it would be based on the consumer feedback and if there is an opportunity. Also, brokers are positive on TVS Motor. UBS is a buy call with a target of 3,100 per share. JP Morgan too has an overweight call, and target is 31.30 per share. Last is Bajaj Auto. Earnings were led by margin. Margin has come in at about 20%. There was an expectation that this time margin may slip below 20%, but company has given the margin of 20.2%, above 20% for 6th straight quarter. And what all factors have worked for Bajaj Auto? First, demand remains healthy in 125cc plus segment, and also it continues to maintain the market share in the ICE segment despite the expansion that company has been taking in EV space. So EBITDA has increased by 20%, margin has come in at 20.2% versus 20.1%. What about the outlook given by Bajaj Auto? What did it say? In export segment, it continues to see the growth of 20% plus. Second, domestic motorcycle segment, if you remember, in H1 FY25, industry had seen a growth of 6%. But if you take off 9-month FY25, growth has moved in the range of 6 to 8%. Company says this range of growth for domestic motorcycle may continue going forward. Also, one segment that company continues to focus on is the higher end of bike, that is 125cc plus, and it says the growth in this segment will remain more than 100cc segment. So overall, it was a good diff by auto companies. Two-wheelers, very strong earnings, outlook is healthy, and Maruti will wait for the commentary.
Okay, all right. Thanks a lot for that. Sir, Mayuresh, your take on these auto numbers?
So, Nigel, I think a good set of numbers. I think the street was going in with softer numbers, as Sudarshan mentioned. Maybe some element of inventory built up, issues seen on volumes, the discounting factor probably working out on price degrowth. But in a certain sense, I think the numbers which have come through in line with estimates as far as volumes are concerned, as far as pricing is concerned, and even if you probably assume the discounting aspect along with input costs, which have probably gone a tad bit higher, I think numbers have been reasonably decent. TVS, I think, was the better set of numbers among all in the two-wheelers. Obviously, I think Bajaj had the margin expansion, as Sudarshan mentioned. But TVS's commentary also was equally solid. So I think the product mix that they're looking at, the expansion probably in North and West, as terms of more dealers and distributors getting added, their EV platforms doing well, and expectations of expanding their double-digit margins is a huge positive in terms of the EPS rating that the stock is probably reflecting. Maruti, again, I think, holding up very strongly. The expectation in terms of launches, specifically, I think the electrical platform that it is expected to launch over the next few months and the hybrids as well is going to be very, very interesting, because if the pricing is in a very, very sweet spot, I think they can garner a decent share with the sheer distribution network that they probably got, the after sales as well, and the service components, which become very, very reasonable to probably have in terms of your ownership of a vehicle itself. So yeah, I think the EPSRS ratings, I think Maruti and TVS probably look good. Anybody holding can definitely continue holding stocks.
Okay, all right, got it. Thanks for that, Mayuresh. Let's move on to another stock that was in focus today. Shares of Sirma SGX zoomed almost 20% after the company delivered what looked like a pretty strong set of earnings for the third quarter. Upasna, in fact, is here to tell us exactly what's worked for Sirma to get that 20% circuit going on the stock. Upasna?
Certainly, it was a strong beat, a strong set of numbers. The companies reported strong revenue growth, which was mainly led by companies' segments like auto, industrial and railways, which saw nearly 37 to 38% of a growth on a Y-on-Y basis. Now, coming to numbers first, revenue saw an uptick of 23%. EBITDA margins also expanded 320 basis points at 9.1%, and PAT saw a strong up move from 20 crores to as high as 53 crores. Now, management commentary in its conference call has remained quite upbeat, in which management has highlighted that it is on track to achieve its EBITDA margin guidance of 7% for FY25. Company has also onboarded significant clients in automotive and industrial segment, and it expects significant businesses from these segments next year onwards. Company's order book also stands strong at 5,300 crore, with 30% from autos and 37% contribution from industrial segment. Company has also guided that next quarter onwards, the net working capital days will come down to 60 days from 64 days currently, and it is aiming to bring down high volume consumer business contribution below 35% and increase the other segments. Mind you that the margin expansion was largely on the back of product mix change that has led to such a high margin improvement, is what the management has also highlighted. And lastly, company has said that it aims to increase high margin export business from 20% to 25% in the long term. So all in all, strong set of numbers and upbeat management commentary.
Okay, this was definitely a huge hit, 20% on Sirma SGS. Let's quickly, thanks for that, Upasna. Let's quickly run through two more important earnings reactions. JSW Energy was down almost 6% actually. after the Q3 numbers came out. There was a decline in the revenue and the net profit. But KPIT Tech was once again a very, very strong set of numbers, or strong at least relatively from the market's expectation standpoint. And the stock was up almost 9% after those earnings came in. The management here at KPIT Tech has reiterated their guidance. They're saying they'll maintain that guidance and achieve it for FY25. We have Vivek joining in with the details on these. Vivek.
Well, that's right. So JSW Energy, like we mentioned, the company has a significant portion of its capacity that is not tied up through long-term PPAs. So they sell it in the short-term market, or also known as the merchant sales market. Merchant sales prices were down 26% on a year-on-year basis. While there was not too much of an impact in terms of volumes, the lower prices is something that actually impacted their top line. So top line in fact degrew 5.5%. EBITDA was down 17.5%. Margins contracted on a year-on-year basis, and profitability was down over 32%. Now, what's the other factor that impacted weak merchant prices? And given the fact that the company started wind capacity operations in what is seasonally a weak quarter as far as the wind sector is concerned, that also impacted the earnings. So on the back of that, JSW Energy today saw significant selling pressure. Also remember, CRC recently disallowed a tariff as far as its battery energy storage was concerned. Company has appealed against this particular order at APTEL, and the next hearing is on 6th of February, which is a key point to watch out for. Now, coming to KPIT Tech, after peers' results, especially peers with exposure to the auto and automotive sector in Europe, market was anticipating a weak set of numbers. But the positive fact was that the management went ahead and reiterated its top-line growth guidance in the range of 18 to 22%, and in fact had the confidence to go ahead and upgrade the EBITDA margin guidance to 21% plus from the earlier 20.5%. This is something that the street took quite positively. The constant currency revenue growth of 2% versus the estimated 1 to 1.5% growth that the street was working with. EBITDA margin expanded on a sequential basis, and also when you're talking about the 9-month constant currency revenue growth came in at 20.7%, a healthy print, and this is something that the street liked.
Okay, all right. Thanks a lot for that, Vivek. Srikanth, I want to ask you about KPIT Technologies first. The stock has seen a sharp correction. These numbers look good, upgrading guidance and all, street likes it. ER&D, space. The street was nervous. Where does it find support?
Nigel, if we see the technical pattern of the stock, then since last almost 1 year, whenever the stock has fallen to the levels of 1300, we saw a good amount of buying interest in the stock, and eventually the stock has managed to come back to at least 1500, 1550 sort of levels. And today's recovery, along with good volumes and crossing past several days highest levels, clearly indicates that the stock has reversed, and we could see again the levels of 1500 or 1550. So in case if there is any correction because of any reason, then also it's a buy. But even at current level, it's a buy with a target of close to 1500.
Okay, all right, got it. Thank you very much for that, Srikanth, as well as Mayuresh. Good to have you on the show today. Thank you for all of your advice. With that, we have to take a very quick break, come back on the other side, and we'll get you the top corporate voices of the day along with the events to watch.
Well, let's take a quick look at all the top corporate voices that we had during the course of the day. First up, CGE Power. The stock fired up in trade after reporting a strong third quarter showing. The management said it's bullish about the opportunities in India as well as outside India. They added, that the railway business is growing in the high double digits, and the management says that the market in industrial segment is not doing so well, but are still growing. It guides for the PBT margins to closer to around that 14 to 15%.
Second on the list is Acme Solar. The stock soared in trade over a strong third quarter performance. The management told CNBC-TV18 that in the next 2 quarters, the company will add 450 megawatts of capacity. The company is also saying that it's at a comfortable debt to EBITDA level. It is also expecting EBITDA to cross 4,000 crore rupees by FY28. Okay, let's now move to the key events and earnings to watch tomorrow. We have Abhishek here with the details.
Well, to begin with, in EU expected to keep the rates at 4.5%. GDP growth rate quarter-on-quarter advances will come out estimated at 2.8% versus 3.1% that it was last time around. Initial jobless claims will also come out. It's estimated to be at 2,20,000 versus 2,23,000 that it was last time around. Core PCE prices quarter-on-quarter that will also come out estimated at 2.5% versus 2.2% previous time. With respect to stocks going ex-dividend in India tomorrow, Hudco interim dividend of ₹2 will be adjusted to the stock price. Siemens ₹12 and TCIL, that is Transport Corporation of India Limited, that will be about ₹4.5 in terms of interim dividend. Earnings season, so key results tomorrow. We need to watch out for L&T, Bajaj Finserv, Bank of Baroda, Adani Enterprises, Adani Ports and SEZ, as well as Dr. Lal Pathlabs. And more earnings tomorrow. Jindal Steel and Power Limited, Raymond, Nesco, BL, Astral, as well as Shree Cement. Back to you.
Okay, all right, Abhishek, thanks a lot for that. And before we wrap up, let's talk about the Growth Code, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to help you navigate the markets and make informed investment decisions. Today, we help traders understand the difference between high-frequency trading and algo trading.
Algorithmic trading and high-frequency trading, or HFT as we know it, they're often confused, but they're different. They use computer algorithms, both of them, to execute trades, but the key difference between the two is in speed and strategy. On the one hand, algorithmic trading uses algorithms to automatically execute trades based on set rules like price, there could be volume, time. It aims to trade efficiently to reduce human error and improve the accuracy of those trades. Now, this can involve various strategies such as order routing, market making, or even arbitrage. It's commonly used by institutional investors, hedge funds, and some individual traders as well. High-frequency trading, on the other hand, is a subset of algorithmic trading, focused on executing trades at incredibly fast speeds, sometimes making millions of trades in fractions of a second. The goal here is to capitalize on any tiny price movements that last just nanoseconds or microseconds. The main difference here is speed. Algorithmic trading can execute trades at various speeds, but HFT is all about speed, processing thousands of trades every day. HFT targets short-term gains by exploiting small price changes, whereas algorithmic trading may involve fewer, slightly longer-term trades. Is it suitable for retail investors? Well, for algorithmic trading, it is accessible by various platforms offering automated trading tools, making it useful for individual traders. However, HFT typically requires massive investments in technology and resources, making it out of reach for most retail traders. In short, HFT is a fast-paced subset of algorithmic trading, which encompasses both short and long-term strategies. In short, all HFT is algorithmic trading, but not all algorithmic trading are HFT.
sharp insights in the political arena to all the excitement from the world of sports. TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The bulls reclaim more lost ground. The Sensex gains over 600 points. The Nifty moves back above 23,000. Mid-caps outperform with the index gaining over 2%. Maruti Suzuki meets estimates in Q3. Revenue up 16%. Profits rise 13%. Margins contract due to discounts even as it remains ahead of its peers like Hyundai India. ITC Hotels lists at a discount of nearly 31% from its implied share price after the demerger. The listing price is in line with analyst estimates. The stock hits 5% lower circuit. Analysts estimate a passive outflow of over $165 million as the stock moves out of the benchmark Nifty and Sensex. CNBC TV18's Newsbreak is confirmed. The cabinet approves a 16,300 crore rupee mission to develop 24 critical minerals over the next 6 years. The cabinet also clears the ethanol price, leading to a rally in sugar stocks. After Rashtriya Ispat Nigam, the government may adopt a strategy to revive select PSUs that are financially weak. Sources say the government is not in favor of banks taking haircuts. Fund infusion, mergers and consolidation are some of the options on the table. Many people feared dead and several injured after a stampede at the Mahakumbh in Prayagraj in the early hours this morning. President Murmu and Prime Minister Modi expressed condolence. Opposition accuses the UP government of mismanagement. The state is yet to provide details on the number of people dead. The Trump administration gives federal workers time till February 6 to make a choice: return to office full-time or resign and get paid till September. This comes days after Trump's executive order on a return to office mandate. The U.S. government also made it clear that even employees who choose to stay on may eventually bear the brunt of downsizing. After a prolonged decline due to the pandemic, students are making a modest recovery on learning outcomes, according to the annual Status of Education report. But a majority of children in class 3 and 5 are still unable to read a class 2 level text or solve simple math problems. Well, let's start with the market action. It was a day of recovery on the Lal Street. We saw some broad-based buying
and that helped the markets gain for the second day. The Nifty reclaiming 23,100, the Sensex up 630 points, 76,533 is where it closed. The Nifty Bank higher by about 300 points, and it's a 2.5% move up on the Nifty mid-cap. Remember, the Nifty mid-cap as well as the small-cap index has been beaten down quite significantly, but today a recovery underway as far as the markets are concerned. But staying with market-related news, the MCX has also announced that it will remain open for normal trade on the 1st of February in light of the union budget. Remember, both the NSE and the BSE have already said that they will open for normal trade on the 1st of February, which is of course a Saturday, but it is the day of the union budget, and so the markets will be open on Saturday. Now, the US Fed commenced its two-day policy meeting yesterday. This is its first policy meeting in the second term of President Donald Trump. The latest Fed survey by CNBC highlights that 65% of respondents see 2 rate cuts in 2025 and 61% forecast at least 1 cut in 2026. On Trump's tariff threat, 77% of the respondents see it as a negative for inflation, while 73% said it is negative for growth. 55% believe that Trump's deregulation agenda will reduce inflation, while 68% said it will boost growth. And you can catch the coverage of the Fed meeting from 11 p.m. onwards right here on CNBC-TV18. In earnings, auto major Maruti Suzuki's third quarter numbers in line with street estimates. Net profit rose nearly 13%, revenue up 16% on an annual basis. Margins contracted on the back of discounts despite being ahead of peers like Hyundai India. And Mahindra Sudarshan standing by now to take us through Maruti's report card. Sud.
So if you talk about the earnings, Maruti's Q3 earnings were absolutely in line with estimates. But the question is, why did the stock fall? If you take a look at the stock performance of this month in January 2025, Maruti shares have moved 10% higher, and it has outperformed peers M&M and Hyundai. Shares of M&M and Hyundai were down 9% each. So what all the factors have worked for Maruti in Q3? First, raw material prices have stabilized in last few months, and that seemed to have helped margin positively. Second, volumes have moved higher both sequentially and year-on-year. Sequentially, it was up 5%. Year-on-year, it was up 13%. Third, realization, or can say average selling prices, have fallen. That have seen a minor fall, but it has come in line with estimates. Second, margin has fallen 30 bips sequentially, but it has outperformed Hyundai. Now, talking about the numbers, profit was up almost 11%, or say 13%. Revenue has increased by 16%. EBITDA was up 14%, and margin has been above the levels of 11.5%. It has come at 11.6% versus 11.7% in the same quarter last year. Now the question is, what exactly we would be expecting in the commentary? First, what does company say about the demand? Second, if there is any change in the outlook for FY25. Remember, after Q2, company had said industries, the outlook for FY25 is in the range of 3 to 4%. Will we see an uptick? Because if you two-wheeler companies, both TVS and Bajaj Auto, have said that now the growth for two-wheelers in the range of 6 to 8% versus 6% it was in H1 FY25. Will we see the same thing for four-wheeler as well? So on earnings, it was in line, but all the eyes will be on demand outlook by Maruti.
Yes, most certainly. So many thanks for joining us. And staying with earnings, Adani-owned Ambuja Cements posted a 17% year-on-year volume growth in Q3. Profits rose 242% year-on-year, aided by government grants and a sharp surge in other income. Revenues grew 13% along with total income that rose by 28%. However, margins have seen a sharp contraction compared to last year. The cement major also said that its board has approved an open offer to acquire up to 26% stake in Orient Cement. Well, it's time now for our special budget countdown with industry leaders. Finance Minister Nirmala Sitharaman faces an uphill task as she presents the budget on Saturday, the 1st of February. Now, there has been a clamour from India Inc. to hike the capex budget and review the new income tax regime slabs to boost demand. But does the government have the elbow room? India's debt to GDP ratio is at 85%, according to Goldman Sachs. It's the highest among emerging markets. There's also a fiscal glide path of 4.5% by FY26 that's staring at the government. Disinvestment receipts are likely to fall 50% short of the FY25 budget estimates. The subsidy bill is also expected to be higher by about 18% above the FY25 budget estimates. Now, as per FICCI's pre-budget survey, which was conducted across 150 companies between December and middle of January, the thrust on capital expenditure has been the key budget ask. Industry has pitched for a 15% hike in capex, a simplified tax regime and tax certainty topping the wish list. Well, to take the discussion forward, we're now joined by FICCI's President Harshvardhan Agarwal. He's also the Vice Chairman and MD at Imami. FICCI's Senior Vice President Anant Goenka, also the Vice Chairman at RPG Group. And with us on the program, FICCI Vice President Vijay Sankar. He's also the Chairman at the Sanmar Group, and Rashesh Shah, the former President of FICCI and the Chairman of the Edelweiss Group. Gentlemen, appreciate you joining us here on the program. Harsh, let me start by asking you, the big hope continues to be on the capex front. Anywhere between 15 to 20% is the ask from industry. What we saw last time around was a number of 11 lakh crores coming in from the government. The heavy lifting on capex, the expectation for industry is that the government will have to shoulder that responsibility. What else besides capex do you believe is the need of the hour today?
First of all, thank you, Shane, for having us here. See, as well, what we know, the government has been having a development and growth related budget, for the last few years. And what we expect as FICCI is the continuation of that. And in that continuation, as you said, yes, capex expenditure increase is one of the wish list, which from FICCI side we have recommended to the government. But apart from that, one of the biggest challenge, we are seeing the consumption slow down. So what does the government do to take care of that? How do they boost the consumption is something, what we would like to see in the coming budget. Apart from that, from the perspective of how do they further boost and help the manufacturing sector so that, the Atmanirbhar Bharat's agenda of Make in India, how does the manufacturing industry, they get a boost. So things around that, is what are the most critical ask from our side and what we would expect to see in the coming budget.
Okay, Anant, let's take that forward. So two specific recommendations there from Harsh, more for the manufacturing sector and more to boost consumption on both those fronts. Let me start by talking about consumption. The expectation is that some relief for the middle class, specifically as far as tax breaks are concerned, some further exemptions and tweaks, some relief on standard deduction. But given the way that we've seen this government operate across several budgets over several years, how much are you betting on a significant tax relief coming in?
Right. I think we expect to see some tax relief, not a major overhaul of taxation, but I'd say something at the low levels of the lower and middle income class to enhance some disposable income on their end is what we are hoping for. In addition, we had a thought of recommending a temporary issue of consumption vouchers, again, to the same class of lower and middle income with an expiry date so that there is further spurt of expenditure on their part. In addition to that, we felt that food inflation is a big area of concern. And here, I'd say the data at multiple points of what is impacting food inflation needs to be collected. A mission from the PMO side would be very useful with long-term and short-term impacts in terms of one is on the short-term on the logistics side, and in the long-term in terms of addressing supply-side constraints to control food inflation would also help.
When you talk about these consumption vouchers, what's the amount and what is the expiry date that you're recommending?
We didn't have a specific amount in mind. I think that's for government to really look at balancing the fiscal glide path, and that's important that they maintain that. But based on what they want to do on the income tax side, as well as this, some kind of balance, and an expiry, again, possibly of about 6 months or so that in the near term, there is some amount of increased expenditure.
Anant, on manufacturing specifically, one of the key asks, of course, is, and the hope is that the concessional scheme will be brought back for new manufacturing units. That's what we're picking up on, that is something under active consideration. Whether it's a scheme with a 15% tax rate or an 18% tax rate remains to be seen. But how much will that spur this private capex demand from the government's end, which has, of course, been on the table for long?
Right. I think private capex I think once consumption is taken care of, hopefully that will result in higher private capex increase to a certain extent. I think there would be long-term actions which the government has continuously focused on should continue. The Jan Vishwas Act 2.0 is something that we are looking forward to. Maybe some study on the regulatory aspects. That's been a little bit of a challenge overall. And how do we balance between meeting its objectives as well as minimizing the negative consequences of over-regulation? So that balance becomes very important. And we think the China plus one opportunity with such an uncertain US government coming in, the issue of tariffs coming into China, can that be a great tailwind for India over the longer term as well? Manufacturing, we strongly believe, is maybe the number one factor that will result in job creation and spurring of the economy. And we believe strongly that that has to be focused on.
Well, that certainly will be something that the government will try and provide additional measures towards. But let me bring Vijay into the conversation as well. Vijay, manufacturing, consumption and deregulation. And I would imagine that perhaps the economic survey is going to be the one that weighs in on the regulatory aspect much more than the budget. But what are you going in with as far as expectations from Budget 2025?
I think as Harsh and Anand spoke, I think the key is the slowdown in consumption, which needs to be addressed in the short run. And in the medium and long run, the health of the manufacturing sector, especially given the huge opportunities that we're seeing post the US government and the China plus one opportunity. But there are some things to be done on ease of doing business, including cutting down the multiple slab tax rates, putting more money in the hand of the consumers. I think that is certainly a reason to, raising tax slabs, including perhaps the basic exemption limit at the lower levels. This would, ideally, these slabs should be adjusted in line with inflation, which will help protect the lower end, the earnings at the lower end, and put more cash in the hands of the consumers at the lower end. I think that is going to be extremely key. Otherwise, what we see is generally tax at most is taxed at the slab rates. All income is taxed at the slab rates virtually now. And it is, in our view, it is a little high. There's no easy answer. The government does have a difficult task with the fisc. But, it is something that I'm sure the government will live up to industry's expectations.
Yes, Neelkant Mishra has left us with a number of about 80,000 to 1 lakh crore rupees. That's the headroom for the government to be able to play around to ensure that they stick within the fiscal parameters that have already been outlined in the budget. But Rashesh, let me come to you. We need the fiscal policy and the monetary policy to work in tandem to ensure that we continue to build momentum as far as growth is concerned. What do you expect on the fiscal side and on the monetary policy side? We do have an MPC meeting coming up. The expectation is that the MPC will move with the rate cut, but already the liquidity issues being addressed by the RBI with more liquidity enhancing measures being announced ahead of the budget. How much relief do you anticipate that's brought in?
Yeah, actually, it is actually very important because, as you correctly said, I think both the fiscal policy and the monetary policy have to work in sync. Last year, if you saw, because of elections and all, government spending on capex came down. It was not as high as expected, and we expected it to really start picking up in second half, but has not happened. So some level of fiscal looseness has not been there last year, as well as last year because of RBI intervening in the forex market and all. Even the liquidity conditions have been very tight. So both, we are hoping that fiscal opening up and the monetary is around us in the next couple of weeks. I do think it is very important for both RBI and the government to say we need to get to 8% growth. I think holding at 6.4, 6.5, which is expected for this year, is not going to be good enough. We have to break out of this logjam that we have got in, and both RBI and the government will have to work in sync. I do expect that RBI to cut rates. RBI started working on liquidity, but even now, I think half the liquidity pressure has gone away. Other half is there. RBI also has some LCR norms that were supposed to kick in. I do hope they postpone them because that LCR norms will also crunch liquidity even further. So I think RBI should open up liquidity plus the rates coming down, because that will be a strong signal to say we are going for growth. And I expect the government also to say we want growth. Now, how do we get growth? through capex and through consumption. For consumption, I think cutting rates, easing that whole thing, the ease of doing business, spending on capex, incentivizing capex from the private sector. Our view is that the private sector will start spending on capex once the consumption demand starts picking up. So I think that will be the key.
Yeah, perhaps easier said than done, Rashesh, because there's also a challenge and a dilemma facing both the Reserve Bank as well as the government, especially in light of what we're seeing happen as far as the rupee is concerned. Inflation continues to be above the comfort levels of the Reserve Bank. Growth is under pressure at this point in time. So really, when we talk about the expectation of a rate cut in the context of a depreciating rupee, how much room is there for the Reserve Bank to move?
So actually, it's a key thing. Is the rupee really depreciating or appreciating? Because if you look at the weighted average rupee, we have actually appreciated vis-a-vis our other competitors and other emerging markets in the last year. We have fallen vis-a-vis the US dollar, but against the basket of all currencies, we have appreciated. Some of our export competitiveness has gone down. Hopefully, oil price is inching down under the new US administration. I think drilling will go up. I would expect that oil prices will come down. So I think we may have a little bit of room. And I think, you can't have everything. So somewhere you'll have to let loose. And a lot of us believe that allowing the rupee a little bit more adjustment room might be the easier answer to get to 8% growth.
Ananta, how are manufacturers looking at what is happening as far as the currency market is concerned? And, there is, of course, one side that believes that it actually will enable India to be much more competitive. It aids our exports. But we've also got an interesting, commentary coming in from the Federation of Indian Exporters saying quite the contrary. So how are manufacturers looking at what's happening with the rupee and what is the view from here?
I think it would vary sector to sector here because, there is an import component as well that comes in. So net, if you're a net exporter of products, it's better for you if the rupee is depreciating. But net, I'd say that there is not much difference that happens because in the end, we also import a fair amount of raw material. So it's about balancing that out. But overall, of course, it should aid imports as rupee depreciates against the dollar. Now, going back to the China plus one opportunity, if there is a duty imposed on China, then the US market opens up and the relevance of dollar-rupee parity makes a big difference. And that can become a very large opportunity for Indian exporters over time. I think it is upon Indian entrepreneurs now to go out and look at those markets, solve customers' problems in global markets, and develop products for those markets as well. So some amount of the onus lies on us as well.
Absolutely. The Indian entrepreneur will have to be nimble and agile to make good of the opportunities, but we will also have to wait to see whether tariffs are imposed on India and across which sectors. It's a threat that President Trump has reiterated several times over already, not just on the campaign trail, but in office. But Harsh, let's talk about what's happening on the FMCG side. And, we've seen this tepid volume growth continue now for several quarters. Is there any green shoots visible at this point in time? And what are you attributing this consumption slowdown to primarily?
See, what we have seen that earlier, since last 2 years, in fact, rural was the area, where there was concern and consumption was slow. But now what we see is rural has come back, it's growing much better than the urban areas. And the real problem is in the area of, the middle class, the lower middle class, is where the biggest challenge is. If you see, the overall average retail consumption of Indian consumers, 75% of their spend goes in food and grocery. So which leaves them with only 25% to be spent on discretionary areas. So any inflation in food really have an impact on the discretionary spend. So the point is, how does the government help in controlling the inflation in food? Certainly will help in consumption to revive. Apart from that, green shoot perspective, yes, the inflation, we are seeing, the food inflation coming down a little bit. So going forward, yes, if it comes down further, then it will certainly help.
Vijay, let me end by asking you, any big ticket ideas that industry is expecting? Last time around the focus really was on jobs by way of that internship scheme and so on and so forth. But anything out of the box, out of the usual that industry is expecting this budget to deliver on?
Certainly on the tax front, Shireen, and you alluded to it. I think extending, the incentives for new manufacturing investments is something that not too many people are speaking about. If that happens, it will certainly give one small kicker to private investment. More rationalization on the tax front. I think we are all hoping that the FM delivers more by reducing tax rates. I think that is something that I think all of us, whether it's industry or private individuals, all of us are looking forward to, Shireen.
Well, the FM did in the budget promise a direct tax overhaul, but that is more to do with simplification as opposed to rate rationalization. So we will have to see what more gets spoken of. But of course, the expectation is that some relief, whether it is by way of additional exemptions or perhaps even a change as far as the slab is concerned, in the 30% bracket, our understanding is that maybe that is something under consideration, but only time will tell, and we'll know on the 1st of February which way the finance minister moves the needle. Harshvardhan Agarwal, Anant Goenka, Vijay Sankar and Rashesh, always a pleasure. Many thanks for joining us here on CNBC TV18 with your budget expectations as we count down to the union budget. We will head into a break. There's a lot more coming up. Don't go anywhere. We're back in a moment. Celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
In general, for the portfolio, which is a large India-focused portfolio, it has only 10 to 15 large and liquid stocks. I mean, nothing which trades less than $10, $15 million will ever be part of the portfolio. It's a very large and liquid portfolio. We went into an out of consensus overweight on staples right at the start of this month, and an out of consensus underweight, a big underweight on industrials again. So those were the two big calls that we took. Other than that, IT and healthcare are our other underweights. While banks is a small overweight, commodities is the other overweight that we have in the portfolio. We've been quite worried on mid caps for a few months. Maybe we were a little early. But I think if you look at relative valuations on mid caps and the fact that there is some uncertainty around near-term economic growth in terms of, maybe that we are experiencing a slowdown, and with those sky-high valuations, typically they would be far more vulnerable. On a relative basis, we clearly have a preference towards large cap over mid caps and small caps. So large caps is clearly our preferred area. In fact, I would say our preferred area is mega caps. If you were to look at our India-focused portfolio, we are quite overweight mega caps. I mean, a lot of stocks which are over $40 billion market cap over there. So that's the part in terms of preference within the capitalization. However, on markets in general, we've reached a very interesting point where fundamentally
we were seeing that this overvalued period would cause a correction. That corrections happened. We kind of were worried about it right at the start of October, and that's kind of played over the last 4 months. We are down even on Nifty 12-13% or so. Yes. Now, interestingly, our proprietary gauge called the sentiment gauge, which tries to quantify sentiment, called the India Bull Bear Index, has recently hit extreme bearish sentiment. In fact, this is the sometime one of the days last week when we saw it, and maybe it will be there somewhere this week as well. Sentiment as measured by this gauge was the weakest since the COVID lows. Okay, so that is a very interesting point. Typically, it has a good track record in kind of whenever sentiment goes to an extreme, to say that now we could have a team.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Bulls reclaim more lost ground. Sensex gains over 600 points. Nifty moves back above 23,000. Mid-caps outperform with the index gaining over 2%. Maruti Suzuki beats estimates in Q3. Revenue up 16%. Profits rise 13%. Margins contract due to discounts even as it remains ahead of peers like Hyundai India. ITC Hotels lists at a discount of nearly 31% from its implied share price after the demerger. The listing price is in line with analyst estimates. The stock hits 5% lower circuit. Analysts estimate a passive outflow of over $165 million as the stock moves out of the benchmark Nifty and Sensex. CNBC-TV18 News break confirmed. Cabinet approves a 16,300 crore rupee mission to develop 24 critical minerals over the next 6 years. Cabinet also clears the ethanol price hike, leading to a rally in sugar stocks. After Rashtra Ispat Nigam, government may adopt a strategy to revive select PSUs that are financially weak. Sources say government is not in favor of banks taking haircuts. Fund infusion, mergers and consolidation are some of the options on the table. Many people feared dead and several injured after a stampede at the Mahakumbh in Prayagraj in the early hours this morning. President Murmu and Prime Minister Modi expressed condolences. Opposition accuses the UP government of mismanagement. The state is yet to provide details on casualties. The Trump administration gives federal workers time till February 6 to make a choice: return to office full-time or resign and get paid till September. This comes days after Trump's executive order on a return to office mandate. The US government also made it clear that even employees who choose to stay on may eventually bear the brunt of downsizing. After a prolonged decline due to the pandemic, students are making a modest recovery on learning outcomes, according to the annual Status of Education report. But a majority of children in class 3 and 5 are still unable to read a class 2 level text or solve simple math problems. Many people are feared dead and several have been injured after a stampede at the Mahakumbh in Prayagraj early this morning. President Murmu and Prime Minister Modi have expressed their condolences to the victims' families. The state is yet to provide details on the casualties. In fact, the UP police maintains that there was no stampede and it was only a matter of overcrowding. Eyewitness accounts described surging crowd on the banks of the Ganga around 2 a.m. in the morning to take a holy dip. Crowds converged at the Sangam, the place where the Ganga and the Yamuna rivers meet. The witnesses described chaotic scenes where people fell down to the floor as crowds surged in multiple directions. The opposition has accused the UP government of mismanagement, offering condolences to those affected. Rahul Gandhi said mismanagement and a special focus on VIP movement instead of common devotees are responsible for this tragic incident. Congress President Mallikarjun Kharge also blamed VIP movement and half-baked arrangements. Samajwadi Party Chief Akhilesh Yadav urged the state government to help those affected. The Chief Minister of Uttar Pradesh, Yogi Adityanath, has said that the situation is under control.
पूरा प्रशासन मौके पे वहाँ मौजूद है। रात्रि को 1 से 2 बजे के बीच में अखाड़ा मार्ग पर, जहाँ पे अखाड़ों के अमृत स्नान के दृश्य से बैरिकेड्स भी किए गए थे, तो बैरिकेड्स को फांद करके आने में कुछ श्रद्धालु गंभीर रूप से घायल हुए हैं। उन्हें तत्काल हॉस्पिटल में पहुंचा करके उपचार आदि की व्यवस्था उनके लिए की गई है।
Moving on to other business updates, ITC Hotels made its D Street debut, listing at a 31% discount from its implied price of 260 rupees per share. The stock listed at 180 rupees a share after the demerger. However, this was in line with the analyst expectations. Mangalam Malu is here with the details. Mangalam, the listing in line with the analyst estimates.
Well, if you look at the discovered price of the ITC Hotels business, it's close to around 178 odd rupees per share, and which is pretty much in line with what the analysts had expected. Optically, the stock looks a lot lower than the implied value of 260 rupees per share. But remember, the implied value was basically implied by the difference between the stock price opening on the day it went ex-hotel business versus the previous close itself. The underlying assumption was the entire difference was the value of the hotels business, which is not always the case. If you look at, close to around 170 to 180 odd rupees, the stock trades at anywhere between 26 to 28 times FY26 EV to EBITDA, which is fairly in line with what the street was ascribing in terms of a multiple to that business as well. ITC Hotels, for instance, should be positioned as per analysts somewhere between Indian Hotels and Chalet Hotels as well. Chalet Hotels close to around 25 times, Indian Hotels trading at 37 times at a premium to all the other players in the industry because of its leadership position. Put ITC somewhere in the middle, 26 to 28 times, and that gives you the value of close to 170 to 190 rupees, this range in which the stock has been trading, and the price which was discovered in today's trading session itself. The question now, fundamentally, we'll keep an eye out on the hospitality sector, how this business performs. Remember, it's a debt-free company with 1,500 crores of cash. But technically, we'll keep an eye out on the flows around the stock as well, because as per Nuvama Quant, the stock is expected to meet criteria for inclusion in MSCI Global Small Cap Indices. So if and when that notification comes in, there would be some inflows of passive funds. But at the same time, over the next 3 days, we may see outflows from passive funds as well, because remember, because of this technical adjustment of the demerger, the stock is still a part of the Nifty. So it's the 51st Nifty stock. It will be excluded from the Nifty 3 days from now itself. And once that happens for both Nifty and Sensex, there could be potential outflows of $100 million for the Nifty and $65 million for the Sensex as well. So we'll keep an eye out on those parameters here.
Thank you, Mangalam, for that. Moving on, CNBC-TV18 News Break confirmed the Union Cabinet has approved a 16,300 crore rupee mission to develop 24 critical minerals over the next 6 years. Public sector units will invest 18,000 crore rupees separately in the mission. Meanwhile, sugar stocks surged in trade up to 7% in early trade today. This development comes after the Cabinet Committee on Economic Affairs approved the ethanol price hike. The union government has raised the price of ethanol derived from C-heavy molasses to 57.97 rupees a litre from the current 56.5 rupees under the ethanol blended program.
C-heavy molasses, CHM, यानी शुगर केन की जो डिफरेंट प्रोसेस के लेवल्स हैं, उन सब में CHM का उपयोग हो, उसके हिसाब से एक बड़ा फैसला लिया गया है। हम सब जानते हैं कि एथनॉल के उपयोग से देश में इकोनॉमी में बहुत बड़ा एक बेनिफिट हुआ है, और आपने इस स्लाइड पे देखा होगा विन विन विन, 3 बार विन है। किसानों के लिए भी फायदे में है, फॉरेन एक्सचेंज भी बचता है, और एनवायरनमेंट को भी लाभ होता है।
19.9%, 19% is there. Now, if you have a target of 20% by the end of the ethanol blending year, which is October, and you are already in January talking about it based on previous figures, you don't need to have any knowledge of, rocket science or anything to know that you've already reached the 20%.
The National Company Law Appellate Tribunal will hear my trips Nishan Petty's backed Busy Bee plea challenging the Go First liquidation. The plea has sought a stay on liquidation and asked for submitting revised resolution plan for the airline. The company has said that Go First liquidation is against national interest and will lead to higher airfares and fewer consumer choices. The company also blamed the resolution professionals for failing to provide a resolution plan. The Supreme Court has ordered the centre to provide details on the number of FIRs registered against men for pronouncing divorce through triple talaq. The court also questioned the need of a penal law when the practice of divorce by triple talaq had been declared void. The bench was hearing a batch of PILs challenging the law imposed by the centre, which criminalised triple talaq. The two-judge bench will now hear the matter in the week commencing on the 17th of March. IIFL Finance has confirmed that the Income Tax Department launched a search operation at their registered office. The company also said that it's fully cooperating with tax officials. However, did not provide specific details on the alleged violations. This comes a day after CNBC-TV18 reported that IIFL group companies were under the IT department's scanner for alleged tax evasion. The Mumbai International Airport has announced the redevelopment of Terminal 1 at Chhatrapati Shivaji Maharaj International Airport. The project will begin in November and is scheduled to be completed by 2028-29. The capacity of the revamped terminal is expected to increase by 42% annually. All right, it's time for a short break, but coming up next, the Trump administration gives federal workers time till February 6th to make a choice, return to office full-time or resign and get paid till September. More on that when we return.
This could be a contra move up. The bit that is more dicey is whether this will be, whether this is the end of the correction or whether this is just a rally and a recovery where sentiment normalizes. We have another leg down. But for now, I would want to, for the ones who are kind of short on the market, this is something where one needs to kind of bear in mind that sentiment has gone to a pretty extreme level as per our proprietary benchmark, which has traditionally been very good in predicting the extreme points in the market.
Esteemed guests and friends, above all today, we express our deepest gratitude to our visionary Prime Minister, Shri Narendra Bhai Modi ji. Pandit Deen Dayal Energy University owes its very birth to his extraordinary vision. All of you are benefiting from what Narendra Bhai thought in the early 2000s. And when he called me and said in 2005 that we have to build one of the finest institutions in Gujarat, right? And that is what we have achieved from 2007 onwards. So we will always be grateful to our Prime Minister. Long before he became Prime Minister, he foresaw that India needed Atmanirbharta in energy. Over 20 years ago, he told me he wanted Gujarat to lead the nation in energy and energy products. He also told me that Gujarat should take the lead in cultivating world-class human resources needed to achieve India's clean energy ambition. That is how he helped establish this pioneering university. Friends, there are many things that we learn from our beloved Prime Minister. Let me mention just 2 lessons here.
Welcome back. It was a day of recovery on Dalal Street as it saw broad-based buying helping IT gain for the second day. Surbhi Upadhyay is here with the day's trading action. Surbhi, a good day for the bulls.
Well, it was a day of a solid pullback, not just in India, but actually around the world. But the good thing for us here was that today it was not a sell the rally kind of a day because the gains were intact and we had a trending up session, so to speak. The net result, the Nifty put on well over 300 points and we have a close above the 23,100 mark. Not just that, why else am I saying that it was a solid day? Because this was a very broad-based recovery. It was visible in the mid-cap index, it was visible in the small-cap index. These indices were up anywhere between 2% to over 3% on the small-cap indices. And it was also a very diverse recovery across sectors. And you'll see that when you look at the nature of the recovery across the sector spread out. Also, the advanced decline ratio was extremely strong. We had a robust ratio after a long time when we had over 2,000 stocks advancing in the market. In terms of sectors, like I'm saying, so realty and IT, of course, were leading the pullback, but energy, financials, PSU stocks, metals, all of these parts of the market were up and about. Actually, it was only the FMCG index, which had a tinge of red on it by the end. Otherwise, it was a fully green-looking screen today. Let's talk about the key Nifty movers. So from the financial space, you had Shriram Finance, Bajaj Finance looking up. There was BEL on the upside. Tata Motors was positive ahead of numbers. Infosys, Bajaj Auto, SBI Life, HDFC Life. These were the names on the life insurance side that were doing well. The Bank Nifty itself was higher, a gain of over 2% on the Bank Nifty. So all your large cap, banking names were taking this market up today. A lot of good earnings got a very good response from the market. So that also told you that the mood was different. Some examples would be, for instance, in Ami Organics, the Deepak Fertilizers. These are chemical stocks which have anyway been beaten down and the recovery has been very elusive. But the earnings were good and the market was saluting them today. Then you have names like Lee Travenues Tech, Ixigo, which was reacting well to numbers. KPI Tech surged 7-8% after the numbers came out. Likewise, on TVS Motors, there was continued buying, second day running, because the numbers and the commentary looked quite solid. Suzlon, CG Power, I could go on. It's not like there were no earnings misses at all. Yes, we had some red names, JSW Energy, Bosch, Star Health, they were slightly on the lower side. But now it's going to be about the global picture again to see if there's continued stability on Wall Street, particularly on those tech stocks. Of course, we'll come back with the Fed announcement as well tomorrow morning. No change is expected. And for the Nifty, it's going to be very important for this recovery to build and continue. It'll have to take out some, crucial levels going forward. And the next hurdle is going to be around the 200 DMA, which is coming in around the 23,370 mark thereabouts. So slow and steady, but for today, a good day after a long time.
Right, thank you, Surbhi, for that. Tata Motors has reported its numbers for the third quarter. Sudarshan Kumar joins us with the details. Sudarshan, take us through the numbers, please.
So Tata Motors has seen a rebound on a sequential basis, but overall earnings are looking lower than estimates. But on JLR front, company has reported a strong set of earnings. So first, talking about the earnings year on year, consolidated profit is down 23%, while revenue has seen a minor increase of 3%. EBITDA is down 15% and margin has come in at 11.5% versus 13.9%, which is much lower than our estimate of 13.7%. But if you look at sequentially, profit is up 63%, revenue is up 12%, even EBITDA has increased by 12%. Now, on the JLR front, revenue is higher by 1.5%, EBITDA margin has come down by 200 basis points, and EBIT margin has come at 9%, which is higher than the company's FY25 guidance of 8.5% or plus, or basically more than 8.5%. Now coming to the outlook on domestic front, company says JLR wholesales are expected to improve further in Q4, but it is remain watchful on the overall demand situation, especially in China. Now on the guidance, company says for JLR, it maintains EBIT margin guidance of 8.5% or more. Also, it says it is on track to achieve its profitability and cash flow targets in FY25. So, on the earnings, overall, it's a miss. For JLR, it's a strong, but as far as outlook is concerned, it's looking healthy.
Right, thank you, Sudarshan, for that update. Moving on, the US Fed commenced its two-day policy meet yesterday. This is its first policy meeting in the second term of President Donald Trump. The latest Fed survey by CNBC has highlighted that 65% of the respondents see 2 rate cuts in 2025 and 61% forecast at least 1 cut in 2026. On Trump's tariff threats, 77% of the respondents see it as negative for inflation, while 73% said it's negative for growth. 55% believe Trump's deregulation agenda will reduce inflation, while 68% said it will boost growth. You can catch the entire coverage of the Fed meeting from 11 p.m. onwards right here on CNBC-TV18. US President Donald Trump has invited Israeli Prime Minister Benjamin Netanyahu to the White House on the 4th of February. The two leaders are likely to discuss peace in the West Asia region and methods to counter shared adversaries. This trip will make Netanyahu the first foreign leader to visit the White House in Donald Trump's second presidential term. And sticking with the US, the Trump administration has given federal workers time till February 6th to return to office full-time or resign. Workers who choose to resign will receive pay benefits until September. The US government has also made it clear that even employees who choose to stay on may eventually bear the brunt of downsizing. This comes days after Trump's executive order on a return to office mandate. A US federal judge has temporarily blocked the Trump administration's order to freeze aid for several federal grant programs. The stay will last until Monday afternoon and applies only to existing programs. Now, Trump administration officials have said that programs that provide direct assistance to Americans would not be affected. This will include Medicare, Medicaid, Social Security, student loans, and food stamps.
A US judge on Tuesday temporarily blocked part of the Trump administration's sweeping directive to pause federal loans, grants and other financial assistance. In a Washington, D.C. federal court hearing, US District Judge Lauren Ali Khan ordered the White House to not block funding to existing programs until February 3rd, a win for advocacy groups who said the policy would be devastating. President Donald Trump's White House ordered billions of dollars of federal grants and loans to be frozen, which could disrupt education and healthcare programs, disaster relief, and other initiatives. Earlier on Tuesday, a coalition of attorneys general announced they would sue Trump's pause of federal funding. 6 states, including New York, Massachusetts, and California, said the lawsuit was meant to preserve essential funding for Americans. Here's California's Rob Banter.
We will not stand by while the president attempts to disrupt vital programs that feed our kids, provide medical care to our families, and support housing in our communities. We won't stand by while the president breaks the law and oversteps his authority as outlined in our Constitution, a Constitution he swore an oath to uphold just 1 week ago.
The acting head of the Office of Management and Budget, which oversees the federal budget, said the money would be put on hold to ensure it aligned with the president's priorities, including executive orders he signed ending diversity, equity, and inclusion efforts. New York Attorney General Letitia James said 20 states, including New York, were blocked from Medicaid's payment system, a public health insurance program for low-income people. The White House said Medicaid was exempted and no payments had been affected. Georgetown University law professor Stephen Vladek said the funding halt runs afoul of Congress's legislative control of public funding.
This is a nuclear-tipped broadsword. And to allow this kind of program to go forward would not just have immediate, harsh, deleterious effects on all kinds of segments of society. It would really pretty radically reorient the separation of powers in this country away from the legislature and toward the executive.
Vladek said he expects the administration to walk back the policy or lose in court. The US Justice Department, which would defend the policy in court, did not immediately respond to requests for comment.
Starbucks' quarterly earnings and revenues topped Wall Street estimates. However, its same-store sales fell for the fourth straight quarter. The coffee giant saw same-store sales slip 4% due to a 6% decline in visit to its stores. Remember, the firm had kicked off a turnaround plan last quarter in the hopes of reviving its US business, which has slumped over the past year. Microsoft and OpenAI are investigating whether data from the ChatGPT maker's technology was obtained in an unauthorized manner by a group linked to Chinese artificial intelligence startup DeepSeek. This comes after DeepSeek sparked a tech stock sell-off after investors worried about heightened competition. According to a report by Bloomberg, Microsoft security researchers observed individuals believed to be connected to DeepSeek exfiltrating a large amount of data from OpenAI. Google Maps has said that it will change the name of Gulf of Mexico to Gulf of America once it's officially updated in the US geographic name system. For those accessing Google Maps in Mexico, the name Gulf of Mexico will appear. Outside of the two countries, users will see both names on Google Maps. The announcement comes days after the Trump administration said that it has officially changed the name of the ocean basin to Gulf of America. And with that's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
One, Modi ji never lets a good idea go to waste. His Man Ki Baat inevitably becomes his Man Ka Sankalp. His Sankalp is always Vajra Sankalp. His determination is as hard as a diamond. He does not rest with simply making a Sankalp. He knows how to turn his Sankalp into success. In the last 10 years, the world has seen how he especially chooses impossible-looking tasks and transforms them into reality. This, for all of us, is lesson number one. Lesson number two is about his boundless energy. Narendra Bhai Modi's name stands for Anant Shakti, infinite energy. Since PDEU is an energy-focused university, all of us should learn to be as energetic as our Prime Minister. People often ask the question, where does Modi ji take rest? Or does he rest at all? I can tell you that I know the answer to this question. The answer lies in what Pandit Deen Dayal Upadhyay ji has said, who is the founder and whose name this university bears, has said about rest or Vishranti. He has said, Kaam mein badlav hi Vishranti hai. Change of work is itself rest. And I think this is our Prime Minister's motto. This should be our motto, dear students, also. Therefore, when we think about these two lessons, how to turn ideas into action and how to work tirelessly, we cannot escape the conclusion that Narendra Modi ji is not only India's Pradhan Mantri, but for us and this university, he is our Gurudev, our respected teacher, and we will follow his learnings. We must aim higher. Within a couple of years, India will emerge as the third largest economy in the world. No power on earth can stop India's growth trajectory. I can clearly foresee that India will become the most prosperous nation in the world before the end of this century. But India, with other large economies, also has a big responsibility. We must not allow economic growth endanger planet Earth and further worsen the climate crisis. Therefore, the transition from fossil fuels to clean and green energy has to be accelerated. I am supremely confident that green technologies and green enterprises can reverse the ecological degradation and indeed make our planet more beautiful, more livable for future generations. Our Prime Minister wants India to become the greenest nation in the world. For this purpose, India is also transforming itself into a deep tech nation with advanced manufacturing capabilities. This is the context in which PDEU should see its future role and responsibility. My dear PDEU family, therefore, here are my 3 expectations from all of you in the PDEU family. My first expectation, PDEU should further improve the quality of research and make it application-driven. We should specially focus on newer areas like bioenergy, which have the potential to help our farmers and boost employment opportunities. My second expectation, we should simultaneously increase our internal strengths and also forge national and global collaborations so as to enhance our leading position in research and academics. My third expectation, the intersection of green energy, green materials, and artificial intelligence is going to shape the future of humanity. I would like PDEU to gain a leading position in this synergy. Talking of artificial intelligence, I have a piece of advice.
Hello, welcome to News Center with me, Parikshit Luthra. A brand new AI model from China sent shockwaves across the Silicon Valley earlier this week. The US stock market erased more than $1 trillion in market capitalization, with Nvidia losing a whopping $600 billion in just a day. DeepSeek, an AI startup founded by a Chinese hedge fund manager, unveiled a model built with a budget of less than $6 million. The chatbot quickly became the most downloaded app on Apple's US App Store, overtaking OpenAI's ChatGPT. For years, the US has been a leader in AI, and DeepSeek's rise meant that a Chinese player is now threatening its dominance. Experts believe this also shows that cost efficiency and targeted innovation can deliver results. Is DeepSeek's emergence a wake-up call for US tech companies? Joining us now to discuss this is Ajay Chaudhary, co-founder HCL. Mr. Chaudhary, thank you very much for joining us. Donald Trump has said that what DeepSeek has managed to do is a wake-up call for companies and countries around the world. What's your sense? Do you think the US dominance in the AI field has now been seriously challenged?
Definitely, because the challenge that was there till now is that they were the only game in town. Now there is a completely new game in town and at a much lower cost of usage. So the royalties that they would have earned from the various LLMs that they have made from three, four different companies will all be impacted with this announcement, because they have literally made it available as open source.
So once you make it available at open source, does it make it much cheaper to do innovation across the world, adapt this model? And do you think the market cap of companies like Google, Nvidia is going to be impacted more in the days to come?
I think, to me, the impact has been literally a knee-jerk reaction. It is not necessary that they will be impacted so badly, because there is a lot of issues around utilizing technologies from China, and whether people will want to take a risk of using Chinese technology or not. So those issues will always be there, and America will play its own game around this and threaten people that, look, if you use Chinese technology, you might not be safe. So those kind of issues will remain, but nevertheless, the impact is quite phenomenal, and it is just the beginning.
It's just the beginning. How do you think India is placed right now in this race? Donald Trump, in his first speech at Davos World Economic Forum said that United States will be the capital of artificial intelligence and crypto. Now, when we are going to see this very strong race between US and China to win the AI revolution, how well is India poised?
You see, before I go to that, I also want to mention to you that within China itself, there are many other companies that are also working on this. So you may not have heard of companies like, Quen, you might not have heard of people like Minimax, Kimi, Duobow, all these companies. They're all also working on similar products. So there are close to 10 labs that are comparable to OpenAI and Anthropic, and another 50 tier 2 labs that are working on this technology. So China is really putting a huge amount of effort around AI, and it's not something that anybody else in the world is really close to, is my view. However, the US has this capability to innovate and stay ahead, and they will try and come at it quite hard. But when I start to look at India, for many years, a lot of people in the country have been saying that, we don't need to get into LLMs. We should be in the applications area or the edge area. I think that's a mistake. Because in this new unipolar world, every country is on its own. And I've been talking about it for a while, that strategic autonomy is absolutely critical for us. So we need to have our own LLMs. We need to create our own chips. We need to develop our own GPUs. All the technologies that are required for the world and for India need to be now made, designed in India. And that capability exists.
Right. Now, we have seen some companies in India collaborating with DeepSeek. Do you think India should collaborate, seek win-win partnership with companies in China, in order to secure its own interests?
China has its own challenges. Whether you can fully trust China in everything that you do, I would be very, very concerned to do that. So I would feel that India must chart its own course. We have the capability to do this. We should immediately start working on language models. One of the biggest benefits that we have in our country is that we have a huge bunch of data which we can utilize. And this data we should start to secure and not make available to anybody else. So once we can use data as a fighting strategy, I think we can be successful. By the way, MeitY has already announced that they are calling for proposals for people to make a LLM in India.
I would also like to ask you, when it comes to the immediate low-hanging fruit and for the next 5 to 10 years, where should India's focus on AI use cases be? If we really want our industry to become more efficient, if we want our workforce to become more efficient, what should be the immediate focus areas in the near term and over a 5 to 10 year period?
You see, we've already gotten, many companies are deep into the applications of AI. And that is something that we should continue to do. So for example, for health, for education, for research, for poverty alleviation, climate, all these are phenomenal areas for us to work in AI. And that is something we should parallelly continue to do. And a lot of our startups are already working on some of these use cases to create companies. We should encourage more and more of that. But parallel to that, we should not shy away from creating our own LLMs and making ourselves secure for the long term. If DeepSeek can create an LLM in 2 years, why can't India do it? Because we have all the capabilities that in India. I mean, if you look at any product in the world today, whether it's a GPU or a CPU or a software or anything, Indians are behind a lot of those products. And a lot of these GCCs that are there in India who create products in India are created by Indians. So the capability exists.
Right. When it comes to the union budget, one is expecting some sort of push by the government for artificial intelligence and encouraging innovation in this space. What is the kind of funding that we now require for the future? Has there been any recommendation from your side?
See, basically, last year in the budget, government had announced a 1 lakh crore budget for R&D in India. I think that needs to be put on fast track, because that announcement has happened, but the implementation is still to happen. I do believe there's a lot of work going on that implementation. The way I think it will work is that the ANRF, which is the organization that's already been set up for research in India, is working from level 1 to level 4, which is TRL 1 to TRL 4. This new organization will probably work from TRL 5 to TRL 9, and this will invest into different technologies which can secure the future of India in terms of strategic autonomy. So that is part one. Part two is that there is an AI mission already set up by MeitY, and they should continue to forge ahead with that mission to make sure that we are not far behind anybody else. And as I said, we need to go back to basics and say, yes, we will develop our own chips. Yes, we will develop our own AI. For example, from my foundation and from a task force that was set up by the minister, we have very clearly recommended that India must design its own chips. Otherwise, we will all get left behind. And this is something that we've been asking that this particular budget must take care of.
Right. Now, when it comes to the race between China, the race with US, it's also a lot about setting the rules for the road. Having a framework where there are certain laws and certain boundaries within which we function. How important is it now for India to ensure that there is a proper framework in place which does not leave countries like India aside?
Well, actually,
the reason why
India
I'm asking this is because a major
Please,
AI summit that's going to happen in France.
Yes, that's what I was going to talk about. India has been deeply involved in that for the last 1.5 years. And the Prime Minister has been personally looking at it. As a matter of fact, this meeting that is going to happen will have a lot of Indian people sitting there to be part of this, to design and look at the future of AI and also look at the regulations that we need to control AI. So I think that's a very major area of concern to everybody, that the bad part of AI should be taken care of right away.
And my final question to you, sir, would be the fact that China, like you're saying, is right now leading the AI revolution. US is also going to push its entire might behind AI this year. What can India emulate from the China model? What is China doing right now when it comes to AI? You're already telling us that there are 10 labs focusing on AI models, 50 tier 2 labs which are functioning in China. What do we need to do fast enough?
Oh, we need to really gear up and consider this as a huge wake-up call for us. It should be treated like emergency. And if we want to really go after it, we should go after it in a very big way. We should invite all kinds of companies. We should invite software companies. We should invite startups, and we should put out challenges for them to create LLMs in India with Indian languages, etc., etc. So I think there is a requirement for us to move very, very, very fast.
Right. And on the policy front, does the regulatory framework need to be eased now at several layers if we want that innovation to speed up?
You see, innovation has to work within the regulation. You cannot say that regulation is not something that we have to have. We have to have regulation. We have to have guardrails. But definitely, innovation must happen and will happen. And I have great faith and belief that India can do it and make its own LLMs, its own chips, and its own GPUs. We should not get too worried about the rest of the world. We have all the capabilities to do these things. And if we set ourselves to do it, clearly set a time frame, create a mission mode project for each of these areas, I'm definitely certain that we can be successful.
All right. Thank you very much, Mr. Ajay Chaudhary, giving us a sense of what India now needs to do. In fact, as you said, India now needs to work on emergency mode in order to win the AI race. Thanks once again for being with us. Clearly, DeepSeek throwing a big challenge to tech companies around the world and to countries as well. On that note, we will take a short break, but coming up next, we will take a deep dive into the automotive industry's wish list for Union Budget 2025. On the other side, stay tuned.
Students, you must be good at using AI as a tool of learning, but do not give up your own critical thinking. चैट जीपीटी का जरूर से इस्तेमाल करो, लेकिन याद रखो आर्टिफिशियल बुद्धि से नहीं, खुद की बुद्धि से हम आगे बढ़ेंगे और आप आगे बढ़ सकते हैं.
Hello, welcome to News Centre. Australia is investing $200 million for government business support across various sectors. That is the word coming in from Australian High Commissioner to India. My colleague Rachna Dhanrajani spoke with Philip Green about India-Australia trade ties and much more. Listen in.
Sector's going great for us, as the report that has been released by Gateway House today shows. I mean, you know, think about this. India's exports to the world over the last 5 years have increased by 35%. That sounds pretty good. But in the same period, India's exports to Australia have increased by 66%. So the benefit that Indian traders are getting from engagement with Australia is moving twice as fast as it is with the rest of the world, and we're delighted about that. Over the last 2 years that ACT has been in place, we've seen 20% increase in the growth of Indian textile exports to Australia. In agriculture, it's 35%. In automotives, it's 100% increase. So we've really had a super 2 years, and we're very excited about where this agreement and the strong linkages between our economies are taking us.
What is your view on the comprehensive economic cooperation agreement? How do you see it progressing?
We're working very hard. I think we've had 9 rounds of formal negotiation, and I think activity is intensifying. Our chief negotiator was in Delhi just last month, and I've had, just since the start of the year, a number of key engagements with the most important figures on the Indian side. Look, you know, we're not going to put a timeline on it. We want a good agreement, and we will take our time to get that right, but we are optimistic. And the two sides are very closely engaged, and there's a very high level of trust. So we're optimistic we will get there.
We're also at a very interesting time because we're just a few days away from our union budget being presented, and I understand you met Minister Goyal. Were there any recommendations that you made for this budget, something that can give a push to green hydrogen, EVs, automotives, PVs?
Oh, look, we'll leave the Indian government to frame its budget in the best way it can. My message to Minister Goyal is that we are all in on India. We are investing $200 million just in government support for business. We are very keen on the second phase of the free trade agreement, and we will shortly be announcing in Australia a new document that will give a picture of the future designed for Australian traders and investors to have them better understand what the opportunities are in this country.
All right, so that was the Australian ambassador on trade opportunities between India and Australia. Moving on, increased thrust on trade modernization, bullet trains, station redevelopment projects and freight terminals are among some of the key demands of the railway sector. The sector was allocated a capex of 2.6 lakh crore rupees for the last budget. We're now joined by Umesh Chaudhary, the Managing Director of Titagarh Rail Systems. He's also the Chairman of the Railway Division of CII. Sir, thank you very much for joining us. What do you think should be the focus of the union budget of the Finance Minister when it comes to the railway sector? What's stopping your wish list at this point?
So, good evening. Yes, I think that the railways have been a focus sector for the government, both in terms of the freight and in terms of the passenger. You know, in freight, the railways, thanks to the Gati Shakti, the program, and also the overall target of the government to reduce the cost of logistics as a percentage of the GDP, there have been a lot of investments that have been made over the last few years in increasing the track capacity, increasing the rolling stock, the signaling and all of that. So we do expect and we hope that this is something that will continue. The railways have set for themselves a very ambitious target of 3 billion tons of freight loading by the year 2030, which means pretty much doubling from where they were last year. And that's not a easy target to achieve, but not an impossible target to achieve as well. But it will require substantial investments. On the other side, on the passenger side, the aspirations of the new India, the Viksit Bharat, are quite, I would say, quite clear. The way the Vande Bharat has met with success, you know, the way it's been applauded by the cross-section of the society and of the population of the country, it's very evident that the people of India are demanding safe, modern passenger transport on rail. And the Indian Railways have actually lived up to that expectations. We have seen the Vande Bharat sleeper being a success. We are now seeing the new versions of Vande Bharat sleeper that will be done by even our company. So all of this will continue, plus the bullet train. So I believe that
Mr. Chaudhary, if I were to ask you,
this momentum will continue.
Yeah. Mr. Chaudhary, what I would like to ask you, when it comes to deployment of more private capex, what in the budget will actually encourage you to invest more? What is that headline that you are looking for from Finance Minister Nirmala Sitharaman on the 1st of February?
I think it's a larger infrastructure spend because, you know, particularly industry like ours is completely dependent upon how much is the infrastructure budget allocation by the government in order to grow the overall size of the railway. So if we see, for my company, I can say, if we see that momentum continues, we would definitely go for further capex and capacity expansions.
Right. Now, when it comes to ease of doing business, ease of taxation, greater export push from India, what are some of the asks? Because over the last few weeks, through industry consultations, we've learned that the industry has been seeking GST rate rationalization, simplification of taxation, ease of doing business, the next phase of reforms. So what would be the priority areas which can really help companies like yours boost growth?
So in our sector, the GST was a problem many years ago when it was launched because we had inverted rate of duties, but now we don't have a problem. Those things have already been taken care of. Of course, you know, it has been it's been a common demand of the industry in terms of the corporate taxation rates and all of that. So that is nothing which is specific to our industry. That is a common industrial request which is there with the government. For boosting exports, you know, I would like to mention that the government has really done a lot for this Atmanirbhar Bharat and Make in India for the world. You know, whether it is the wheel project that has been approved by the railways, which we are setting up in partnership with Ramakrishna Forging, which will make India as a net exporter from a net importer of wheels, for example. But we do believe that our sector, the railway sector, is a fit candidate for some kind of a PLI. We have seen tremendous success in the consumer electronic sector, in many other sectors, which have paid the government many times over for the PLI that has been given by the government. We also believe that the railway sector can really pay the government in terms of higher revenue on GST and etc. if some support for PLI is given to our sector.
All right, so that's important from your view. You feel that railways is a fit candidate for PLI scheme as well. Thank you very much, Mr. Chaudhary, for joining us. Before we wrap this show, let's talk about Growth Code, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed trading decisions. Market manipulation is something every investor should be aware of. But what exactly does it mean? Today, we'll focus on two common forms, spoofing and layering, and how to avoid falling victim to them.
Market manipulation is something that every investor should be aware of, especially tactics like spoofing and layering. These deceptive practices involve misleading others to create artificial price movements, putting regular traders at a disadvantage. Now, spoofing, for instance, happens when a trader places a large order far beyond the current price to create a false impression of either demand or supply. The goal here is to push prices in a particular direction and then cancel the order before it is executed. For example, a trader might place a large buy order on a stock only to push prices up and then will cancel it immediately as the price moves higher, tricking other traders into following the trend. Layering, on the other hand, is similar but involves placing multiple orders at different price levels to make the market appear more active than it actually is. These orders aren't meant to be executed but mislead others into thinking that there is either strong support or resistance on the way up. The manipulator then cancels these orders once other traders react, further distorting the market. So, how can you protect yourself? Watch for unusual order book activity on a stock, or if orders are placed and cancelled quickly, or if there is a sudden market depth change in a stock, be cautious. Stay informed about broader market conditions such as long-term trends, which are harder to manipulate. Use limit orders, avoid reacting to sudden fake price movements, and use tools to spot patterns of spoofing or layering, such as order flow analysis. By staying alert and using the right tools, you can protect yourself from these tactics.
sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18.
Hello and welcome to this special show, the Budget Town Hall. I am Prashant Nair. The FY26 Union Budget will require the government to attain a tough balance between fiscal consolidation, capex-led growth and a boost to consumption. While everyone recognizes the importance of continued fiscal consolidation, the demand for some measures aimed at arresting the current cyclical slowdown is also there. The stock market, which has been correcting for a while, and has been a creator of such powerful wealth effect over the last few years, has also been falling. The Nifty is down some 13% from its all-time highs. The Bank Nifty is down 12%. The mid-cap and small-cap indices have come off between 15 and 17% from their respective all-time highs. Stocks, of course, have fallen anywhere between 30 and 40% depending on what you look at. Real estate companies have started to wonder if the urban slowdown will start affecting home sales now. Can the government somehow put more money in the hands of the middle class consumer? Can the government use the budget to turn sentiments around? That's essentially the question we will try and discuss and debate here with three sort of market men who really need no introduction. Anish Tawakle is with us, Pankaj Tibrewal is with us, and so is Harish Krishnan. Gentlemen, great to have all of you here. Thank you very much.
Thank you.
So once again, we find ourselves at the cusp of the union budget, and expectations usually run high, but I have to say that this time it's a little subdued. I mean, I don't see anything big in terms of expectations out there at all. Pankaj, why don't you begin? What should we really expect at a high level, top down?
So, Prashant, I think we need to address three things. I think as a country, we are too obsessed by expenditure side. Though fiscal is very important, I'm not denying that fact. But over the last 3 years, our tax collections have stagnated between 8.8 to 9.2%. We got a tailwind when COVID hit, but after that, tax collections has been virtually stagnant. Elasticity is not being seen. So I think we have to start thinking about
on the
growth.
corporate tax side.
On the corporate tax side.
Personal income tax is
personal income. I'll come to that.
Yeah.
That the reason we are seeing personal income tax growth is largely because of the capital gains and STT. Our estimate is that 5 years back, that number was virtually negligible, 18-20,000 crore. This year, we are looking at a number of 2.5 lakh crores. So that's linked to markets. So if market doesn't do well, that collection will not be as buoyant as we have seen. My only thought is that at 4.5, mathematically, if you look at, if we are at 16 lakh crores of fiscal deficit and economy grows at 9.5, 10%, that 4.5, 4.6% will be achieved any which ways. So rather than getting obsessed further to take it to 3.5 and 3% as FRBM, we should cap at some point and start to think about the fiscal space and growth. And I think if if government starts to think in that manner, that absolute debt to GDP is also very important, rather than only the fiscal deficit number, I think you will see growth coming back from a very different animal.
You're saying cap the target to about 4.5.
4.5, just do it for the time being.
But that is where it is now, right?
It will be.
So FY26 is 4.5.
Your budgeted number or FRBM targets.
Yeah, correct. But if we don't know whether they will put out a roadmap
for that part.
I mean, it's possible.
So my wish list would be cap it at certain percentage, focus on growth, get the pie bigger, so that your expenditures are taken up, because 75-80% of your expenditures are sticky in nature, any which ways, which is interest, wages, pensions, all those things. So you need to get the pie bigger.
Okay, let me ask you whether some help is needed, not whether it can be done now, immediately in the budget.
Two things you can do it.
Yeah.
So one, I think we have not done a great job on disinvestment. We have seen the...
No, I'll come to this. I'm saying from a spending perspective. Do we need some help?
Yes, we need some help. I'll tell you why. If you go into the details of the capex, the 11.5 lakh crores, 1/3 of that capex has a lower multiplier. Let's look at the four heads. One is 65-70,000 crores has been parked with DEA, Department of Economic Affairs. I don't know why is it that, but that number is there. Then you have that number on the Home Ministry for upgradation of police. That is parked in the capex side. Then you have the defense, which globally has a multiplier of 0.6 to 1. Roads, infra, others have a multiplier of 1.5.
Sure.
And then you have the telecom, which is 85,000 crores, where you funded BSNL and others, which hardly has any multiplier effect. So I think 1/3 of that capex, if it start to put in higher productive use, you suddenly see that multiplier effect playing out. 11 lakh crores plus state of 6-7 lakh crores is not a small number, plus private sector capex. So I think we need to think about the capex part in greater detail, and then also look at disinvestment, which has been very, very smaller.
Harish, your thoughts? First of all, do we need help? And will it come from the fiscal side or from the government? Yeah.
So I think let's look at budget as a policy making, or let's say Modi 2.0 and of course the last budget as well. I think there's been a marked shift towards supply side reform as the key tenet of budget policy making, right? So be it in terms of announcements of PLI, corporate tax cuts, various logistic initiatives, everything that aids productivity is what's primarily mentioned in terms of the budget. To our mind, therefore, demand side is something which is kind of gone a bit out of sight from the budget as a process. Possibly the government believes that they can do it in other measures. It need not necessarily be in the part of the budget. The second, and I think something which is very timely for us to assess at this point of time, is that we had in May of 2024 S&P putting us on a watch list as far as a rating upgrade potentiality is coming through. And they had very clearly articulated, among many things, two clear identifiers or markers that they are going to monitor. One is the fiscal glide path, a combined fiscal deficit of 7%, and then the credibility of the RBI to maintain inflation in its band. These were the two key things. And this, to my mind, has kind of created a kind of a counter-cyclical policy response over the course of the last 12 months, wherein you've seen tightness both from the fiscal side and you've seen tightness both from the monetary side. Now, having got into the watch list as late as, say, about 9 months ago, and S&P says that they take a decision between 6 and 24 months, I would think that the government may not necessarily use the budget to make a big shift moving to demand side creation. However, given that there's been a change in the governor, at RBI, we think that the monetary policy opens up a range of possibilities. And it's just not about rates. There's been a whole amount of measures that may have signaled to various lenders about, wanting to cut down on credit growth. And one could see varying signaling instruments that can kind of, remove these layers out, which can help create the velocity. And therefore, possibly, I would suspect that while demand side boost is necessary, I still think that it may come potentially outside the ambit of the budget. While, of course, there will be some relief to the lower sections of the society. There would be some relief to the lower middle class, maybe the new tax regime, etc. But the big heavy lifting of demand side, I think potentially outside.
So you're not expecting anything big. Let me put it that way. It's nicely contextualized, but from a budget, from how relevant it is for the market, for stock markets, you don't think...
I think staying the course is actually a very big positive. I think there's no shame in admitting that you know, we've got a very good fiscal prudent budget. I think it also has to be seen in a relative context. You know, across the world, you're seeing governments going haywire with very high debt to GDP and mounting further. There are economies...
No, in the context of we've got a bit of a slowdown at our hands. So in that context, we probably need something, and you're saying it'll come from outside the budget?
I think the easier bullet to fire would come from the monetary side rather than necessarily from the fiscal side.
Anish?
So, to answer your question, do we need a stimulus? I would think the answer is clearly yes. But I would agree with Harish that if you were to choose between a monetary stimulus and a fiscal stimulus, I would prefer a monetary stimulus. See, the advantage with a monetary stimulus is that it can be reversed once the economy picks up. Whereas a fiscal stimulus tends to become entrenched and it becomes very difficult to then reverse it. If you look at sort of history, right, I mean, and if you saw what happened in the GFC, things are nowhere near as bad as the GFC, but let's look at what happened there, right? We got a big fiscal and a monetary stimulus. The economy recovered very quickly. And that was very good. But the mistake that happened was that we didn't pull back the fiscal stimulus after the economy recovered. And then we got overheating. So if you were to choose between a fiscal and a monetary stimulus, I would definitely go with a monetary stimulus. To the extent that we are using fiscal, I would love to see something more on urban infrastructure, particularly metro development, because I do think housing is fundamental.
It's been a long-standing
view of mine. And if you saw that, like, you know, even when the economy picked up momentum over the last 3 years, housing was a big driver of that. So I do think a combination of monetary easing and, you know, some little bit of stimulus on the urban infrastructure side would go a long way in addressing the current soft patch that the economy has hit.
And relative on the urban infrastructure side, I mean, relative to what we've seen, does it need a big pickup or more spending? I mean, just in terms of
I think
specifics?
the monetary easing would also help, right?
Not monetary easing, I'm saying in the budget, spending on urban infrastructure.
Yeah.
I mean, do we need a big
I think
jump in allocation or something, or what are you expecting?
No, I'm not expecting. I wouldn't say I'm expecting. I'm saying that would be the most, in my view, the best use of resources to the extent that they have the resources and they're willing to spend it. But, you know, on urban infrastructure, I think there is, as far as the need is concerned, it's phenomenal, right? So I don't think that I would ever say, oh, they've spent too much on urban infrastructure. I mean, the more metros we have, the more housing development we can spur. It would be a good thing. But having said that, I agree with Harish that there is no need we are not at that alarmist stage of the economy where we need to abandon fiscal prudence. And therefore, I would expect a little bit of help on I would like a little bit of help on urban infrastructure and a lot more room on from the
monetary side.
Yeah.
Okay, let's just, since expectations are generally, all three of you would agree, running low. So let's use our time the best. One or two sort of pointed things from the budget which kind of links back to the market in specific ways that you think are meaningful. I think, as Anish said, urban infrastructure is one. Pankaj, what would be?
My sense is that this investment has been a very big spoil sport. We have been able to do only 22% of our targets in the last 5 years in a market which has been super buoyant. And 66 CPSEs are listed.
The CPC index is lost 0.25% of its value.
So now the market cap, which was 37 lakh crores, probably would be lower. Can we generate that non-tax revenue part and fund it to the capex? If overall your tax collection is not going up, can we use the non-tax part? I think that will be something which we will work out very, very closely, and that's one thing which I would expect. Second is the granularity in the capex side, which I said. More projects which could have multiplier, as Anish mentioned. Urban, unfortunately, is a state subject. Can you have a model where center can support the state in developing that urban infrastructure? It may take some time, but I think that can be a great model over a longer periods of time. So if you start doing and thinking about growth in that aspect, I think markets will respond automatically over a period of time. And no tinkering on capital gains from a market perspective. I think that's the worry which most of the market...
Is there a worry this time at all? Or because I think last time...
You never know, because there is a worry that alignment of long-term, short-term across asset classes has to be there. So there is speculation in the market that can this time around be 12.5, be 15, and so on and so forth. So I think doing nothing will be a good thing because the sentiments right now are very fragile. Corporate earnings growth is not keeping pace with the expectation, and that's been reflected in the market itself. So I think keep a status quo budget. The speech will make a lot of difference in my view in terms of what we are thinking about in the next 12 to 18 months from an economic standpoint of view.
Harish?
So I would say that continue with the corporate tax cut for new manufacturing. I know that
we reported that for new manufacturing units,
that's
the 15, right. It may not be 15%, but 18%. I mean, but
no, I think it's still worth persisting with that. I know that private capex has been a lot lesser than what any of us anticipated, and definitely lesser than what the government expected. But we do see a two-track investment cycle happening, wherein we are seeing, at least on the conglomerate side, there are about 30 large business houses which are actually starting to re-leverage. So if I were to give an analogy of a car, they have moved from the first gear to the second and third gear. The vast swathe of rest of companies are still in the first gear. And I think we need somehow to create a payback period for this capex, a success story for the rest of them also to join into the bandwagon. So because at this point of time, maybe corporates have become a bit too obsessed with ROE and ROC. These are all great things. Nobody is saying that we should abandon them. But
fund manager complaining about corporates obsessing about ROE.
Yeah, but I was just saying...
No, I could take your point. I'm just joking. Please.
Yeah, but if all decisions are by the head, okay, then possibly you won't get the right decision, right? There are some decisions that need to be taken from the heart. And when I say that, you know, capex decision, if it is left to say the CFO, okay, typically comes from a logical, and we love that as money managers, risk managers, we like that. But there needs to be some decisions that need to come from the heart, and that needs to come from the entrepreneur, the promoter. And I think it's still time to persist with giving them that glide path that, hey, invest in India. This is the best economic prospects that you have, and we'll continue to keep supporting. So I think even though it may be seen as, you know, favoring the capitalist class again, but I think that would be a great thing. The second thing, if I may, would be, you know, if at all you're doing something on the demand side, do it also for the old tax regime. Just don't keep it with the new tax regime. I think this tax forgoness is of course is a true statement of what the government loses out. But in terms of its ability to signal sentiment change, is a lot lesser. And when actually people see that there is a difference across the board, that is when I think it will start spurring. So if you're doing that route, keep it for both. Those would be my two.
Okay, I have to take a quick commercial break, gentlemen. So let me do that. We come back and continue this conversation with our market experts, budget, FY26, what to expect. And of course, we'll talk about markets as well, which are kind of precariously poised right now. Stay with us.
Live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
तो भगदड़ की स्थिति जहां खड़ी हुई, मैं उस जगह पर मौजूद हूं। जरा मैं आपको दिखाऊं।
Welcome back. You're still watching our market special budget town hall, and we are sort of debating, discussing what can be done, what should be done, and what will be allowed to be done as far as the budget is concerned. This 1st of February on Saturday, Anish, Pankaj, and Harish are with us, and we are talking to them. Gentlemen, thank you very much for waiting. One thing which everybody recognizes we need to kind of focus on is jobs in a very big way, and how do we get there? Harish, you believe that maybe focus on what kind of sectors? What should be the focus really? Because I know where Anish stands. It's housing is a pet kind of sort of subject close to his heart. Construction. Harish, what about you?
These are low value add jobs, but there is a path to potential productivity benefits over a period of time, and we have to start somewhere. I would say that even the gig economy is possibly a good way in which a lot of this shadow labor, which otherwise is not finding jobs anywhere else, can get through. So I think more and more of these is possibly a solution rather than worrying about them whether they are adding value to the economy. So therefore, directives which help them flourish, I would say would be far more welcome, which the government in its wisdom maintains that and is continuing to persist with.
Pankaj, the electronics components PLI, I think we'll hear about it in the budget. You think that's, we need more of it, or you think the direction is largely set? Wherever the PLI schemes are required, it's been kind of announced and they need to be expanded, maybe the scope needs to be expanded like in the case of EMS. What are your thoughts?
I think we need to make the PLI work more effectively. Let me share a data point with you. So about 1.9 lakh crores is the total outlay by the government today. But we have only disbursed about 12,000 crores. So the schemes overall in spirit is looking great, but the execution in many sectors is missing. Except electronics and mobiles, which have been at the forefront of PLI implementation, many sectors have struggled to implement PLI. Also, I believe that auto industry is one of the largest employment generators, and it has a huge multiplier impact. Can we think about implementing effectively the PLI in the auto? And if we can do that, you will see huge investments coming in.
Which means that the PLI needs to be changed.
Tweak it, make it more effective, implement it. Otherwise, becoming a manufacturing base will be only a dream. We probably cannot achieve that. And mobiles have shown that we can do it if you really implement it well. Electronics, entire ecosystem is showing that. Semiconductor entire ecosystem has started to buzz. So I think if we can do that repeatedly in many other sectors, I think that could be a great opportunity for us from an employment generation perspective as well as growth perspective. And this is at a time when, you know, the entire world is in a volatile environment. You don't know what Trump will do next to China, Vietnam, Mexico. So we have a great opportunity out here. And only the implementation is something which we need to be laser focused. I would have been really happy if I would have seen a large amount on the PLI being dispersed.
Which has not happened so far.
Which has not happened so far right now.
So let me turn that around, right? If there is a great opportunity, why do we need PLI? That's a simple question, right? Markets should fund that opportunity. You know, and I find the market's response to PLI also a bit odd. A company gets a PLI of 1,000 crores. Its market cap goes up by 20,000 crores. That is saying we in the financial markets are so short-sighted, so myopic, and so lacking in understanding of business that, hey, there was an opportunity to spend 1,000 crores and create 20,000 crores of value. But with all the mutual funds of the world here, with all the private equity investors of the world here, we could not spot this opportunity. I don't agree with that. So my point is, look, ultimately manufacturing will follow if there is demand. The demand can come from two sources, either exports or domestic. Exports, why do we need exports? To pay for our imports. Our current account is already fine, right? There is no problem in the current account. So if we can meet our current account needs with services exports, I don't see any reason to push manufacturing exports, right? There is no inherent virtue in manufacturing.
Jobs, maybe.
Let me come to that, right? If you want to attract foreign capital into the country, right? You want a capital account inflow. By definition, you will have a current account deficit. There is, right? There is no two ways about it. A foreign capital inflow is a mirror image of a current account deficit. So my point is our external account is fine. Now, what do we need for domestic manufacturing? I've always argued that you need construction and housing, and domestic manufacturing will follow. If people have houses, all demand for durable goods depends on the size of your house. You will not have demand for lighting, you will not have demand for ACs, you will not have demand for anything, even clothes, right? You need a wardrobe to store clothes. If 5 people are living in a slum, they won't demand. So I think construction and housing is fundamental for creating. I'm not against manufacturing, don't get me wrong. I'm saying manufacturing will automatically follow construction if we get construction right. And if we don't get construction right, I mean, we cannot be attracting more capital inflows and saying we don't like a current account deficit. That's pointless, right? So I'm saying PLI is relevant for sectors that are inherently unviable but are needed for strategic objectives, right? If you say there's a defense sector which is inherently unviable and needs support because it's strategic, then you should give a PLI. But I don't see why, if there is a great opportunity, we need a PLI.
All right, I think I'm being told to wrap on this program. More questions, but out of time. Anish, Harish and Pankaj, thank you very much, all of you, for joining us. We don't have to wait very long to find out what the budget throws our way. Well, thank you very much for staying with us here on this special budget town hall. Programming continues on the other side of this break. Thanks for staying with us.
जाएं आप प्रदीप और दिखाते जाएं। ये देखिए कितना सारा ये फैला हुआ है। लोग यहाँ सो रहे थे और बैरिकेडिंग टूटा है कि तभी ये सब कुछ हुआ है। आगे भी बढ़ेंगे, पुलिस वहाँ पर मौजूद है और लोगों को मदद कर रहे हैं कि अगर किसी का कुछ खो गया है तो ढूंढ ले। जरा वहाँ पर कुछ लोग भी हैं जो अपना सामान ढूंढ रहे हैं, जरा उनसे भी हम बात करते हैं। ये भगदड़ वाला एरिया है, लोगों का सामान देखिए, सारे बैग्स यहाँ इकट्ठे कर दिए गए हैं ताकि लोग अपना सामान ढूंढ सकें। आप यहीं थे उस टाइम पर, कुछ ढूंढ रहे हैं? ये यहाँ पर नहीं थे, आप यहीं थे उस टाइम पर, तो ये क्या ढूंढ रहे हैं बैग में? क्या आपका बैग नहीं मिल रहा है? यहीं पर थे? कैसे हुआ था ये पूरा हादसा? हाँ, ये भी देखिए बैग ही ढूंढ रहे हैं। आप अपना बैग ढूंढ रहे हैं? आप बैग ढूंढ रहे हैं? यहीं थे उस वक्त में जब ये सब कुछ हुआ? कैसे ये सडनली हुआ?
सडनली बहुत ज्यादा भीड़ इसी घाट पे आ गई थी और उसके वजह से डाइवर्ट करने में जाने और आने वाले दोनों आपस में हो गए थे। उसी में धक्का मुक्की की वजह से
यहीं सो रहे थे।
नहीं सो रहे थे तो हम लोग स्नान करने गए थे। 12 बजे के आसपास, 1 बजे के पास की घटना है।
हाँ।
और 1 बजे के आसपास ही हमारा भी बैग खो गया।
क्या पूरा रेला आया हुआ था?
पूरा रेला आया हुआ था, बहुत ज्यादा भीड़ थी।
तो ये ये पूरा आप देखिए बैग पड़े हुए,
बैग खो गया,
बैग नहीं मिल रहा है।
ग्रे कलर का बैग था।
तो बैग लोग ढूंढ रहे हैं अपना, क्योंकि सामान बहुत लोगों का खो गया है, तो सभी अपना अपना सामान भी ढूंढ रहे हैं, बैग ढूंढ रहे हैं। बहुत सारे लोग चिकित्सालय में हैं।
हेलो,
ये यहाँ पर लोग अपना सामान ढूंढने के लिए आ रहे हैं।
सामान पूछ रहे हैं कि हमारा सामान कहाँ है, कैसे है।
हाँ।
ऐसी में है, अभी कोई क्लियर नहीं हुआ किसका किसका क्या है।
सब देख रहे हैं, सब अपना अपना सामान देख रहे हैं कि किसका कहाँ क्या है, और आप लोग डायरेक्ट कर रहे हैं कि कहाँ किसका सामान है।
हाँ जी मैम,
तभी से हैं लोग, और वो कोई लोग का फोन पैसा हम लोग खुद रेस्क्यू करके दिए, वीडियो बनाए हैं लोग, दिए हैं लोग पब्लिक को। तभी
अचानक कैसे हुआ
ये अचानक भगदड़ हुआ है, जैसे कि एक के ऊपर गिरने लगे लोग, और सैकड़ों की
कितने बजे की बात रही हो?
ये लगभग 1 से 1:30 बजे की तकरीबन हुई जी।
तो ये छूटे हुए बैग इस बात की गवाही दे रहे हैं कि क्या स्थिति रही होगी। लोग अब अपना सिर्फ बैग यहाँ छोड़ गए हैं, कई लोग घायल हो गए हैं, अस्पताल पहुंचाया गया है, जो गंभीर रूप से घायल है उन्हें बाकी अस्पतालों में रेफर किया गया है, और जो सामान्य रूप से घायल हुए हैं उन्हें यही के चिकित्सालय में देखिए भर्ती कराया गया है। तो ये स्थिति है जब यहाँ भगदड़ मची है। बैग पड़े हुए उस बात की गवाही दे रहे हैं कि कैसे लोग सो रहे थे, अचानक बैरिकेड टूटा और एक के ऊपर एक लोग कुछ सोच पाते समझ पाते उससे पहले ये स्थिति खड़ी हो गई। कैमरा पर्सन प्रदीप के साथ सपना शुक्ला, न्यूज़ 18 इंडिया।
You know, in general, for the portfolio, which is a large India-focused portfolio, it doesn't have, it has only 10 to 15 large and liquid stocks. I mean, nothing which.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Bulls reclaim more lost ground. Sensex gains over 600 points. Nifty moves back above 23,000. Mid-caps outperform with the index gaining over 2%. Maruti Suzuki beats estimates in Q3. Revenue up 16%. Profits rise 13%. Margins contract due to discounts even as it remains ahead of peers like Hyundai India. ITC Hotels lists at a discount of nearly 31% from its implied share price after the demerger. The listing price is in line with analyst estimates. The stock hits 5% lower circuit. Analysts estimate a passive outflow of over $165 million as the stock moves out of the benchmark Nifty and Sensex. CNBC-TV18 News break confirmed. Cabinet approves a 16,300 crore rupee mission to develop 24 critical minerals over the next 6 years. Cabinet also clears the ethanol price hike leading to a rally in sugar stocks. After Rashtra Ispat Nigam, government may adopt a strategy to revive select PSUs that are financially weak. Sources say government is not in favor of banks taking haircuts. Fund infusion, mergers and consolidation are some of the options on the table. Many people feared dead and several injured after a stampede at the Mahakumbh in Prayagraj in the early hours this morning. President Murmu and Prime Minister Modi expressed condolences. Opposition accuses the UP government of mismanagement. The state is yet to provide details on casualties. The Trump administration gives federal workers time till February 6 to make a choice: return to office full-time or resign and get paid till September. This comes days after Trump's executive order on a return to office mandate. The US government also made it clear that even employees who choose to stay on may eventually bear the brunt of downsizing. After a prolonged decline due to the pandemic, students are making a modest recovery on learning outcomes according to the annual Status of Education report. But a majority of children in class 3 and 5 are still unable to read a class 2 level text or solve simple math problems. Many people are feared dead and several have been injured after a stampede at the Mahakumbh in Prayagraj early this morning. President Murmu and Prime Minister Modi have expressed their condolences to the victims' families. The state is yet to provide details on the casualties. In fact, the UP police maintains that there was no stampede and it was only a matter of overcrowding. Eyewitness accounts described surging crowd on the banks of the Ganga around 2 a.m. in the morning to take a holy dip. Crowds converged at the Sangam, the place where the Ganga and the Yamuna rivers meet. The witnesses described chaotic scenes where people fell down to the floor as crowds surged in multiple directions. The opposition has accused the UP government of mismanagement, offering condolences to those affected. Rahul Gandhi said mismanagement and a special focus on VIP movement instead of common devotees are responsible for this tragic incident. Congress President Mallikarjun Kharge also blamed VIP movement and half-baked arrangements. Samajwadi Party Chief Akhilesh Yadav urged the state government to help those affected. The Chief Minister of Uttar Pradesh, Yogi Adityanath, has said that the situation is under control.
पूरा प्रशासन मौके पे वहाँ मौजूद है। रात्रि को 1 से 2 बजे के बीच में अखाड़ा मार्ग पर, जहाँ पे अखाड़ों के अमृत स्नान के दृश्य से बैरिकेड्स भी किए गए थे, तो बैरिकेड्स को फांद करके आने में कुछ श्रद्धालु गंभीर रूप से घायल हुए हैं। उन्हें तत्काल हॉस्पिटल में पहुंचा करके उपचार आदि की व्यवस्था उनके लिए की गई है।
Moving on to other business updates, ITC Hotels made its D Street debut, listing at a 31% discount from its implied price of 260 rupees per share. The stock listed at 180 rupees a share after the demerger. However, this was in line with the analyst expectations. Mangalam Malu is here with details. Mangalam, the listing in line with the analyst estimates.
Well, if you look at the discovered price of the ITC Hotels business, it's close to around 178 odd rupees per share, and which is pretty much in line with what the analysts had expected. Optically, the stock looks a lot lower than the implied value of 260 rupees per share. But remember, the implied value was basically implied by the difference between the stock price opening on the day it went ex-hotel business versus the previous close itself. The underlying assumption was the entire difference was the value of the hotels business, which is not always the case. If you look at, close to around 170 to 180 odd rupees, the stock trades at anywhere between 26 to 28 times FY26 EV to EBITDA, which is fairly in line with what the street was ascribing in terms of a multiple to that business as well. ITC Hotels, for instance, should be positioned as per analysts somewhere between Indian Hotels and Chalet Hotels as well. Chalet Hotels close to around 25 times, Indian Hotels trading at 37 times at a premium to all the other players in the industry because of its leadership position. Put ITC somewhere in the middle, 26 to 28 times, and that gives you the value of close to 170 to 190 rupees, this range in which the stock has been trading, and the price which was discovered in today's trading session itself. The question now, fundamentally, we'll keep an eye out on the hospitality sector, how this business performs. Remember, it's a debt-free company with 1,500 crores of cash. But technically, we'll keep an eye out on the flows around the stock as well, because as per Nuvama Quant, the stock is expected to meet criteria for inclusion in MSCI Global Small Cap Indices. So if and when that notification comes in, there would be some inflows of passive funds. But at the same time, over the next 3 days, we may see outflows from passive funds as well, because remember, because of this technical adjustment of the demerger, the stock is still a part of the Nifty. So it's the 51st Nifty stock. It will be excluded from the Nifty 3 days from now itself. And once that happens for both Nifty and Sensex, there could be potential outflows of $100 million for the Nifty and $65 million for the Sensex as well. So we'll keep an eye out on those parameters here.
Thank you, Mangalam, for that. Moving on, CNBC-TV18 News Break confirmed the Union Cabinet has approved a 16,300 crore rupee mission to develop 24 critical minerals over the next 6 years. Public sector units will invest 18,000 crore rupees separately in the mission. Meanwhile, sugar stocks surged in trade up to 7% in early trade today. This development comes after the Cabinet Committee on Economic Affairs approved the ethanol price hike. The Union government has raised the price of ethanol derived from C-heavy molasses to 57.97 rupees a litre from the current 56.5 rupees under the ethanol blended program.
C-heavy molasses, CHM, यानी शुगर केन की जो डिफरेंट प्रोसेस के लेवल्स हैं, उन सब में CHM का उपयोग हो, उसके हिसाब से एक बड़ा फैसला लिया गया है। हम सब जानते हैं कि एथनॉल के उपयोग से देश में इकोनॉमी में बहुत बड़ा एक बेनिफिट हुआ है, और आपने इस स्लाइड पे देखा होगा विन विन विन, 3 बार विन है। किसानों के लिए भी फायदे में है, फॉरेन एक्सचेंज भी बचता है, और एनवायरनमेंट को भी लाभ होता है।
19.9%, 19% is that
Now, if you have a target of 20% by the end of the ethanol blending year, which is October, and you are already in January talking about it based on previous figures, you don't need to have any knowledge of, rocket science or anything to know that you've already reached at 20%.
The National Company Law Appellate Tribunal will hear by trips Nishant Petty's backed Busy Bee plea challenging the Go First liquidation. The plea has sought a stay on liquidation and asked for submitting revised resolution plan for the airline. The company has said that Go First liquidation is against national interest and will lead to higher airfares and fewer consumer choices. The company also blamed the resolution professionals for failing to provide a resolution plan. The Supreme Court has ordered the centre to provide details on the number of FIRs registered against men for pronouncing divorce through triple talaq. The court also questioned the need of a penal law when the practice of divorce by triple talaq had been declared void. The bench was hearing a batch of PILs challenging the law imposed by the centre, which criminalised triple talaq. The two-judge bench will now hear the matter in the week commencing on the 17th of March. IIFL Finance has confirmed that the Income Tax Department launched a search operation at their registered office. The company also said that it's fully cooperating with tax officials. However, did not provide specific details on the alleged violations. This comes a day after CNBC-TV18 reported that IIFL group companies were under the IT department's scanner for alleged tax evasion. The Mumbai International Airport has announced the redevelopment of Terminal 1 at Chhatrapati Shivaji Maharaj International Airport. The project will begin in November and is scheduled to be completed by 2028-29. The capacity of the revamped terminal is expected to increase by 42% annually. All right, it's time for a short break, but coming up next, the Trump administration gives federal workers time till February 6th to make a choice, return to office full-time or resign and get paid till September. More on that when we return.
$10-15 million will ever be part of the portfolio. It's a very large and liquid portfolio. We went into an out of consensus overweight on staples right at the start of this month, and an out of consensus underweight, a big underweight on industrials again. So those were the two big calls that we took. Other than that, IT and healthcare are our other underweights. While banks is a small overweight, commodities is the other overweight that we have in the portfolio. We've been quite worried on mid caps for a few months. Maybe we were a little early, but I think if you look at relative valuations on mid caps and the fact that there is some uncertainty around near-term economic growth in terms of maybe that we are experiencing a slowdown, and with those sky-high valuations, typically they would be far more vulnerable. On a relative basis, we clearly have a preference towards large cap over mid caps and small caps. So large caps is clearly our preferred area. In fact, I would say our preferred area is mega caps. If you were to look at our India-focused portfolio, we are quite overweight mega caps. I mean, a lot of stocks which are over $40 billion market cap over there. So that's the part in terms of preference within the capitalization. However, on markets in general, we've reached a very interesting point where fundamentally we were seeing that this overvalued period could cause a correction. That corrections happened. We kind of were worried about it right at the start of October. That's kind of played over the last 4 months. We are down even on Nifty 12-13% or so. Yes. Now, interestingly, our proprietary gauge called the sentiment gauge, which tries to quantify sentiment, called the India Bull Bear Index, has recently hit extreme bearish sentiment. In fact, this is the sometime one of the days last week when we saw it, and maybe it will be there somewhere this week as well. Sentiment as measured by this gauge was the weakest since the COVID lows. Okay, so that is a very interesting point. Typically, it has a good track record in kind of, whenever sentiment goes to an extreme, to say that now we could have a contra move. This could be a contra move up. The bit that is more dicey is whether this will be, whether this is the end of the correction or whether this is just a rally and a recovery where sentiment normalizes. We have another leg down. But for now, I would want to, for the ones who are kind of short on the market, this is something where one needs to kind of bear in mind that sentiment has gone to a pretty extreme level as per our proprietary benchmark, which has traditionally been very good in predicting the extreme points in the market.
Welcome back. It was a day of recovery on Dalal Street as it saw broad-based buying helping IT gain for the second day. Surbhi Upadhyay is here with the day's trading action. Surbhi, a good day for the bulls.
Well, it was a day of a solid pullback, not just in India, but actually around the world. But the good thing for us here was that today it was not a sell the rally kind of a day because the gains were intact and we had a trending up session, so to speak. The net result, the Nifty put on well over 300 points and we have a close above the 23,100 mark. Not just that, why else am I saying that it was a solid day? Because this was a very broad-based recovery. It was visible in the mid-cap index, it was visible in the small-cap index. These indices were up anywhere between 2% to over 3% on the small-cap indices. And it was also a very diverse recovery across sectors. And you'll see that when you look at the nature of the recovery across the sector spread out. Also, the advanced decline ratio was extremely strong. We had a robust ratio after a long time when we had over 2,000 stocks advancing in the market. In terms of sectors, like I'm saying, so realty and IT, of course, were leading the pullback, but energy, financials, PSU stocks, metals, all of these parts of the market were up and about. Actually, it was only the FMCG index, which had a tinge of red on it by the end. Otherwise, it was a fully green-looking screen today. Let's talk about the key Nifty movers. So from the financial space, you had Shriram Finance, Bajaj Finance looking up. There was BEL on the upside. Tata Motors was positive ahead of numbers. Infosys, Bajaj Auto, SBI Life, HDFC Life. These were the names on the life insurance side that were doing well. The Bank Nifty itself was higher, a gain of over 2% on the Bank Nifty. So all your large cap, banking names were taking this market up today. A lot of good earnings got a very good response from the market. So that also told you that the mood was different. Some examples would be, for instance, in Ami Organics, the Deepak Fertilizers. These are chemical stocks which have anyway been beaten down and the recovery has been very elusive. But the earnings were good and the market was saluting them today. Then you have names like Lee Travenues Tech, Ixigo, which was reacting well to numbers. KPI Tech surged 7-8% after the numbers came out. Likewise, on TVS Motors, there was continued buying, second day running, because the numbers and the commentary looked quite solid. Suzlon, CG Power, I could go on. It's not like there were no earnings misses at all. Yes, we had some red names, JSW Energy, Bosch, Star Health, they were slightly on the lower side. But now it's going to be about the global picture again to see if there's continued stability on Wall Street, particularly on those tech stocks. Of course, we'll come back with the Fed announcement as well tomorrow morning. No change is expected. And for the Nifty, it's going to be very important for this recovery to build and continue. It'll have to take out some, crucial levels going forward. And the next hurdle is going to be around the 200 DMA, which is coming in around the 23,370 mark thereabouts. So slow and steady, but for today, a good day after a long time.
Right, thank you, Surbhi, for that. Tata Motors has reported its numbers for the third quarter. Sudarshan Kumar joins us with the details. Sudarshan, take us through the numbers, please.
So Tata Motors has seen a rebound on a sequential basis, but overall earnings are looking lower than estimates. But on JLR front, company has reported a strong set of earnings. So first, talking about the earnings year on year, consolidated profit is down 23%, while revenue has seen a minor increase of 3%. EBITDA is down 15% and margin has come in at 11.5% versus 13.9%, which is much lower than our estimate of 13.7%. But if you look at sequentially, profit is up 63%, revenue is up 12%, even EBITDA has increased by 12%. Now, on the JLR front, revenue is higher by 1.5%, EBITDA margin has come down by 200 basis points and EBIT margin has come at 9%, which is higher than the company's FY25 guidance of 8.5% or plus, or basically more than 8.5%. Now coming to the outlook on domestic front, company says JLR wholesales are expected to improve further in Q4, but it is remain watchful on the overall demand situation, especially in China. Now on the guidance, company says for JLR, it maintains EBIT margin guidance of 8.5% or more. Also, it says it is on track to achieve its profitability and cash flow targets in FY25. So, on the earnings, overall, it's a miss. For JLR, it's a strong, but as far as outlook is concerned, it's looking healthy.
Right, thank you, Sudarshan, for that update. Moving on, the US Fed commenced its two-day policy meet yesterday. This is its first policy meeting in the second term of President Donald Trump. The latest Fed survey by CNBC has highlighted that 65% of the respondents see 2 rate cuts in 2025 and 61% forecast at least 1 cut in 2026. On Trump's tariff threats, 77% of the respondents see it as negative for inflation, while 73% said it's negative for growth. 55% believe Trump's deregulation agenda will reduce inflation, while 68% said it will boost growth. You can catch the entire coverage of the Fed meeting from 11 p.m. onwards right here on CNBC-TV18. US President Donald Trump has invited Israeli Prime Minister Benjamin Netanyahu to the White House on the 4th of February. The two leaders are likely to discuss peace in the West Asia region and methods to counter shared adversaries. This trip will make Netanyahu the first foreign leader to visit the White House in Donald Trump's second presidential term. And sticking with the US, the Trump administration has given federal workers time till February 6th to return to office full-time or resign. Workers who choose to resign will receive pay benefits until September. The US government has also made it clear that even employees who choose to stay on may eventually bear the brunt of downsizing. This comes days after Trump's executive order on a return to office mandate. A US federal judge has temporarily blocked the Trump administration's order to freeze aid for several federal grant programs. The stay will last until Monday afternoon and applies only to existing programs. Now, Trump administration officials have said that programs that provide direct assistance to Americans would not be affected. This will include Medicare, Medicaid, Social Security, student loans, and food stamps.
A US judge on Tuesday temporarily blocked part of the Trump administration's sweeping directive to pause federal loans, grants and other financial assistance. In a Washington, D.C. federal court hearing, US District Judge Lauren Ali Khan ordered the White House to not block funding to existing programs until February 3rd, a win for advocacy groups who said the policy would be devastating. President Donald Trump's White House ordered billions of dollars of federal grants and loans to be frozen, which could disrupt education and healthcare programs, disaster relief, and other initiatives. Earlier on Tuesday, a coalition of attorneys general announced they would sue Trump's pause of federal funding. 6 states, including New York, Massachusetts, and California, said the lawsuit was meant to preserve essential funding for Americans. Here's California's Rob Banter.
We will not stand by while the president attempts to disrupt vital programs that feed our kids, provide medical care to our families, and support housing in our communities. We won't stand by while the president breaks the law and oversteps his authority as outlined in our Constitution, a Constitution he swore an oath to uphold just 1 week ago.
The acting head of the Office of Management and Budget, which oversees the federal budget, said the money would be put on hold to ensure it aligned with the president's priorities, including executive orders he signed ending diversity, equity, and inclusion efforts. New York Attorney General Letitia James said 20 states, including New York, were blocked from Medicaid's payment system, a public health insurance program for low-income people. The White House said Medicaid was exempted and no payments had been affected. Georgetown University law professor Stephen Vladek said the funding halt runs afoul of Congress's legislative control of public funding.
This is a nuclear-tipped broadsword. And to allow this kind of program to go forward would not just have immediate, harsh, deleterious effects on all kinds of segments of society. It would really pretty radically reorient the separation of powers in this country away from the legislature and toward the executive.
Vladek said he expects the administration to walk back the policy or lose in court. The US Justice Department, which would defend the policy in court, did not immediately respond to requests for comment.
Starbucks' quarterly earnings and revenues topped Wall Street estimates. However, its same-store sales fell for the fourth straight quarter. The coffee giant saw same-store sales slip 4% due to a 6% decline in visit to its stores. Remember, the firm had kicked off a turnaround plan last quarter in the hopes of reviving its US business, which has slumped over the past year. Microsoft and OpenAI are investigating whether data from the ChatGPT maker's technology was obtained in an unauthorized manner by a group linked to Chinese artificial intelligence startup DeepSeek. This comes after DeepSeek sparked a tech stock sell-off after investors worried about heightened competition. According to a report by Bloomberg, Microsoft security researchers observed individuals believed to be connected to DeepSeek exfiltrating a large amount of data from OpenAI. Google Maps has said that it will change the name of Gulf of Mexico to Gulf of America once it's officially updated in the US geographic name system. For those accessing Google Maps in Mexico, the name Gulf of Mexico will appear. Outside of the two countries, users will see both names on Google Maps. The announcement comes days after the Trump administration said that it has officially changed the name of the ocean basin to Gulf of America. And with that's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
Esteemed guests and friends, above all today, we express our deepest gratitude to our visionary Prime Minister, Shri Narendra Bhai Modi ji. Pandit Deen Dayal Energy University owes its very birth to his extraordinary vision. All of you are benefiting from what Narendra Bhai thought in the early 2000s. And when he called me and said in 2005 that we have to build one of the finest institutions in Gujarat, right? And that is what we have achieved from 2007 onwards. So we will always be grateful to our Prime Minister, Long before he became Prime Minister, he foresaw that India needed Atmanirbharta in energy. Over 20 years ago, he told me he wanted Gujarat to lead the nation in energy and energy products. He also told me that Gujarat should take the lead in cultivating world-class human resources needed to achieve India's clean energy ambition. That is how he helped establish this pioneering university. Friends, there are many things that we learn from our beloved Prime Minister. Let me mention just 2 lessons here for all of us. 1, Modi ji never lets a good idea go to waste. His Man Ki Baat inevitably becomes his Man Ka Sankalp. His Sankalp is always Vajra Sankalp. His determination is as hard as a diamond. He does not rest with simply making a Sankalp. He knows how to turn his Sankalp into success. In the last 10 years, the world has seen how he especially chooses impossible-looking tasks and transforms them into reality. This, for all of us, is lesson number 1. Lesson number 2 is about his boundless energy. Narendra Bhai Modi's name stands for Anant Shakti, infinite energy. Since PDEU is an energy-focused university, all of us should learn to be as energetic as our Prime Minister. People often ask the question, where does Modi...
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always Shruti Mishra and Ritu Singh. These are the top headlines from the startup world. EdTech platform Leap has raised $65 million in a mix of primary and secondary equity in Series E funding round led by Apis Growth Markets Fund 3 and Apis Global Growth Fund 3. Existing investors Owl Ventures, Jungle Ventures and Peak 15 Partners also participated.
SaaS firm Atomic Work has secured $25 million in Series A funding led by Khosla Ventures and Z47. The startup plans to utilize the funding towards expanding its go-to-market efforts and enhance integration capabilities with enterprise systems to handle large-scale deployments.
Veloz Fintech, a part of the Lemon Group, has raised a 140 crore rupees for its Opportunities Fund that offers venture debt and pre-IPO funding to MSMEs with ticket sizes ranging from 1 crore rupees to 20 crore rupees, targeting an 18% return. The fund aims to reach its 200 crore rupee target corpus by March, maintaining a sector-agnostic approach to support over 20 companies.
Zomato-backed e-commerce logistics firm ShipRocket has converted into a public company as it prepares for an IPO through a special resolution passed by its shareholders. The board at ShipRocket has approved a resolution to change its status to a public company and rename it from ShipRocket Private Limited to ShipRocket Limited as per regulatory filing.
Elon Musk's social media platform X has unveiled its digital wallet and peer-to-peer payment service X Money in partnership with Visa. Linda Yaccarino, CEO of X, shared the news in a post confirming that the X Money account will debut later this year. Those were the headlines that we're tracking for you this evening. But on what's brewing today, Leap, a full-stack international student mobility platform, has raised $65 million through a mix of primary and secondary equity. The round was led by Apis Growth Markets Fund 3 and Apis Global Growth Fund 3. Existing investors, including Owl Ventures, Jungle Ventures and Peak 15 Partners, also participated in the round. Avendus Capital was an exclusive financial advisor to Leap and their shareholders in this round. Joining me now to discuss this further is Arnav Kumar, the co-founder of Leap. Arnav, thank you so much for taking time out and being here with us on Startup Street. You know, first up, after this fundraise, what's the current valuation of Leap? Have you joined the Unicorn Club?
Thank you for having me on the show, Arundhati. I've been a fan of the show and great to be here. Obviously, it's a big moment for us. I think very happy with the fact that we have been able to secure this new round of financing. We have never shared our valuation publicly, internally or externally, so that's a metric that we don't talk about much. I think you know it's a metric that causes as much joy as it causes grief to companies. What we are very excited about and what I can share is since the last round of funding that we raised, we have now grown revenue 5x and we have turned EBITDA positive, which I think is a big milestone in our journey, and we are super excited about these numbers. And I think as valuation is a number that follows, we are very squarely focused on the top line and the bottom line. Very happy to have broken into this EBITDA positive club, which I think is a much bigger club than the unicorn valuation club.
So chasing that profitability mark, which is more important to you, but not letting us know whether you're in that unicorn club or not. But, we'll get into details of that in just a bit. But Leap is a full-stack international student mobility platform. So before we get into the numbers and all of that, if you could sort of share with us what it is, what your range of services are, which, includes test preparation, admissions, and visa counseling, as well as financial support, right, for all of these international student loans. So if you could take us through the kind of impact you've created for your students and which part of your business is seeing the most amount of demand?
Sure. So great question. Again, maybe I'll just give you a very quick brief on what we are as a platform, right? So we are the world's first full stack platform for global education. What it means that anything that a student needs, and we see like these millions of young students who have global aspirations now targeting a global career and a global education. What we offer to them is a full stack platform where they can come and get whatever they need in this journey. So for example, for a lot of them, the journey starts at the point of research. So we run the world's largest international student community. We have more than 2 million members registering with us every year. So that's where they come, talk to seniors, talk to peers, crystallize their goals, which country, which course they want to go to. So that's the first part of our platform. The second part is obviously once they have formed up their decision, they start working with a college counselor or a college coach to maximize their chance of getting into the best university in the right stream, which offers whatever is in line with their career choices. So that's the second part of the platform. The third is obviously every student has to give an exam, right? It could be GRE, GMAT, or it could be one of the English sort of proficiency exams. So that's again something we offer on the platform. Students can come, prepare, get better at these exams, and ultimately take the exam. And then once a student has gotten into a university of their choice, we offer financing to these students because that's a big need in the market, and merit and means often don't go hand in hand. So we provide financing to these students, and then afterwards, like whether it's support with visa, accommodation, credit cards, debit cards, insurance, settling in a new country, job support there, all of that is provided by Leap as a platform. And we have taken a platform first online approach to this market, and we are seeing a lot of goodness coming out of that because we are now able to serve a very wide variety of students, right? So that's the journey of a student on the platform.
Right. So it's a full, like as you were pointing out, it's a full stack platform for, the entire journey of a student, essentially. So you've raised the $65 million. If you could quickly tell us, because we're running out of time, where will the funds go? If you could take us through what's new on the anvil and how big of a role will AI play?
Yeah, so absolutely. I think you're bang on. I think we are seeing this industry sort of transform with the use of technology, especially AI, because finally this is an information industry. Like we are helping students take career decisions by looking at from the millions of options they have of where they can study, university, course, and all of that, down to saying, hey, these are the 3 ones that you should really target, and how do you maximize your chances there? So we are seeing the information search costs drop rapidly as AI takes over. So that's one of the big areas of focus in the coming sort of 12 months is how do we use modern technologies, both generative AI as well as the ability of AI to make sense of a lot of data to make this easier for students and be able to cater to a wide variety of students across the world. So that's one key focus area. Secondly, since the last time we raised money, we have now entered 10 international markets. So going deeper into those markets and expanding in those markets where we're seeing humongous demand, that's the second sort of focus area. And then we have some opportunistic M&A opportunities that we are eyeing. So that's the third use of funds. So these are the 3 reasons why we sort of raise money, because operationally we are EBITDA positive. So
operationally, your EBITDA positive is what you're saying. So if you could take us through where your revenues are currently at, and how soon till you turn profitable, right, fully, and what's the revenue mix between the geographies and where do you hope for it to be?
Sure. So I think your first question is where are we in terms of revenue? We are in late double digits sort of $1 million in terms of revenue. And as I said, we have sort of turned EBITDA positive for FY24. This year, we will turn PAT positive. So that's the goal that we are chasing right now. We make sort of revenues come through both the student counseling business, the test prep business, and some freemium platforms so people purchase premium subscriptions, and the financing business. Then we have a value-added services business that I talked about, insurance and sort of Forex and a lot of that. And we also help universities market themselves to students. So this is how these are the 4 revenue lines that we have. And the big ones are obviously financing and the sort of counseling business. And today the revenue is sort of almost a little skewed towards the counseling premium sort of upsell and the university marketing business. But as over time, we expect financing and the counseling business to settle at a 50-50 sort of revenue share.
Right, absolutely. And, you know, Arnav, final question before we let you go. You've served over 1 million students. What are students looking at studying in, and in which countries are Indian students eyeing? If you could take us through some trends that you've seen.
Yeah, no, so interestingly, every year the demand for global education of shifts. We are seeing some very interesting trends. One heartening trend is a lot of students are now diversifying beyond engineering and medicine. So we see a lot of demand for, you know, courses in, for example, design. Design is a big one that's coming up. The popular courses like sort of computer science and now AI, a lot of interest in AI related courses that's coming up. But in terms of your top geographies, we are seeing very, very strong. I think UK remains very, very strong in terms of demand. Ireland is growing very fast, especially for, you know, digital jobs like digital marketing and design and all of that. Germany is one that has picked up really well in the last sort of couple of years. I think for a lot of engineering heavy courses, that's popular. And one that we are seeing a lot of demand for now this year is France. So I think US remains a strong, one of the largest geographies where Indian students go. So that market remains very strong. But we are seeing some new countries that I named, Ireland, France, Germany, UK, they coming up like very, very strongly in terms of student preferences. And in terms of streams, it's heartening to see students diversify beyond engineering and medicine and going into a bunch of these streams such as design, project management, luxury management, psychology. So we are seeing a lot of demand for courses like this.
Right. So lots of interesting trends that you're seeing over there. But Arnav, thank you so much for joining us on the show today. And we wish you all the best on this journey going forward.
Thank you so much. And thank you for having me again. It's a pleasure.
Absolutely.
All right, also on what's brewing today, a new Chinese artificial intelligence model R1 created by the Hangzhou-based startup DeepSeek has stunned the American AI industry by outperforming some of OpenAI's leading models, displacing ChatGPT at the top of the iOS App Store and usurping Meta as the leading provider of open source AI tools. Now, DeepSeek's R1 is an impressive model, particularly around what they're able to deliver for the price. We will obviously deliver much better models, and also it's legit invigorating to have a new competitor. We will pull up some releases. That's what OpenAI founder Sam Altman said, and he tweeted that. To discuss what the Made in China AI model means for the global AI race and how ready is India to get ahead in the race and more, joining me now are Narendra Bhandari, the general partner at C-Fund, and Bruce Key, the co-founder and CEO of Investor AI. Gentlemen, welcome to Startup Street. Narendra, let me start with you. Now, while China and the US compete to claim their domination over AI, how ready is India to get ahead in the race? And in terms of infrastructure, capital, innovation, talent, what should India do to maintain its edge now that the stakes are global?
Thanks for having us. I think the space has definitely opened up. It's actually a fantastic opportunity for India. We can get ahead or at least get competitive by not just investing in infrastructure, but having a clear path and a strategy around talent. The good news about what has happened over the last literally over 1 week is that it's clear that you could build something really world-class at cost models which were unimaginable in the past. So I look at this as a fantastic opportunity for India to get ahead. I look at this as a need for not just the hardware and capital, but also the software talent of the country to come ahead. And we really don't need very large teams. We'll talk about that.
Don't that. Now it's done, I've said. All right. Across to Bruce now. Artificial intelligence needs R&D, and DeepSeek has changed the compute required and therefore the accessibility to entrepreneurs. Bruce, while one still needs capital, do you believe this has created a level playing field between startups and high-tech companies? Your views on this?
First, I think it's great. We've, for the last 18 months, been reading about how the, US big tech companies have been cornering the market in chips and really trying to get a bit of a beachhead when it comes to AI and AI development. And what this has done is it's completely changed that. It's leveled the playing field. So, we're now all in with a chance. So that's step one. But step two, with for me, the real kind of shining light to come out of here is it's a great reminder that small companies or small groups of talented people who are resource constrained can build great things. So innovation comes from those resource constrained talented people. It doesn't necessarily come from big companies. You know, I've seen that in terms of some of the things that we've built on AI. And I think what this has done is it's leveled that playing field, and it's given a lot of people an opportunity to come in and to make a difference. And given the existing talent in India, the opportunity now is right there.
All right, let me go across to Narendra again. Narendra, you know, C Fund is a deep tech focused fund. How can deep tech funds like yours help India grow its prowess with deep tech and Gen AI technologies? And to do this, how big is there a need for large software giants to collaborate as well?
So C Fund is focused on, you know, backing founders which are really passionate about building deep technology. As partners, we have built businesses. We have been part of very large tech companies. We've been part of startups. We understand the technology network. We can work with the founders, and more importantly, we have patience to work with them as they build their tech out. We also try to build not just the business, but bring financial acumen and business acumen, so that as they build their journey and you know, take their deep technology into market, the pitfalls and the roadblocks which are needed, we sort of, you know, help them take. We've made investments in, you know, energy. We made investments in robotics. We made investments in EV technologies. We're going to do more in semiconductors. We're going to do more in space tech over the next month or two. We'd love to come and talk to you about more about it. And we're constantly looking at how some basic AI-powered SaaS models can also take India into the next step, because SaaS has been a pretty strong play. But then if we don't power it with very strong AI capabilities at the back end, that's going to become a commodity. So we love to talk to founders in that space.
All right, let's now talk about investor AI. Bruce, you know, you work in the listed entities segment. You've rolled out a Gen AI product with some of your customers. Who have you partnered with currently? And share with us the impact you hope to make with your offering that has been built in India on the back of Indian tech talent.
So firstly, I'm really proud that we've built everything in India. You know, at Investor AI, we partner with IFL, we partner with Yes Securities, with 5paisa, with Access, with Jujit. But if you want to sort of really taste the Gen AI piece and the chatbot piece, you know, you'll find that on HDFC Securities, you'll find that on JM Financial, you'll find that on PL. And what it is it's a chat AI called Vani, with one A. And what Vani aims to do is it aims to educate, it aims to help you explore and kind of find the right things. You still execute through your broker, and then it helps you explain. So it explains to you kind of what's happened. So it really is trying to, on that journey, help you with the educate, the explore, and the explain piece.
Okay, Narendra, you know, we are pressed for time. You know, we discussed the fact that there's no denying that the government has to be an important stakeholder if India has to emerge as an AI power at a global stage. What kind of support should the government provide, not just to tech startups, but deep tech funds also, who have the expertise, the network, and the access to latest innovation? If you could answer that quickly.
Sure. 2 or 3 levels. One is the research allocation, you know, which the Honorable Finance Minister talked about, you know, over the last few budget speeches. We need to make sure there's a very clear chunk allocated towards, you know, funds which can go invest in deep tech and manage that innovation. Second, you know, government as a buyer of deep technology is a critical component. They need to work with Indian startups. The defense or the armed forces have done a fantastic job. Now we need to expand that, you know, and take it across the industry. Third, the research aspect, the research angle in India, the dollars which have been spent with MeitY and DST and other, you know, government institutions, look at them and see if we can channelize that towards building strong capability, measurable capability within the AI space in India.
Bruce, you know, with the union budget right around the corner, I have to ask, actually, the both of you, what are your budget expectations, keeping in mind how the world order is showing clear focus on AI? Bruce?
So well, I think there's some really clear things we can do. The first thing is we need energy. So if you're going to run lots of data centers, you need the infrastructure. So I think the government's push so far and the ongoing push on infrastructure and energy remains a really important one. I think the really interesting thing that India can do differently from everyone else, India's produced some really interesting protocols through DPI. And I think there's a need for a DPI protocol around an AI ecosystem with data exchanges and processes. And I think in doing that, we can actually change the whole research and development piece, particularly in areas like healthcare. So using that same idea, so UPI is world leading, we could do the same in AI. And then finally, I think, you know, if DeepSeek's taught us anything, it's taught us that, you know, small teams can do great things. So I think I would like to see the budget look out for SMEs, and whether that's on rates or whether that's matched funding, I think it can do quite a lot there as well.
One quick comment, Narendra, on this. Your biggest
Ministry
task?
of AI. We would love to have a Ministry of AI which has components of infrastructure, talent, research, and managed tech funding, you know, for the startups. So, Honorable Finance Minister, I'm sure would consider our request.
All right. Thank you, gentlemen, for your time today on Startup Street. Wish you the very best, and thanks again very much for joining us today.
Thanks for having us.
Also, a quick update, Microsoft and OpenAI are investigating whether data from ChatGPT makers technology was obtained in an unauthorized manner by a group linked to Chinese AI startup DeepSeek. Now, according to a Bloomberg report, Microsoft security researchers observed that in the fall, individuals they believe to be connected to DeepSeek exfiltrating a large amount of data using the OpenAI's application programming interface.
On that note, it is time for us to head into a short break. Coming up next, agri-tech startup Dehaat recently announced a successful acquisition of Agri Central in an all-cash deal. We get more on the deal on the other side. Stay tuned.
Or does he rest at all? I can tell you that I know the answer to this question. The answer lies in what Pandit Deen Dayal Upadhyay ji has said, who is the founder and whose name this university bears, has said about rest or Vishranti. He has said, Kaam mein badlav hi Vishranti hai. Change of work is itself rest. And I think this is our Prime Minister's motto. This should be our motto, dear students, also. Therefore, when we think about these two lessons, how to turn ideas into action and how to work tirelessly, we cannot escape the conclusion that Narendra Modi ji is not only India's Pradhan Mantri, but for us and this university, he is our Gurudev, our respected teacher, and we will follow his learnings. We must aim higher. Within a couple of years, India will emerge as the third largest economy in the world. No power on earth can stop India's growth trajectory. I can clearly foresee that India will become the most prosperous nation in the world before the end of this century. But India, with other large economies, also has a big responsibility. We must not allow economic growth endanger planet Earth and further worsen the climate crisis. Therefore, the transition from fossil fuels to clean and green energy has to be accelerated. I am supremely confident that green technologies and green enterprises can reverse the ecological degradation and indeed make our planet more beautiful, more livable for future generations. Our Prime Minister wants India to become the greenest nation in the world. For this purpose, India is also transforming itself into a deep tech nation with advanced manufacturing capabilities. This is the context in which PDEU should see its future role and responsibility. My dear PDEU family, therefore, here are my 3 expectations from all of you in the PDEU family. My first expectation, PDEU should further improve the quality of research and make it application-driven.
Well, agri-tech startup Dehat recently announced the successful acquisition of Olam Agri-owned AgriCentral, one of the largest farm advisory platforms in India, in what's going to be an all-cash deal. The strategic acquisition of AgriCentral, which is a platform with more than 10 million smallholder farmers, is going to enhance Dehat's bouquet of digital farmer services and extend its outreach to these farmers. But for more on the acquisition and the synergies this is going to bring, I have with me Shashank Kumar, who's the co-founder and CEO of Dehat. Shashank, thanks very much for your time here on CNBC-TV18. Start with the strategic factors behind the acquisition of AgriCentral and how it aligns with your broader strategy for growth at Dehat.
So, thanks Ritu, thanks for having me. The construct behind this acquisition is a concoction of physical plus digital, and just to serve Indian farmers in a more efficient, in a more transparent manner. So as you know that Dehat over last 12-13 years has already built a robust supply chain capability to almost 12 states and 126,000 villages, while selling and while offering various agri inputs to farmers, or basically while aggregating more than 40 crops from the farmers, while helping the farmers to get access to finance and insurance and number of farmer services such as soil test or drone spray and number of such things. But here this AgriCentral, which comes as a standalone content-based platform, which has already onboarded more than 10 million Indian farmers. But historically, they have just the content platform with no commerce. So this acquisition is nothing, is just like, getting more and more farmers in and around those geographies and pin codes where Dehat has already developed its supply chain capability related to input, output, and financial services, Ritu.
Okay, and what were the financial contours of the deal, of this all-cash deal that you've signed?
Well, so quantum we are not disclosing because it's sensitive, for the company and which used to own AgriCentral, which is Olam in this case. But I can tell you that that again they have built this platform by heart. They have invested almost $12-13 million while building AgriCentral for last 5-6 years. But the construct of this deal is that it's a full cash out deal, as you rightly said. But more importantly, all the KMPs, all the key management people, in fact, they all are going to join Dehat. Post this transaction, we are going to own this entire platform. There are millions of farmers, their entire content, what they use to onboard and to engage farmers digitally, their entire the architecture and the data sets, Ritu.
Okay, no numbers, but you said that AgriCentral's team and existing infra is going to get absorbed into Dehat's operations. But give us a sense of what the combined network is going to look like.
Well, so the instrument is BTA. It's a slump sale. So eventually that's going to be part of Dehat. As on date, as we speak, Dehat standalone serves roughly 3 million farmers through our 13,000 Dehat centers, through our 90 hubs across 130 districts of India. But this integration will give us access to another 10 million farmers. So you are absolutely right. I mean, this is super exciting for us, because then altogether Dehat is going to have 13 million farmers on our platform, and not just the number of farmers who will be engaged through content, but also with our supply chain capabilities.
Well, serving 13 million out of 100 million farmers in India is quite the number. But tell us how this acquisition positions Dehat against competitors in the sector, particularly in terms of scale, innovation, and also farmer impact.
As a category leader, we always aspire to take a longer and longer stride, not just in terms of more number of farmers, but also in terms of more and more number of offerings. And that's the reason why we are the largest full stack platform among all the agri-tech platforms, Ritu. But at the same time, it's not just the 13 million farmers. It's definitely not a full stop for Dehat, because again, we aspire to reach to every individual Indian farmer in future. So this integration, this acquisition, that is also bringing a capability to onboard farmers digitally, to keep the farmers engaged digitally through the personalized, regionalized content, and more importantly, in a very time as well as cost-effective manner.
In FY24, we saw DeHaat post about 36% rise in revenues to 2720 crores. It also cut its operating losses down to about 245 crores. What is the timeline for breaking even, and where do you hope to end the current financial year at?
So FY25 again, same as many previous years. Again, in the current financial year, we are going to see another, I would say, 30-40% growth on annual basis, which has been very consistent and steady. And not just like, again, against FY24 to FY25, we feel that we can continue this. We can continue with this growth trajectory for next 7-8 years. That's the way how we have been building DeHaat, Ritu. But more importantly, Q4 as we speak, in fact, standalone, we are going to achieve full quarterly profitability. That's another point of inflection for DeHaat. And then on the success of that, basically, or on that base, we are going to start FY26.
All right, Shashank, we'll leave it at that. Thanks very much for joining us here on CNBC-TV18.
We focus on newer areas like bioenergy, which have the potential to help our farmers and boost employment opportunities. My second expectation, we should simultaneously increase our internal strengths and also forge national and global collaborations so as to enhance our leading position in research and academics. My third expectation, the intersection of green energy, green materials, and artificial intelligence is going to shape the future of humanity. I would like PDEU to gain a leading position in this synergy. Talking of artificial intelligence, I have a piece of advice to our young students. You must be good at using AI as a tool of learning, but do not give up your own critical thinking. ChatGPT का जरूर से इस्तेमाल करो, लेकिन याद रखो, आर्टिफिशियल बुद्धि से नहीं, खुद की बुद्धि से हम आगे बढ़ेंगे और आप आगे बढ़ सकते हैं.
Hello and welcome to CNBC-TV18. We're coming to you from Davos 2025. While there is consensus that AI is here to stay and it is much more real than it was last year, there are still questions on the tangible benefits and how quickly we will start to see returns on investment. Joining me now here in Davos to talk about the road to AI is the CEO of Datamatics, Rahul Kanodia. Many thanks, Rahul, for joining us here in Davos. If we walk down the promenade, all you get to see is AI, and it almost feels like deja vu, because if I walk down this street last year, it was all about AI. Yeah. But what I am hearing from CEOs that I speak to is it's more real today than it was 12 months ago.
Absolutely.
So take me through how you see it.
So AI is really gaining ground. 12 months ago or 18 months ago, it was a new kid on the block. It was a lot of excitement. But actually, AI has been around for a while.
Yeah, generative AI and the fact that the mainstreaming of it courtesy ChatGPT.
Absolutely.
Yeah.
So it's generative AI that's the new kid on the block.
Yeah.
AI has been around.
Yeah.
And what companies are now beginning to do is integrate classic AI with generative AI. And you need both of them to work together to really deliver the value. And that's happening. Also, generative AI has matured quite a bit.
Right.
And that's really now giving value. So we've done several projects in Datamatics for customers where we were able to significantly reduce effort or improve productivity to the tune of even 80-90%.
80-90%, really?
Yeah.
Give me examples of what you've done and for which kinds of companies across which sectors?
So all kinds. So we worked with logistics companies, banks, financial institutions. To give you one example, there's one company where they were doing 70,000 transactions per day using about 1,000 people. And they take 8 minutes per transaction.
Right.
We now do it in 3 minutes and we use only 400 people.
Okay.
And
so what's happened to the balance 600?
They found other jobs. Yeah, so very few of our customers have retrenched staff.
Okay,
so
they found other jobs within the organization.
Within the organization, there's a natural attrition anyway.
Right, yeah.
But essentially around productivity. Another customer, we do about 42 million pages of financial documents every year.
Right.
They would take 5 days typically to process. That's come down to 1 day.
Okay.
So consequently, they're able to launch new products because you can do a report on demand. Within 1 day, you can turn it around. Versus 5 days. So huge productivity gains.
So huge productivity gains, and you're seeing that play out already.
Yes.
But in terms of scale, what are you now starting to see in terms of adoption at scale as well?
Adoption of scale is not yet there.
Okay.
People are still
experimenting
with it. They're still piloting it. They are flirting with the ideas. Half of them don't know where to deploy AI. So they're exploring where can we deploy
Is it the
AI.
conversation that the CTO is having, or is it a conversation that the CEO is having?
It's a conversation that the CEO is having and the board is having. And therefore, there's a lot of pressure to somehow do something on AI. And that's the problem because they don't have a very clear business agenda. What do we want to do? Those organizations that have been able to figure out.
Is it more driven by the fear of missing out as well as valuations? Because, anything linked to AI at this point in time is extracting significant valuations.
Absolutely. So it's both of those. But organizations that are a little more collected in their thoughts are seeing more success.
So what are the questions that they come and ask you when they look at the possibility of how they deploy this at scale?
So one of the things that they do, there are 2 or 3 problems that they have. One is they don't know where to deploy. So the first question is, where can we put AI and what can we do with it? So that's one big problem. The second is very often they get into a trap where they're trying to test the intelligence of AI. And that's dangerous because you've got to focus on medium complexity projects that are high volume and labor intensive.
Right.
And that's where the maximum impact is. If you take an exotic area which is very complex, it doesn't give you the value.
Okay. So, speaking about the fact that this is expected to provide that productivity uplift, what are the gains that you foresee for corporations, but also overall for the economy when we talk about India, for instance?
There'll be a huge economic gain. The productivity itself gives you a much better bottom line. It also gives you a competitive advantage. So your growth trajectory changes the moment you become more competitive. As far as India is concerned, India today has about 15% of the AI talent, which is quite large. And therefore, I think India is very well positioned to capture and be the factory for the world for generating AI solutions.
Right. And, at Datamatics yourself, I mean, how are you positioned and poised now to leverage on this opportunity that has presented itself?
We've been doing AI for the last 12 years. So we've been deep into it and we've deployed AI in every aspect of whatever we do. Right from the customer experience side, right from the back office productivity side, the front office, back office, in all the technology elements. Every customer engagement that we have, we try to see how do we deploy AI. Sometimes small pieces of it, sometimes larger pieces of it. It's a mixed bag. But we've successfully delivered several projects. And therefore, I think we are very well placed actually to capture this opportunity of AI.
I was having a conversation with Kathy Lee, who heads the World Economic Forum's AI and metaverse practice. And one of the things that she cautioned people about was the fact that don't look at AI essentially as adding a top layer of tech to the business. You have to look at it in its entirety. One, what is the problem that you're trying to solve? And then B, how do you immerse that within the organization itself? So as you're working with clients, what's the approach that they have? Are they looking at it as a tech issue? Are they looking at it as a tech plus people, a workforce reorg issue?
Many are looking at it in a wrong way. They're looking at replacing people and replacing processes. That's dangerous. To your point, it has to be invisible. It has to be integrated within the organization. That's when you get the maximum impact. So those organizations that are able to use it as a productivity tool rather than replacing people are the ones who are far more successful. And once it becomes invisible, it becomes the way of doing things. And that's when you really get the impact of it.
You know, in terms of tech spends, incremental spends to try and augment organizations with AI, what does it mean and what kind of a market does that open up?
So organizations have spent millions and billions of dollars in tech platforms. They're not going to replace that. And therefore, AI has to be bolt-ons. They have to be integrated into existing systems. They cannot replace existing systems. And that's very important. So how do you sort of layer it, not necessarily on top, but integrate it within the system? So that's very critical. You've got to make sure that every person is using AI because the thought process has to change. And as long as the thought process doesn't change, the organization will not move.
So that also brings us to the issue of skills and upskilling. And while we are, of course, in many ways the AI human capital of the world, the center of human capital for AI in the world today, but what would you see as the challenges when we talk about upgradation of skills, reskilling people, and what are you doing about that in Datamatics?
Yeah, so several things. One is that you've got to remove the fear of AI. People have a huge fear of AI. That has to be...
And mistrust as well.
Mistrust. You fear that your data will go outside. Data security is an issue. Privacy is an issue. So one of the things that we've done is we've democratized it. Everybody's playing with AI. And that's the only way to get everybody to be comfortable with technology. Several training programs. Recognizing people in public, those who successfully deliver something on AI, we recognize them in public. We suggest the same thing to the customers as well. They need to make heroes out of those people who've delivered breakthrough technology, breakthrough thinking. And once people are comfortable and their thought process changes and they use it on a daily basis, that's when you see the transformation come.
So what are the plans now at Datamatics, over the next few years as we look at this AI era?
So I tell you, AI will be hugely transformative. Today, if you see, the world has 8 billion people, but there are 8.9 billion cell phones. 7.2 billion are smartphones. And there are about 2 billion 5G connections. That is growing at 1 billion per year. So in 3 years, you'll have 5 billion 5G connections. All of those are smartphones with AI on the hand. So you'll have 5 billion people walking around with an AI device in their hand. That will be hugely transformational. So the way the businesses function, the way people function, will totally transform in the next 3 to 4, 5 years. And that's when your businesses will either get disrupted and go out of business, or capture the opportunity and be hugely successful. So,
but what are some of the risks that people need to be mindful of as they make this transition, as they make this journey?
There is no risk. I think the only risk is of being left behind or becoming obsolete. And therefore, the faster you adopt it, the more you indulge with it, the better off you are. Your skill set has to change. The people will not change. The skill sets have to change. To give you a simple example, if you go back 150 years ago, people rode horse carriages. Today, there are no horse carriages. There are automobiles. It has replaced the horse carriage. But there are more drivers in the car than there were horse carriage drivers. So the skill set changes, and the same thing is going to happen with AI.
So this idea that humans are going to be replaced, especially the buzzword this time around is agentic AI, but you do see it as augmenting capability and not replacing humans?
Absolutely, absolutely. In a more philosophical way, 300 years ago, the human population was 1.5 billion. Today, we are 8 billion. We were an agricultural economy then. That got automated. We went to industry. Industry got automated. We went to services, financial services, healthcare services. Services are getting automated on the back of AI. Humans will go to something else. In this journey, there's been no greater unemployment. The population's gone from 1.5 billion to 8 billion. So there are more people and more engagement. So I don't think there'll be any problem.
But, Space Force, niche companies, specialized AI companies in a market where big tech clearly calls the shots. What is that challenge like, and how do you cope with that?
A lot of the breakthrough has actually come from the small companies. OpenAI was a non-entity. It's not the giants. The IBMs and the Oracles of the world didn't do the breakthrough. So a lot of revolutionary technology actually comes from the small ones. And because they are unshackled,
Yeah.
they don't have any bureaucracy and legacy.
Yeah. So as you look at the market, as you look at the gaps that people are looking to plug, is it largely going to be organic growth for you, or are you also looking at inorganic
We
opportunities?
also look at inorganic growth. The only issue with the AI space is the valuations are through the roof.
Yes.
That is a big problem, but so therefore you look at both.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18.
So, in terms of what this does to the bottom line for you, what it does to revenues for you over the next few years, what will the business case look like?
The bottom line will certainly improve. The revenues right now are, I would say, still a little elusive because people are still experimenting with it. Nobody's gone full-blown into large projects. Also, AI by design are small projects. They're not very large projects.
Right.
But revenues will grow because the industry will get disrupted. And if you're on this side of the fence, you'll capture a great opportunity and therefore growth.
From an India standpoint, what do you believe will be the most important use cases of AI? The government is now talking about the AI mission where even the government itself wants to use AI to reform itself, to transform itself. But from an India standpoint, both government as well as the private sector, what do you believe will be the use cases for AI?
India is actually very well placed because it's such a diverse country, cultures, languages. AI is maximum at play when you have complex situations, and India is that type of a country. It's very complex. And I think therefore India can leverage AI for its benefit in a huge way. Languages, integrating people, communicating with people, governments when they communicate with different populations, each one has to be unique. And given the complexities of India, I think we are very well placed for that. So we have a great opportunity, and with that experience, you can take that to the rest of the world. And therefore, we genuinely have an opportunity to be the factory for the world for AI solutions.
I think, you brought up the issue of trust as well. And I think one of the concerns is around data privacy and data protection. How do you see that? Now we do have the government put in the rules. We already had the law, but the rules have now been put in place as well, and the consultation process is on. How significant will that have to be in order for us to move forward?
Data privacy is an issue. I think every enterprise, every government is very seized of that matter. Given that they are seized, today we've put in enough guardrails to secure the data. So I don't think data security is any further an issue. They have been already perimeterized and protected. Now, of course, there could be a violation. Somebody can hack into it. That's a different matter. But by and large, today data is secure. It's not an issue.
What has surprised you about the way that we've seen this take off in the last 2 years, especially post ChatGPT? As you said, AI has been around for decades now. Generative AI is a different story altogether. But the way that it took off with OpenAI and ChatGPT, what surprised you?
I think what really changed was the hype factor, huge hype. But what was important is that until now, you needed technical knowledge to do AI. With ChatGPT kind of interface, any consumer could interact in English or any language for that matter. And therefore, it brought AI into the consumer's hands. And that was what was very different. And now everybody wants to play with it because they want to do something with it. Otherwise, it was a niche area that only some techies were used to.
But speaking of playing with it, how else are you going to play with it? What next as far as Datamatics is concerned in your play with AI?
Yeah, we're having a lot of fun with it. All teams are playing with it, doing something or the other. At home, people do that. My kids do that. In the office, in the company, everybody's playing with AI because that's the only way to really get to the bottom of it. Kids play with video games, and that's why they become experts because they play with it and they're not trying to analyze it.
Well, yes, curiosity and of course the ability to learn quickly. Well, that will also have to be key. But in terms of skill sets, what do you believe will have to be the skill sets to be able to leverage this world?
I think the ability to think differently. The key skill is how do you become creative and think differently, because the way it functions is not the traditional way that we work. And that's very important. I'll give you a very small example. I wanted to understand the investor profile of the company. So I asked my son, get me the 5 years data, give me an analysis and see what's the pattern that's changed. I thought he'd go to Money Control, download it, run Excel. He came back in 30 seconds. I said, what do you do? He said, I use ChatGPT. The point is that we've been in AI for so long, but I'm not thinking that way. And he, a young kid, is thinking differently. The thought process makes the difference.
The thought process does in fact make the difference. So what will the future look like in the next 5 years? I mean, we're already seeing an accelerated speed of adoption. It is starting to move from pilots and experimenting to actually being deployed at scale. You know, do you believe that we're at a breakout point in the next 5 years, or do you believe it'll take longer?
No, certainly. 5 years is too long. I think within 24 months you'll see huge breakthroughs. 12 months maybe they're still experimenting. 24 months you'll see that. 5 years is too long.
Any sectors in specific where you believe the adoption rates are higher and hence they'll be able to derive the gains faster?
Typically those sectors that use a lot of information. So your insurance, banking, services, because AI is all around information. So if you go into core factories, nothing much will happen. Of course, you can design your product differently, and design is all information. But you don't look at the traditional sectors of agriculture and manufacturing. It's more the information-centric.
And so India as a market for AI, what do you believe over the next 12 to 18 months?
India is still a little further away, because AI is still expensive and it is not very scalable yet. And India requires a much more cost-effective solution. So I think India is probably another 12 to 24 months away before deploying it at scale. You'll have enough experiments going on, but the scalability will come a little later.
The scalability will come later. How much of AI have you now started to use? Do you have a co-pilot? I mean, how are you using it yourself?
No, of course I have a co-pilot, and I dream AI, I wake up with AI.
Really?
Yes, because that is the core. An AI-first organization has to have AI at the core, so that's really what we do.
Absolutely. So what is the dream then? What's the AI dream that you have for the company for the next few years?
The key question is, how do we totally turn some of our customers upside down on their head? How do we transform their business models using AI? And that's really the dream.
And is there a willingness at this point in time from customers to take that kind of risk? Do they have the appetite?
Most don't.
No?
Yeah, you're risking an existing business and turning it upside down. It's
a tough one. A tough one. So what's the sales pitch to convince them?
So they're doing it in different pockets, and as certain departments or functions go through that process, then they suddenly
and then if they see the benefits.
Yes.
So
the key is to deliver the benefit first.
The key is to deliver the benefit. Rahul, it's been an absolute pleasure. Many, many thanks for joining us here on CNBC-TV18. We wish you the very best of luck with your AI dream and your plan for Datamatics. Thanks very much for your time. Well, with that, it is time for us to wrap up the CNBC-TV18 special conversation on what it will take for companies to actually be able to derive tangible benefits, tangible value by adopting AI. And that was the Datamatics story. We will see you again from all of us here for now. Thanks very much for watching.
Live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com.